And gas business signaling it had another strong oil and gas trading result, saying that the oil trading profits are pretty in line, but on gas trading the results were significantly higher than the first quarter, so that's going to be an area of focus for us. And as we head into the NATO summit proper, Guy, we're certainly focused on defence names. TKMS in focus, although it was hinted at yesterday because of that announcement by the Canadians around submarines.
Been a good few weeks for that business. Defence stocks, though, have rallied recently, which is interesting going into this NATO summit. OK, let's show you some numbers. Let's tell you what is happening this Tuesday morning. This is the session that we are getting. Was it the one we anticipated? Well, broadly so far, yes. The FTSE 100 is up by a little bit. We're expecting it to be up by, let's call it circa 0.2%. We'll give it a minute. Maybe it will get there. There we go. We're kind of moving in that direction. Stock 600 down by 0.1%. Is Europe the antidote? Look at that, no volatility. Is Europe the antidote to the extreme volatility, the leverage volatility that we're seeing coming out of the Asian session almost on a daily basis at the moment? CAC's up by 0.2%, IBEX is up by 0.1%, AEX, we'll see what ASML does this morning, down by 0.1%. These are not big moves, considering we're getting the kind of 4, 5, 6, 7, 8% moves on the Kospi on an almost daily basis. Maybe this is the trade you want to look for if you are looking for some respite from that. Anyway, that's the session so far. Anna, a little bit up, a little bit down. What are we seeing in sectors, and what is the single stock story?
Yeah, well, there's interesting things happening with basic resources. If we start at the bottom of the sector basket, basic resources appears to be the worst performing sector, which wasn't entirely anticipated. We haven't got huge moves on copper or on iron ore, slight moves to the downside. Just looking at what we've got on gold and on silver, and there we do see a bit more movement, perhaps. So 0.9% down on the gold price, and the silver price is down by 1.6%. So we do see some movement there. So basic resources under pressure, technology also under pressure, and that's less of a surprise given the numbers out of Samsung, the weakness in the Kospi, the weakness in some of the Japanese markets as a result of this. So Soitec is weaker, ASML Holdings, BE Semi, ST Micro, ASM International. So all of those very tech related, and all of those down by more than 2% in today's session. But that being said, the balance of sectors is to the upside. So we have more than 2/3 of sectors moving higher, I'd say. And personal consumer discretionary grocery stores, an acronym is a mouthful, but that's not doing too badly. That's up, and that is up because Carrefour is stronger, and actually a whole swathe of stocks in that space are stronger, and autos and auto parts are stronger as well. So we have, yes, the focus on the downside with technology and basic resources, but most of the sectors are in positive territory.
Shell's doing well. It's adding, I think, the most points to the European market this morning on the back of the trading update that we've seen there. Some of the software names are coming back. SAP's not doing too badly. Saab is having a very good day as well. We're anticipating that maybe we get an announcement today on NATO replacing its AWACS system. So we'll see whether Saab is a beneficiary of that. So the defence names come back. So yeah, it's basically tech off, groceries on.
Yes, absolutely. We're all buying a lot of groceries. Let's get a longer-term picture with Laura Cooper, Global Investment Strategist and Head of Macro Credit at Nuveen. Laura, really nice to have you with us. So I suppose if we're worried about what happens if tech stocks, I don't want to read too much into one day's worth of trade, but we've got tech stocks weaker, but the balance of things moving, the balance of sectors moving higher. So I guess in one day, you do see a demonstration of our ability to do other things other than buy tech right now. It doesn't mean that the stock 600 is higher, though, because it's down by 0.1%. So I suppose that's where I start the questions this morning, is how vulnerable our European markets if we do see the tide turn on technology, as we've seen from the Samsung earnings?
I think there's a benefit to having that European exposure in the sense that it is less vulnerable to that tech domination that we're certainly seeing come through in the U.S. But I think Europe is a very bifurcated story. So it's more of a stock selector market. Because if we look at what earning expectations are for Q2, about 12% EPS growth. If you strip out the energy component of that, we're looking at about 3%. And even then, that's going to be very sector specific. So industrials, materials, and pivoting away, I would say, from kind of more of those consumer-oriented stocks, healthcare, so a very kind of picky market to get that kind of concentration, non-exposure, let's say, with the U.S.
And so does that make is Europe well positioned for the second half of the year then? If we see either a pivot away from some of the very well-played tech themes or just a broadening out of the tech beneficiaries, does that play well for Europe?
I think Europe will be a key beneficiary of that. I think this broadening trend that we're seeing away from U.S. tech, I mean, I still think we're going to see tech leadership in the U.S. dominate through the end of the year. But yes, I think Europe can get more tailwinds, predominantly in the sense that the geopolitical risks are kind of easing at the margin. Europe should benefit from that. And then from a bigger term perspective, Europe is still trading at a slightly elevated historical discount relative to its history to the U.S. So maybe there are opportunities there. I think there are kind of risks still involved in having that kind of shedding of the U.S. tech exposure for Europe, but I think it's all part of a kind of that balanced portfolio from an equity perspective.
Which tech? Because the Mag 7's underperformed the gilt market so far this year.
But I think one of the reasons why we could actually see a rotation back into the hyperscalers is because valuations have come off. We're now seeing revenue growth have a slight upturn going forward, and we've seen several weeks of consecutive outflows. So now there's positioning that's lighter in this space, and if we look heading into Q2 earnings season, this AI companies, they're going to dominate earnings once again. Thinking about the top 10 stocks in the S&P 500, they're going to count for about 3/4 of the earnings growth. So I think that will bring this kind of robust earnings picture back into focus.
Aren't they spending all their money on chips, though? Isn't that the downside? Being serious, these are the companies that used to do huge buybacks and used to have kind of epic free cash that they don't anymore. So why? I look at the earnings numbers, and yes, they're spending a lot. They're getting a lot of top line, but they're having to spend a lot, and will increasingly have to spend a lot to generate it.
And I think, there's two components of that. One is in terms of we'll be watching for the CapEx guidance going forward, and we've already seen very sharp upgrades to what their 2026 projections are.
Is that bad or good?
I think in the near term, it is markets are rewarding it as if because these hyperscalers essentially are spending defensively to kind of maintain their position in this very kind of fast-moving, innovative backdrop. So I think investors are rewarding that at this stage because last quarter of earnings, we started to see more incremental returns on this investment. I think if we start to see a pullback in that CapEx intentions, there's two ways markets could look at it. One is, okay, this is capital discipline. This is actually positive. I suspect, though, if it's a pullback in CapEx because demand is not there, I think that's when we're going to see that as a signal to the market. But I think in the near term, CapEx is probably going to stay relatively stable. They upgraded $100 billion last quarter, probably less guidance this time around. It's too soon for 2027. But at this stage of the cycle, I actually think analysts may be underestimating what CapEx could be next year. So they're going to reward that even more.
And any signs, Laura, that credit markets are reluctant to keep funding this, or any signs of cracks at all in credit markets? I mean, we talked to a guest, I think last week, who was saying we're going to face a refinancing wall at some point because post-COVID, there were a lot of companies took the opportunity to refinance at really low rates. They haven't lasted, they haven't endured, and so that's something of a headwind that's going to come our way. I mean, if that comes at the same time as we start questioning the CapEx build-out, I wonder what happens.
Yeah, it's a great question. I think what's been kind of quite surprising is just how resilient investment-grade credit has been in the U.S. in particular, given spreads still remain historically tight, despite this ample issuance that's coming in. I mean, if we look at hyperscalers alone, they've doubled their share of the U.S. IG market. They now represent about 4% only over the past year. Looking at CapEx CapEx intentions, about $2 trillion is going to be funded by the US IG market over the next few years. That's going to make a material impact in terms of hyperscaler share of investment grade. But at the same time, these are, AA rated. They're, largely have healthy balance sheets. So there's not a clear sign that these hyperscalers will be that catalyst to trigger a widening in spreads. And the overall backdrop of the US economy, yes, we're seeing some slowing in the margin in payrolls, but this is still showing resilience. So that, alongside this robust appetite for all-in yields, suggests credit can probably continue to withstand some of these potential pressures coming through from issuance.
Has the easy money been made in the tech trade, though? Is it going to get harder from here? You've seen these vertical lines on so many charts. Does it? If I'm just trying to balancing risk from here, yes, maybe the train stays on the tracks, but is it going to get harder to do that? And therefore, in terms of the risk-adjusted story around my portfolio, do I want to be thinking about how I mitigate some of that?
I think we're going to see greater bouts of indigestion in these markets as they do try to absorb kind of what the actual returns on investment could be from some of these tech companies. So yes, I think the easy trade has probably come through. Now we're going to see much greater dispersion in the space, and that's going to require much more discernment around who are the companies that can actually generate the returns on a lot of this AI spend. I mean, if we take a step back and think about some of these companies, what we're looking at is very similar to infrastructure cycles that we've seen previously, in the sense that we have this very early overconsumption, then we have kind of this digestion period, and then a reacceleration. I think we're already starting to see some companies in that digestion phase where they're kind of looking at tightening the usage, shifting to cheaper models, and then kind of, I think over time, though, we will start to see reacceleration. So all this to say there's going to be kind of bumps in the road in terms of this tech trade.
Well, and we thought, and you were talking about indigestion in markets around some of these things, and we thought we might get one of those bouts of indigestion around SpaceX, that, this was such a big, they're coming to raise such a lot of money in different markets, notably the equity market, but also in corporate credit as well, and that might cause some indigestion. How would the market absorb that? It didn't blink, it seems.
Well, and it does seem to be these mega IPOs. I mean, the challenge is that the value creation has really been done in the private space. So it's very different than what we've seen previously in IPOs. And I think that's what was raising these concerns, given what valuations are coming in. But the free float is very different from the broader market cap. And I think that's why we did see some absorption going forward, I think going forward, though, I think it'll be critical to watch for this is really a gauge for kind of broader risk sentiment. And I think that just suggests that this buy the dip mentality, this FOMO still is prevalent in these markets.
Laura, nice to see you. Thanks for stopping by to see us. We always appreciate it. Laura Cooper, Global Investment Strategist and Head of Macro Credit, joining us from Nuveen. Core 6, let's take a quick look at what we are watching this morning when it comes to the European equity trade. Defence names are in focus, but it's interesting to see Rheinmetall dipping as we see other names like Saab going up, maybe becoming a little bit more kind of focused. TKMS is an interesting name to also watch out for this morning. ASML, look at that, that's a big drop. So when you see ASML down by 4%, you know that European kind of the stock 600 is going to be having a little bit of weight to the downside. That's the narrative we're watching. Let's talk more about where we're seeing that tech trade widen out to. Close here with the details of that.
Good morning, Guy. Indeed, as expected, we are seeing this AI-related tech trade very much in the red this morning with, as you mentioned, ASML down quite significantly and Sweatec as well over in Paris down more than 7% this morning. That is the read across from those Samsung earnings that really disappointed. This was seen as results that were going to really confirm that the AI trade was really still strong, or potentially something that would have perhaps raised some concerns around the durability of this AI rally, and it seems that it worried more than reassured investors, and so we are seeing that translated into some weakness over the entirety of that tech sector, including in Europe this morning. It's a very different story for Shell, which is in the green this morning here in London, about 2% after flagging very strong oil and gas trading results, in particular very strong gas trading results over the second quarter. This is the first big oil company to report that production update for the second quarter. and it seems to indicate that the sector has been really profiting off of that market turmoil, that market turbulence that we have seen over the course of those last 3 months. And so we're up quite strongly there. TKMS is also in the green this morning after winning this contract to build up to 12 submarines for the Canadian Navy. This is a deal worth tens of billions of dollars. Of course, this is going to be something that is very beneficial for the company, and so we're up almost 2% this morning. Saab, another defense name, is also in the green because of a new buy rating from Morgan Stanley. Of course, this defense sector as a whole is going to be really in focus as we go through with this NATO summit. So all eyes are very much on that industry as well. And finally, Beauty Tech here in London, which is a company that, as the name suggests, makes beauty technology products like laser therapies, LED lights, etc., has upgraded both revenue and profit guidance. And so we're up very strongly on the back of that this morning, about 8% for Beauty Tech.
Chloe, thank you. Chloe with a rundown there, Chloe Melly, of the stocks that we are watching this morning that are on the move. Now, coming up on the programme, shares in the world's biggest memory makers slump despite profits soaring. We will dig into why investors are disappointed with the Samsung earnings story next. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Welcome back to the opening trade. 17 minutes into a session that looks to be going nowhere at the overall market level. So a fraction of of 0.1% to the upside, which isn't much, but we do see some dispersion around that. So the DAX is down by 0.2%, the FTSE 100 up by 0.3%, despite the moves lower in basic resource stocks. We have the balance of things moving in a positive direction for the London market, Shell being one of the contributors to that, no doubt. So the technology theme is weaker, Guy, but elsewhere we're pretty flat.
What I think is really interesting here is that you've got 431 stocks in the Stock 600 that are up this morning. So 431 up, 157 are down. The problem is, though, the downside is where the weight is. So you've got ASML knocking 1.3, 1.4% off points off the index. Siemens Energy is knocking a whole load over. So yeah, Shell, SAP, Novo, Unilever, they're all up, but they're just not adding enough points on the upside. And I think that's the really interesting story. So basically, this is a European session that has been heavily influenced by what is coming out of Asia and what the Samsung news looks like. This isn't really our story today. It's an Asian story that is really having a big impact. And you can see the kinds of names that are being impacted. When you have ASML down by 4.5%, you are going to see some serious weight to the downside here in Europe. Soitec's down by 10%, Infineon's down by 4%, ASMI is down by 4%. These are heavyweight stocks that are down by big numbers, and you don't need to see many of them because even here in Europe, the concentration is relatively high. So what do we know this morning? What do we not know? What do we need to know? Let's try and answer some of those questions. Bloomberg intelligence analyst Matt Bloxham joining us around the table to talk us through this. So this isn't our session in so many ways. No. This is Samsung's impact on Europe.
Yeah, no, I think that's right. There's nothing fundamental out there on ASML or any of the other companies that are down today in Europe. So it's very much just a sympathetic sell-off, I think.
Unsympathetic.
Yeah, maybe yeah. That's one way of looking at it. I've tried to be more positive, but yeah.
Well, I mean, I don't know if this helps us be more positive, but what was so disappointing then about the Samsung numbers? A 19-fold increase in profits. You would think that that would impress somebody, but not enough.
You would think, but I guess, this has been kind of fairly well flagged. We've seen this big ramp up in memory demand, pricing increasing. If you look at consensus on their sales for Q2, I checked earlier, it's kind of up about 22% over the last 3 months. So the market was largely anticipating this growth, and the numbers came in pretty much where people expected them to. And obviously, these are only preliminary numbers, so you don't get any of the detailed breakdown, and really what analysts are looking for is particularly the revenue split between the big segments. I think there's a sense that yes, the memory segment, which is powered by the AI demand, is doing really well, but there may be some kind of chinks in the armor of their kind of their devices business, where that's being hurt by the same effect that's helping.
Because then they have to pay more for their memory, don't they? But then you'd think that would have more positive read across to the more strictly memory plays, and actually it seems to be taking down the tech sector, even the ones that don't make phones.
Yeah, you would think, it's summer, it's hot, we're all suffering a bit from hay fever. I think, really, all these stocks have gone up a huge amount this year so far. At some point, there isn't that next leg of momentum. So, wow, things are even better than we thought. I think the short answer is things are pretty much where we'd expect them to be based on everything we've had over the last month or two.
How much more margin can Samsung squeeze out of this now? Because I think that's got to be the critical question. We've come up an awfully long way. Margins are super high.
Yeah.
Do they go up and stay up? Do they go up and come down? What does the shape of the curve look like here?
So, I mean, if you look at what the market's expecting, if you go into the terminal and run MODL on Samsung, you get a great view of this. And so margins are roughly around 50%. The market expects them to be around that level for 2026, but then move higher next year to about 53, 54%. But then that is essentially the peak, and they start to come down quite quickly from there. So by 2029, you're back in the kind of high 40s. So we're not very far. Yeah, we're not very far away from the peak, according to the market, and it will come down again. We were talking about this before. There's a huge amount of incremental supply coming on. That's going to kind of adjust the balance between pricing and demand. And so you're inevitably going to get a bit of a sell-off. That huge investment is going to start to dilute your returns at some point.
Matt, remind us where we've got to on the SpaceX story and the sort of bringing it into the fold story, because I think today it goes onto the NASDAQ, doesn't it? And there was a lot of divided opinion about how quickly it should be allowed to go onto various indices. Where have we got to on that?
Yeah, so the old rules on the NASDAQ, where you had to wait 3 months, and they changed that to 15 days, and they also changed a few other things, which conveniently helped the SpaceX story. For example, they kind of took away the 10% minimum free float. SpaceX is a 5%, and they also kind of added a multiplier effect to sub, I think it was sub 20% free float businesses. So yeah, today you will get a bit of a bump. I think from the calculations I've seen, it's only around a kind of a 1% weighting in the NASDAQ, maybe less. So it's not going to be much, but it's going to be something. So you will clearly see some technical demand for SpaceX on the back of this. Most funds would have been anticipating this and probably reflected that in their kind of original book of demand for the IPO. But, you know, I think you're going to start, this is going to the start of a kind of a multi-stage process, because there's a lot of SpaceX employees with stock that they want to sell at some point in the coming months. And that will increase the free float, and that will lead to incremental technical demand. So for the near term, that helps. It's underpinning, but really, this is a business that has to be about fundamentals. And so I think people will really be focusing on a few things in July. We'll probably have the next Starship launch. That's going to be really important. And then obviously their Q2 results sometime in August, which will help as well.
Okay, lots to watch on that front then. Thank you very much, Matt. Thanks for the analysis. Bloomberg Intelligence analyst Matt Bloxham. Let's pivot to the energy markets. A Qatari LNG carrier has been hit by a projectile near the Omani coast as it exited the Strait of Hormuz. Oil and gas prices have risen following the attack. For more, let's speak to Stephen Stapczynski, Bloomberg's Asia Energy team leader. Stephen, what do we know then about this latest attack? There's this LNG tanker. I know there were other reports of attacks, perhaps from other media outlets. So what do we know so far?
Axios reported that there have been at least two missiles sent and struck at least two vessels. Bloomberg was able to confirm that one of them was an LNG ship, 2009 build, owned by Qatar's shipping arm. It had loaded LNG earlier this month at the Ras Laffan export facility and was exiting the Persian Gulf through the Strait of Hormuz on the Omani route when it was struck by a projectile. This has already resulted in some impact on LNG flows, liquefied natural gas flows through Hormuz. There was one ship that was also laden from Qatar that was in the Persian Gulf on its way to Pakistan. It was heading towards Hormuz, and it turned around and sort of pausing in place, doing some circles at the moment. But clearly, there's still some ship owners that will show caution now going through. And it raises questions as to the safety on the Omani route, which is what the U.S. Has urged ship owners and vessels to go through. It's supposed to be protected by the U.S. Navy as well. But these fresh attacks do bring into question the ability of the U.S. forces to do that.
We've got front-month crude in the Gulf lower than a few months out. That's the shape of the curve we're looking at the moment. And now we find out that Saudi Arabia is cutting the price for its crude to Asia. What is the signal we're getting here, Stephen? Is it short-term glut, more medium-term demand starts to balance? What are you looking at?
I think you have to look at how the market kind of differentiates between oil and LNG or natural gas. So for oil, there are alternative routes to get out of the Persian Gulf. There's the East-West pipeline for Saudi Arabia. ADNOC has been quite successful with their shipping, their sort of service to get some LNG, or sorry, to get some oil shipments to Fujairah, reloading it and getting it to Asian customers. And you've also seen a lot of super tankers going through the Iranian route as well. So all this oil is kind of hitting the market when Asian buyers had already found alternatives. The Asian customers, whether you're talking about Japan or even India, they had been planning for a long-haul Hormuz closure. And so now suddenly the oil barrels hitting the market does create, in a way, a bit of a glut in the sense that these customers don't really need it. So there is a fight for market share. That's why you're seeing Saudi Arabia really reduce their prices to kind of capture market, get customers, potentially from other rival suppliers, and find placement. Now, LNG, on the other hand, while oil prices have come down to pre-war levels, LNG and gas prices are still 70% higher than pre-war levels, and that just illustrates that LNG is more constrained. There are fewer alternative routes. There are no alternative pipelines. When Qatar needs to send out its LNG, they can only do through the Strait of Hormuz.
Stephen, great to catch up. Stephen Stapczynski joining us on what we're seeing in terms of the energy trade. We're going to switch to the defence trade next and get a sense of where we go with the NATO summit about to start. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome back. This is the opening trade Tuesday morning, 30 minutes into Tuesday's session. And at the overall level, just up by 0.1%. But there's a lot of dispersion in these markets around different geographies, different sectors, different themes. In terms of the geographies, you can see that the CAC 40 is doing pretty well this morning, up by 0.7%. Not so much the DAX, down 0.1%. And we actually see some weakness coming through in basic resources and technology, maybe technology partly to explain the DAX move. But elsewhere, Guy, other parts, most of the other sectors are in positive territory actually today. So it is very much that technology and basic resource themes that is weighing on these markets.
It's the tech trade is the real story here this morning. So just in terms of the balance, you're just getting an understanding of just how unbalanced you could argue this market is. So 440 stocks are up, 152 are down. Yet the Stock 600 is absolutely flat. And that tells you about the weight impact that we're seeing in that lower bit, 150 down. But that's where the weight is. Volume's a little light. So you are seeing some gains. Yeah, you're getting some gains out there. Saab's having a good day today. Not only does it look as if its globalized system is going to replace AWACS, but it's also got a nice upgrade coming through. So Saab's having a pretty solid session. Shell's having a pretty solid session. Now, Shell is a heavyweight stock. It's doing well today on the back of the earnings upgrade, the trading update, and it's up by 2.5%. Saab's up by nearly 6%. Carrefour in the grocery space up by nearly 4%. Yet these aren't enough to outweigh what we're seeing at the bottom end of the market, which is where the tech trade is hitting hard this morning on the back of the trade that we're seeing coming out of Asia. ASML is down by 4%, circa 4%. That is a huge weight on the Stock 600. Infineon, the big German chip stock, down by 4% as well. It is weighing. Soitec is down by 11.5% this morning, folks. It is a big weight on this market. So these stocks, just these three stocks are just adding so much weight on the downside that they're almost kind of offsetting the whole of the rest of the market. And that is the narrative you're seeing. You've got some great gains in single stocks at the top end this morning, but the tech trade is still big enough that it outweighs what we're seeing at the top of the market, Anna.
Yeah, absolutely. And so let's get to the source of that tech weakness, shall we, with an update on Samsung, where quarterly profits surged 19-fold, but still failed to impress investors. The company's shares slid more than 10% in Seoul, leading to a plunge in the benchmark Kospi that triggered a brief circuit breaker suspension. An LNG carrier was struck by an Iranian missile near the Omani coast as it exited the Strait of Hormuz. The Qatari-owned vessel vessel appeared to be travelling without its transponders turned on. That's according to ship tracking data. It's the latest attack since the US and Iran signed a peace deal in late June. Traffic through the waterway has since been resuming with some interruptions. And the NATO summit starts today in the Turkish capital city of Ankara. European members are expected to unveil billions in new arms contracts on the sidelines of the event in an attempt to show US President Donald Trump that they are delivering on defense spending pledges. Guy.
Okay, let's turn back to that defense story and talk about what we are seeing in terms of the European rearmament story. European venture capital firm Expeditions has closed a nearly €200 million fund backed by leading European defence companies and institutions. It's going to invest basically in early stage defence tech and autonomous warfare. The raise comes as European nations, of course, look to rapidly scale their military capabilities at a reasonable price tag amid this shifting US commitment that we are seeing to NATO, and a huge shift that we've learned in terms of the Ukraine conflict on the battlefield as well. Nikolai Filesh is the co-founder and general partner at Expeditions. Nikolai, is this fund big enough?
Hello, Tom. It's a pleasure to be on Bloomberg Live. Yes, in short, this is the fund size that makes it perfect to capture the early stage opportunities in European defense and security. We have the possibility to invest as early as possible in the pre-seed seed stage, and then we have also capacity to do follow-on investments up to 20 million euros. So I think it is a reasonable size for the scale of the opportunity we are going after.
Where is the opportunity? What do you think Europe now needs to focus on? Where should the investment be spent?
The biggest opportunities are in two different spectrum of deterrence. Deterrence by denial, where you have to build air defense systems and deny the adversity coming into your territory. So all sorts of different air defense systems, platforms that allow you to defend, build a stronger resilience, supply chain, and so forth. And then the second spectrum is the deterrence by punishment. So you can project the power outside your territory, for instance, by having deep strike capacity.
Good morning, Nikolai. You talk, and many in the defence sector talk about Europe needing to strengthen its defence sovereignty. How do you balance that with the other messaging we're getting from countries such as Canada, talking about smaller countries, mid-sized countries maybe coming together and cooperating on these kinds of things? How much room is there for European defence tech then to cooperate with other countries such as Canada and others?
I think this is a great opportunity, particularly with Canada. We see that we have shared interest with Canada. Both Europe and Canada are trying to offset some of the major dependencies we have on the US. So we see it as evidenced by the spending and increased collaboration. Both regions increased defense spending substantially by over 20% per annum. And both regions actually started to collaborate with each other on real projects. Canada is now part of the safe financing in Europe, so Security for Action. And I expect more companies from Canada to collaborate with European companies and vice versa. In fact, we have recently invested in a Canadian neoprime in defense. So that is signaling that we think about European interest from the wider global perspective.
And thinking about the role that the newer defence tech plays versus the more traditional defence plays, Nikolai, how much of a pivot are you expecting to see when you think about the addressable market for the companies that you support? How much of a rotation from traditional technology to newer technologies would you expect to see? Because we will be probably covering both in the days ahead at the NATO conference.
I think there will be a massive shift. It's already evidenced by numerous defense tech companies that have already started to partner with established defense businesses. And also they are getting direct contracts with MODs. So I think this shift is underway. I think we can see the shift that occurred in the United States, where some of the neoprimes like Anduril over time became prime contractors. And the incumbents like Lockheed Martin became subcontractors to some of the programs of record. I think we will have similar trend in Europe relatively soon.
Okay. In terms of where you think the biggest gaps are in Europe that technology companies can deal with, obviously communications have proved to be a big part of the battlefield in Ukraine. Starlink in particular is one that stands out. Can Europe deliver what it needs if it doesn't have something that is European and capable of delivering effectively what Starlink allows in terms of military communication, interoperability, targeting, all of the other stuff that we've learned is critical on the battlefield in Ukraine?
I think this is one of the many dependencies that we have in Europe on the US. And one of the perhaps most of the critical ones, the access to space ISR. But there is much more, I can tell you. We run the internal research at Expeditions. We interviewed numerous policymakers and users from various European countries and identified over 10 critical capability gaps. And to address these capability gaps in Europe, we have to think in decades. It won't be a short fix. Some of the things we can build relatively fast. And we should focus on both of them that we can build fast, but also the ones that can secure European sovereignty over the long period of time.
Mikołaj, thank you very much for joining us. Mikołaj Ferlek, the co-founder and general partner over at Expeditions.
Okay, coming up, we're going to turn to French politics. Big day in French politics. An appeals court set to decide on Marine Le Pen's embezzlement case. We're going to watch that very carefully later on. We're going to give you a preview of what you need to know about this. Annabelle Lever, professor at Sciences Po, who joins us from Paris shortly, will do just that for us. It's coming up. This is Bloomberg.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back. It had that kind of detective story feel to it, you know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands. The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back to the opening trade, and that opening trade has us up by 0.1% here on European equity markets. So a slight move to the upside, but some real dispersion around these various sectors. Technology, basic resources, industrial goods and services are three sectors to the downside. Everything else then, Guy, moves higher.
So we are basically flat on the Stoxx 600 this morning. European stocks, there's a little bit of dispersion at an index level, but there's some really interesting things happening, I think. ASML is down by 1.12 points. The tech sector is adding some significant weight here. So that's what's happening in the markets. Let's talk about the politics. We need to figure out what is going to happen today in a key French court, which is going to announce the verdict of an appeal that has been launched by Marine Le Pen to an embezzlement case that, remember, we dealt with earlier, that effectively removed her from French politics and from running for the French presidency. And we have an election vote coming up next year, 2027 election. So this is really key in terms of A, French politics, and B, what's going to happen with the OATs, the French bond market. Caroline Conan is at the French Court of Appeal in Paris. What should we be looking for here? How critical is this going to be?
This is a very crucial day in the political life of Marine Le Pen, because she's going to know whether she can run for president next year or not. In just a few hours from now, she will walk in this court just behind me, the Court of Appeal in central Paris, where she will find out whether she's convicted again in this embezzlement case, and also how long is the sentence, because this is the key thing. She may be found guilty in this case about embezzling EU Parliament funds, but depending on how long she is banned from running for office, she might be able to run or not. Last year, during the first trial in 2025, she was convicted to a 5-year ban, which would have prevented her, of course, from running next year. But if this ban is brought back to 2 years, then obviously she would have already served 2 years by the end of March of 2027, which is very tight, because technically she needs to register as a candidate 6 weeks before the first round, which at the moment is planned for April 18, 2027. But technically, she could potentially make it. There is, of course, an in-between scenario where she is forced to wear an electronic bracelet and she has a suspended sentence. In that case, she already said that she doesn't want to run if she is forced to wear an electronic bracelet, because this will make it very difficult to hold rallies and to go across the country to campaign. So in just a few hours from now, the judge will start reading the verdict at 1:30 p.m. French time, that's 12:30 UK time. This could last for a couple of hours until we find out whether she is banned for 5 years or for 2 years, or whether her sentence is totally overturned, which would be a big surprise. And in that case, she may actually leave the place for Jordan Bardella, her heir, to be the candidate for next year's presidential elections.
Caroline, thank you. Bloomberg's Caroline Conan in Paris, setting up the next conversation for us. Let's bring in Annabelle Lever, who is a professor at Sciences Po and joins us now. Professor Lever, good to have you on the programme. Do you have a base case expectation for whether this 5-year ban on participating in politics or standing for public office, whether it stands, whether it's reduced to 2 years? Because that would seem to be the important matter with regards to the election next year.
Yes, I don't know. I mean, it's very hard to predict what the court's going to do. But presumably one of the difficulties with lowering the ban too much is that other people are in prison already who were not head of the party, and they've been in prison for 2 years. So it's going to be, I think, very difficult for them to not differentiate her position as head of the party from theirs.
And what role would you expect her to play if the penalty she faces is not reduced? Then, Annabelle, what role would you expect her to play, perhaps in support of Bardella?
well, she's been very clear so far that she would keep running and promoting her ideas. And it would be very strange, I think, to suppose that someone who set up the party, who made it really a mainstream political party now, who managed to appeal to women in ways that her father never did. She really broadened the appeal of the party, would just give up and go home. On the contrary, there's some sort of suggestion, there were sort of unfortunate talks of her treating Bardella as, as her tutor, or she would be tutoring him. That was then corrected, but clearly she's going to remain a large influence in the party for a long time.
Is the party more electable with Bardella at the helm and Le Pen supporting him, or with Le Pen at the helm and Bardella supporting her?
It's very difficult, I think, because you don't know who the other candidates are. And so, we as voters, by and large, we make our decisions in part on the range of alternatives, unless we're already terribly convinced about one party or another. On the side of those who are convinced Le Pen supporters, Bardella may be very appealing, but on the other hand, he's extremely young. He's only 30. And I think in particular for women who've been supporting Le Pen, his position may be difficult. He's far less keen to keep the age of retirement low than she was. She's been very clear that retirement, in her view, should be at 60 or 62, depending on when you start. But he's been suggesting that really there should be no legal age of retirement. Instead, what should count is length of service. And of course, that's a catastrophe for people who have intermittent careers, like many women. They stop various points to look after others, or of course, for those who are unemployed. So the appeal of Bardella, I think, now is coming into focus a bit more than it did before, where he, by and large, didn't say very much. And it may be that actually in significant ways, he's no longer going to seem the blank slate that he once did.
In the past, there's been the cordon sanitaire, this kind of idea that other parties will band together to prevent the right from getting in. How strong is that force now?
Well, we saw recently it's already partially split the Republican Party, because there are Republicans like Ciotti who are quite happy to ally with the Rassemblement National. And we've seen also, I think, in the Parliament that there have been people willing to vote along with Le Pen in order to condemn movements from the Macron party. So it doesn't seem to me we're really talking a cordon sanitaire like before, certainly not in the era of Jacques Chirac. On the other hand, I think there are lots of people who really still can't imagine biting the bullet and voting for Le Pen.
Okay, so the cordon sanitaire is perhaps evolving, Annabelle. Do we make the assumption that somebody from the National Rally, whether it is Bardella or Le Pen, makes it into the second round? And who would we think they would face in the second round? I guess that is, to your point about we don't know who they're up against, that is the big question.
Yeah, my problem with the polls at the moment is, all these polls sort of give you ideas about, people would vote for Bardella or Le Pen or whatever. And they put them against various people who are supposed to be competing. But on the other hand, we don't know very much about whether they are competing. We don't know about what's happening between now and then. So a lot of these polls, to me, feel very fictitious at some level, because if you ask me how I would vote when I don't know what the options really are, or what the situation is and demands, I'd find it very hard to answer. And I have fairly partisan loyalties. So, I wonder with people who, for the most part, may be much less partisan than I, how they manage to do it. When it comes to who the alternatives are, I think the big thing at the moment is what's going to happen with Philippe, who was prime minister during COVID, rather successful prime minister during COVID, but it seemed, and now has major legal problems in Le Havre. So he might have been an important candidate for the centre, perhaps competing with Attal. Now it looks like he may be out of the running completely, which would probably leave Attal, who's young, who was prime minister briefly under Macron, but who shall we say, has less of the gravitas and perhaps less of the general appeal that sorry, my brain's rotting, that the former mayor, well, the mayor of Le Havre has.
Okay, we'll watch all of those candidates very carefully, and we'll watch this decision a little bit later on very carefully as well. We're also keeping a sort of a weather eye on what is happening in Syria today, where Emmanuel Macron, the French president, is, and we're monitoring events there. It seems there's been some explosions close to where potentially he is staying. We'll keep an eye on that story as well. Annabelle Lever, Professor at Sciences Po, thank you very much indeed. What does the market make of all of this? Let's bring in Scarlett Montgomery-Koenig from our MLive team. How carefully do you think OATs are going to be watching, the bond market's going to be watching what happens today?
I mean, I'm not sure the decision today is really the key factor, but what's been interesting is in the last month or so, we've had a widening in the bond OAT spread. So we're back to the wides that we saw kind of at its peak in 2024 and 2025. And it doesn't really feel like much has changed from a fundamental perspective. So if you look at budget balance forecasts for 2026 and 27, they've not really changed in the past month. If anything, you'd say that commodity prices coming down, that means a better growth inflation trade-off, a more dovish ECB, so that should be supportive. So I think it's really just that we have more political headlines around France in terms of this decision, in terms of the announcement of when we'll actually get that election. And so if we move past this decision and whether or not Le Pen is able to stand for election, I don't think that is a huge differentiator because polls show that the far right is in the lead regardless of who the candidate is. But it means we can go into a quiet summer and kind of put that to the background. France will go on holiday and maybe you can get some tightening back before considering the real ramifications with the budget not expected till October.
Yeah, certainly a story we will keep hitting and hitting as we go into, well, yes, October and then into next year. Skylar, the Bank of England has a financial stability report coming. Is that going to be of interest to gilt traders?
Absolutely. So there are two things I'm watching. The first is with reference to banks. So there could be an easing of leverage ratio requirements. That would essentially mean that banks could buy more gilts, and that's the structural support for the market. And something we've seen since the GFC is essentially banks own less and less of a share of the gilt market or bonds markets more generally. So then coming back in would be positive. I think on the other side, though, what we're watching for too is the marginal buyer in bond markets has been hedge funds as a result. And they've added liquidity to the market. But the issue is when things go wrong, they go very wrong because they leave the market very quickly, and especially when it's leveraged. So there's also a risk today that the Bank of England announces some kind of requirements around leverage or limits on leverage for hedge funds. That means that that liquidity isn't as strong, and potentially hedge funds start to look at other bond markets globally rather than gilts.
Samsung's having quite an effect today.
Yeah.
Europe is a price taker when it comes to this. Samsung moves around a lot. Europe's getting bashed by this. There aren't many stocks, single stocks that are down today, but they're heavyweights.
Yeah, I mean, this is what's really interesting is that because you have such a high concentration and markets that are relatively small in terms of like the global sphere. Yes, I think it's the 7th largest market in the world, Korea. But 2 stocks make up 50% of the index or something like that. And so you have poor earnings, and that feeds through not only to the market itself, but to other markets globally. And it's made worse by the fact that it's very leveraged. So you're now having ETFs that are 2 times leveraged or whatever it is. That influences spot prices because if the stock rises on the day, then that means that that index or ETF needs to buy more of it, which then feeds into spot prices. And it creates this very bad cycle that just means it's a more volatile index as it gets more concentrated.
It's interesting, isn't it, that people talk about Europe not having much tech exposure, and yet it can be the tech sector that is very much setting the pace. Most sectors in positive territory, but tech is one of those that's negative, and that is causing the stock 600 to be pretty flat today. So there we are. We do have some tech stocks. Skylar, thank you very much. Skylar Montgomery-Koenig from our Markets Live team. We will be back at the NATO summit throughout the day, speaking to guests, including the EU's Kaja Kallas and the Finnish President, Alexander Stubb.
That is it. We are done with this show. You're not done.
Yes.
Anna will be taking you through the pulse over the next hour. Some great guests lined up there. European markets going nowhere in a hurry, but tech is under pressure. Hope you enjoyed the show. See you again tomorrow. This is Bloomberg.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
The European AI trade is hit by renewed selling in tech stocks after Samsung plunges despite reporting a 19-fold jump in profit. European natural gas prices surge after reported attacks on ships transiting the Strait of Hormuz. Plus, NATO leaders prepare to meet in Turkey. Secretary General Mark Rutte says Ukraine is doing much better against Russia, but is cautious about the supply of air defense. Let's check on the markets. The Samsung news out of the Asia session certainly setting the pace for technology stocks in Asia into Europe, and then Nasdaq futures are a little bit weaker this morning. We've also got the technology sector within Europe, as you can see there, down by 2%. Brent prices up by more than 1%. Gas prices in Europe up by more than 4%. All of that due to the renewed attacks, as we see to some degree at least, in the Strait of Hormuz. Those are the stories that are moving the markets right now. Let's have a look at where this leaves the European equity market map. We've mentioned the weakness in the tech sector. Overall, though, most sectors are actually moving to the upside. And so we do have some areas of green coming through on these European equity markets. The DAX is a bit more of a tech heavyweight, of course, and so retreats. But elsewhere, we see some green. With the tech theme in mind, let's have a look at Micron pre-market. We do have some read across, perhaps, then from the Samsung numbers. Although we've already heard from Micron recently in this earnings cycle, so maybe some of that's in the price, but we do see a bit more room for negativity then, down by 5% there. SanDisk with the same theme in mind. Do we see some negativity there? Yes, we do, down by 4% as well. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse.
Good morning, everybody. Welcome to The Pulse. I'm Anna Edwards in for Francine Lacroix here in London. Let us start with the technology sector. European tech stocks are declining alongside the region's biggest chip companies. This comes as Samsung slumps 8%, despite quarterly profits surging 19-fold in their latest earnings. Let's bring in Bloomberg Intelligence senior analyst Matt Bloxham, who can take us through some of the details. So let's start with the European story here. I mean, is there anything fundamental about Europe here this morning, Matt, or is this all just read across from Samsung?
I think it's all just read across from Samsung. You know, these tech stocks tend to trade together, and I think that's what we're seeing really. Just, you know, Samsung's off so everything else is off on the back of it.
Yeah, I mean, a 19-fold increase in profits over at Samsung. Expectations are so high, aren't they? That was already priced, and that's why we're seeing this negative move then.
Yeah, I mean, I think it's a classic, better to travel than arrive kind of story. We were talking about this earlier. If you look at the consensus move on sales over the last 3 months for this quarter, they're up 22%. So I think this is an incredibly strong number for Samsung, but the market and anticipated it. There's been a lot of stories about the demand for high bandwidth memory. They're benefiting from that. That's what's helping sales, but also that massive profit growth, because the margins on memory are super high, maybe as much as 80%. So that's kind of really what skewed that up. But obviously, there's still that big question about how sustainable this ramp in memory demand really is. And when you look at multiples for these big chip names, the market's thinking this isn't sustainable. This is a bit of a short-term bump.
Yes, and how much visibility do we have around that? Do we have visibility for 27 but not 28? And so any guidance we get about sort of that time horizon is going to be useful for markets.
Yeah, I mean, I think, honestly, even visibility into 27 is kind of pretty opaque, but I think that the current view in the market is that, that's the transitionary period. I think there's enough visibility in the CapEx numbers from the big hyperscalers, $750 billion of CapEx this year, possibly $900 billion plus next year, that CapEx cycle that's driving this wave of investment and this demand for chips is going to sustain into next year. The question is to keep that CapEx cycle going beyond that, you need to see the enterprise customers go from playing around with AI, which they still really are, even they're spending lots of money, into this is a kind of enterprise-wide deployment. Everybody's using it, bigger changes in workflow and bigger investment, and that really doesn't happen, I don't think, until next year, when there's a lot more scrutiny over return on investment in AI.
Yeah, and when we're looking at the sustainability of that profit base then, those profits that we're seeing from Samsung, SK Hynix, Micron and the like, what's the bigger threat? Is it that others start building factories and competitors emerge in China, for example, or ramp up production, and that takes away margin? Or is it that hyperscalers pull back on the amount they're willing to spend? What are we looking at?
I think it's a mixture of those two things, and a third thing, that the existing players are massively expanding their capacity. So you potentially have this kind of three-way pull, that you have too much capacity, not enough demand, and a lot more rivalry, whether it's from other US-based chip manufacturers like Google or like SpaceX, AMD, and or the Chinese manufacturers too. So that I think you could get like a triple whammy effect, if you like, which would be really problematic. That's why these companies trade on single-digit earnings multiples.
Yeah. Okay, Matt, thank you very much. Thanks for your time this morning. Matt Bloxham from Bloomberg Intelligence. For more on the chip sell-off and wider tech market, and indeed a host of other investing themes, we're joined now by Jim Reid, Deutsche Bank's Research Institute Head and Global Head of Macro and Thematic Research. Jim, really nice to speak to you. Thank you so much for coming in. And we'll start with the tech theme, but then we'll sort of move on. You've sent over so many charts that you're looking at in the second half of this year. They're all fascinating, but I've done the really difficult sort of triage job and narrowed it down to just some. So we'll start with the PPI. Semis and other electronic components manufacturing, the price that people are paying, factory gate pricing for some of these tech equipment is incredible, and it's the sort of classic, almost looks parabolic in nature, the curve that you get from this. I guess the question is, we were just discussing whether this is sustainable for any of the players within this space, and how material it is for the wider economy. When you see this kind of move in one element of PPI, what does it mean to you?
Yeah, it's a good question. First, a bit of advertising. On the Deutsche Bank Research Institute page, we've published a pack called Charts to Make You Go Wow.
Yes.
And there's lots of charts that have a parabolic
This
shift.
was one of the wows.
Yeah, one of the wows. So anybody can read it if they search for the Deutsche Bank Research Institute online. With regard to PPI, I think in the first couple of months of the year, there was a narrative that AI was going to be deflationary. And it never really quite made sense to us. And I think you're seeing now that the CapEx spend, everything that's going on in the AI at the moment is actually inflationary. Everything is parabolic. Everything is going up. Demand is high for AI, and I think the narrative at the moment is that AI is inflationary.
Okay, so AI is inflationary at the moment, and does it turn deflationary over a time horizon that we can identify? I mean, Kevin Walsh was even giving us a suggestion of next year sometime.
I think there's a risk, obviously, when you see parabolic rises up, that at some point there's a big tech bust. Yes. I don't think anybody can deny there's a risk of that. And for a period of time, that will create some downward pressure on inflation, on yields, everything else. But I would kind of go back to the fact that humans have been innovating for 250, 300 years since the Industrial Revolution. We've been fantastic at innovating. In that quarter of a millennium, we've only seen inflation go up and up and up and up. And that's because policy is the main driver of inflation. So while technology is always deflationary, I think the key thing about inflation is policy, and I don't really see that turn into deflationary.
Okay, so that's interesting. So that's the inflation angle on AI. Another important angle is on jobs. And so another chart I pulled out here is related to tech, software development jobs versus the rest of the labour market. And what fascinated me here and made me go, wow, is that I thought that software engineers would be vulnerable to AI because AI is supposed to be particularly well placed to do that kind of work. And yet with the boom in AI, we're seeing more demand for software engineers. So help me understand what that tells us about the labour market, Jim.
Yeah, look, I'm an economic historian by background, so probably my view on AI and jobs is slightly skewed by what economic history tells us. And again, over 250 years of fantastic innovation, at every point of a new breakthrough in innovation, we've been really scared about jobs, about new technology destroying jobs. And it has never happened in aggregate. We have always created jobs with the productivity that innovation brings. Now, I must admit, if I wasn't an economic historian, I would look at AI and I would see so many ways that AI could destroy jobs in the next few years. But as an economic historian, I'm minded to think that we will create jobs that I can't imagine at the moment, because that's what's happened all through history. We've used productivity to create jobs that we didn't know we needed.
And yet, I read books by either other economic historians or other economists who go through all of the times in the past where that has happened, as you describe, and we've created new jobs and we haven't all lost our jobs because of mechanisation and other things. And then they go on to argue it's going to be different this time. So what sets you apart from those who argue that it's going to be different this time? You're just making different, you just have different faith in the history, perhaps.
Look, I reserve the right to change my mind over time as the facts change, but I would say every one of these innovations, people couldn't see anything beyond job losses and poverty and despair, etc. And the software example is a good example. There's more software developers now actually in demand for a period of time. So look, I don't have the magic answer of why this time might be different or not different, but because I don't know at the moment, because there's not enough evidence one way or the other, I would still lean on the side of history and an optimism that we will create more jobs as a result of AI.
Okay, Jim, stay with us. Jim Reid, staying with us on the programme. We need to pivot in our coverage this Tuesday, the 7th of July, to what's happening in the defence sector and turn to NATO, the annual summit kicking off today as leaders convene in Ankara in Turkey. Secretary-General Mark Rutte spoke yesterday in the run-up to the meeting, where he gave an optimistic outlook on the alliance's latest spending target.
They committed to invest 5% of GDP in defence by 2035. And now, just 1 year later, we already see transformational progress. Here in Ankara, I expect nations to present clear, concrete and credible plans to reach that 5% goal.
Let's get more with our Bloomberg Chief Europe correspondent, Oliver Crook, who is in Ankara for us. Ollie, President Trump is due to arrive in Ankara this afternoon, we understand. What can we expect from his attendance as we see a sort of drip of news flow coming out from NATO already this morning about spending commitments?
Well, Anna, as you know, there's always this sort of mystery aspect whenever Trump comes to these forums, particularly here in Europe, about what to actually expect from the President of the United States. But I think there is an opportunity for the President to do a sort of victory lap, because 1 year ago, this summit last year in The Hague in the Netherlands is where all of these countries, all 32 members of NATO, agreed to spend 5% of their GDP with a couple of exceptions. And that was really a major coup for the President of the United States, and I think universally acknowledged as a real win in terms of foreign policy for the President of the United States. In the 12 months that have ensued, of course, there have been a number of other foreign policy actions by the President of the United States, none of them, or many of them, not quite as successful, and of course the war in Iran being one of the principal examples there, which has caused quite a rift with a number of different European leaders and has actually borne substantially on the NATO alliance. We have seen the United States say that they're going to withdraw troops from a number of nations, including Germany. That came after the Chancellor of Germany made some critical remarks about Trump and his approach in Iran and how it was going. There's been a high-profile spat between the Prime Prime Minister of Italy and President Trump, which escalated again yesterday with a meme that the president posted on Truth Social. So again, while there is some good news here for the Europeans, this is an opportunity for them to sort of advertise all the things that they've done over the last year in order to keep the United States engaged with that sort of perennial threat that sort of hangs over any conversation about NATO, about whether or not Donald Trump himself is committed to honoring Article 5 of the NATO alliance, that is the mutual security clause. So they will be sort of advertising, as Mark Rutte really has been doing for the last couple of days and weeks, how much money they're spending. They're wanting to create some concrete targets and timelines to reach that 5% spend by 2035. And we heard from Mark Rutte that we're going to get announcements of procurement and deals across the defense sector that's going to be worth tens of billions of dollars, and we'll be awaiting the President of the United States in a couple hours for his arrival here in Ankara in Turkey. And we should say, putting Turkey really prominent front and center, President Erdogan, that bilateral relationship between the President of Turkey and the President of the United States, with Trump saying that he may not have even attended this meeting had it not taken place here in Turkey with his friend, President Erdogan.
Yeah, somebody he clearly gets on well with. Maybe not always the case with President Zelensky of Ukraine, and Ukraine is going to be on the agenda then, Ollie. I know that Ukraine wants to make better use of Patriot defense systems. Are we going to see some substantial news flow surrounding Ukraine, do we think, at this summit?
I know there really could be. So I think that Zelensky really senses in the air an opportunity to get the United States re-engaged on the diplomatic process. Obviously, the U.S. basically checked out of that after Trump had said that he would end the war in 24 hours in the campaign. He, of course, was quite engaged in trying to get those negotiations with the Russians. Then Iran happened, and basically the United States checked out entirely. That being said, there was an opportunity for Zelensky to speak face-to-face with the president over at the G7 meeting at the sidelines there. That was a couple of weeks ago. And so Zelensky, when he meets yet again with the president here in Ankara, he's going to try to re-engage him diplomatically and to basically say that to the President of the United States that now the Ukrainians do have some cards. They have 90 billion euros of loan from the Europeans. They have made some progress on the battlefield, really arresting the Russian gains. And of course, with these deep strikes within Russia near Moscow and really affecting the Russian oil and energy infrastructure, really saying that, listen, we are sort of gaining momentum here. We need some support from the United States. There's also been some discussions about what the United States can do for the Ukrainians in terms of air defense, as has been on display over the last couple of days. The Ukrainians are effectively unable to shoot out of the sky many of these high-velocity cruise missiles because they're out of Patriot systems. Will the President of the United States potentially step up and hand some more to the Ukrainians? And of course, there is something in the background happening where the Ukrainians potentially getting the ability to sort of manufacture some of this hardware within Ukraine, if that is something that the President is willing to grant Zelensky.
Ollie, thanks very much. Bloomberg's Oliver Crook on the ground for us at the NATO summit. And we'll be back at the NATO summit throughout the day, of course, speaking to guests, including the Swedish Prime Minister and the Finnish President. So do stay tuned with us for all of that. Let's pivot our attention back to the macro stories and the global economy. And in fact, focusing on the US economy, Jim Reed from Deutsche Bank is still with us on set here in London. And Jim, my attempt to narrow down your fantastic collection of wow charts now takes us to the US economy, and in particular the UMISH consumer sentiment, which I thought was fascinating, that consumer sentiment in an economy that is supposedly doing pretty well. I think the Deutsche Bank view is it's slightly more likely to overheat than to collapse, the US economy right now. So with that as the backstory, consumer sentiment is by that measure, is at its lowest since the 1950s. I mean, how can that be the case? How can those two things tie together?
Yeah, look, I think the US economy is very strong at the moment, but it's quite imbalanced. And obviously, the talk of a K-shaped economy, I think there is a bit of a disconnect between maybe how some of the weaker consumers are feeling and how some of the wealthier consumers are feeling. And also there is a partisan element into consumer confidence. Over the last decade, I think US has got much more partisan by political lines, and therefore, depending on who you support, you are much more likely to be confident or very upset with the way that the economy is running. So I think that's an element of it as well.
That's an element. And then I suppose gas prices get a lot of headlines, and house prices and the affordability of house prices, is that something that weighs on consumer sentiment, you think?
Yeah, I mean, one of the other charts in our WOW pack that you can find on the Deutsche Bank Research Institute site.
Excellent, plug twice.
Thank you. Shows you that consumers think this is one of the worst times in history to buy a house. So it's one of the interesting things that mortgage rates have gone up a lot in the last 4 or 5 years, but house prices haven't really come down. So you've got a market which is kind of stagnating on low volumes, but still high prices, and therefore it doesn't give consumers much confidence that they can necessarily move and buy a new house.
Yes, I mean, and that's interesting, isn't it? We're still living with the legacy of the interest rate hiking cycle that we saw around the Ukraine war, I suppose. Which takes me on to the next chart which I pulled out, which was around Fed funds and recessions, or at least negative events. Because even if we don't get recessions when we see Fed funds being hiked, we do sometimes get a collection of tensions or negative fallout within markets. So most recently with SVB and Credit Suisse and the like, all around the time that we saw the hiking cycle. So does that underscore why markets do then, I suppose, get pretty nervous about a return to a hiking cycle at the Fed?
Yeah, I don't think markets necessarily go from hikes to crisis, but the hikes obviously over time have tended to be associated with crises, and I think that link is getting more severe because we are living in a more and more indebted world. So as you live in a more indebted world, then the risk of hikes triggering some kind of event probably increases. So none of us could have exactly identified the regional bank crisis in the US 2 or 3 years ago, the Credit Suisse fallout, but that was indicative of higher interest rates. And nobody quite knows what the next problem might be, but whenever interest rates rise, there tends to be some kind of problem. Now, we've got to put it in perspective. If the US raises once or twice, maybe that's not a big deal, but if inflation is above 3%. It's been above trend for 5 years. If 1 or 2 isn't enough, then you start to get into an area where interest rate rises could actually be quite problematic for the economy.
Yes, and as a student of history and looking back over history, what happens with these debt levels then, Jim? I mean, how does this resolve itself, the levels of indebtedness we've got to in developed markets?
I think we've run out of time. I've got to go. That's the kind of multi-trillion-dollar question. I think everybody knows that debt levels aren't sustainable for a lot of countries. Look, if you were trying to find hope, you would say that AI is a productivity miracle that you can grow into your debt. That would be the bullish view. I suppose the bearish view is that if anything lifts interest rates or long-term interest rates much above current levels, you start to get into kind of debt sustainability levels that just make no sense whatsoever.
Okay, I'm not sure I'm comforted by the latter part of that argument. I'll go with the first part about productivity. So what expectations should we have for when AI starts to deliver some kind of productivity boost? Can we tell anything either from economic history about that, or the way that AI is delivering already?
Well, I think one of the graphs I've used in a previous publication, which is great, the Dallas Fed did this great chart that people would know last year, where they tried to look at the productivity potential for AI, and their base case was that it might increase productivity by 1/10 or 2, but they had a bullish scenario where it basically productivity skyrockets and cures singularity problems, and they had a bear case where robots kill us all. And I think the bid offer,
a range of outcomes.
The bid offer between that is kind of one of the things that markets are still coming to terms with. I think that in my career, I haven't seen anything like AI in terms of potential for productivity. So most of my 30-year-plus career has been seeing productivity go down. So I'm excited by the potential for productivity, but I would probably caution that it's still going to take a number of years for us to properly embed it into enterprise properly to really get the benefits of that. So.
I wonder if that tells us something, actually, just in closing, the fact that productivity kept going down with all that tech innovation. Jim, thank you very much. Thank you for joining us. Really good to speak to you. Jim Reed, Deutsche Bank's Research Institute Head of Global Macro and Thematic Research. Coming up, we will pivot to French politics. Marine Le Pen's political future hanging in the balance ahead of a court decision that could shape European politics for years to come. We're live in Paris next. This is Bloomberg.
week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Consequence for U.S. markets.
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Newsmakers and market movers. This is The Pulse.
Welcome back to Paris now, where an appeals court is due to decide whether to uphold Marine Le Pen's conviction for embezzlement of EU funds. Let's get more from Bloomberg's Caroline Conan, who's outside the Court of Appeal in Paris. Remind us, Caroline, the background here and what we're looking for.
In just a few hours from now, Anna, just behind me, Marine Le Pen will walk into this Court of Appeal and we will find out who will represent the National Rally, this party that is the highest in the polls in the first round for the presidential elections next year in 2027. Will it be Marine Le Pen, like everyone had been expecting over the past few years, or will she be banned from running for office for 5 years? That was what she was convicted last year during the first trial in first instance. She has been accused of embezzling nearly €500,000 of EU Parliament funds and accused also of encouraging others to embezzle as much, to divert as much as €4 million of EU Parliament funds that in fact were used for our own party operations here in France. So either the sentence is confirmed and in that case she will not be able to run for president next year, or perhaps the ban will be brought back to 2 years or less, and in that case she may be able to run because she's already served 1 year, so that will bring us to end of March 2027. It's going to be very tight given the first round is on April 18 at the moment, but of course she said that in that case she would be able to run. However, if she is forced to wear an electronic bracelet, she said she will also leave her place to Jordan Bardella. Jordan Bardella, 30-year-old heir of Marine Le Pen, who's been groomed over the past few years to be her successor. He was supposed to be the successor in 2032, but that may come actually as soon as next year. Now, in the polls, he's actually doing as well, or perhaps sometimes even better than Marine Le Pen. For example, if he is facing Edouard Philippe, former Prime Minister, in the first round, there is some polls showing that he would do better than Marine Le Pen.
Okay, Caroline, thank you. Bloomberg's Caroline Conan in Paris with the latest on French politics. Coming up, we will have more on that NATO summit ahead of President Trump's arrival later on today. We'll bring you some analysis. This is Bloomberg.
anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Good morning. Welcome to The Pulse. I'm Anna Edwards in London, and these are your top stories. The European AI trade is hit by renewed selling in tech stocks after Samsung plunges despite reporting a 19-fold jump in profits. NATO leaders prepare to meet in Turkey. Secretary General Mark Rutte says Ukraine is doing much better against Russia, but is cautious about the supply of air defense. Plus, European natural gas prices surge after reported attacks on ships transiting the Strait of Hormuz. Let's bring you more on one of our top stories then. Bloomberg understands a Qatari LNG carrier was hit by a projectile near the Omani coast, while a second tanker appears to have U-turned. We're joined now by Bloomberg Horizons Middle East and Africa anchor, Abir Abu Omar. Abir, what more can you tell us? What do we know then about these latest incidents?
Good morning, Anna. Well, you just alluded to the fact that this was a Qatari-owned LNG-laden ship that was hit in the early hours of this morning by the coast of Oman. What we know so far is that this incident has happened. This is not the first time such an incident happened since the signing of the MOU last month. We've seen these attacks happen in the Strait of Hormuz, and the reason behind it is really because Iran had laid out a route for ships that are now transiting the Strait of Hormuz to follow, and those that are not following this route, or those that are sticking to routes closer to the coast of Oman, which is at the southern part of the Strait of Hormuz, are being attacked. And so it all really goes down to the fact that Iran wants to maintain or assert control over the Strait of Hormuz. And this really also goes to the fact that Iran had said multiple times that once the 60-day negotiation period is over, it will establish tolls on the Strait of Hormuz. And so we don't have much details beyond the fact that this incident happened this morning. We don't have a clarification from the Qatari side, and we do not have a clarification or a response from the U.S. side as well. It's just worthy to note that this is all happening during the mass funeral of the late supreme leader in Iran this week. That's set to end by the 9th of July. And so perhaps this is the most surprising element in all of this, that the IRGC is continuing those attacks while this mass mourning is happening domestically.
Yes, so these smaller scale attacks continue, even though talks, I think, have been put on hold for that funeral to take place. What does this mean then for the prospects for a longer lasting peace between the US and Iran?
Yeah, it's hard to tell at this point if this will have an impact on the negotiations that will lead to the permanent agreement over a ceasefire. It's just important to understand that now we are in the midst of those negotiations that, as you have mentioned, are suspended. The U.S. and President Trump did say that those talks between the two sides have been suspended because of the mass funeral that is taking place. President Trump, he's giving them, said he was giving Iran that period of mourning, but then the talks are expected to carry on. So it's unclear if those skirmishes that have been happening in the Strait of Hormuz will have an impact on the wider negotiations. We don't have reason to believe that this will have a monumental impact on the trajectory to those of those negotiations. But for the time being, what we know is that the talks will continue after the funeral ends, and part of the negotiations are the Strait of Hormuz, the tolls in the Strait of Hormuz, and of course the nuclear component that is the big ask of the United States, along with the oil sanctions and the other concessions, Anna, that we've been talking about over the past couple of months or so. For the time being, we're just monitoring the traffic in the Strait of Hormuz, whether ships and tankers are treading with even more caution through the waterway. We're seeing examples of ships U-turning, less movement in the Strait of Hormuz than pre-war levels, but we're still seeing movement carrying through.
Abir, thank you very much. Bloomberg's Abir Abu Omar joining us there from Dubai. And sticking with geopolitical themes, NATO's annual summit kicks off today in Ankara, in Turkey, with US President Donald Trump due to arrive this afternoon. Allies are bracing for, well, surprises. Let us speak now to Marta Prochwitz, who is Deputy Head of the Warsaw Office at the European Council on Foreign Relations. Marta, very nice to speak to you. Thanks for bringing us your insights. We recently saw the Secretary General of NATO, Mark Rutte, go to the United States. He went to Washington. He was in the White House and trying to present a more positive picture, perhaps, to President Trump about the influence he has had, European leaders' willingness to spend on defense. Do you think that as a result of that, the President Trump's thinking will be in any way changed? Is he in any way convinced that Europe is doing more?
Absolutely. I think that we've reached a point where there's a realization on the U.S. side that on the one hand, Europeans are taking their defense spending very seriously. They're listening to the U.S. calls for Europeans taking over the conventional defense of Europe. And at the same time, I think that the U.S. administration has also realized that Europe is actually very important to the United States when it comes to it's the basing rights, the overflight, the power projection. And this realization brings them into a little bit more of a stable place.
This brings them into a more of a stable place. So what will success look like for, well, I suppose from the European perspective at this particular NATO summit? Will it just be to keep President Trump on board, to convince him they're spending more, and perhaps to get his attention back to Ukraine? Is that going to be the definition of success for European leaders?
Yes, the definition of success, I think that at this summit, on the one hand, it's making sure that Donald Trump is there, number one, that there's no big media story behind it in a negative way. But the actual things that Europeans are looking for in the final declaration, first of all, it's a shared threat assessment. So to make sure that actually Russia is characterized as a long-term structural threat to Euro-Atlantic security, which contrasts with the way that the U.S. has portrayed Russia in its national defense strategy, national security strategy. It's also making sure that the defense pledges that were made last year at the Hague Summit, so the 3.5% are actually filled with actual capabilities. It's also important for the Europeans to say that, as you mentioned, that Ukraine is there on the agenda, that it makes its way into the final declaration, and that there's a financial commitment, a concrete financial commitment.
And Marta, how do you manage the messaging as far as it appears in Moscow, I suppose, or for all of the rest of the world that is watching this? How do you manage the messaging around the US stepping back from Europe and Europe stepping up and taking care of more of its own defense without leaving any kind of gaping hole in the middle?
Well, I think that this is what the summit is for, actually, to show that there is unity among the 32 allies on a certain level, of course, because underneath it, there's a trust deficit, which is affecting the way that Europeans think about how they take over this conventional defense. But from the point of view of Moscow, what we need is strategic ambiguity. And as long as Moscow can't be sure whether Donald Trump would actually come to Europe's defense or not, that uncertainty in and of itself does some of the deterrent work. And these sorts of summits, although they could perhaps happen a little less frequently, which we may see in the future, they do keep up the appearance of a functioning NATO.
And do statistics around percentage of GDP spent on defence, do they act as a deterrent, Marta, or do they they might be useful for making sure everybody pulls their weight, but do they tell us something important about Europe's or NATO's preparedness for any kind of attack?
To a certain degree. I mean, they show that Europeans are increasing their defense spending. They have been for the last 4 years. This has increased even more over the last 2 years since Donald Trump came into power. But what we really need is to fill these percentages with actual capabilities. And this is what is happening at the summit as well. There's a specific defense industrial summit happening on the sidelines, which is happening for the first time. And this is where Europeans and Americans will be trying to turn these numbers into real capability and ways to strengthen defense industrial base between the U.S. And in Europe. So we need to turn them into actual capabilities, and especially that the U.S. is decreasing its share of capabilities within Europe. Europeans are picking up the slack of that and making sure that they also have capabilities that provide this deterrent against Russia.
And Marta, how quickly are we seeing NATO budgets being pivoted towards newer defense technology, drones and other more modern warfare types versus the older types of machinery, in the context of learning, of course, sadly, from the hot wars that are taking place in Eastern Europe and the Middle East?
There's definitely a shift. That shift is coming primarily from Ukraine and the way that the battlefield is developing there and the lessons that we're learning from the war in Ukraine. So there's been a gradual balancing of the types of capabilities that Europeans have towards more modern technologies. But nevertheless, the palette of capabilities on the European side will remain a balance between legacy equipment, such as tanks and the old type of artillery that are needed, and the newer type of equipment of drones. So that's happening gradually, but in a certain balance.
Yes, and what kind of confidence or otherwise might we see from the Ukrainian leader this time around at this NATO gathering, Marta? Because perhaps he comes confident as a result of recent attacks into Russia on supply lines there, but clearly wanting something from the NATO gathering.
I mean, it's both. On the one hand, the type of commitment that NATO has towards Ukraine is a very long-term pledge. It's not something they cannot hope for membership in the near term. So that definitely puts President Zelensky in a bit of a weaker spot, but this is nothing new. But as you said, the dynamic that we're seeing right now between Russia and Ukraine on the battlefield, with Ukraine making great strides striking deep into Russian territory, is weakening Russia substantially internally and also on the front line. And Russia has lost territory, I believe 6 square kilometers in the last month. That's very significant. And this is putting Ukraine in a stronger position. But let's remember that Ukrainian society is greatly suffering. So everything that President Zelensky does needs to be geared towards making sure that Ukraine is in the strongest position and that Western allies, including the United States, continue to support it.
Marta, thank you very much. Thanks for coming to speak to us this morning. Marta Broshvitz, Deputy Head of the Warsaw Office at the European Council on Foreign Relations. Coming up on the programme, we'll stick with the defence theme. The Italian shipbuilder Fincantieri boosts its underwater presence after a deal-making spree, buying up a number of assets in this space. We will speak to the CEO next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Welcome back. This is The Pulse. I'm Anna Edwards, live in London. Now, Germany will ramp up spending on defence and security to more than 200 billion euros by the end of the decade. It amounts to a third of the federal budget as Europe's biggest economy pushes to rearm. Meanwhile, it's reported that Italy may raise military and security spending by about 17 billion euros over the next 2 years. Prime Minister Giorgia Meloni is preparing to take the pledge, make the pledge at the NATO summit, as Italy aims to move closer to the alliance's new 5% target by 2035. Undersea defence is becoming a growing part of that European military build-out, and the Italian shipbuilder Fincantieri is expanding its subsea operations, agreeing to buy majority stakes in 4 underwater technology companies. For more, we're joined by the CEO of Fincantieri, that is Pier Roberto Folgiero, and it's a pleasure to have you on the programme, Pier Roberto. Thank you for coming to speak to us. So how important for your business is this build-out in subsea technology, these investments that you have made?
Good morning. Good morning. Thank you for having me. The underwater is the new frontier, first of all, for geopolitical reasons, for naval applications, but also for commercial applications as well. In naval application in particular, it is so important because the underwater is a domain in which you can be still stealth. So it is the place for stealthiness. Whatever is flying can be detected. Whatever is under the water is not detectable. So that's why it's so important for military reasons. Then there are a long list of good new technologies that can be employed also for commercial applications. So that's why Fincantieri, being a dual-use player, is investing in the underwater.
Okay, so that's the reason you invest in it. And I suppose, with that said, are you getting clues, reassurances from customers that this is what they want to buy from you, that they will be buying this kind of product?
The market is very deep, is growing, again, either in the naval military side and on the civilian commercial side. So the market is growing a lot. So that's why we are pursuing this kind of technologies and opportunities.
And the Italian government, do they give reassurances that they are interested in buying this kind of technology, Pier Roberto?
There's no doubt that the naval military underwater is key. The Mediterranean Sea is not the biggest sea on Earth, but is probably the most congested for number of cables, seabeds, and, migration. So there are a lot of good reasons according to which critical infrastructure will have to be protected in the Mediterranean Sea. And that's the role of Italy.
And you're ramping up your subsea operations then, as you've set out. We see others in the sector also doing the same, Piero Roberto, the likes of Thales, Lockheed, also announcing big deals recently in the underwater arena. How do you bring something different, or are your products complementary to what is being produced by competitors? How do your products fit with theirs?
But the new frontier in the underwater is the unconventional underwater, meaning underwater drones and underwater telecommunications. And you know, all the big players are investing in those two directions, being, the driver for the growth of the future.
And you've mentioned the necessity to protect ports, cables, pipelines. Piero Roberto, what are the threats that these parts of the undersea infrastructure need protecting from? Can you take us into your thinking around the threats that need to be countered?
But I think that the protection of critical underwater has been something underestimated for quite a long time. So it's an underestimated threat. The world of today and the world of tomorrow will be characterized by the concept of hybrid war. And the hybrid war means that you can create many more damages by cutting an underwater telecom cables than, compared with traditional kind of military attack. So this is the story here. The hybrid war means that there are cables that can receive a sabotage even at a profoundness that is not prohibitive. So the threat is there, and is not so unlikely that even not super organized kind of offenders can heavily affect your economy, impacting, again, cables, electric cables, telecom cables, or energy infrastructure at large.
So clearly you see the threat there, you describe it. Are governments going to be good for their word around defence spending, Piero Roberto? Do you have confidence that the governments who have pledged to spend more on defence will actually do that?
I think it's a must. So Europe at large need to increase expenditure. There are measures there in order for it to happen. So Europe needs to increase expenditure as much as possible and be at the same time as self-sufficient as possible. So it's not only a matter of how much we are spending, but also how much we are enlarging the European defense industrial base.
And as you've made these deals, Piero Roberto, for 4 different investments in the subsea sector, how are your choices informed by the war that we've seen taking place in the Middle East?
This is definitely a very good point. Middle East, it's a very evident example of how much critical infrastructure can be damaged, how much critical infrastructure can become a target, and how much you have to protect them statically and dynamically. So, for example, out of the 4 companies we are acquiring with this very important transaction, 3 of them are exactly in the direction of validating solutions for critical underwater infrastructure protection, including the energy infrastructure that are in Middle East at risk and at stake.
Piero Roberto, thank you very much for joining us. Piero Roberto Folgiero, the CEO of Fincantieri. Let's get an update on some of the other stories that we are covering this morning. HSBC is reportedly halting lending to riskier private credit funds. That's after high-profile corporate bankruptcies exposed shaky underwriting standards in the industry. The Financial Times reports that Europe's largest bank informed clients in recent weeks that it will not renew certain credit facilities. According to the newspaper, HSBC will focus its capital on less risky funds. Bloomberg has learned that 2 Millennium management teams, or pods, focused on trading index changes made about $3.7 billion between them in the month of June. The gains helped Millennium post a 4.1% return in June, lifting year-to-date performance above the 10% level. Millennium declined to comment. As Western Europe faces the summer's third major heat wave, rising temperatures are impacting professions not usually associated with the physical fallout from extreme heat. While offices are usually air-conditioned, workers in cities like London have faced stifling hot commutes, disruptions to public transport and, of course, school closures. That's prompted JP Morgan to relax some of the finance industry's strictest return-to-office requirements for London staff, while in Paris, banks have been relaxing dress codes. For more on how corporates are adapting to the impact of extreme heat, we're joined by Bloomberg climate reporter Olivia Rudgard this morning. Olivia, good morning to you. So heat waves are changing how we live, they're changing how we work. Here we see the finance industry having to cope. I mean, is this new then, that the finance industry has to pay attention to the climate around it in the sense of it impacting their own workforce?
I think in Europe, this particular heat wave has been a real inflection point for a lot of people. I think we've really noticed the impact on it is on all of our lives. You know, it lasted for a lot of days. The heat wave that we just had last month lasted for a lot of days. The humidity was really high, and like you said, while a lot of corporate workers in London are lucky that they have an air-conditioned office to go to, they are having to brave those tube commutes. I think the real thing that was different this time, we have not seen lots of school closures in previous heat waves, and that obviously has a really big impact on that decision. Are you going to work from home? Are you going to go to the office? Yeah. So I think but this is going to be something that's going to become more of a debate, I think, in future.
Absolutely. I mean, it's prompted so many conversations about, as you say, what do you do in schools, air conditioning in homes, fans in homes, shading in homes, all of the above. What about cities then, and the way that because the way that cities have to adapt themselves? This is the start of a long journey, perhaps, around infrastructure, transport, buildings, the built environment. How is that all set to evolve? Is it from here?
Yeah, I mean, especially if you look at London specifically, I think heat has not really been particularly high on the agenda when it comes to the way the city has been designed, both historically, looking back to the Victorians, and also more recently as well. And I think it is high on that agenda. So the Mayor of London put out a report last month, which was essentially asking, he was saying, look, we really need to do all of this adaptation, all of those things you just mentioned. But, he's saying we can't do it alone, so he's looking for private investment to do that. So that's really, I think, a step change in the level of urgency that there is around this. And that conversation about, are we going to add air conditioning? Where are we going to use it? Are we going to be sparing about it? But really, unless something changes in terms of the adaptation of the built environment, people are taking matters into their own hands because it's uncomfortable and unsafe in homes and schools at the moment.
Okay, Olivia, thank you very much. Olivia Rudgard, Bloomberg climate reporter. And Olivia will be joining me a little bit later to take part in a live Q&A event titled Why Europe Can't Cope with the Heat. That's at 2 o'clock this afternoon, UK time. Terminal clients and digital subscribers can ask questions of the Bloomberg News team about all things climate related. Let's get back to one of our top stories in the markets in this moment, and that is the sell-off that we've seen on European tech stocks. So you can see that the tech sector as a whole is under pressure. ASML, the poster child for that pressure. All of this really emanating from the Samsung earnings, a 19-fold increase in profits, but the bar was very high to impress this time around, it seems, and that is weighing on European tech. It's also going to weigh on the US session, even though we've heard from Micron quite recently, but Micron and SanDisk, both of those stocks pre-market are under pressure, and so this is set to be something that perhaps lives on into the US session. That is it for the Pulse. Bloomberg Brief is up next. This is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stock futures pointed lower. Samsung's record profit failing to elevate shares after that unprecedented rally for the stock. Oil and gas seeing risk getting priced back in after tanker strikes in and around the Strait of Hormuz. And the NATO summit kicks off in Turkey. Don't miss our interview with the Latvian foreign minister live from Ankara. Now, let's get a check on markets around the world. An initial read from Samsung setting the tone today. Let's get straight to Winnie Su in Hong Kong. Winnie.
Good morning, Bonnie. It really all comes down to Samsung's preliminary earnings, which in fact was such a blowout with quarterly profits jumping 19-fold. But investors already had their expectations really high, so it was a bit of a sell-on news moment. We saw Samsung shares diving as much as 10% earlier today, which also triggered a trading halt in the Kospi, which was down about 5% at the end of the day. Now, the next event we are watching out for is, of course, that U.S. ADR listing for SK Hynix later this week, and that has provided a bit of a boost for the Korean won today. Now, flip the board, we take a look at the broader Asian market. Today, down about 1.5% on the benchmark, dragged down by tech, but we did see a bit of a rotation into sectors like financials. We have Japanese banks also rising on higher JGB yields. And speaking of yields, we did have Japan's 30-year bond auction seeing its strongest demand since 2019. Yields, in fact, actually dipped a bit at the beginning, but that soon reversed given the ongoing concerns when it comes to the fiscal expansionary plans.
All right, Winnie, lots of macro events in Asia setting the tone for markets around the world these days, and today is no exception. Let's get to London for a look at the European session now with Justina Lee. Justina.
Good morning, Bonnie. Now, it's one of those days where, Winnie is here to bring all the thrills and excitement, but Europe is just going slow and steady. There's less speculative fervor here, and of course, a way lower tech weighting that's probably helping the Stocks Europe 600 stay flat today. The FTSE 100 is up a little bit on the back of higher oil. Of course, the FTSE 100 has a lot of those oil majors. And that also explains the rise in German 10-year bond yields today, also because of oil and also, some of that inflation outlook changing. And now we flip the board here. Something I don't always talk about is kind of French bond yields. And what we're seeing here is that there's been a widening gap between that and German yields. And that's on the back of growing concerns over the fiscal picture in France. And today we're also going to get a big headline as to whether Marine Le Pen, the far-right leader, will get to run for president again. But all eyes will be on budget in France in the fall, Bonnie.
Absolutely, Justina. Thank you so much, Justina Lee there. Here in the U.S., we have a little bit of a mixed picture, so we could be coming to the tail end of how Korea is shaping impressions here in the United States. It's really all about the chip trade at the end of the day and the memory trade and so on. And Samsung out with its preliminary details. We would get the full read at the end of the month. not really helping, even though it beat 19-fold. We've seen that story several times in the most recent earnings season. So for now, we have U.S. futures pointed lower to some extent, but we did get a rally yesterday. So NASDAQ 100 futures, for example, pointed to a decline of 1% at the open. That wouldn't even erase the gain that we saw yesterday, particularly for the Philly Stocks Index, which was up more than 2%. And Russell 2000 futures are unchanged right now. So we'll wait and see what happens in the session. In the meantime, let's get to bonds, because we are seeing those rise again 2 to 3 basis points across the board. We were above 450 on the 10-year just a little while ago, and we're firmly above 5% on the 30-year yield. An interesting movement to watch as we continue to listen to some Fed speak and try to see exactly how the data is going to be read by the Fed and by the market, of course, which the Fed wants to happen first. And then when it comes to energy complex, we are seeing those attacks in and around the Strait of Hormuz again, and that is adding a little bit of weight to the likes of Brent crude. New York crude was still below 70. European gas futures probably getting the most of it. They're up more than 4%. Let's get to some individual pre-market movers now. For that, we'll go back over to London and Chloe Melly.
Good morning, Bonnie. Micron this morning is taking quite the hit after those disappointing Samsung results. So those earnings had been really looked at by investors as something that could potentially reassure about the durability of this AI-driven rally. But unfortunately, Samsung was disappointing investors with those results. And so this now raises further questions about those sky-high valuations and sky-high investments. Moving on to some M&A with Vertex buying Crinetics, a pharma, and that is really boosting the stock. We're up almost 100% there for Crinetics Pharma. This is a $10 billion deal, the biggest ever for Vertex. And finally, Rivian is offering to sell 75 million shares to meet the terms of a loan from the U.S. Department of Energy. This is leading the shares down. We're down about 7% this morning for Rivian, and this is overshadowing the guidance boost that we had actually last week. So a bit of weakness there for that company.
That'll always do it. Chloe, thank you so much. Chloe Melly there in London. Also coming up this hour, Katrina Dudley of Franklin Templeton joining to discuss tech valuations, earnings, and lots more. Let's get to the latest results now. Investors unimpressed, it seems, with Samsung's 19-fold quarterly profit surge. Shares of the world's biggest memory maker by market value slid more than 10% in Seoul, weighing on its global peers, particularly, though, in South Korea. Matt Bloxham of Bloomberg Intelligence joins us now for more. So, Matt, is just this the tail end of what has been an incredible run? This was pretty much expected as Samsung really changes its business, right? And we don't even have all the details. We just got an initial read.
Yeah, that's right, an initial read, and I think, as you say, that this is kind of a story of traveling and then arriving, and we've seen consensus expectations for this quarterly revenue print increase by over 20% over the last 3 months. I think the market has kind of absorbed and adjusted to this big surge in demand for high bandwidth memory and the price increase that gone along with that. So, we've kind of reached the point where consensus is more or less aligned with what the market can actually deliver. And I think if you wanted to see the shares go higher, then really they needed to be kind of delivering a stronger beat than the kind of 1 or 2% on the top line that they delivered.
Yeah, I mean, the Kospi has doubled this year, and Goldman estimates that 90% of that was thanks to SK Hynix and Samsung, just those two companies alone, right? So we had a little bit of an NVIDIA problem in Korea. Here in the US, though, lots of other types of catalysts today. I mean, Walmart is lowering prices, but beyond that, SpaceX is joining the NASDAQ 100, and bullish calls are piling in from Wall Street. What happens today? Do we see SpaceX shares go higher, Matt, just because it's entering the NASDAQ 100?
It should be a kind of small underlying positive, but it's a technical issue, and I think when you look at the breakdown of the analysis, the free float's only 5%, and that affects how much passive funds have to adjust their portfolios. I think it's going to be less than a 1% weighting in the overall index. So I'm sure you will see some passive buying, but perhaps not a huge amount. And some of those passive funds will have bought in anticipation of this happening. But I think it's the start of maybe a series of technical underlying supports for the company, because the free float will increase over time, not least because lockups will expire for kind of anchor shareholders, including employees, and they will sell onto the market. So I think you'll kind of see these kind of technical supports come through the next 12 months or so. And obviously at some point, it will get S&P 500 inclusion too. So that will be another support. But really, you know, as a fundamental analyst, you kind of really need to look beyond the technicals and focus on the fundamentals. We've got a Starship rocket launch coming up, hopefully sometime in July. And that takes on added significance because getting Starship to a scaled, reusable rocket platform supports lots of parts of the kind of future revenue growth story for the company, not least orbital data centers. So I think there will be a lot of focus on those events. Obviously, we'll have their next quarter results sometime in August, where we'll get a bit more scrutiny on the revenue trends and to what extent, in particular, things like the AI part of the business and Grok are starting to get some renewed momentum.
And Matt, we have 20 buys from analysts in our system, 4 holds and 1 sell. And of those 20 buys, the price targets we have, those price targets are all above where it's trading at right now. Matt Bloxham of Bloomberg Intelligence will be back later in the program, and thank you. Oil climbing after reports of attacks on ships transiting the Strait of Hormuz. Sources telling Bloomberg that a Qatari LNG carrier was hit by a projectile near the Omani coast early this morning. Let's get more with Bloomberg Horizon's Middle East and Africa anchor, Abir Abu Omar. What is behind the latest spate of attacks? Abir, it seems there are more now than there were previously. Is it that they're not taking the correct route? They're not paying money? What is it?
That's exactly correct, Vonnie. It's the first one. It seems that Iran has been telling ships and tankers that are going through the Strait of Hormuz to stick to a route that it had laid out for them, and those that are not sticking to this route are being attacked. Now, the latest is, as you had alluded to in your intro, is this ship that we believe is linked to Qatar, laden with LNG, that was passing through the Strait of Hormuz this morning, that was attacked by the IRGC. And what we believe is that it was attacked because it just did not stick to the route that was laid out by Iran. It was going through the southern part of the Strait of Hormuz, closer to the coast of Oman. And that is not the first time we've seen such attacks happening, Vonnie, especially not throughout this period or since the MOU was signed last month. We've seen such attacks happen. We've seen the justification by the Iranian side saying that ships that do not stick to the path that Iran had laid out are prone to these attacks, and this really comes at a time where Iran is trying to assert dominance over the Strait of Hormuz, saying that not only will these ships be attacked, but also that once the negotiation period between Iran and the United States is over, it will start charging tolls and fees to ships that pass through, with concessions to some friendly countries, as it has been saying. One of them is China, for example. But these attacks, again, not the first time that we've seen them happening over the past month or so, but certainly ship owners and tankers are treading with a lot of caution in the Strait of Hormuz, and a lot of them are trying to stick to the route that Iran had laid out to avoid such incidents from happening again.
It would seem like the prudent thing to do. Abir, thank you so much. Abir Abu Omar. Now to other top stories trending on the terminal this morning. Hedge funds are at their most bearish on the yen since 2007. Commodity Futures Trading Commission data show leveraged traders boosted bets on more losses in the yen to nearly 138,000 contracts as of June 30th. The currency remains one of the worst performers among major currencies. Lone Pine Capital is off to one of its best starts to a year, posting a 43% gain for investors through June. Its biggest U.S. holdings include Teradyne and Carpenter Technology. The firm's short book was a significant contributor to those returns. Shell delivers strong oil and gas trading results for the second quarter, driven by market turmoil caused by the Iran war. Oil trading was in line with first quarter numbers, while gas trading was significantly higher. Coming up, we're live in Ankara. We'll be speaking with the Latvian foreign minister at the NATO summit next. This is Bloomberg.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on.
I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. We are pointed lower in terms of futures, particularly Nasdaq 100 futures. Samsung setting the tone just a little bit. As you can see, S&P 500 futures down just fractionally. We did have losses for the Nasdaq 100 in particular yesterday, but also the S&P. So we may see more or we may bounce back. The 10-year yield is firmly at 450, up more than 3 basis points. And the dollar index relatively unchanged. I do want to point to a higher VIX as well, though we're still below 16. And oil continues to put on some pennies. Crude oil, Brent above $73 a barrel, and WTI headed for $70 a barrel. NATO leaders are gathered in Ankara, Turkey for a summit with wars in the Middle East and Ukraine top of mind. Bloomberg's Oliver Cook is on site for a conversation with the Latvian foreign minister. Ollie.
Yeah, that's right, Vonnie. We're all here in Ankara, Turkey, awaiting the arrival of President Trump. That's sort of a one-year anniversary since that last NATO meeting where they got that 5% commitment of NATO spend on defense. That, of course, was the big topic last year. The question is, how far down the path are we now? We're joined now by Baiba Braja. She is the Latvian foreign minister. Thank you so much for speaking to us on the sidelines of the meeting. I want to take stock of where we are 1 year from that historic NATO meeting. What positive story does NATO have to tell now to President Trump as he arrives here?
Well, we agreed the political declaration very fast, so it will be published tomorrow, so I can't release what's in there. But all the essentials. We perceive Russia, commitment for Ukraine, NATO's own commitment, forces, defense spending, everything is in there, so very good. We have NATO's defense forum taking place here with multi-billion commitments for defense industry improvements, for interoperability, joint production, but also increasing the, for example, battle-decisive munitions, but also the innovation package, drone commitment. So that's the other part. It's not enough just to have the funding. You actually have to deliver capabilities.
Of course, and of course there's also still been this sort of thing that's hanging over NATO. We heard from Pete Hegseth, who visited recently, saying that there's going to be another review over the next 6 months of the American troop posture. How much does that concern you? Do you think that the Europeans are moving fast enough in order to backfill some of those absences from the United States?
Well, we do that together with the U.S., and it's not like U.S. just wants to get out or something. They have really vested interests in maintaining their presence in Europe. I mean, it's not only about economic and trade relationships, it's the joint defense and security interests that we have geopolitically. So very clearly, that's a commitment, and that's how we are going to do it together, like we did the interim one, we'll do that also. Yes, Europeans have to invest more, they have to perform, they have to do more. And it's not just words, it's actually what matters, how it's delivered.
And we've had some reporting also that the United States may be examining basically who is spending the money, how much, how those who are actually hitting those targets, and maybe rewarding those. And obviously, as a Baltic nation where defense and security is one of your top priorities, could you see yourself benefiting from some of the sort of now tiered system that the United States is suggesting, potentially, for example, getting more troops to Latvia, for example?
I cannot comment on particulars of those arguments, because what we do is we follow what we decided. We decided Russia, and we all know that Russia is a threat to all of us, very clearly. It's a country, nuclear armed country, which decided militarily to attack a peaceful country. So it used military means to achieve political objectives of subjugating Ukraine. They are not succeeding, they won't succeed. But that means that it's a total change in everything. And that's why it's not only defense spending, but the actual deployability of troops, capabilities, learning from the battlefields between Ukraine and Russia, especially on the unmanned systems, electronic warfare, communications, satellites, everything around that. So there is a lot we have to do. And this is where NATO is best to do that.
And there seems to have been a real shift in momentum on the battlefield in Ukraine over the last few months. I think that is a conversation and a message that Zelensky will be making to President Trump while he's here. Obviously, things are getting harder for the Russians on the economic front, a lot of strain there. So what is your appraisal of the Russian position now, and how much of a threat is it to Vladimir Putin domestically?
Russia cannot achieve its political objectives through military means. So whether it's the occupation of whole of Ukraine or even Donbass, anything else, Ukraine's technological advancements, the ability to put pressure on Russia through these long-term sanctions, as they call, which means on military objects within Russia, but also on the energy infrastructure, has created such pressure on Russia that it will have to compromise. There is no other way. It will have to settle the war through political means, not through military means. As for all of us in NATO, we have to do what we committed to do. So we are at we will be at 4.91% at the end of the year. 5% is prescribed in law, enshrined by the parliament in unanimous vote. So next year 5%, and we will continue along that path. And we expect the others also to fulfill their commitments, because at the end, security, there is one security of Euro-Atlantic sphere. NATO has guaranteed its KPI is peace. It's a peace organization. And it has guaranteed peace for our nations since 1949. There is no other way.
And also thinking about Russia with Putin a little bit under pressure, more on the ropes, there are also some risks associated with that. We heard from the Prime Minister of Poland, Donald Tusk, speaking over the last couple of days, saying that the next few months are going to be decisive, that there might be more pressure coming in to Poland, but also, he said, for the Baltic states. What are you seeing in terms of additional pressure? What are the risks associated with some of the vulnerabilities that Russia is feeling?
So Russian warfare doctrine is one. It's not just military. It's also non-military, or the sub-conventional. And through these non-military means, whether it's the cyber attacks, whether it's corruption, whether it's hostile information and operations that they run, they also are trying to achieve their objectives. So it's not just the military part. And of course, Russia is trying all types of provocations. We saw attempts at arson of Prime Minister Starmer's properties. We have seen killing of Russian political opponents in Germany and other places. We have seen various jamming activities, whether around Kaliningrad or elsewhere. And we have seen on the Latvian border with Belarus, it's an organized activity of pushing instrumentalized illegal migrants into NATO's territory. So what we are doing, we are ensuring security of border of the EU and NATO, making sure we deter them. Last year we deterred more than 12,000 people. This year it will be even more. So we expect allies to have solidarity also around that. It's not just the military presence, it's not just the military stuff, but also non-military. So whole society approach, awareness, not letting use of cybercrime to become systemic, and so on and so forth. It's a lot.
Well, Baiba Braja, thank you so much for your time and giving us your perspective ahead of the meeting. That is the foreign minister from Latvia. As we wait for the arrival of the various leaders, including the President of the United States, Donald Trump, will be arriving in the next few hours.
Ollie, thank you so much. That's Oliver Cook there and Baiba Braja, Latvian Foreign Minister, and we'll be hearing more from Ollie from NATO over the coming days. Coming up, a look at what's making headlines in your front page news. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Now for your front page news, and first up, the Washington Post reporting top Democrats pulling their endorsements of Maine Democratic Senate candidate Graham Plattner after Plattner was accused of sexual assault by a woman he previously dated. Next up, the FT reporting HSBC is halting lending to riskier private clients after high-profile bankruptcies cast doubt on underwriting standards. And finally, the Wall Street Journal on Belgium ending the US's World Cup run.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but it is going to be a platform that runs in parallel to our more traditional exchanges.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stock futures pointed lower. Samsung's record profit failing to elevate shares after an unprecedented rally. Oil and gas seeing risk getting priced back in after tanker strikes in and around the Strait of Hormuz. And the NATO summit kicking off in Turkey. Our live update coming from Ankara later on. So as you can see, those futures pointed lower, though we are off our lows. Yesterday, the Nasdaq 100 was up 1.25%, so we're not even giving back as much as we gained yesterday. It's still up 18% year to date, so nobody panic. We had the Philly Stocks Index up 2.2% as well in yesterday's session, but we are seeing memory chip makers sell off in the early trade today. This after Samsung came in with more profit than it's seen in a whole of the previous 2 years. It surged 19-fold its profit for the quarter, and it's really quite a phenomenal showing, but that stock was down more than 10% in South Korea. Russell 2000 futures pointed fractionally higher as well. Yields a little higher across the board, 2 to 3 basis points. We have the 30-year yield breaking 5%, in fact, and the 10-year yield was above 4.50 a little bit earlier on. And then just to take a look at the energy complex, we are seeing just $1 or $2 being put on Brent, New York crude, and particularly European gas futures, as we do see a strike or two happening in and around the Strait of Hormuz and some warnings that ships better stick to their routes. Let's get to some individual movers, though, this pre-market with Chloe Melee in London.
Good morning, Vonnie. Micron is down almost 6% this morning after Samsung results failed to impress. This is now raising fresh questions about the sustainability of those AI investments and whether those sky-high valuations in that sector still make sense. So we're seeing a bit of weakness there for Micron. Moving on to some M&A, and we've got Vertex buying Crinetics Pharma for $10 billion. This is the largest ever deal for Vertex, and it's something that will give it access to more the endocrinology side of this pharmaceutical space. And so we're up, as we can see here, almost 100% for Crinetics. So a very, very big boost. And finally, Fiserv is up this morning after a report from the Wall Street Journal that some big Wall Street banks had held preliminary talks about potentially buying a debit network that is owned by that company. And so we're talking about Wells Fargo, JP Morgan, Bank of America. And so on the back of that report, we're seeing a big boost for those shares, up more than 7% for that company in pre-market trading.
All right, Chloe, thank you so much. Chloe Melee there in London. That blowout result from Samsung failing to impress investors, a slump in Samsung shares dragging AI-related stocks down in U.S. pre-market trading, particularly memory chip makers. Joining us now is Katrina Dudley, Senior Investment Strategist at Franklin Templeton. Now, Katrina, I have to ask you, look, Samsung has had such a run, but if you're down, what is it now, 7.6%, you can't ignore that, right? I mean, is this the end of a trade that has been played out or the beginning of something new?
So I think the fact is it's not that Samsung missed expectations. They didn't. They failed to be impressive, I think is the word that people are using, and that is bleeding into other concerns about the market in terms of the AI infrastructure trade has been the big driver of the market. If I look, the technology sector has been the biggest and the strongest performing sector within the S&P 500 year to date as well. So I think people are saying, is this the sign that things are starting to crack? I would say that we continue to be bullish on AI infrastructure spending, and what we've seen in other companies that have sold off, initially they sell off, but people are using this as an opportunity to buy the dip. And so with Samsung, I think you really want to watch what happens over the next day or two and whether investors are using this as an opportunity to say, yes, I missed that 150% rally that I've had, and step in.
Is there also, though, something percolating there about having to pay the piper? So if you've gotten your 100 or your 200% return on something, and if that stock is doing extraordinarily well, that company is doing extraordinarily well, some other part of the economy must be having to suffer at some point.
Yes, so number one, I think there's one trade out there, or one kind of school of thought that's saying everyone needs to raise money to invest in the SpaceX IPO as it enters the index. So that's kind of first negative, and it's just a small amount of incremental selling, so that you could definitely go into that negative camp. The second thing, however, is people are curious as to whether or not this is, as we talk about the proverbial canary in the coal mine, is this the start of the unwind of the AI trade, which has been a big driver of the market. You combine that with the fact that if I look at the market generally, we have seen a broadening trade. So we've seen more than half of about 231 stocks in the S&P 500 up year to date, but we still have seen slightly less than 200 stocks being down year to date. So you haven't had full broadening of the market, number one. Number two, the Mag 7 has actually underperformed. It is the one sector that is not kind of touching all-time highs. So I look at some of the those Mag 7 stocks as well. So you've got Samsung over here. Is this a buying opportunity? The second thing I would be seriously considering, is it a buying opportunity as well within the Mag 7?
Really? Like where, for example, Tesla?
I think that you want to diversify on the Mag 7. I think trying to to pick specific parts of it is kind of difficult. But in looking at that entire basket, it's kind of in that old oversold territory. So if you're trading off, do I buy the dip in Samsung, or do I look at buying into the Mag 7? I would probably trend towards that Mag 7 trade.
Yeah, well, Tesla has had a little bit of a run up. Nvidia, though, not so much. It's incredible. The International Value Fund that you run, if you're looking for capital appreciation, less so income, obviously you'd like some income. Where are you looking to maybe dispose of some of your winnings and maybe deploy them somewhere else?
So if I take a look at the markets generally, in terms of the US has obviously been the big standout performer. So international hasn't been such a big part of the market, but I think emerging markets is one area where we're seeing a lot of opportunity and we're seeing a lot of positive momentum. And so I would be looking at emerging markets.
Where though? Because Asia, emerging markets might be a little difficult.
Yeah, you're saying basically in terms of, is it Korea or not Korea is one of the things.
Or do you avoid all that and just go to Latin America,
Latin America has definitely different opportunities. It has cheaper valuations. On the Korea trade, it's kind of interesting because some of the indexes classify it as an emerging market. Some have it as a developed market. So it's kind of one of those markets that's on the cusp. But there are a lot of different emerging markets that have a lot of different opportunities to them and are not as heavily exposed to the AI trade. So if you are concerned about the AI and that infrastructure trade, if you do believe in broadening, this is one area where you can express that opportunity.
Now, your Global Discovery Fund does include the US, so are you seeing that you're adding more in US or outside the US into that fund in particular?
I would say in the United States market, we continue to be bullish. I think that we continue to think that this broadening trade has legs. And when I look at having a broadening trade, that means that there are more stocks that are going to carry the weight. As I've said, you've got an oversold position in the Mag 7 that could open up an opportunity there, but we always have to be valuation sensitive. So I want to look at the market as a whole, and therefore what you want to say is what type of exposures am I looking for and what valuations am I paying for those. When you've got that broadening trade though, I think that what we've seen is that for such a long period of time, you had to own 7 stocks or you kind of had 493. What we're now seeing is it's actually a much more broad set of stocks that you can pick and where those opportunities are.
What do you make of the yield curve moves? Because we saw the yield curve steepen when, flatten, although, the overall yields went higher, right, when Kevin Warsh came in. Now we're seeing sort of the back end steepen a little bit, but it looks like the employment situation isn't as healthy as we thought. So how do you think about all that going forward? Do we get a hike, a hold, a cut?
I think that the economy is strong, and that's the feedback. And I know that we saw, a slightly disappointing number on the jobs front, but we still saw job growth. And I think the concern that people have had is that jobs have not been added. So I'm in the camp that we have got a lot of signs that are showing to us that the economy is strong. And that means that the Fed is kind of coming from a position of strength. It's not looking at making significant moves. The market is pricing in around a it's kind of a 1.5 camp. You have 25 basis points, between 25 and 50 basis points. I think that we're not necessarily sure that we're not in the camp that thinks that we need to hike rates. We're looking at the inflation number. So a lot of people are looking at the most recent print and saying it's all energy prices, and so that's temporary. We're likely to see those kind of abate as we start to have, despite the news yesterday on the Strait of Hormuz, we're likely to have stability in energy prices. However, we're of the opinion that what you've seen is a lot of reshoring of manufacturing back into the United States, and that is likely to be inflationary, and you combine that with a strong employment number. I think that the Fed is likely to sit tight.
All right, Katrina, thank you so much for the update. I love you coming into studio always. Katrina Dudley of Franklin Templeton. Now to other top stories trending on the terminal this morning. China buying more soybeans from the U.S. According to sources, China's state-owned firm COFCO has booked at least 6 cargoes of U.S. soybeans for loading between September and October. Beijing and Washington seeking to roll back duties on some agricultural products after recent talks. SpaceX is getting an early vote of confidence from Wall Street. Morgan Stanley, Goldman Sachs, and at least 4 other brokers have started coverage with bioequivalent ratings after its IPO. SpaceX joins the Nasdaq 100 today. De Beers is making some of its deepest ever price cuts for diamonds. This comes after it reduced the number of its hand-picked buyers, a strategy to funnel more diamonds to its strongest customers. The exact scale of the price cuts was not immediately clear. A nice problem to have. Coming up, oil climbing after fresh attacks on ships transiting the Hormuz Strait. We'll bring you the latest. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
I went in for one reason, very strongly, that Iran cannot have a nuclear weapon. I'm not looking for regime change, although this is regime change. The first regime is gone. The second regime is gone. And I think the third regime is more reasonable, but we'll find out.
The latest attacks on ships in and around the Strait of Hormuz raising concerns over the US-Iran deal. Sources telling Bloomberg that a Qatari LNG carrier was hit by a projectile near the Omani coast. Bloomberg's Abir Abu Omar is back with us. How seriously will this attack be taken, and the strikes that we've seen recently, Abir, will it jeopardize any peace talks?
Good morning, Vonnie. Yeah, it's unclear for the time being if this will have a monumental impact on the wider peace talks. Now, it is surprising that this attack happened during the mass funeral of the late supreme leader in Iran that is set to end by the end of this week in Tehran, where he will later be buried in his hometown. But what we know about this attack so far is that this is an LNG-laden ship linked to Qatar that was attacked in the Strait of Hormuz in the early hours of Tuesday. And it was essentially attacked. Our understanding is that it was attacked because it did not stick to the route that Iran had laid out. Now, what this means for the wider talks, well, this is not the first time something like this happens. Even when the MOU was signed, we've seen such attacks happening in the Strait of Hormuz because ships were not sticking to the route, again, that Iran had laid out in the Strait of Hormuz. Those ships were going in the part that is closer to the Omani coast, which Iran refuses to allow ships to go through. And it says ships have to get closer to the borders of the Iranian coast. And so unclear if it will have an impact on the wider negotiations. We don't have a statement from Qatar yet. We don't have a statement from the American side. Previously, when these attacks have happened, we've seen limited reactions or retaliation by the American side, but we're not seeing that yet. We know that the American side and President Trump has suspended the talks for this funeral taking place in Iran this week, but the talks are expected, or the technical negotiations, Vonnie, are expected to carry on after the funeral, where, as you just heard in what President Trump was saying, the nuclear component will be key, it will be front and center, and that will lead to the wider permanent ceasefire, along with, of course, the Strait of Hormuz, the oil sanctions, and the blocked frozen assets for Iran.
Yeah, and those 60 days are counting down. Abir, thank you so much. Bloomberg's Abir Abu Omar in Dubai. Over in Turkey, NATO leaders are gathered in Ankara, including President Trump and President Zelensky. Let's bring in Bloomberg's Oliver Crook, who is on site. Ollie, you've been managing to speak with some European leaders and global leaders, essentially. What is the message that NATO will be enthusiastic about sharing with the world after the summit?
Yeah, it's really a message that they'll be enthusiastic with sharing with President Trump, who 12 months ago at the NATO meeting in The Hague really won one of his greatest foreign policy achievements since he took over office, which was getting all NATO members to commit to spend 5% of their GDP on military and defense. Obviously, the United States has for a very long time, for many years, even before President Trump, tried to get the Europeans to spend that money on defense. They basically failed to do so until now, and that was really something that the Trump administration could say was a very big win geopolitically and in terms of their foreign policy. Now, in the last 12 months since then, a lot of other things have happened in American foreign policy, including the war in Iran. We also had at the beginning of the year all this talk about Greenland. All of these kinds of things are things that are capable of sort of derailing this summit. You hope that you don't hear any mention of Greenland. That will be the European hope. You hope that in terms of Iran, they can keep that conversation relatively contained. And of course, there is about the question about the future of the alliance. Trump has repeatedly sort of threatened and made assertions and allusions to the fact that potentially he is unwilling to come to the rescue of NATO under Article 5. However, it seems now that that main threat has sort of dissipated, but there is now more of a conversation within the Trump administration that there could be a sort of tiered system in NATO. For those who are really meeting those commitments, those that are spending that money, they may get more benefits from the United States, while others may get them sort of held back. So those are going to be some of the things that we're watching for very closely. As we heard earlier from the Latvian foreign minister, apparently the wording on the communique came together pretty quickly, pretty unanimous. We don't know what's in it yet, but that certainly is a positive side, at least from the European side of this question.
Yeah, and in fact, from the U.S. side, we know already, Donald Trump has told us that one of the only reasons he's going is because of his relationship with Erdogan, the Turkish Prime Minister, and the host of the summit this year. The New York Times actually reporting that Trump is ready to restore access to the F-35 stealth fighter to Turkey. What would be the context for this, and how big of a decision would this be, Ollie?
US capability to
Yeah, I mean, I think that Turkey and sort of its role geopolitically and its role within NATO is absolutely massive, and it's something that the president of Turkey, Erdogan, is going to put on full display in these sort of discussions that are happening here over the next 2 days. I mean, it is the biggest military in NATO on this side of the Atlantic. The only one that's bigger in NATO is the United States. They have a massive standing army, but they also have a very large military industrial base, one that the Europeans really need to benefit from, because though you can spend, billions and billions of dollars, you need stuff to buy and you need stuff that is actually deliverable. And that is something that's a role that Turkey is certainly going to be playing. There is this question also about F-35s. It was in fact the Trump administration that had blocked the selling of F-35s to Turkey. There is some reporting around this. We had it from the New York Times saying that now President Trump potentially is willing to extend that olive branch to the Turkish regime, and effectively saying that they're willing now potentially to deliver those F-35s to Turkey. But again, it puts into sort of great prominence, into sharp relief, the role that Erdogan has had, not just geopolitically, not just militarily, but of course in terms of diplomacy. He's been involved as a mediator between Russia and Ukraine. He's been involved in the discussions around Iran, and remember in the conflict with Israel and Hamas, also involved there, and has been a very close friend to the President of the United States, who, Vani, as you said, basically said he may not even attend this NATO meeting were it not held here in Turkey.
Yeah, absolutely. Well, Ollie, thank you. We'll be speaking to you throughout the day and, of course, tomorrow as well from the NATO summit. That's Oliver Crook. Bloomberg's Ankara coverage continues today with interviews with Swedish Prime Minister Ulf Kristersson, Finnish President Alexander Stubb, and High Representative of the European Union, Kaja Kallas. Back in the US, President Trump praising Walmart for lowering prices on some products and urging other retailers to follow suit, writing in a social media post that the move comes, quote, at my administration's request to celebrate our great country's 250th birthday. Joining us now is Bloomberg opinion columnist Andrea Felsted. Well, thanks to the quincentennial, Andrea, or the semi-quincentennial, we can now get cheaper ground beef and Coca-Cola and so on. But was Walmart planning on doing this anyway, given competition from the likes of Target and Aldi?
Absolutely. The US grocery market is becoming more competitive. You've got a new CEO at Kroger who actually used to be at Walmart, and he's talked about cutting thousands of prices. Amazon, Costco, they're very good competitors to Walmart. And you've also got Aldi, 2,700 stores in the US. We know in Britain that when the German discounters expand, then other sales suffer. So yes, this is more to do with the dynamics of the US grocery market.
Now, can Walmart do this? I mean, essentially all of these things are commodities, and you would think that most of these grocery retailers get them at the same price as each other. But who can make the better margins from that, distribution-wise and storage-wise and so on?
Probably Walmart. It's the biggest, so it's got more clout with suppliers. And the other thing is it has been growing well. So suppliers like to reserve their best special offers for those supermarkets that are doing best, and Walmart fits that bill.
Andrea, what else should we be on the lookout for when it comes to the retail space at the moment? How is the consumer faring? Are there any reads that we can take from anything that any of the retailers, luxury or otherwise, are telling us?
Well, US general retail actually did better than was expected, mainly because of the tax refunds. So that really eased the shock of higher gasoline prices. Will be interesting to see what the next retail sales and the next set of results say, whether people are a bit more hopeful now that gas prices have come down a little bit, but also now that the tax refunds have that has abated. When it comes to luxury, the US is still doing fine. You know, as long as the stock market can keep powering ahead, it tends to be correlated with spending on Cartier watches, Chanel handbags. If we get a market rout, if the expected correction in tech stocks that some are predicting materializes, that will be a whole different story.
All right, Andrea, thank you so much. Andrea Felsted of Bloomberg Opinion. Coming up, we're going to get you set up for your Tuesday trading session. This is Bloomberg.
is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative. Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York, and now a look at what's ahead today. First up, we get ADP employment data. That's out at 8:15 Eastern, followed by the U.S. trade balance, which comes out at 8:30 Eastern. Then more Fed speak. This time, Fed Vice Chair for Supervision, Michelle Bowman. She speaks at noon. And then $58 billion of 3-year Treasury notes on auction at 1 p.m. Plus, don't forget, SpaceX joining the NASDAQ 100 today. Here are some micro movers. So Micron Technology, along with many other memory chip stocks in particular, sliding after Samsung profits were up 19-fold, but still fails to impress. Then we have Crinetics Pharma up almost 100%, a real massive mover. Vertex Pharma agreeing to buy the company for $10 billion in cash. Vertex's largest deal ever. And then Pfizer up another 7%. The Wall Street Journal is reporting that banks, including JP Morgan, Bank of America, Wells Fargo, have held talks to acquire its debit network. This is your macro picture as we head into Tuesday.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This market is just beholden by tech and AI.
This feels like some of the circular narratives starting to break apart.
The market's going to settle down. We're going to continue to see these kind of mini pockets of rotation.
We should have a bull market longer term, but a little bit of volatility and some weakness here in the near term.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Tuesday, struggling to impress, Samsung's record quarterly profit failing to meet a very high bar as renewed tension through the Strait of Hormuz is testing the US-Iran deal. President Trump is touching down in Ankara for another contentious meeting. Scarlet Fu, the NATO summit, kicking off later on today.
It kicks off later on today, and of course, the world is very different than where it was a year ago. All of Europe, seemingly, the world is upset at President Trump for his interference in the World Cup and getting the U.S. player back into the game yesterday, which unfortunately the U.S. lost, but maybe for the rest of the world, all is right again.
There's been a problem with ethics and FIFA for decades and decades and decades and decades. Is anything new about any of this at all?
I guess not when it comes down to it.
Right? It's been a fantastic World Cup. It'd be such a shame if all we were talking about was President Trump, FIFA, and one guy got sent off a week or so ago.
Well said. Of course, the big issue for President Trump is how does he resolve the Ukraine-Russia war? Ukraine, of course, in a very different position this year compared with last year.
Let's talk about crude as well. Check out Brent and WTI. Brent crude this morning at 72, WTI around 69. There's a bump here. We're up by around about 1% on the session. Let's just call it that, a little bump after renewed tension through the Strait of Hormuz, which tells you a lot about where the oil market is now. Completely reversing, total change, massive reset. We're now talking about additional supply coming out of OPEC, Scarlet. Also, the Saudis cutting prices. That development in the last 24 hours.
Right, their Asian
really
benchmark
putting
price.
a ceiling on what's happening in the energy market.
There's a big question still of whether the Strait of Hormuz is actually open for regular business. And I like the way that one analyst was telling us on Bloomberg Intelligence Radio. He said increasingly the answer that seems to matter is yes, when the market, specifically the U.S. market, is open. Other times, maybe not so much, but as long as it's open when the U.S. market is open, then the oil market can kind of move on.
Brent crude at 72, WTI around 69. We'll catch up with Anne-Marie on the ground in Ankara in about 10 minutes' time to talk about the geopolitics of this moment. And coming up this hour, we'll catch up with Julian Emanuel of Evercore as memory stocks lead markets lower, Matt Bryson of Wedbush as Samsung's record earnings fall short, and Torsten Slock of Apollo as AI hype meets the ROI test. We begin this hour with stocks sliding as tech jitters return. Julian Emanuel of Evercore maintaining a 7750 S&P year-end price target, writing stocks have become more volatile as the wall of worry is large around AI adoption, spend regulation, profit sustainability, and capital raise. Julian joins us now for more. Julian, good morning.
Good morning.
We often say on this program you can learn something about the data and you can learn something from how the market responds to the data. This morning, numbers from Samsung, fantastic. Record quarterly profits, stock gets hammered. What can you learn from that this morning?
So what you can learn is the sentiment around the AI trade, in our view, is probably as cautious as it was in the first quarter of the year coming into the reporting season in April that actually caused the market to pivot higher. It really is this, every one of these aspects has now become a glass half empty type of view. But at the end of the day, what we think that this earnings season will show is that, like this report last night, there is incredible strength. And, you know, if positioning gets too one way, it gets taken off. But the longer term trend, the fact that these stocks and this theme is driving financial markets and the global economy higher is intact.
Julian, in the short to medium term, it does feel like there's been a turn, though. Off the back of the Micron numbers, 85% margin, Samsung, record quarterly profits, and yet the market is punishing some of those stories. And you're starting to see a rotation back to the big spenders, the hyperscalers. We've heard from multiple people in the last 24 hours. That's the trade they like now. Leading into the so-called Lag 7, not the Mag 7, the part of the market that has struggled, Meta, Microsoft, and leaning away from some of the chip makers. What do you make of that call?
I'm going to have to use that one.
It's not mine. It's not mine, for what it's worth.
I kind of like that. If you look at the last 2.5 years, particularly into earnings season, it's much more about positioning in terms of short-term reactions. And in that respect, look, we know where all the money and all the profit has been this last 2 or 3 months. Look at some of these names, how much they've run up, 200, 300% off of the March 30th low. This kind of digestion is completely normal, and frankly, we'd argue it's healthy, as is the rotation into some of these names, which are going to report stellar earnings, and oh, by the way, because they've been punished so much, are trading at pretty reasonable valuations.
On top of that, you have the headwind of higher oil prices now put to the side, right? Because oil prices have made a round trip back to where they were before the start of the Iran war. How positive of a talking point is that going to be for the companies and sectors outside of tech?
I think it's very underappreciated as a profound positive. We went back and we looked at, we started the war in March by doing this analysis of when oil price went above the 24-month moving average by 30 or 40%, that would be a market disruption event. The retreat back to $70 and below is almost one of the fastest spike unwinds on record, and it's absolutely unequivocally positive. The market averages 17% gains in the 12 months following that return to earth of the oil gusher.
It's a huge relief for the consumer, especially since we had seen pressure on the consumer, both high income as well as lower income. I'm curious to get your take on whether the change in oil makes the Fed minutes that we're going to get tomorrow almost obsolete, because we're not going to get a whole lot of information anyway from Kevin Warsh, because he's not one to be totally communicative. But does it matter as much what the Fed says now that oil prices have come down so much?
It matters less, but what will be interesting is how much of a read we get or don't get into that closed-door family fight that Chair Warsh keeps talking about. Look, but in our view, we don't think the Fed's going to move this year. And we don't think that the
You're
market...
on hold. Why?
Two things. Number one, the oil price can have very salutary disinflationary effects throughout the rest of the economy. Look, we saw the world's largest retailer make that announcement, whether it was prompted or not prompted, but that did happen, and that is real. And then the other aspect of it is the AI-driven inflation is something, if you listen to Chair Warsh, he said, we're going to give it time. We're going to, we don't want to make the mistake that was made in late 1999 by assessing the technological revolution as a bubble and raising rates when it wasn't necessary.
This kind of raises a good question, the disconnect. Deutsche Bank's written about it in the last 24 hours. There still is a bit of a disconnect here. We've had a reset in crude prices from triple digits down to the 60s on WTI. Brent in the low 70s, but we haven't reset the Fed hike debate. In fact, this market's still primed for Fed hikes. What's going on there, and why?
I think it is this sort of getting used to the discomfort of less transparency, less communication from the Fed.
Do you
it's
see
intentional.
Reduced communication equaling increased hawkishness? Is that the right way to look at this? I've heard pushback from some people to that.
In our mind, it isn't. But given the fact that initial press conference used, was really a primer on fighting inflation, the concept of price stability being, number one mandate, it's understandable. But again, in our view, the market's misreading the intention, and I liken it more to the Greenspan era, which a lot of people talked about, the concept of jawboning the markets into where you wanted them to go.
Or does the decreased communication lead to increased volatility? The VIX closing below 16 for a second straight day, but we might get more volatility in the rates market, which will then, of course, trickle into the equity market.
Well, there's a lot of things going on, of course, and I think, again, oil where it is certainly helps the rest of asset market volatility. It's also the summer. We're digesting, the market's rotating, and then the other part of this volatility is the fact that even though you're seeing more volatility in the tech sector, you're seeing less volatility elsewhere. In fact, you're seeing an entire cohort of stocks on a day-to-day basis move inversely to the S&P 500, the likes of which we haven't seen in 25 years.
Negative beta stocks. This has been a call for you. Walk us through it.
So basically what it means is it's a variety of industries. Energy, you can understand intuitively why it would move inversely to the S&P 500. Utilities, consumer staples, and strangely enough, insurance stocks. We scratch our heads as to why, but if you look at the last 6 months, on a day in and day out basis, this group of stocks, a number larger than you've seen in 25 years, move inversely to the S&P 500. Last Thursday, with NASDAQ selling off, you had all of those sectors that I mentioned. Insurance stocks were up 3%. Yesterday, the exact opposite happened, but what it tells you is, A, people are trying to diversify the fact that AI is everywhere now. It's in bonds, it's in gold, it's in emerging. I mean, is Korea an emerging market anymore? We don't know the answer.
By some measures.
By some measures, but it also tells you that the demand for stocks remains very healthy.
Feels like one trade in the market right now, which is what you're getting at, and people are looking for alternatives increasingly as well. Typically, we'd sit on the program like this and we'd say the market is not the economy is not the market, but the economy increasingly is firing on one engine, isn't it? Aren't they the same thing at the moment?
And that's the problem for investors, really, and that's why, again, these negative beta stocks are getting as much attention as they are, because you do want to, portfolio theory tells you you don't want to put all your eggs in one basket. Nevertheless, the market has gravitated, as has the economy, to putting most of its eggs in the AI basket. We think there's more room to run, to be clear, but again, a diversified portfolio is something most investors are hoping to achieve.
Julian, you're going to stick with us. Julian Emmanuel there of Evercore. Equity futures this morning down about 1/10 on the S&P 500. Underperformance on tech. The NASDAQ down by around 1% through much of this morning. Let's give you an update on stories worldwide. Let's get to your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, good morning, John. Samsung shares taking a hit after results failed to meet sky-high expectations. Korea's largest company saw a quarterly profit surge 19-fold and revenue more than double, but investors continue to remain on edge about the memory trade. A Qatari-owned natural gas ship was struck by a projectile as it left the Strait of Hormuz. Sources telling Bloomberg the vessel was hit in the early morning hours by either a drone or a missile. It's the first attack on a Qatari tanker since the US-Iran war began. In sports, the U.S. men's national team has officially been eliminated from the World Cup. The Americans fell 4-1 against Belgium in the round of 16. Elsewhere, Spain shut out Portugal in what was the final World Cup game for 41-year-old Cristiano Ronaldo. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. Thank you for the update. More from Vonnie a little bit later this hour. Up next on the program, ending the Russia-Ukraine war.
President Putin wants it to end. I will tell you that very strongly. A good call. And President Zelensky actually wants it to end now. And we're going to be going to NATO, and we're going to be talking about it. And I think we're going to get it. I think we're going to get it ended.
Up next, we'll catch up with Anne-Marie on the ground in Ankara for the NATO summit. That's next from New York City this morning. Good morning.
the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Record quarterly profit, a record. Check out the price action. Samsung down by 9% in South Korean trading. Beating consensus but falling short of expectations. There is a difference. This market was already very bulled up on this stock, and the analysts have been playing catch up all year with some of these names. Samsung down 9%. Check out the Kospi. The Kospi at the lows down by more than 8%. Then closing down about 5, still up on the year by something like 80. Just a ridiculous run. But I've said this a few times already this week, just in the last 24 hours. South Korea is setting the tone for US equity markets, whether it's Samsung this morning or SK Hynix later this week with that ADR listing and looking to put together $28 billion of capital. Equity futures this morning down about 1/10% on the S&P, down by 1 full percentage point on the Nasdaq this morning. Outperformance, relative outperformance on the small caps with that move in tech. We're up by 0.2 on the Russell. Want to finish on crude and then get to the geopolitics at the moment. A Qatari ship struck in the Strait of Hormuz. Renewed tension there. Not much of a bounce in Brent. 72 this morning, just short of 73. WTI up 0.9% at 69. Let's talk about the geopolitics at the moment. Over at the NATO summit, under surveillance this morning, ending the Russia-Ukraine war.
I think we're getting much closer than people realize, and President Putin wants it to end. I will tell you that very strongly. A good call. And President Zelensky actually wants it to end now. And we're going to be going to NATO, and we're going to be talking about it. And I think we're going to get it. I think we're going to get it ended. I think we're getting close to getting it done.
So here's the latest this morning. President Trump said to arrive in Turkey this morning for the NATO summit. The alliance facing renewed pressure to ramp up defense spending and end the war between Russia and Ukraine. Anne-Marie joins us now from Ankara for more. Good morning, Anne-Marie.
Good morning, Jonathan. Well, Mark Rutte, the NATO Secretary General, is calling this summit really the defense industrial revolution. It follows on from the historic summit last year. We did see the group commit to 5% of GDP in terms of their targets for defense. 3.5% of that would go to hardware, ammunition, and the remainder of that would go towards building the infrastructure that's needed, ports, bridges, roads, to make sure they're supporting that defense industrial base. And in the context of all of that, this is where the frustrations are. Of course, the Ukraine war is continuing. We have President Volodymyr Zelensky having a bilateral meeting with President Trump tomorrow, and he is for sure going to ask for more Patriot missiles, especially as we've seen some really acute, fresh attacks from Russia, where Zelensky is saying that they're unable to defend these ballistic missile strikes, and he is calling the next battle in the air. Something that's been brewing amongst a number of world leaders is potentially an idea of having a licensing agreement within Ukraine to have them produce Patriot missiles themselves. Potentially the group can move forward on that. And also in the context of Europe really rebuilding their defense industrial base is what's going on in Iran. That is the latest source of frustration between this White House and European allies. First, whether or not they were going to allow the U.S. to use their airspace like Spain, not allowing them, barring them, or even not allowing them to use some of their bases when it comes to the conflict in Iran, or even if Europe has the capability and the hardware to, say, send to the Gulf to help the Americans in reopening the Strait of Hormuz. And that'll be really top of the agenda today, given the fact that we have seen a fresh strike on a Qatari vessel. And then finally, Jonathan, all of this is taking place as the DoD is reviewing their defense posture, a 6-month review of how potentially they are going to view what they call NATO 3.0 right here in Ankara and wider in Europe.
Anne-Marie, let's unpack one piece of that, one very specific piece. The latest through the Strait of Hormuz, one strike, markets barely moving. I'm just wondering, and many other people are as well, how that story informs this story, the one that you'll experience for the next 24 hours.
I think given the fact that this was just one strike, potentially we're going to see the United States use it as to the Europeans as an example of what could happen if the Strait of Hormuz is not protected. At the same time, because it was only one, I think the Europeans would push back and say, well, the ceasefire is still holding, even though it's fragile, and at the same time, energy still is moving. But it is a fresh example of the fact of the matter is that the Strait of Hormuz, yes, it is open, but for some vessels, it is not entirely safe. And I think you're going to see this administration really implore the Europeans to also help protect that international waterway.
Anne-Marie, with the latest over at NATO. Anne-Marie, with full coverage for the next 24 hours or so. Julian Emmanuel of Evercore still with us around the table. Julian, the geopolitics. Ukraine was a market story 3-4 years ago. It's not anymore. The Middle East was a market story 3-4 months ago. It's not anymore. Have we been conditioned to ignore all of this? There's a question I asked to Mike Wilson of Morgan Stanley just yesterday. It feels that way. You conditioned just to ignore whatever happens in the next 24 hours.
Well, it goes back to the bigger picture of equity markets and investing is earnings driven. We know that. We're very fond of showing the S&P 500 versus earnings going back 30 years and the correlation. There are years where it doesn't work, but in general, it works very well. And there are times when, in terms of valuation, in terms of volatility, geopolitics matters. I mean, could we have been having this conversation, in the middle of March? I don't think so. But then again, oil was $110 a barrel at that point, and now we're at a price where we know that the economy can function perfectly well. And in fact, when you think of something like the rally that we've seen in small cap stocks, much more sensitive to macroeconomic inputs like the price of oil, and much more of price takers than price makers, it really tells you that geopolitics is on the back burner now. That's not to say that it won't. And look, we've got midterms coming up in November. We won't talk about those till that's a famous line there. But again, you will have bouts of volatility surrounding both politics and geopolitics. And as much as we love the summer, we remember what tends to happen in September and October anyway.
Geopolitics matter for earnings of defense companies. We've seen that in Europe. Does it matter for defense companies in the U.S.? Because increasingly you're seeing the European countries choose to buy local.
And given the dialogue and the difficulty of the relationship, it certainly makes sense. But again, remember that the president is, actively, I think he tweeted it last night, about building the defense budget here, and we know they're going to be buying from U.S. defense companies.
So going forward, how do you see the strong dollar affecting defense companies, their ability to sell to overseas customers?
Well, again, this goes back to the whole, the geopolitical relationship, and to your point, that people will probably have a tendency to buy local. Currency, it's one of these kind of odd times where currency has really been taken out of the equation for the meantime. Yes, it's rallied a little, but if you look back, it's essentially gone nowhere for a year at the broader dollar index level. And we think that the downtrend that started a year and a half ago is intact, but with the dollar, things don't tend to move in a straight line.
Do you want to finish on the banks? Record highs at the close yesterday. They'll be reporting this time next week. This time next week, that's all we'll be talking about, the financials. Why is that trade starting to work outside of Goldman, outside of Morgan Stanley, for the others?
Because, again, there's this understanding that people are, at the moment, taking chips off the table in AI. And, oh, by the way, the earnings power of financial companies is just absolutely record. And the valuations, look, the valuations in a lot of things are stretched by historical standards, but relatively, there's plenty of attractive opportunities.
Have you found that strange that the financials didn't keep pace with the tech story for much of this year? It was odd to me because they were making so much money from the tech story, from the IPOs, from the amount of money being raised.
But again, if you're an active manager looking for multi-week or two-month performance, you're going to have a tendency to go with where the momentum has been. And actually, if you read about some of the hedge fund performance in the last few days, you actually use shorts where the negative momentum has been. There's been a lot of churn in the markets within the context of this ongoing bull market.
Julian, it's good to see you. It's always great to catch up. Thank you, buddy. 77.50 on the S&P, 77.50 year-end on the S&P 500. The forecast from Julian Emanuel and the team over at Evercore. If you're just joining us, big story next week. You'll hear from Kevin Walsh as well, the chairman of the Federal Reserve. There'll be testimony in front of the House Financial Services Committee this time next week, so look out for that. All the financials reporting almost all at the same time as well. Next Tuesday morning, that's when earnings season really starts to pick up, Scarlett, and earnings have driven this market in a really material way in the last several months.
And the banks always kind of set the tone for the rest of the market, even though it's really tech that's the leaders behind this latest rally. It doesn't matter what banks say about where consumers are spending and how tech companies are issuing debt or issuing equity will matter a lot.
Futures this morning, negative by just 0.1% on the S&P. Tech very much in focus with the Nasdaq underperforming. Nasdaq 100 down this morning by 0.9%. Up next, we'll catch up with Matt Bryson of Wedbush as Samsung's record earnings fall well short of investor expectations. That stock is down by close to 9% over in South Korean trading. Plus, your high-risk cost some of your morning movers. SpaceX joining the Nasdaq 100 today. That stock is down by 1%. The analysts bulled up on that name. That conversation just around the corner.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Two days of gains on the S&P 500 running into this morning. We're down by about 1/10. We're down by 0.9 on the Nasdaq. And the epicenter of this, some earnings out of South Korea. We'll talk about Samsung in just a moment. Some outperformance, relatively speaking, on the Russell after a record quarter. Just a massive quarter for small caps in the last quarter, up by more than 20%, which is just unreal. Small caps this morning up by 1/10 or 2. Let's turn to the bond market. Twos have settled down around 4.1%. The ISM yesterday was okay, but softer than expected. In line with what we saw on Thursday for payrolls. Payrolls were okay, but softer than expected. Just removing the urgency around the rate hike debate. 414 this morning. Yields up across the curve, up by 3 on 2s, up by 2 on 10s, around 450. 30s through 5% earlier on this morning. 499 as we speak. Let's turn to commodities and finish on crude. Crude's an interesting one. So fresh strikes in the Middle East through the Strait of Hormuz on a Qatari ship. Qatari vessel hit by a projectile. And yet here we are, here's the move. At 1% on Brent, 72. WTI, 69. The backdrop for supply has completely changed. The story, the narrative on Wall Street. We've gone from not having enough, from a conversation about Scarlett potentially having too much, which is just a radical shift in the last month or so.
Yeah, I keep seeing the word glut show up now when people are talking about oil, especially after Saudi Arabia cut the benchmark price to its Asian customers. That's just another indication, especially after OPEC Plus decided to increase production as well. So the idea that we have an oil scarcity issue seems to be removed, at least for now.
Crude, 72.70 on Brent. WTI, 69.11 as we count you down to the up and about. 2 hours away, 3 hours away. Let's get you some morning movers. Some single names. Yahira has more. Hey, Yahira.
Hi, John. The bar was so high for Samsung, and it simply did not clear it. And that is putting pressure on the year's biggest AI winners, the memory names. And that is because the world's largest chip maker, memory chip maker, Samsung, over in South Korea, posted record quarterly profit, up 19-fold. But expectations have gotten so elevated that even a beat was not enough. It's just another sign that we've been seeing lately that investors are getting more selective when it comes to the AI trade, taking a harder look at valuations, as well as rising AI spending and whether future demand can justify all that investment. Turning to SpaceX, those shares are falling 0.8% in the pre-market, even after getting a wave of bullish calls from Wall Street analysts. Analysts over at Morgan Stanley, Goldman Sachs, and other banks that underwrote the IPO or were involved in it are now initiating coverage with buy ratings now that the post-IPO quiet period is over. And it comes just as the stock joins the NASDAQ 100 today, though the expected boost from passive fund flows has not been enough to lift the stock materially this morning. And we end on Fiserv, these shares rising nearly 7.6% in the pre-market on a Wall Street Journal report that some of the nation's biggest banks, the likes of JP Morgan, B of A, and Wells Fargo, have held preliminary discussions about buying one of the company's payment networks. Their interest stems from the fact that owning the network could help banks keep more of the fees that they earn from debit card transactions and those fees total billions of dollars each year across the industry. John?
Yahara, thank you. Appreciate the update. More from Yahara in the next hour. On our radar this morning, Samsung shares falling after the tech giant's results failed to meet sky-high expectations. Quarterly profits surging 19-fold. Revenue more than doubling, but investors remaining on edge over risks around the memory trade. Elsewhere, the US-Iran ceasefire facing a new test. Sources telling us here at Bloomberg, a Qatari-owned natural gas ship was struck by either a drone or missile as it exited the Strait of Hormuz. It's the first attack on a Qatari tanker since the US-Iran war began. And finally, the US World Cup run coming to an end, falling to Belgium 4-1 in the round of 16.
Yes, I asked for a review by FIFA. I'm the one that got them to do it. I'm a person that loves sports and was a good athlete, and I understand sports really well.
The Americans failing to get a boost from star striker Balogun, who was allowed to play after an intervention from President Donald Trump. The Belgian team saying the controversy added extra motivation, Scarlett, for the victory.
I mean, you're a football fan. All the best football players get handed red cards at some point or another in their career in big games. And whether it's justified or not, everyone just kind of lives with it. And it's part of the game, isn't it?
Typically, yes, until this. FIFA has had ethical problems for decades and decades and decades. And you and I were talking about that about 30 minutes ago. So this is unsurprising. What's sad for me is this is all anyone's talking about now with regards to this World Cup.
Right.
And
after so many good matches.
It would be a stain on the legacy of this World Cup in this country if that's all we talk about when it's been so good so far. Football, for me, my opinion, has been a massive success despite the governing body, not because of it. This World Cup has been a massive success despite the governing body, not because of it. And I hope that continues to be the case over the 2 weeks that's left of this.
I mean, a lot of American fans, sports fans, really warmed up to soccer because of the World Cup. And the way that this intervention happened and Balogun was allowed to play, I think turned them off a little bit. They went with it, but it did turn them off a bit.
You get any red cards in the knockout stages now? I'm sure a lot of countries will be picking up the phone, heads of state, and trying to work out the same deal.
Yep.
The same deal that Team USA got. Let's turn back to tech. Samsung's CapEx plans pouring some cold water on blockbuster earnings. Mandeep Singh of Bloomberg Intelligence joins us now for more. Mandeep, did we learn something about the company, or have we just learned something about market positioning?
It's more market positioning, a very crowded trade, as you can imagine, with memory names, you know. And look, if agentic AI is the next big driver, then it's very unlikely that, you know, you are going to see a slowdown in memory demand anytime soon. And to my mind, you know, pricing growth is something that is carried forward for all of these companies in terms of, you know, earnings growth. So all the hyperscalers right now have guided to 2027 CapEx going up. They're trying to lock in contracts, you know, to basically lock the memory prices. And it's very unlikely that fundamentals will change anytime soon. This is more a function of, you know, memory being a crowded trade, and things have gone parabolic recently. So you're just seeing a knee-jerk reaction.
Let's get to the fundamental question as well, Mandeep. Is there an argument to sit here and say after Micron, 85, 86% margins, after Samsung, record quarterly profit, that this is as good as it gets?
Well, you could make the argument that, you know, pricing growth may decelerate from here, but it's still, pricing is still growing quarter over quarter. So from that perspective, these companies are growing, you know, triple-digit earnings, and that's a function of pricing. And I just don't see that changing anytime soon because new supply isn't getting added, at least for the next couple of years. Yes, they're raising CapEx, so you could say 2028 or 2029 supply may increase, but as will agentic AI, and that's where agentic AI is the real trend that's going to carry forward in terms of memory demand.
Mandeep, it's good to catch up, buddy. As always, Mandeep Singh there of Bloomberg Intelligence on the chips trade. Matt Bryson of Wedbush Securities predicting new headwinds for memory, writing every quarter at this point is expected to result in a beat on continuing improvement in market fundamentals. Matt joins us now for more. Matt, welcome to the show. Is growth sufficient if growth begins to decelerate for some of these names from here?
That's a good question. I think it's less of a concern because we're seeing these long-term agreements in place. So previously, whenever growth began to decelerate, that was telling us that supply is coming online, the shortages are going to end, pricing is going to come down, and earnings power is going to come down. This time around, I think pricing is decelerating because it just can't get higher, but also we're seeing these long-term agreements get put into place that ensure this cash flow visibility that these companies have never had before. So I also think that needs to be factored into valuations.
Matt, you follow the company. I follow the price, and I'm looking at how the market responds to the earnings that we've had, and it's beginning to push back on some of these stories. And Samsung's the latest. Really great fundamental story there. Fantastic earnings. The market's selling it. What's the signal as an analyst that you take from that?
So with Samsung, they didn't beat the expectation, right? You look at Micron. Micron clearly beat the expectation. They changed the narrative, talking about SCAs. Micron responded really strongly to earnings. With Samsung, the story's always a bit more opaque, right? We get their operating profit, their sales, but it's a bit hard to tell how much came from memory, how much came from handsets. And so I think that should be understood, and makes it a little bit harder to parse exactly what this is telling us. But also, you know, I think with Samsung, it's expectations. So I don't think this tells you that the memory trade's over. I think it tells you that expectations for Samsung were high, and for some reason they didn't quite meet them.
Matt, one thing we need to stress is that these were a preliminary set of results. Samsung is going to be reporting more detailed results for the second quarter in late July. We know that Samsung booked a provision for special bonuses payable to employees. When it comes out with the full set of results at the end of this month, do you expect to learn anything more about the fundamental part of the business that matters to investors as opposed to bonuses for employees?
Oh, certainly. I mean, we're going to know what pricing did. We're going to know what bits did. That's what people care about in memory, right? We want pricing to go up. We want to know that there's not more bits that are coming on in the near term, because that continues this environment of scarcity. So it continues to support price increases, and they'll also tell us more about, or at least a little bit more about, future plans. Because at the end of the day, memory is supply driven. And so right now, there's no real ability to bring on supply. And so as Mandeep was telling us earlier, with all this demand from agentic AI, the memory vendors just can't meet demand. And as long as that's the case, their results are going to get better. And I don't see that changing till early 28 at the earliest.
And Matt, because of that insatiable demand, South Korea has directed both Samsung Electronics and SK Hynix to build 2 chip-making plants in the country for about 800 trillion won combined to expand capacity. When does that capacity start to matter to investors?
I think people start thinking about it more late 27 timeframe. That's when we hypothetically start to see maybe the first wafer outs. I think with 28, it's difficult to say whether there's going to be enough capacity, not enough capacity. With 29 and 30, you're getting a whole lot more capacity now. Again, having said that, it's really hard to understand exactly how much demand agentic AI is going to require. We also have all these new innovations like physical AI, so robots, IoT. It's certainly, my crystal ball doesn't extend that far. And I think there are a lot of questions around that. Having said that, that is, we're talking 28 and beyond at this point.
Just moments ago, Matt, a story dropped from Reuters about DeepSeek developing its own AI chip. What is the alternative right now and potentially in the future that's available in China that might change this story?
From a memory perspective, I don't think there's a ton. Certainly there are Chinese memory players. Those Chinese memory players will bring on more capacity. At the same time, they have the same problems with DRAM in particular that they have with high-end logic, which is they don't have access to ASML EUV. That's something that it's been suggested probably they don't get access to, or they can't produce domestically till 2030 and beyond. And so to some extent, they're limited in terms of addressing these applications. So it's not something that keeps me up at night.
Matt, appreciate the reaction. Thank you, sir. Matt Bryson there of Wedbush on the latest for Samsung and the latest out of China as well. Let's give you an update on news worldwide this morning with your Bloomberg Brief. Vonnie Quinn standing by with more. Hey, Vonnie.
Hey, John, thank you. Less than 4 weeks after its trading debut, Elon Musk's SpaceX is joining the Nasdaq 100. At least 6 brokers from banks that helped underwrite the IPO have started coverage with bioequivalent ratings following the end of the traditional quiet period for analysts. Maine Democrat Graham Plattner facing increasing pressure to end his U.S. Senate bid. Plattner facing a number of scandals, including a new allegation of sexual assault, which he denies. Democratic leader Chuck Schumer and Senator Kirsten Gillibrand both calling for him to step aside. President Donald Trump says he expects to meet with his Chinese counterpart Xi Jinping in September. Trump cited the possible visit as a reason for building a new White House ballroom.
President Xi is coming here toward the end of September, 24th, I believe. And what we need is a big ballroom where we could hold thousands of people to see him. Everyone wants to see him.
The visit would coincide with the UN General Assembly in New York that month. That's your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. I'm next on the program testing the AI revolution.
We're still early in this AI supercycle.
It's just too soon. The effects are not grand enough.
There will be failures. There will be things that will not work out.
Torsten Stock of Apollo joins us next, live from New York City. You're watching Bloomberg TV.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Check out semis this morning. Chip stocks trading lower, including Nvidia, negative by 1.3%. Broadcom much lower, others too. This from Reuters just moments ago. The Chinese startup DeepSeek is developing its own AI chip, according to 3 people familiar with the Meta. That's the latest reporting this morning. That's the latest price action. Adding to this move lower in the equity market, the Nasdaq underperforming. On the S&P, the Nasdaq, the Russell right now, the scores look like this. We're down 1% on the Nasdaq 100. The story out of South Korea underwhelming. Record profits from Samsung insufficient to meet very, very high expectations. We're down across tech worldwide. The Nasdaq down by almost 1%. Under surveillance this morning, testing the AI revolution.
We're still early in this AI supercycle.
We can't underestimate the amount of investment that's taking place.
People feel like any exposure they can get to the AI trade still is going to work.
It's just too soon. The effects are not grand enough.
There will be failures. There will be things that will not work out.
So here's the latest this morning. Apollo noting a lack of profit margin gains due to AI outside of the tech sector. Torsten Slock of Apollo writing, there's a mismatch between current earnings expectations and the actual time firms need to generate ROI on AI investments, and it could have significant implications for many AI company valuations. Torsten joins us now for more. Torsten, good morning. Good to see you.
Morning.
Let's build on that quote. What are you tracking right now? What are you seeing?
Well, what's really, really important in this discussion is that, of course, profit margins have been phenomenal in the Magnificent Seven, but what really is critical is that now we need to see profit margins go up outside the Magnificent Seven. In other words, what's going on with S&P 493 becomes very, very critical, because at this point, profit margins in S&P 493 have just not gone up. So therefore, one very important conclusion and one very important place to look for signs of AI beginning to have an impact is to look at what's going on in earnings growth, profit margins, and overall the health of the S&P 493 as a result of the technological improvements we're seeing at the moment.
Meta also making a call potentially as well that the ROI on selling excess capacity might be higher than using it internally. Does that reinforce some of this message for you?
Well, the issue, of course, is that there is a huge, of course, build-out of capacity and compute, and there will literally be unlimited demand for compute. The question is just at what price, and who will the buyers be, and where is that capacity coming from? And the big picture still remains that AI is a very revolutionary technology. Everyone agrees on that. But the key question now is, how long time is it going to take before this shows up, especially in profit margins outside the Magnificent Seven? Because if the S&P 493, let's say that it takes several years before profit margins begin to go up, the question is whether the implicit earnings assumptions in the Magnificent Seven are too high or too fast relative to what's actually going to happen. So that mismatch between, are we going to see profit margins, earnings growth go up outside the Magnificent Seven? Is that going to come slower? Is it going to come faster? Is absolutely critical for a conversation about what should the value be of the Magnificent Seven today.
In exactly 1 week's time, as John was reminding us, the big banks begin reporting earnings, and we have the kickoff of the earnings season. There's going to be a lot of discussion on AI and what it means for jobs in the banking sector. How do you parse through what the companies say to really understand what it means in terms of whether they're going to cut jobs or not?
What's really challenging about this is to talk about AI exposure, because there's a lot of different studies already that look at what is the exposure, meaning AI exposure in different occupations. These two studies fall into different buckets of one saying, what is the actual exposure in terms of actual AI usage? So this is trying to measure, say, what are people using Claude for, what tasks, and what requests did they get, and therefore measuring and quantifying the actual usage of AI. Another bucket is studies that look at, well, let's theoretically assume what is the economist exposure to AI, and then try to match that with occupations and figure out what is employment in those sectors. And those studies, of course, are what you call more theoretical. So the challenge is that there is not an agreement about what does AI exposure mean. So that's raising all these questions around, well, what does it even mean when we say that a certain part of the economy is exposed to AI? Because there's just not at this point in the studies that look at this a really good way to quantify what AI exposure means. And that means also for the financials, that means for legal services, that means for consultants, that we're having some challenges figuring out how do we even quantify what is the impact of AI? We all know that it's going to make a big difference, but the speed with which this difference comes along, how many people is impacting today, next month, next year, it becomes absolutely critical when you again think about that company valuations today are the net present value of the cash flows that these companies get in the future.
We're also hearing a changing story, a changing narrative from AI companies themselves. There's a Wall Street Journal story about how the narrative has shifted, at least from OpenAI and Anthropic, from these doomsday scenarios to a future where workers actually keep their jobs, but just do it better thanks to AI. What does that tell you?
Yeah, and RAMP had a really interesting study over the last week that they put out, where they basically looked at what has been the cost and the spending on AI among different companies, And what they did, that they looked at, well, what was the job growth in those companies that had more spending on AI? And they did indeed find that more spending on AI, it actually resulted in more job growth. So one way of looking at this is one dimension of saying what's the actual spending relative to the more theoretical matching of occupations with what's been going on with job growth in those sectors that also have been spending on AI.
Torsten, to your point, to put this all together, this is a potential risk to valuations, which is an obvious market risk. Is it a macro risk as well? In Sintra, Portugal, I believe you were there. Big conversation about this. We've got a story in the market right now that feels like one trade, and increasingly a story in the economy that feels like we're firing on one engine. How much is it one and the other?
Absolutely. It's actually three different things. First of all, it's of course everywhere in markets because the concentration to the AI story is so strong. Think about it. For the last 15 years, the main lesson in finance is factor investing. And now we're staring at one factor that's driving all financial markets in equities. The concentration is very high in AI. You also look at IG issuance, high yield issuance, even venture capital. The concentration in AI is very, very strong. So in markets, let's just agree the AI exposure or the AI factor plays a very, very critical role at the moment. When it comes to the economy, also, if you look at actual spending on data centers and energy, if you add up what that contributes to GDP this year, it's roughly about 0.7% out of a 2% GDP growth this year. If you add about 0.3 coming from the wealth effect because of high stock prices, that's also very important. And finally, let's also not forget that the hyperscalers are issuing so much IG corporate debt that this is crowding out demand for US treasuries. Because if you're a bond manager in investment grade credit, you can either buy sovereigns, US treasuries, you can buy financials, that's what you've been doing for a long time, but now you can also buy 700 billion in hyperscalers. So it's not only that it has an impact on markets overall and has an impact on GDP, but it actually also has an impact on demand for treasuries. So yes, the conversation and the panel I was on in Sintra was exactly around this risk that AI is indeed now a more and more prominent factor, basically not only in the economy, but also in financial markets.
What's the consensus on how to manage that risk?
Well, the challenge is, page 1 in your finance textbook, if there's one factor you're trying to avoid is to try to pick another factor. But the question is, what is that other factor? Momentum? Is it growth? Is it value? Value has some opportunities because it's not growth. So that's why ways of looking at parts of the private markets, public markets, that is value investing is indeed one place to hide. But it has to be value investing that's indeed protecting you against the downside risks that come along if AI does not deliver in the end.
Torsten Slok of Apollo. Torsten, fantastic note. Great read in the last week or so. Appreciate it. Torsten Slok of Apollo there on AI and tech. On that final note, the competition for capital. This was something that Earl Davis of BMO talked about in this program just yesterday, that the competition for capital would lead to higher yields in treasuries. The treasuries would suffer because of that, and we'd start to see a 5 handle on 10s. Not now, but a story maybe for 2027. That's the call from Earl Davis and the team over at BMO. 10s this morning around 450, 30s back through 5%. Your 30-year this morning at 5% and up a single basis point on the session. Coming up next on the program, we'll catch up with Stuart Kaiser of Citi, John Lieber of Eurasia Group, Michelle Mayer of the MasterCard Institute, and the Swedish Prime Minister joins us as well. From New York City, the second hour of Bloomberg Surveillance up next.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm
Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
The economy shifted from a patch of slowing to a patch of what we think of as reacceleration.
The economy's doing well and inflation's a little bit sticky.
We're in an environment where interest rates are largely neutral. The market is still pricing a rate hike.
That hawkish narrative was too much narrative, not enough backed by the data.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now. The price action, your scores, looks like this. We're down by 0.2% on the S&P, down by 1 full percentage point on the Nasdaq. Two headwinds for the chip sector this morning. Samsung, record quarterly profits falling short of very high expectations. That's hit one. Hit two. Story out of Reuters this morning suggesting that DeepSeek is looking to develop its own AI chips. We can talk about that in just a moment. Let's turn to the bond market as well. 2s, 10s, and 30s going into FOMC minutes in the next 24 hours or so. 2s around 414. Yields higher this morning by 3 basis points at the front end of the curve. 10s around 450. 30s around 5, with crude pushing just a little bit higher following some fresh strikes through the Strait of Hormuz. A Qatari ship getting hit. We can talk about that in just a moment. That might set the tone for discussions over in Ankara. Brent crude this morning up by 1.4%. Scarlet 69 on WTI.
With Brent crude down and with WTI back below $70 a barrel, it feels like oil is no longer the catalyst for the Treasury market. Yes, yields are higher, but yields are higher for other reasons, not just because of crude oil.
Air Force One, a big focus in Ankara right now, touching down in Ankara, Turkey. The president about to get off the plane and take a step towards what could be another contentious NATO summit, set to push them to spend more, as he often does, but also in addition to that, off the back of fresh tension in the Strait of Hormuz and across the Middle East, a reluctance from some NATO members to support that US mission in the last few months could set the tone for a pretty contentious series of meetings over the next 2 days or so. Anne-Marie on the ground in Turkey is going to join us in about 10 minutes' time. So that's the story this morning. In the market, it's about chips. In geopolitics, it's about the NATO summit. Coming up this hour, we'll catch up with Stuart Kaiser of Citi, with stocks failing to gain some momentum. Michelle Mayer of MasterCard as President Trump urges retailers to roll back prices, and the Prime Minister of Sweden with NATO's defense spending very much under the spotlight. We begin this out with stocks edging lower as Samsung's record profit fails to add fuel to the AI trade. Stuart Kaiser of Citi writing, "We believe the capex spending trajectory of Mag 7 companies is more important for the broader market than valuation." Stu joins us now for more. Stu, good morning.
Good morning. How are you?
Is that story, that narrative about to change? Are you witnessing a bit of a shift?
On the CapEx side,
Not to me. I mean, I think that is the single most important, part of the market. For 18 to 24 months, it was Mag 7 stock performance that was driving the market. Now it's Mag 7 CapEx spending intentions and what that does to earnings across kind of the broader equity complex. You're up almost 25% in terms of NASDAQ forward EPS this year. S&P up kind of 15% or so as well. And that is just basically CapEx translating through to earnings. Valuation's expensive. It's been expensive. It's going to remain expensive most likely, but it's actually down year to date. So, take your wins where you can get them.
There's some headwinds to the chip trade that are emerging. There are some calls to shift away from the big chip winners and go back towards maybe some of the big spenders, the hyperscalers. You've heard about that trade. Mike Wilson of Morgan Stanley talked a lot about it in the last 24 hours. Where do you stand on it?
I think the AI trade has just become a lot more fluid than it previously was. And I think you have investors sort of hopscotching back and forth between these themes, from power gen to DRAM, back to analog chips, back to Mag 7. And I think, kind of running ahead into earnings here, people probably want some exposure to Mag 7 stocks. I think that happened, prior to the last quarter as well. They've been a relative laggard. I put that in quotes because it's almost, sort of comical to say. But, it wouldn't surprise me if they catch a bid for a short period of time. But in the end, the question is how much are they spending, who are they spending it with, and are those companies actually able to generate the margin expectations that are kind of embedded in the valuation outlook?
So it seems like the entire world's focus last night and this morning is really on Samsung and what it told us. It published preliminary results. What did you gather from this set of results, this set of incomplete results?
Look, I think almost every headline we've gotten for the last month or two tells you that these bottlenecks are really, really tight. They exist across the complex, and they're not kind of going away. Even the DeepSeek news overnight, why are they developing their own chip? Part of it's to make money, but part of it's they need the chips. So I don't know. I know we react a lot to these headlines here and there, but I think big picture, what we've heard across the board is just there is a significant bottleneck across various parts of the supply chain and input infrastructure into AI, and it's not going away anytime soon, and we think you need to have exposure to that.
So the bottleneck is leading companies to raise prices. We heard that from Apple, for instance, and it did so pretty reluctantly. Is that price increase a one-time thing, or is this going to be a cyclical thing?
I think it probably has some legs to it. Our AI folks have you at about $1 trillion of sort of U.S. CapEx spending on AI next year, and $1.5 trillion by 2030. So I think if you're adding $500 billion, into spending on CapEx, the bottlenecks aren't going away, and for that reason, you are going to have, price impact in spots. I mean, you have somewhere like Apple where it's very direct, but I don't know, you have a random company that has an analog chip in, I don't know, like the faucet in the bathroom that you wave your hand in front of. So, yeah, I do think you're going to have, pricing pressure. And that's really how this AI trade has changed, or the perception of it has changed over the last 3 to 6 months. 6 months ago this is going to cause massive job loss in a very short period of time and be very deflationary. I think we've seen token prices have gone up, the job losses or the potential job losses have slowed, and that means this may be a longer cycle, and it may be inflationary rather than deflationary in the near term.
So your headline, ultimately, CapEx more important than valuations. Does market performance, though, shape CapEx intentions? Do you see that emerging at the single name level?
It could, but I think a lot of these companies view this as existential. But I think the big question, and to your point, is if I have 3 or 4 models and one of them has fallen, let's say, very far behind, does that company kind of throw in the towel and stop their CapEx spending just of the view that they can't keep up? But look, I think we're a way away from that because, again, this is an existential issue for these companies. They're going to keep spending until they can't anymore.
It's easy to say that when you're trading at record highs. It's easy to sit there and say, I believe right now the bigger risk is underinvesting, not overinvesting. Mm-hmm. Easy to say that a couple of summers ago. Talking about Alphabet, of course, a number of summers ago. It's harder to say that when your stock's in a bear market, in the way that Microsoft and Meta have been trading. And Meta, the story, I think, over the last week, and that's what I'm focused on now. The story shifted from constraints, bottlenecks to excess. I keep hearing this word excess. SpaceX, they've got excess capacity to sell to become a neo-cloud player. The likely story with Meta as well, based on our reporting, is they might be moving in the same direction too. Does that shift things just on the margin?
I mean, look, they've mentioned that. I think we'll see. I mean, a couple summers ago also, we thought Google was behind in the AI race, very quickly, and then in 2 months they introduced a new model, and then Gemini sort of top of the pile at that point. So because of that, I would not expect to see them pulling back. And Meta's business has 2 aspects of it. There's AI for you and I. We can jam these ads, and then there's there's the generative piece of it that's going on in the background that maybe we're not quite as aware of and we don't see the results of. So I take your point. I think we're too early for that at this point, and highly likely even our very bullish CapEx estimates are probably underestimated to some extent. I mean, if you look at last year, the market basically underestimated CapEx spend by those companies by nearly 40%. They underestimated revs by 3 to 5%. Heath Terry on our side has said that ultimately needs to reverse. We need to stop underestimating CapEx and start underestimating revenue. We're not there, but again, I think these companies are still pretty much all in the idea that the revenues and the margins are there. They need to do the spending now. And I would argue that these models have gotten so much better, so much faster, that is the clearest evidence that they're going to keep spending. And you could argue that's the clearest evidence that the CapEx is working, that the models are getting that fast, that quick. So I don't think that they're seeing evidence that would force them to pull back yet.
I've got tons of time for Heath, but play it forward with me. Just a bit of scenario analysis. I'm always wondering what would happen if this headline crossed the Bloomberg terminal. What would happen if you did get a company that came out, a big player, the likes of Meta, that said, you know what, we're spending too much money, we're going to cut back. What would that look like on that day and the preceding few weeks after that?
Look, I think it would depend on the messaging, first off. If it was, look, we front-loaded a massive amount of spending to put this in place, and now over the next 2 to 5 years, we expect CapEx to glide down to X% of our free cash flow, that would probably be taken positive. I think if the spin on it was we're pulling back because we don't necessarily see the profitability, that would probably be, honestly, pretty good for that company because of the free cash flow concerns in those companies. It might be bad for part of the S&P 493, as it were, because, look, again, like our AI basket when we first started 24 months ago was 29 stocks. It's now 129, and it's the equivalent of 60% of S&P market cap. I mean, this is not a one-stock issue. This is a global industrial production, construction, and infrastructure build-out that's going on. So look, if a couple of these companies were to cut CapEx, yes, that it's an issue, it's a headwind, but I don't think it's a market killer. I think you'll see parts of the market outperform on that and parts of the market underperform on that, and hopefully that nets out to at least flat. We'll have to see.
So broaden that out a little bit and tell us where things stand as we head into earnings season, which begin next week. How do you want to be positioned when it comes to tech, the Qs, for instance, and for everything else, for the more cyclical parts of the economy, like financials, like materials?
Yeah, our view on that, Scarlett, hasn't changed all that much. I mean, coming out of March, we like being long Qs. We like power generation. That's our preferred bottleneck. And outside of the AI trade, and clients will do anything for a good trade idea that's not AI related, materials and banks are the two areas in the U.S. that we like. So look, I think the bank's set up pretty well. You've had a really nice IPO pipeline. You have very good kind of trading environment as well. CCAR was pretty friendly. So I think outside of AI, we would go with banks. Inside of AI, I think it's power generation. We believe that's the highest Sharpe ratio kind of bottleneck, to have exposure to. So those would probably be the two areas we're most focused on right now.
Where do you see the most room for negative surprise this coming earnings season?
It's a great question. After last earnings season, I think negative surprise would be a pretty unique thing. Look, obviously the bar is extremely high on all of these sort of tech stocks and AI stocks. So the bar is going to be high there, particularly in your outperformers. I think the bar is probably higher for a Google than it is for a Meta, for instance. But look, I think the question I think here is looking at the CapEx spending intentions of the Mag 7 is hugely important. And then for those other companies, it's really margin. I mean, you look at NVIDIA, Micron, I mean, the margins are 75, 85%. So that's a pretty high bar as well. High bars everywhere, I think, when the market's at an all-time high.
We just went through a positive earnings shock in the last month or so, trading within 1% of record highs on the S&P as at a close yesterday. Stuart, it's good to see you, buddy, as always. Stuart Kaiser there of Citi. Futures pulling back this morning by a few tenths of 1% on the S&P, underperformance on the NASDAQ, making new lows. We're down by more than 1% as things stand. Let's give you an update on news worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. DeepSeek rearing its head in the AI race. Reuters reporting the Chinese startup is developing its own AI chip in an effort to reduce its reliance on NVIDIA. If successful in its efforts, DeepSeek's semiconductor development could mark a major strategic shift for the company. Samsung shares taking a hit after results failed to meet sky-high expectations. Korea's largest company saw quarterly profits surge 19-fold and saw revenue more than double, but investors continue to remain on edge about the memory trade. Walmart is slashing prices on groceries and household essentials to help consumers save money. President Donald Trump praising the move, saying Walmart is stepping up in a bold way and claiming the cuts came at his administration's request. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thank you for the update. More from Vonnie in the next 30 minutes or so. Next on the program, the president's war-ending pledge for Iran.
We're close to maybe making a deal. I don't know. We'll make either. Look, we're going to win one way or the other. We're either going to make a deal or we're going to finish the job, okay? And it won't be tough to finish the job. I'd rather make a deal.
Up next, John Lieber of Eurasia Group, live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Some of the chip players struggling in the pre-market. Check it out. Here's a picture of things right now. Nvidia down by more than 2%. We're seeing this across the board outside of these 3 names as well. Started with Samsung, quarterly numbers, record profits, insufficient to stimulate a rally there. That name was down in South Korea and traded by close to 9%. Then a story dropped from Reuters indicating that DeepSeek, according to their reporting, DeepSeek out of China was looking at alternative chips for AI. That's weighing on these names once again. That picture there, dragging down the index as well on the NASDAQ. Check it out, switch out the board. The S&P, the NASDAQ, the Russell. Looks like this morning. The NASDAQ 100 down by 1 full percentage point. The S&P down by 0.2. You can tell just based on that, this morning is a tech trade. I want to turn to the bond market briefly and then have a look at crude. 2s, 10s and 30s. The yield curve shaping up as follows. Yields up at the front end by 3, up on 10s by 2. Let's call it 450 on 10s and 5% on 30s. Crude has helped out. Just put a lid on this story around rate hikes, just for now at least, together with the softer data we've seen in America, softer than expected on jobs, on ISM in the last 24 hours. But crude bouncing back this morning by 1 full percentage point on Brent, close to 73, WTI close to 69. One Qatari vessel struck in the Strait of Hormuz on the exit out of the strait. We can talk about that in just a moment. Under surveillance this morning, geopolitics in focus, the president's war-ending pledge for Iran.
Our great Navy, which did the greatest blockade anyone's ever seen, not one ship got through in 2 months. And we then freed up the blockade because we're close to maybe making a deal. I don't know. We'll make either. Look, we're going to win one way or the other. We're either going to make a deal or we're going to finish the job, okay? And it won't be tough to finish the job. I'd rather make a deal.
So here's the latest. Iran reportedly firing at least 2 missiles at commercial ships transiting the Strait of Hormuz. A fragile ceasefire between the US and Iran facing a new test as President Donald Trump lands in Ankara for the NATO summit. Anne-Marie has the latest. Hey, Anne-Marie.
Hey, Jonathan, well, as the president touches down in Turkey, he's greeted by the Turkish president. Of course, what is going on in terms of the conflict in Iran will be top of the agenda, especially given the fact that, as you've mentioned, we had this strike on a Qatari LNG ship. And this is really important for a number of reasons. One, it shows that the ceasefire right now is quite fragile. Second, it shows that even if you are a mediator, like Qatar, like Doha, and you are trying to forge ahead with the MOU during these peace talks to get to a more sustainable peace, that you potentially are not safe, even though you are playing this role as a mediator. And finally, Jonathan, I think this is something that the United States is going to make sure that they highlight, is that when it comes to this vessel that was attacked, it was carrying liquefied natural gas. Of course, we've seen Europe have to rely on a partner like Qatar when it comes to LNG after Russia's invasion of Ukraine. So you have the European economy very vulnerable to vessels like this making its way through the Strait of Hormuz, but to this White House have been unwilling or unable to provide help when it comes to reopening the Strait of Hormuz.
Anne-Marie, it's not a one-off. We've seen a series of things like this in the last several weeks. What's in it for Iran to do this right now on the eve of this NATO summit?
Well, I think two things. I mean, Iran, firstly, is getting what they want out of this MOU. They even had the Treasury Department give waivers, lift some of these OFAC sanctions, so they are able to sell on the open market at market pricing their product. Secondly, at the same time, they can keep everyone on edge about what is going on. They could potentially keep a little bit of geopolitical premium into the energy market, which many analysts are saying is going to, after this crisis, move to a glut, and also keep insurance rates very high. So for Iran, this is really a win-win situation when the IRGC goes after ships here and there. The ceasefire remains, it still remains incredibly fragile, but there's still this geopolitical risk premium in the market. And for the regime, that is actually quite helpful, even though it is incredibly destructive for the global economy.
Anne-Marie, with the latest on the ground in Ankara ahead of this NATO summit, the president touching down just moments ago. John Lieber of Eurasia Group joins us now to extend the conversation. John, seeing live pictures of the president arriving in Turkey ahead of this NATO summit, many people expecting another contentious get-together between allies. What are you expecting from this summit over the next few days?
Yeah, so last year the theme was, of course, that the other NATO nations pledged to get to 5% of GDP in defense spending, and that was framed as a win for President Trump. And since that time, you've had nothing but cracks in the alliance showing up. So you've got the U.S. threatening Greenland repeatedly, and most European leaders believe that Trump still wants to go after Greenland, make it part of the United States. And then you've got Trump's deep grievance over the fact that European countries were not there to help him, in his view, during the Iran war. So, the implementation of this 5% is going to be a big theme at this summit. These are cash-strapped nations, the United Kingdom, France. They can't really afford to get to 5% of GDP because they've already way too indebted and have overextended themselves. So how you get there in this atmosphere of fiscal challenges in the European core and what the bad blood and all the fractures have been over the last year, I think are going to be the two big themes coming out of this NATO summit, while the U.S. is also openly talking about repositioning troops out of Europe, something that Congress doesn't want. So there's a lot going on. I doubt much gets done, but there's that's going to be the overarching theme.
John, how have the Europeans responded to this?
To the threat of Trump? I mean, I think that what they're doing, one thing they're doing is looking to diversify away from American defense contractors, which, Trump, you can give him some credit for being effective in forcing them to commit to this 5% target, which may or may not be hit. We're not going to know for 10 years. But at the same time, he's also spooked the European allies so much that they're now looking to other middle powers to form alliances of defense spending in order to help them get there, because they don't want to rely on the U.S. anymore. And I think that's going to be a big theme of the European response over the next several years.
Yeah, listening to what Mark Carney had warned in Davos. So, John, you mentioned in your note that the U.S.'s approach to NATO has really evolved. At one point, it was this threat to just withdraw from the group entirely. It has now evolved into something more nuanced. What has it moved towards?
Yeah, it's moved towards bullying and trying to get NATO to move in the U.S.'s direction. We think if you look fundamentally at the president's constraints, he can't and probably won't withdraw from NATO. That would be too explosive with his allies in Congress. Now, of course, Trump has done lots of things to rupture those relationships, so you can never say never here. However, it does seem very unlikely that the U.S. Would act to fully withdraw from NATO or truly snub its Article 5 commitments should they be called upon. So what does that mean? If the U.S. has to walk away from these threats to leave NATO, it means that they just are left trying to kind of coerce their NATO allies into getting what they want, in this case, more self-reliance for defense spending in Europe.
John, this is a president that relies on personal relationships, on his chemistry with individual leaders. He had that at one point with the leader of Italy. Who does he have that with now?
Yeah, I think that plan by the Europeans, by Mark Rutte and others, has really fallen by the wayside. I think it's kind of backfired. I think that one thing about Trump is that loyalty tends to be a one-way street, and that he asks for people to be loyal to him, and he rarely shows loyalty to them. Now, that said, he does think that the NATO allies were not loyal to the United States and during the Iran conflict, because some of them wouldn't allow the U.S. to base out of there, and they wouldn't actively participate in the military conflict. So this idea of loyalty, I think, is a really, really, really thin piece of ice for the Europeans to stand on. And if you look at Meloni, who you mentioned, and some of the other figures across the European right, they're starting to question if Trump is an asset or a liability to them, given his constant threats against European security. So that even if you're an anti-immigration conservative like Trump is, aligning with him, which looked good maybe a year ago, is now starting to look like a much riskier bet with the European public.
Got to say, John, it didn't start in Europe. It started in Canada. I think Pierre Poilievre is a victim of a lot of this, that you can be aligned with the conservative movement, but suffer for being perceived to be aligned with the president, because the president went after Canada in a way that was totally unanticipated around the election time, John. And now you're seeing it with the Europeans. Just to take a note from that, just to build on it, John, what's the future of the conservative movement worldwide? And what's the president's role in that over the next year?
Yeah, I mean, I think going into the maybe last year after the president's election, President Trump's second election, I think you would have said there's this transnational conservative movement that had been building steam. The Hungarians had done a lot of work in the United States, for example, to create alliances between the Hungarian government and the American right. J.D. Vance went to Europe and gave a speech that really angered a lot of the Europeans, that reflected a lot of the themes of that transnational movement. And I think you're starting to see that fall apart a little bit, where the momentum on the right, where kind of the MAGA movement in the United States has been the center of it, is sort of stumbling a tiny bit. Now, that doesn't mean it's over. I think that the French elections is going to be an important one to watch. The German elections next year, what happens to the reform movement in the UK. And of course, you mentioned Canada, where there's separatist movements in Alberta that are being in part fueled by the American right. So I don't think we should count this movement out yet, but it's become a lot more complicated due to the security picture, which will be on display this week in the NATO meeting.
John, it's good to see you. It always is. Thank you, sir. John Lieber there of Eurasia Group. Coming up next on this program, we'll talk about the consumer. Michelle Mayer of MasterCard, as President Trump urges retailers to roll back prices. Plus, your high-risk got some morning movers. NVIDIA and others sliding this morning. NVIDIA's down by 2% on a report from Reuters that DeepSeek is developing its own AI chip. That conversation just around the corner.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Stocks this morning on the back foot. We're down by 0.2 on the S&P 500. The pain, the epicenter for the move lower this morning is in tech. It's in the chip sector. On the S&P 500, we're down by 0.2. On the Nasdaq 100, we're down by 1 full percentage point. We'll get to the single name issues in just a moment. Turn to the bond market, 2s, 10s and 30s. Yields bleeding just a little bit higher at the front end of the curve, up by 3, 10s around 450, 30s at 5, up by 2 basis points on 10s, up by a single basis point on 30s. This move in crude's not helping. It's not a big move, but just bouncing just a bit. Brent crude up by 0.9%, 72.62. WTI up by 0.75% to $69 a barrel. As we count you down to the opening bound 2 hours away, let's get you some single names. Let's get you those morning movers in the chip sector. Yahara has more. Hey, Yahara.
Hi, John. The losses on NVIDIA are picking up. Already under pressure after Samsung earnings, but now falling even further down, nearly 2.4% in the pre-market on this reporting from Reuters that China's DeepSeek is developing its own AI chip. And while the report says it's still early days, it speaks to a growing trend that's been weighing on NVIDIA, that more AI companies are looking to build their own chips to reduce reliance on NVIDIA's hardware, whether it's for geopolitical reasons like this one, trying to work around export controls, or simply because they want more control over the technology powering their AI models. So NVIDIA shares down. We are seeing the broader chip sector down as well, as I said, because of those Samsung earnings failing to impress investors. That's because the world's largest memory chip maker, Samsung, posted record quarterly profit, but expectations have gotten so elevated that a beat was simply not enough. And it just reinforces this trend that we've been seeing, that investors have become more selective in the AI trade, taking a harder look at valuations, rising AI spending, and whether all that investment will be worth it due to future demand. And we end on SpaceX. Those shares also weaker in the pre-market, down 0.8%, even after a wave of bullish calls from Wall Street analysts. Analysts at Morgan Stanley, Goldman Sachs, and several other banks that underwrote the IPO have initiated coverage with buy ratings. Raymond James out with a street high of an $800 price target, and it comes just as the stock joins the NASDAQ 100 today, though the expected boost from passive income flows has not been enough to lift shares this morning. John?
Yahara, thank you. More from Yahara in the next hour. Some of your morning movers ahead of the opening bell. Let's get to your radar this morning. On our radar this morning, Samsung. Shares lower in the South Korean trade after reporting a record profit increase, but failing to impress investors with CapEx concerns weighing on the broader outlook. Elsewhere, SK Hynix kicking off its formal marketing process ahead of its highly anticipated US market debut. The company aiming to sell nearly 18 million US listed shares in its $28 billion listing, trading set to begin this coming Friday. And finally, Yahara mentioned it, DeepSeek making a major push to get ahead in the AI race. Reuters reporting this morning the company is developing its own AI chip to reduce its reliance on NVIDIA. The move would make a significant strategic shift, Scarlett, for the company.
Yeah, it's something that we've gotten accustomed to, these surprises from China out of DeepSeek, but the question is whether that can happen quickly enough. For now, NVIDIA is the default supplier on these high-end AI chips. Whether or not the U.S. allows for it, the U.S. is allowing a lower-grade version of NVIDIA's chips to Chinese companies. China's not going to allow for that either, so they're kind of stuck in a hard place.
Chips are about 18% of the S&P 500 right now, and increasingly this theme is a bigger and bigger piece of the US economy. If you were China, just throwing this out there, and you wanted to derail the US economy and US financial markets, these would be the kind of stories that would have achieved that, wouldn't they?
It certainly would. That and also doing something with TSMC would certainly get everyone's attention.
Yes, without a doubt, without a doubt. The latest reporting this morning from Reuters really moving the chip sector so far this morning and weighing on the NASDAQ lower by around 1%. Let's turn to retail. President Donald Trump praising Walmart for lowering prices, claiming it comes at the request of his administration. The company announcing lower costs for a range of items, including ground beef and Coca-Cola and PepsiCo products. Michelle Mayer of MasterCard writing, as some of the pressures on household budgets begin to ease, consumers are seeing greater flexibility in their purchasing power. Michelle joins us for more. Michelle, good morning. Good to see you.
Good morning.
So crude prices were a lot higher, triple digits, and it didn't hold back this economy too much. Are we suggesting the other way around, it might actually help this economy, that the decrease will help the economy more than the increase hurt it?
Well, I think what it shows is that consumers have been very flexible in terms of how they've deployed their purchasing power in order to accommodate that big energy price shock. So yes, they had to allocate more of their budget to spending on gas. We saw that very clearly in our data. At a peak, we had almost a 30% year-over-year growth rate in spending at the pump, so it was substantial. And now that's coming down. We're running closer to about a 10% year-over-year growth rate. So it's still up from this time last year, but that sequential deceleration, right, when you think about month to month, consumers are now starting to see some relief. And I do think that matters in terms of how consumers now think about what they can spend on, how they can shift their budget again, what they can start to appreciate that they maybe weren't able to buy when gas prices were spiking.
Are there some tailwinds beyond just this reset in energy prices?
Well, yeah, I mean, the labor market remains supportive. The last jobs report was a little bit funky. Like, there was a lot of weird stuff in it, as there has been.
What was weird about it?
What wasn't weird about it? You had a big drop in the labor force participation rate. Hard to explain that household survey. Leisure and hospitality jobs are down sharply, so some of the sectors looked a little bit noisy, but that's been the reality for the jobs reports for the last several jobs reports. So I think you want to take a moving average, still showing private sector job growth running presumably above the underlying break even. The unemployment rate is holding, actually fell a bit. Again, funky stuff in the household survey, but it's a low unemployment rate. And wages are supported. So for the consumer, they have a labor market that is working for them.
You mentioned how consumers are seeing greater flexibility in their purchasing power. We're also at the time of the year where people have made commitments to go away for the summer, and they're going to do that no matter what, no matter where gas prices are, no matter where jet fuel prices are. They are also committed to spending for back to school. So is it that they have flexibility, or they have already earmarked that money?
That's an excellent point. And I think it speaks to how consumers have been so strategic in terms of how they're spending. So there's certain items or certain experiences where there's a little bit of a price insensitivity. It's like, I am going to travel this summer. I am going to have that experience. I'm going to find a way to do it. And they, you know, to some extent, they'll spend more. Other times, they're going to look for some discounting, depending on what their household budget situation is. And they have a lot of tools at their disposal also to look for that discounting. So in a world powered by AI, there's a lot more information. There's a lot more choice. And I think that is allowing consumers to still engage in how they want to. But you're absolutely right. I think they're planning, they're figuring out how to allocate their budget, and then they're figuring out what they cannot spend on or they don't want to spend on. It goes back to the headlines that you just reported around some of the discounting that perhaps we're starting to see for everyday items, for groceries. That's where consumers want to see that value, and they want to see some of that relief.
Walmart, of course, in a pole position to be able to cut prices. It has that dominance with its suppliers. It can basically dictate to its suppliers where it wants to pay. Will other retailers be forced to follow suit and follow what Walmart's doing and start offering discounts, even temporary discounts, to consumers?
Yeah, I mean, there's obviously competition in terms of market share, and I think discounting speaks very loudly. So consumers are looking for value, again, particularly for those everyday items where there's a lot of competition, and consumers want to get the best bang for their buck. So yes, I do think that that's going to set the standard, but at the same time, there's other ways that that retailers have navigated the last few years when it comes to these cost pressures, right? You change what you have on the shelf in terms of trying to find the more affordable item from a cost perspective. You figure out ways to, there's been a certain amount of shrinkflation over the years here and there, depending on how those costs have come in, supply chain adjustments. So I think there's been some savviness on the part of retailers as well.
Have we had a World Cup boost? Do you see that in the data? There was some suspicion it might have been in the previous payrolls report, not the last one, but the one before that. Do you see it?
So on the payroll side, I think it's hard to say for sure what's going on, as we just talked about leisure and hospitality.
Yep.
But in terms of consumer spending, we definitely see some really strong spending trends the last few weeks. Restaurants and hospitality have been supported, particularly in some of those host cities. So I do think that's showing up in the data. But there's other dynamics in play. There's been Prime promotions. There's seasonality in terms of some, kind of moving holiday over the last few weeks. So there's a lot going on, but it has been strong.
Any fear of higher interest rates at all?
So, I mean, look, the market has been kind of fluctuating in terms of how much they want to price in terms of hikes, what they actually think the reaction function is of the Federal Reserve, what they think the new chair will do, right, with a regime shift. I think from a consumer perspective and from a real economy perspective, the level of interest rates, I think, have been tolerated very well, right? You have not seen financial conditions create a strain for consumers. If anything, financial conditions arguably are still somewhat accommodative when you think about where equity markets are. And then when you look forward in terms of the future for Fed policy, I'm not as convinced that a hike is coming. I think that we have signs of disinflation in the economy. We are seeing, I think a real debate over what some of these star variables are and what the break-even levels in the economy are, and I don't think that we've settled on exactly what that is, and that ultimately will dictate what this Federal Reserve will do.
Kevin Warsh, the new Fed chair, says that he wants the news conferences to speak to households and businesses, to tell them about the economy and kind of shape what they see to these constituents. We're going to get the Fed minutes tomorrow. Is it going to tell us anything? Are households or business going to find anything useful out of these minutes?
So I love that concept. I think that makes so much sense, is to really speak to those that are engaging in the economy, the consumers out there, the businesses out there that are making the decisions and need to understand this interaction with monetary policy. How quickly we'll see that change, I think, is to be determined. And I'm not sure that the minutes will be the main path to do that. I think some of that can come through the communications that are out there, either from Fed Chair Warsh himself.
But he doesn't want to talk, right?
Well, he wants to talk differently, I think. It doesn't mean no communication, just means a different type of communication, a little bit less in terms of explicit forward guidance.
Michelle, it's good to see you. Always is. Thank you. Michelle Mayer at the MasterCard Economics Institute. So many different guests have said the same things. If he speaks less, he's just outsourcing an opportunity to provide guidance to anyone else on the committee. And they'll fill the vacuum. They'll do just that. That's the problem he's got if he really wants to reduce guidance. Others will just do it, even if he doesn't want to.
I know, and the idea from him apparently was that he didn't want the regional Fed presidents to be out there talking up, what they see, and they're interpreting what happened at the FOMC.
Good luck herding those cats. Good luck to him. Let's get you an update on news worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. A Qatari-owned natural gas ship was struck by a projectile as it left the Strait of Hormuz. Sources telling Bloomberg the vessel was hit in the early morning hours by either a drone or a missile. It's the first attack on a Qatari tanker since the US-Iran war began. Alibaba is banning employees from using Anthropic's AI tools starting July 10th. The Chinese tech giant cited concerns about potential security risks, according to a CNBC report. Alibaba is requiring employees to replace Anthropic's products with its own AI tools. In sports, the US men's national team has officially been eliminated from the World Cup. The Americans fell 4-1 against Belgium in the round of 16. Elsewhere, Spain shut out Portugal in what was the final World Cup game for 41-year-old Cristiano Ronaldo. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you very much. Up next on the programme, committing to defence.
They committed to invest 5% of GDP in defence by 2035. I expect nations to present clear, concrete and credible plans to reach that 5% goal.
The Prime Minister of Sweden joins us next.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, the network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning, this is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura. I'm in Salar de Uyuni in Bolivia, and this is Bloomberg.
This morning is a story of when record quarterly profits just aren't enough. Samsung down 9% in South Korean trading, so chip stocks getting hit almost across the board this morning. Then a report from Reuters in the last hour or so suggesting, according to their reporting, that DeepSeek out of China is looking at their own chip alternatives. That's going to weigh on Nvidia. We're down by 2% in the pre-market at the moment. The memory story over at Micron, that's down by 6%. We've really taken some heat out of those record flying high single stock names, a record second quarter, and since then really starting to trade lower through 3Q at the single name level. At the index level, we've got a NASDAQ down by around 1%. On the S&P 500 down by 0.2%, which is pretty impressive given that about 20% of that index is the chip story. On the Russell, we've got some relative outperformance, as expected, higher there by 0.4%. I want to turn to the bond market briefly. 2s, 10s and 30s yields this morning at the front end of the curve up by 2 to 3 basis points. You see that through the curve this morning. Let's call it 4.15 at the front end, 4.50 on 10s, 5% on 30s. The move in crude, another strike in the Middle East, this time on a ship, a Qatari vessel, exiting the Strait of Hormuz. That means Brent crude's back to about 73 this morning, WTI 69, up across the board here by close to 1%. Under surveillance this morning, the geopolitics as the NATO summit gets together. We're committing to defense.
The allies made historic commitments. They committed to invest 5% of GDP in defense by 2035. We already see transformational progress. I expect nations to present clear, concrete, and credible plans to reach that 5% goal.
So here's the latest this morning. NATO allies revealing $12 billion in defense industry deals, looking to prove to the US that Europe is meeting spending demands. With the latest on the ground in Ankara, Ollie Crook has more. Hey, Ollie.
Yeah, that's right, Jonathan. Just as President Trump has arrived here on the tarmac in Turkey, preparing for those meetings of 32 leaders of those NATO allies, we're very pleased to be joined by one of them, the Prime Minister of Sweden, Ulf Kristersson. Thank you so much for speaking to us here on the sidelines of the NATO summit. As we've just been saying, President Trump has just landed here in Turkey. What is the message from the European arm of NATO to the President of the United States?
Well, the basic message, I believe and I hope, is to confirm what we decided last year, that we're all committed to an increase in European defense investments, that this burden shifting in an orderly way, but very decisive way, that we can prove that decisions have been made already and we see good results from it. That's one. Another, I hope, is to confirm our commitment to Ukraine. Ukraine is not losing this war, but they still need our help to be able to win a decent peace. And of course, what we're discussing today, to increase the not least the European capabilities of having a good defense industrial base, which we have proven quite significantly here today.
And of course, there are things that can go wrong in these meetings, as they sometimes do. Yeah. And one of the things that has been highlighted by the U.S. administration is that not everybody is necessarily moving at the same pace in terms of that burden sharing. The United States has indicated that potentially you could get a tiered system within NATO of rewards and consequences for those that don't. Do you agree with that in terms of a sort of method to put pressure for NATO allies to reach those targets?
I think everybody expects a quite thorough assessment of how well we have achieved what we decided last year, and there are no secrets behind, between NATO members. So I think there will be tough discussions on that, but that's the name of the game. But still, I think that Mark Rutte, the Secretary General's basic message is that we are stepping up, we are doing it decisively. And Europe is, and Canada, we are taking a bigger share of the overall responsibility, which we should.
And of course, one of the issues that the President of the United States has demonstrated some dissatisfaction with was NATO's role in any sort of way on the conflict in Iran. We now have had this news crossing that a tanker has been hit, a Qatari tanker, that obviously has great consequences for the Europeans. Do you believe that the Europeans should be playing a role at this stage here? Is this a conversation that will be fleshed out for the President of the United States?
I'm not that sure that will be a discussion having here, but we've obviously had it over the last months, and Sweden is among the many European countries that we are willing and able to do efforts to safeguard freedom of navigation after a reasonable ceasefire has been reached, and we are committed to that.
Can you say a little bit more about what those things could include and how, because obviously we're in a ceasefire now, it's not exactly a peace. At what stage do you think the Europeans would be willing to engage meaningfully?
Well, that is an ongoing discussion between different European partners, so I cannot be too precise on that, but we have different capabilities that could be well used in that region. And of course, for all European countries, freedom of navigation is an extremely important virtue in itself. So we fully acknowledge that we also have a responsibility into that.
And of course, as you mentioned, the conflict in Ukraine is still top of the agenda for the Europeans. Zelensky will be speaking with President Trump, trying to bring that up the agenda for the President of the United States. There is a real sense that there is a momentum shift on the battlefield, striking deep within Russia, the sense that Putin may be a little bit more on the ropes, particularly economically. Given that opportunity, what is it appropriate for Europe to do to try to escalate that pressure and try to help?
Yeah, honestly, to step up, because what we are doing are basically the right things, supporting Ukraine and pressurizing Russia, and we should not take the latest successes for Ukraine as a reason to decrease our support. Quite the opposite, to make it super clear for Russia that time is not on their side. With a 90 billion euros loan from Europe to Ukraine, that also creates a trustworthy long-term commitment for Ukraine. So I think we are on the right track. What we see right now is actually Russia increasing their attacks on big cities like Kiev. That also gives us a good reason to provide more of the kind of air defense needed in Ukraine to be able for them to defend themselves while they also are defending themselves on Russian soil.
And there's been an increasing debate about diplomatic engagement on the European side with the Russians. Where do you fall on the debate? Do you think that we're any more closer at the European side to have a collective person willing to put forward and a really sort of serious engagement with the Russians?
Well, I normally think that discussion starts at the wrong place, so to speak. It starts with who should represent. I mean, the big thing is that Ukraine is willing to negotiate a decent peace. Europe, both EU, Europe and the broader Europe, we are perfectly willing to support Ukraine in that difficult task. It is obviously Russia who is not willing to in any way negotiate. They have a maximalistic view on the war against Ukraine, and as long as Russia is the obstacle for negotiations, the question needs to be put to Russia, of course. If the situation comes where Russia is willing to negotiate on decent preconditions, Ukraine wants to negotiate and they want the European support for that, then we will sort that out.
And also thinking about the pressure that is building on Russia, we've had more and more warnings and discussions from European leaders concerned that there could be a direct confrontation between Europe and Russia. Where do you sort of put that in sort of the risk assessment as today, particularly as the newest member of NATO?
Well, nothing new really. We all realize that Russia there is a lot of pressure on Russia. They are having very, very little success on the battlefield. They have a severely hit economy and they refuse to negotiate. What would they do? And right now they increase the attacks on Kyiv. All the countries in Russia's neighborhoods or in the region are well prepared for different kind of hybrid threats against our countries. They can take a variety of forms. I think Russia is very well aware of that. Attacking a NATO country would be an extremely bad idea. We don't see any signs of that, but we do see a lot of signs of different kind of hybrid threats and activities, undersea cables being destroyed, and the Russian shadow fleet acting in a reckless way, and all of these things. I think we have never been as well prepared as we are right now.
Ulf Kristersson, thank you so much for your time. They're the president, or I should say the Prime Minister of Sweden, speaking to us at the sideline of the NATO meeting, which President Trump just arrived at, John.
Ollie, nice work, buddy. Appreciate it. Ollie Crook in Ankara, Turkey, at the NATO summit. As that conversation was ongoing, this headline crossed the Bloomberg terminal. This from Amazon, kicking off an 8-part US investment-grade bond sale. A lot of supply on the debt and the equity side of things. This week on the equity side, SK Hynix looking to raise $28 billion in an ADR listing. Later on, stateside this week, that should start trading on Friday. We'll talk about the monster supply we're getting on the equity and debt side in just a moment. We'll be catching up with Keith Lerner of Truist, Ted Mortensen of Baird, Colin Martin of Charles Schwab, and Nick Owens of Morningstar. The third hour of Bloomberg Surveillance up next.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid? I don't think I was reading magazines until I was in them. You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
The world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
This market is just beholden by tech and AI.
This feels like some of the circular narratives starting to break apart.
The market's going to settle down. We're going to continue to see these kind of mini pockets of rotation.
We should have a bull market longer term, but a little bit of volatility and some weakness here in the near term.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. And the price action, your scores look like this. We're down 0.2 on the S&P. On the NASDAQ, we're down by 1 full percentage point. Here's the why. 2 really. Over in South Korea, Samsung, record quarterly profit insufficient to meet a very, very high bar. That stock trading lower in South Korean trading by close to 9%. Then Reuters reporting in the last few hours that DeepSeek is looking to develop its own chips. Nvidia down by about 2% in the pre-market. The tech story shaking up the bond market too. We'll get to the why in just a moment. Yields bleeding higher by about 2 or 3 basis points. Not a big move, but this phrase, and you'll hear it a lot this year, the competition for capital. And treasuries have to compete now for extra supply coming from elsewhere. This from Amazon just moments ago, kicking off an 8-part US investment grade bond sale, Scarlett, anywhere from 3 to 40-year debt on offer from Amazon.
Right, it just keeps coming. All these companies, these hyperscalers need to raise a lot of cash in order to build out their AI ambitions. About a month ago, Amazon had a record loony bond sale when it raised 8.5 billion Canadian dollars. So it's now moved back to the US market. And to your point about the crowding effect that we're seeing, not just in other credits, corporate credit, but also in the US Treasury market. The 10-year yield was already higher, but it did inch up a little bit more.
Unsurprising, Amazon following what we've seen from others, including Alphabet going on a big debt binge worldwide earlier on this year. Extra supply on the debt side and increased competition for capital. Earl Davis of BMO on the program just yesterday pointing out that this is one of the key pillars of his idea, his trade, for 10-year bond yields in America to trade through 5%, which is only 50 basis points away, by the way, through 5% in the next 6 months or so as we enter 2027. Yields this morning, 10's up by 2. Let's call it 450 this morning. Coming up this hour, we'll catch up with Keith Lerner of Truist as the tech trade hits another bump in the road. Ted Mortensen of Baird as SK Hynix tests the demand for memory stocks. And Nick Owens of Morningstar saying SpaceX is overvalued as it debuts on the Nasdaq 100. We begin this hour with tech stocks lower as Samsung's record profits fail to impress. Keith Lerner of Truist writing the path ahead may be bumpier, but earnings remain the key driver. Capital is shifting within the market rather than leaving it. Keith joins us now for more. Keith, good morning, buddy. Good to see you. Why do you still believe this bull market deserves the benefit of doubt?
Yeah, well, great to be with you. Well, it comes down to three things, Jonathan. Profits, profits, profits. And, you know, whereas we look at the S&P 500, we're seeing forward earning estimates continue to make new highs. We're seeing small cap forward earning estimates make new highs. We're seeing mid cap earnings make new highs as well. So all in all, that's been the North Star of this bull market. I think that's important. And I really think, you know, each time people have doubted this bull market or we've gone through some type of shock, you know, it's proved its resiliency. So we still think the bull market deserves the benefit of the doubt, but we certainly think it's going to be somewhat of a bumpier path. And we can get more into this top story today about tech as you want.
Well, let's talk about it right now. Let's talk about the debt supply side of things. $25 billion. That's what Amazon is looking to raise. 8-part debt offering, investment grade. We've seen this several times. That is what is fueling CapEx. Really fueling CapEx intentions, which have climbed aggressively in the last year or so, Keith. Is that still bullish?
At this point, I think it just tells you that the demand for compute will remain robust for several years, likely. We look at tech spending as a percent of GDP, and it's actually almost, you know, close to 5%. That's actually above what we saw in the late 90s. But to your point, as you have more and more of this capital being drawn from the market, it's increasing the volatility. And then as we take a step back, you know, the big story today is around semiconductors. You know, semiconductors were up about 50% in about a month. And when we look back historically, we've only seen that happen twice, right? Coming out of the 2002 low and then the tech bubble itself. So I just think that, you know, at this point, this tech trade got very crowded, as you all discussed. It's often 2 steps forward, 1 step back. In the most recent, we saw 3 steps forward before even a mini step back. And I think we just need more time to digest these big gains. The good news, you know, with the quote at the onset is that money is rotating, not leaving the overall market.
Well, Keith, let's talk about what's happening within the equity market and what's happened previously. A dislocation that's caught a lot of people's eyes. The companies doing the spending, those stocks have struggled, specifically the likes of Meta and Microsoft. The beneficiaries of that spending, those stocks have ripped, the chip players, until the start of 3Q. Keith, now people are starting to think about a rotation. Maybe that spread closes from both directions. The chips come in and hyperscalers, the big spenders pick up. Are you getting behind the same trade?
Yeah, you know, it's interesting, Jonathan, because we have the rotation trade from the broader market where, you know, after the March 30th lows, only one sector outperformed the S&P. That was tech. It was up 47%. Since that peak in June, 9 of the 11 sectors have outperformed the overall market. And then within tech, you have your own rotation. And to your question more directly, I do think that kind of rotation where semis take a break from being so stretched into the hyperscalers makes a lot of sense. The other thing we noted in our work more recently, Jonathan, is the forward PE for the hyperscalers recently reached about 24. For context, that was the lowest since the March 30th low, and also around the same low valuation that we saw following the tariff shock in April of 2025. So I do think that money likely rotates. I think the big picture is tech is still long-term leadership, but it's changing within. And I think semiconductors certainly, in our view, have more of a rest to go here.
So we get the start of earnings season beginning next week at this time, and of course tech will follow after the big banks report. We had Stuart Kaiser of Citi on earlier who kind of suggested that it's not really earnings season anymore, but it's going to be CapEx spending season when we do get the results. Will an increase in CapEx be rewarded or will it be punished? What is the market positioning and sentiment on this right now?
Yeah, I think at this point, I mean, there's some discussion as when will we see a little bit of a pullback in the CapEx spending story. I just think it's early to see that. So I think, you know, I don't know that necessarily will be punished because I think the market expects those CapEx numbers to continue to move forward. I think it's going to be really all about the earnings side of it and where do those earnings come in relative to expectations. On the semiconductor side, as we've seen with recent reports, those expectations are really high. So even though valuations for semiconductors are around the forward PE of 25. People are uncertain about the durability of those earnings. But I think all in all, I think you'll actually see in some of the hyperscalers where expectations are somewhat low, reflected by those low valuations, where you actually have a better reaction, even though those CapEx numbers continue to move higher.
Okay, so you have the chip side of the equation. We heard from Samsung this morning. You have the hyperscalers and what they're likely to say about their spending. What about the software companies? What can we expect to learn from the software companies this coming earnings season?
Yeah, I don't think it's going to be broad-based. I think it's going to just be one of much divergence. I mean, obviously, the sector has underperformed by a wide margin. Valuations have reset, but there's some real competition in there. So I just think what you'll see in the software sector is just really wide range and movements on both sides. I think it looks like software has formed a bottom. Is it leadership? Probably not. But I think you're just going to see, really extreme moves within that overall sector. And then maybe taking a step back too. One thing in our work that we just noted that I think is important is, we look at global market returns this year. 70% is being driven by tech. And even in areas beyond large cap, which we often talk about, small caps, we have small cap tech up 60%. Emerging markets, tech accounts for all the returns. So, I think it's going to be like, we are bound overall by AI. I think money has been shifting from some of these mega cap companies to other areas of the market, but it's really notable how broad that impact is right now.
Keith, one area, the financials, the banks starting to pick up, going into earnings season, kicking off next week, Tuesday morning for some of the big players. Is that a trader sector you're comfortable with going into those earnings?
It is. We upgraded financials several weeks ago. It had lagged by quite a bit. I think the economy is proving somewhat more resilient than a lot of people expected. And kind of that same theme, if money takes a rest out of tech, it has to go somewhere else. I think people are looking for other areas of the market, such as financials that have lagged, that are kind of levered to the overall economy. We are seeing some of the broker dealers do really well, along with these IPOs. We're seeing better action from the big banks as well, and even insurance names are doing well. So yeah, all in all, we feel like the financial area, at least on a short-term basis, is still in a good position.
Goldman Sachs and Morgan Stanley have been absolutely flying through much of the year. It's the rest that starting to perform, slowly at least. Keith Lerner of Truist. Keith, thank you, buddy. Appreciate it. On to next week. This is the lineup for you. Next Tuesday, we'll get earnings from Goldman Sachs, JP Morgan, Bank of America, and Citi, all reporting on the same day, which is slightly unusual, Scarlett. Usually it's spread out over a couple of days.
Yeah, Goldman Sachs and Morgan Stanley, you tend to come a little bit later. JP Morgan, Wells Fargo, Citi, we have gotten accustomed to that being the kickoff. But yeah, they're really front-loading it this time. And of course, it sets the tone for earnings season, whether it's applicable or not to the broader economy, because people want to get a sense of, what the banks see in terms of the financial markets and how that impacts their money-making ability when it comes to debt sales and equity sales and investment banking.
Fed Chair Kevin Walsh speaking on the same day as well. That's next Tuesday. Equity futures on the S&P this morning recovering just a little bit. We're down now by about 0.1%. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. DeepSeek is ramping up its push into the AI arms race. Reuters reporting the Chinese startup is developing its own AI chip in an effort to reduce its reliance on NVIDIA. If successful in its efforts, DeepSeek's semiconductor development could make a major shift for the company. Amazon is tapping the U.S. bond market again with an 8-part multi-billion-dollar debt offering. The tech giant is offering notes ranging from 3 to 40 years. It's expected to price today and will include potential share buybacks. In sports, the U.S. World Cup run has come to an end. The Americans fell to Belgium 4-1 in the round of 16. Elsewhere, Spain shut out Portugal in what was the final World Cup appearance for 41-year-old Cristiano Ronaldo. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next on the programme, the Morning Calls Plus, Ted Mortensen of Baird on the major moves in memory stocks this morning. Samsung plunging, SK Hynix gearing up for its US trading debut in just a few days' time. We'll get the latest from Ted and the latest from Ed Radlow in just a moment. From New York City this morning, good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Look, we know where all the money and all the profit has been this last 2 or 3 months. Look at some of these names, how much they've run up, 200, 300% off of the March 30th low. This kind of digestion is completely normal, and frankly, we argue it's healthy.
That was Julian Emanuel of Evercore weighing in on this equity market and the decline in some of the big moves we've seen. Off the back of the big moves we've seen in names like Micron, names like Samsung. Samsung trading lower in South Korea, trading by 9%. Record quarterly profits, insufficient, falling short of a very, I stress very, very high bar for that particular name. For the broader index story, the Nasdaq just off the lows. We're down by 0.8% on the Nasdaq 100 this morning. On the S&P 500, we're down 0.1% with the opening bell about 1 hour and 15 minutes away. In the bond market, treasuries, yields bleeding higher through much of this morning, up by 2 to 3 basis points, just short of 450 on 10s. The headline that crossed a little bit earlier on this morning, in the last 20, 25 minutes or so, Amazon looking to raise at least $25 billion in an 8-part U.S. investment-grade bond sale later on today. They follow what we've seen from elsewhere, including the likes of Alphabet, which went on a multi-month debt binge worldwide earlier on this year to fund a massive CapEx story, which is fueling huge gains in the chip sector, Scarlett. That's really the story of not just the last year, but the last several years now.
Absolutely. Not to mention Alphabet raising money through an equity sale as well. So it's tapping both the credit market and the equity market. Hyperscalers are basically tapping every market they can come to in order to raise cash for this AI build-out. And it continues. There's no sign of it slowing down.
To your point, we've seen it on both the equity and the debt side. And you've seen that from SpaceX too, with a record IPO only a few weeks ago. That was followed up by a big debt sale as well. Let's get to your morning calls and let's look at SpaceX. Your first call from JP Morgan, initiating coverage with an overweight rating and 225 price targets, saying the company's ambitions are bigger than any they've ever seen. Your second call from Goldman, initiating coverage with a buy rating and 205 price targets, seeing multiple trillion-dollar opportunities in the years ahead. And finally, Morgan Stanley initiating coverage also with an overweight rating and 300 price targets, citing its near monopoly on launch economics. That stock is down by about 0.2%. Sticking with tech, DeepSeek making a major push to get ahead in the AI race. Reuters reporting earlier this morning the company is developing its own AI chip to reduce its reliance on NVIDIA. Bloomberg's Ed Ludlow joins us now for more. Now, Ed, let's get back to basics. Yes. I understand why a story like that will move the stock. You know the technology better than most. How difficult is it to do what Reuters is reporting that DeepSeek would like to do?
Incredibly difficult, and frankly, every AI or AI-adjacent company at scale on the planet is working on custom silicon. I would say that NVIDIA took a market leg lower in the pre-market when the full story came out, and what Reuters is reporting is that this is focused on inference, running the models, which is a decades-long market opportunity, right? It's far into the future. DeepSeek raised $7 billion in the month of June, and that sounds like a lot of money, but to go from architecture to actually printing silicon, a custom accelerator takes anywhere from 18 to 36 months with an experienced team. DeepSeek is not that. You know, if you think about the scale of the hyperscalers and the custom silicon programs they have, the amount of money they put into it, this doesn't resonate. But it is the idea that right now the environment is really, really certain and clear. Everyone is compute constrained. They don't have enough compute. And one way to get around that in the longer term is to think about diversifying away from NVIDIA. So it's right, it's the psychology of the market saying in the future, it won't be all NVIDIA. The reality is that right now it is.
And scarcity, constraints. Yeah. We've heard that word, those words a few times. more recently, we've started to hear a new word, excess, and Meta are now reporting here at Bloomberg as part of that story. Ed, is the story turning or not?
I mean, let's look at how Samsung has hit the market overnight. Essentially, nothing changed out of Samsung's earnings print. Everything's exactly the same as when we went to bed last night. Memory markets are tight, pricing continues to rise on DRAM and NAND, and they have no line of sight to when that supply picture changes beyond the end of the other side of 2027. Yet markets are reacting probably on a valuations perspective. They're basically saying, okay, look at the performance of these chip stocks so far. In Samsung's case, it was a 150% rally. Look at their valuations relative to historic norms. They're kind of in the trough on memory. They're quite reasonably priced. But they are just saying, like, right now, what are we trading on? The story hasn't changed at all. Maybe they were a little bit upset about margins, but, you know, news cycle items like DeepSeek coming in with a custom accelerator, essentially the fundamentals of the AI trade, nothing's changed.
Ed, looking forward to the program. Bloomberg Tech, a few hours away. Ed Ludlow here in New York for the next several days. Ted Mortensen of Baird writing the following: memory fundamentals are historically strong. All key memory players are now locking in strategic customer agreements, which will equate to multi-year visibility and profitability. Ted joins us now for more. Ted, welcome. I'd love your reaction just to the stock move from, say, Samsung this morning. Is there any signal in a stock that puts up the numbers they've put up, and yet the stock trades lower by 9%?
I don't think so. I mean, the one thing is the Korean market's kind of a mess with consumer leverage. So let's focus on the U.S. Open and the memory stocks. We've had a historic increase in pricing. If you look at, for example, when Micron reported, you're looking at 65% sequential increase in pricing. And I think where the street is worried the most is we're now bumping against immense amounts of demand versus supply. And when we talk about elasticity of demand, there's three end markets that memory is going into. One is consumer, which they're basically locked out, whether it be PCs, whether it be smartphones, whether it be game consoles. I mean, that market is down almost 19% on units. Then you look at enterprise, and that's enterprise budgets are not up 75%, they're up 4%. So the component increases are eating into the enterprise. So the only people that are really spending are these hyperscalers, and they're absorbing, you know, these 300% year-over-year increasing in DRAM and HBM pricing. So I think we need to start to focus on elasticity of demand versus price.
So the earnings from Samsung, the preliminary earnings, land at the exact moment when the market is questioning the memory trade. And of course, we've got SK Hynix set to go public in the U.S. at the end of this week. What do these Samsung results mean for the pricing of SK Hynix's shares, ADRs in the U.S.?
I think it's somewhat two different companies. SK Hynix dominates HBM, and if you look at where HBM is going, it's going into all of AI infrastructure. So when you look at HBM3E, that's all going into NVIDIA. You know, SK Hynix derives about 27% of their revenues from NVIDIA. Then you move into Rubin, and you got to go to HBM4, and SK Hynix is really the leader in that area. So I think they're somewhat insulated on the HBM and DRAM side versus Samsung that has other business lines.
John mentioned earlier how all these key memory players are now locking in what's called strategic customer agreements, SCA. Right. Are these binding? I mean, what happens if it doesn't come to fruition down the road, years down the road?
They're binding, they're take or pay. So for the next 3 to 5 years, Micron announced 16 partners. That's roughly, I think, off the top of my head, about 25% of their revenues, probably going to 50. So that gives them a tremendous amount of visibility, not only on volume and price. And for the first time that I can remember doing this in excess of 30 years, is that gives both companies, everybody in memory, a tremendous amount of visibility and to some degree re-rates the valuation.
Ted, we're raising so much capital on both the equity and the debt side. That's a theme I'd love to get a response from you on, particularly when we get the news that Amazon is looking to raise at least $25 billion in an 8-part U.S. investment-grade bond sale later on today. Ted, is this a competition for capital now, not just a race for capital? and who's in a strong position and who suffers. We saw a bit of pushback to the SpaceX debt offering, spreads a bit wider than maybe some other BBB rated peers. Are you seeing any pushback?
I'm not seeing pushback yet, but the big boys got to get through the window and the equity window. So Google started this with $85 billion of raise, and now Amazon's got to go. I think Microsoft, all the cloud titans have to go. Oracle, I mean, look at their negative free cash flow trailing 12 months. They're going to have to do some financing. So we're reaching to the point where we have never been before, and we're talking about hundreds of billions of dollars that has to be raised. The equity window has to stay open. The debt window is somewhat stretched to begin with. I think the equity window needs to stay open for this to continue. The cost of capital is also going up, and the need for capital to fund $1 trillion worth of spend also has to be there. So we're gonna have to monitor on a day-to-day basis.
Is it becoming a negative at a single name level, Ted, do you think?
Yes, it is. I think the PMs are just absolutely tired. This has been a very tough year. I mean, the easy money has been made, and when you're managing money and you're carrying 2% cash positions, you're going to have to sell something to buy something else on raising money. So capital is not unlimited. I think we're getting into the atrophy phase, if I had to give you an adjective.
What do you think, in looking at tech right now, Ted, just finally, the vulnerable part of the equity market to that supply story, where would you point out?
Anything that's small cap, anything that's not in the cloud titan realm of touch. They have locked up the supply chain, specifically NVIDIA, Broadcom, Cisco, Arista Networks, and all the hyperscalers. They've locked up supply. And where my major worry is the small cap companies that don't have the capital leverage. Boy, I tell you, they're going to have to try to get memory in every single one of their product segments, and they may have to go to the market to do it. The big boys are crowding out the small players. There's no doubt about it.
Ted, it's good to see you. Appreciate your opinion. Ted Mortensen there of Baird, reacting to the latest news this morning. Amazon kicking off an 8-part U.S. investment-grade bond sale, looking to raise at least $25 billion on the debt side. We've seen so much of this, as Scarlett pointed out, on both the equity and the debt side. Up next, we'll talk about the debt side of things. We'll catch up with Colin Martin at Charles Schwab. Not buying the Fed rate hike concerns. Plus, Jahaira has your morning movers. Another check on NVIDIA this morning, taking a hit. Following a report that DeepSeek is developing its own AI chip. That name is down by some 1.7%. The opening bell about 1 hour and 5 minutes away from New York City. You're watching Bloomberg TV.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this field forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Equity futures this morning down by about 0.1% on the S&P. We're down by 0.9 on the Nasdaq. Yahara will run you through the chip names in the pre-market in just a moment. I wanted to talk about the bond market and the supply monster on both the bond and the equity side. Later this week, we should get about $28 billion stock market listing from SK Hynix. That could be one of the biggest first-time share sales ever by a foreign company. It follows the biggest ever IPO on the equity side we saw earlier this year from SpaceX, which follows Alphabet's major equity raise of $85 billion. On the debt side, we've seen a debt binge from the likes of Alphabet. We saw a debt offering from the likes of SpaceX. And then this morning, Amazon, 8-part offering, anywhere from 3 years out to 40, looking to raise at least $25 billion. Competition for capital is something we'll be talking a lot on this program about in the next 12 months. This from Mel Davis of BMO just yesterday on this show. 2027 drivers of a 5% 10-year yield include increased competition for capital from some of these tech players. That's the bond market story this morning. Let's get you some single names into the opening bell with your morning movers. Yahara has more. Hey, Yahara.
Hi, John. NVIDIA's losses are mounting, down 1.5%. They were already under pressure earlier due to those Samsung results, but then we got a report from Reuters that China's DeepSeek is developing its own AI chip. And while it's still early days, according to the reporting, it does add to a growing trend that's been weighing on NVIDIA, that these AI companies are developing their own chips to try and reduce their reliance on NVIDIA, whether it's for geopolitical reasons due to export restriction or because they just want more control over the technology powering their AI models. And I mentioned Samsung. Its results failed to live up to high investor expectations. So you are seeing weakness in some of the AI trade's biggest winners, the memory names. So Micron is down nearly 5% in the pre-market. The world's largest memory chip maker, Samsung, over in South Korea, posted record quarterly profit, but that was not enough as investors have wanted more from these companies in the AI trade and in memory specifically. And we end on SpaceX. Those shares now kind of positive in the pre-market, up just 0.1%, catching some tailwinds as a number of analysts on Wall Street initiated coverage. Analysts over at Morgan Stanley and Goldman Sachs initiated with a buy rating now that the post-IPO quiet period is over. And Raymond James out with the new street high of an $800 price target for this name. John?
Oof, at 160 now, 800. Unreal. We'll talk more about SpaceX in just a moment. The Federal Reserve weighing big changes to its forward guidance. Governor Chris Waller echoing the signal from Fed Chair Kevin Warsh, saying the central bank has been too rigid in telegraphing rate expectations. Bloomberg's Ender Curran joined us now from Washington. He didn't go all the way, though, Ender. Suggested this is a Fed that still needs to talk.
Yeah, it was a fairly nuanced message from Governor Waller. John, as you know, the backstory is new Fed Chairman Kevin Warsh pretty much wants to get rid of so-called forward guidance. This is how the central bank signals where interest rates are going to go. Well, Governor Chris Waller gave a speech in Rome yesterday, and he made it clear that forward guidance does play a role at times. He said, for example, back during the pandemic when inflation was soaring and the Fed started to signal interest rates are going up, well, the market took the message and did a lot of tightening for the Fed before they even started raising rates. But on the other hand, he did say there are times when the Fed just can be too rigid and too slow in changing their signaling. And then he pointed to earlier in the pandemic, that 2020, 2021 era, when they were saying rates are going to stay low, even when inflation was taking off. So he's clearly open to a shift on forward guidance. He's certainly not sticking to it, but he's also saying it can play a role and can be useful at times too.
Andrew, he's super diplomatic. This quote jumped out to me. If your reaction function is not well defined and markets don't understand it, then you need to talk. Can you sit here this morning and say both the reaction function is well defined and markets understand it?
Well, this was very interesting in the Q&A, John, as you bring up there. He started to make a distinction between forward guidance and the reaction function. And on the reaction function, he was unambiguous. He said investors and the public need to know how a central bank will respond to a change in conditions and what you would plan to do in those circumstances. And he said, if the market does not know what your action function is, well, then you can't really be trimming communications, to naught, so to speak. You have to explain what your outlook is. And I think that feeds into the idea that there is scrutiny on Chairman Walsh in terms of, it's one thing to talk about forward guidance. Lots of people will say that could be, improved or changed up any way you like it. But the reaction function is the basic signal. How do you approach the economy? How are you thinking about it? How would you respond if circumstances changed? And one of the takeaways from Fed Chairman Walsh's first press conference is people weren't quite clear on what that is. I'm sure it'll become clearer over the months ahead, but right now questions are being asked about it.
And we'll hear from him in front of the House Financial Services Committee in just a week. And thank you, sir. And Karen down in Washington, D.C. Colin Martin of Charles Schwab writing the following: despite the rising implied probability of a hike by year end, we're not yet in that camp. Colin joins us now for more. Colin, good morning. Good to see you.
Good morning.
Is the reaction function well defined, and do you understand it?
Right now, I'd say it's not well defined. I think there is a difference between forward guidance, which is them, telling us what they're thinking and what they might do. And we can go back to, I remember after the financial crisis, I kind of forget about this. They would put a calendar date in there in their statement. We are going to hold rates steady until this year or this year. And then after the pandemic, they were very clear about that.
Some banks did threshold guidance too and said we won't do X until unemployment
until we
gets to a
start to
certain
see
level.
these things, right? But there's a difference between that and explaining how you're thinking about things. And if we don't get anything, we're kind of in the dark right now, and the markets might be a little bit confused. I look at, there's a lot of discussion about implied probabilities. We get them from the Fed funds futures market. We look at them on the Bloomberg terminal, and it's very low in July. I don't, maybe the Fed surprises us. That's not our base case, but we usually look at those implied probabilities as a guidepost, and the Fed historically has not liked to surprise the markets. And if they were worried about surprising the markets, they might, guide us that way to get the market to react before they do it. I don't think we're going to get that right now. So I think that just results in more uncertainty and more potential volatility in the bond market. When we get these various economic releases, how is the Fed going to react? And the short answer is we're not sure.
Colin, does forward guidance make more sense in a tightening environment than in a loosening environment, where the Fed does want to keep that element of surprise?
That's a good question. I don't know if it matters less, but I think it's important to at least tell us what to expect so we're not caught off guard. I think right now there's a big question of how much are they actually going to go if they do end up hiking. We're in the camp that if they do hike, it's more just a reversal of kind of in cuts, maybe you want to call it an insurance cut, as opposed to the start of a cycle. But it'd be good to hear from them about what they're thinking. Why might they be hiking? Why did the dots get moved up? Why might they want to take away some of the liquidity in the market right now? But again, these are unknowns.
Did the jobs report that we got for the month of June change anything at all?
I think it gave the Fed a sigh of relief. We're in the camp that we don't think the Fed will do anything through year end, but we acknowledge that the probability has increased, and it is very uncertain, and we acknowledge that, so it still could happen. I think the Fed looked at that jobs report and said, well, we saw 3 strong months, and then this report showed that, okay, the 4th month wasn't as strong, and actually we saw a little pare back of the previous 2, and maybe that allows them to be patient. I think that's really important right now, to see how the next few months play out, knowing that the price of oil has declined, to see what inflation looks like, not just on a headline level, but underneath at core, and then see if the labor market strength continues or if we go back to just kind of holding stable for a little while.
Let's talk about the backdrop for debt supply as well. Amazon this morning, the headline looking to raise at least $25 billion. Is that becoming a headwind to the Treasury market?
I think so. Did you say supply monster before?
Supply monster.
I like that. I might use that.
You can have that, by all means.
Yeah, I think that is a risk. I think we're seeing that. You know, we saw over the past few months coming into the year, we saw that 10-year yield move up with the price of oil. Price of oil has come down. We haven't seen the 10-year move down. I think supply concerns are playing a role there. Now, historically, we haven't weighed that too much. You know, supply concerns, fiscal concerns haven't been too much of a factor in our near-term outlook for the 10-year Treasury yield, but we're seeing supply on all fronts right now. We have a bunch of Treasury auctions this week. We're seeing a lot of corporate bond supply. I mean, even, $25 billion at least from Amazon, maybe more if there's strong demand. I think I saw that Italy is issuing a U.S. dollar-denominated bond this week.
We're seeing
IPOs. Tons of supply coming out there. Now, you mentioned before the outlook from BMO yesterday. I saw that.
Yeah.
We're kind of in line with that. We're not expecting a ton of upside. I think the upside for the 10-year is probably around 5% as opposed to a floor. The way we're framing all these supply concerns, it's something that puts a floor under Treasury yields right now as opposed to sending them surging.
It's interesting to me, though, that people see it as a threat to the Treasury market and not a threat to the credit market. I'm hearing more and more people say it's competition for capital with Treasuries. Treasury yields will go higher, but spreads not necessarily wider. Where does it leave credit spreads?
Yeah, I think it poses a risk to credit spreads. Technically, I think there's a little upside right now. If we look at the fundamental picture, the economy is still strong. Corporate fundamentals are generally still strong, but higher yields are a headwind to corporations. And we're starting to see some cracks at the lower credit end of the spectrum, lower credit rating. Triple C spreads are rising. If you're a bank loan issuer, higher rates are a risk to you. We haven't really seen that flow through to spreads yet, but I think that's a near-term technical risk where they maybe move up modestly, but more so on the lower rated parts of the market. IG, even though we're getting these huge issuances from the likes of Amazon and other IG rated issuers, it hasn't really moved the needle yet. I think it's more on the lower rated parts of the credit spectrum.
In your note, you point out that defaults have been somewhat elevated for a few years now, but they just don't seem to make the headlines. Why is that, and what changes that?
Because performance has generally been okay. A lot of the defaults are more distressed exchanges. They're not big headline grabbing Chapter 7s, Chapter 11s. Last fall, we got a couple big headlines with First Brands and Tricolor. But under the surface, if you look at data from Moody's and Standard & Poor's, the default rate has been around 4 or 5% for a number of years. Now, it's just not making headlines. And also, because they're distressed exchanges, those, what they're exchanging for, slightly higher recovery rates than what you might get if it's a Chapter 7 or a Chapter 11. But that's a risk in our view, because a lot of times that's just kicking the can down the road and not actually solving the problem that the business might have.
Colin, good to see you. It always is. Thank you, sir. Colin Martin there of Charles Schwab on the competition for capital and the risk of a rate move later this year. Not fully buying into the rate hike story just yet over the Federal Reserve. Equity futures slightly lower this morning, down by a tenth or so on the S&P 500. On the Nasdaq, down by close to 1% through much of this morning. With an update on stories worldwide with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Samsung shares taking a hit after results failed to meet sky-high expectations. Korea's largest company saw quarterly profits surge 19-fold and revenue more than double, but investors continue to remain on edge about the memory trade. A Qatari-owned natural gas ship was struck by a projectile as it left the Strait of Hormuz. Sources telling Bloomberg the vessel was hit in the early morning hours by either a drone or a missile. Officials in Qatar are saying the attacks violate freedom of navigation. Marine Le Pen can run in the 2027 French presidential race. An appeals court confirmed her embezzlement conviction on appeal, but gave a reprieve on an election ban. The judges also said she must wear an electronic monitoring bracelet, which Le Pen says could make campaigning difficult. That is your Bloomberg brief. John.
Hey, Vonnie, thank you. Thanks for this morning. Up next, we'll set you up for the day and the week ahead. Plus, we'll catch up with Nick Owens of Morningstar, saying SpaceX is overvalued just as the stock joins the NASDAQ 100. That conversation just around the corner.
anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Hyperscalers are issuing so much IG corporate debt that this is crowding out demand for U.S. treasuries. It's not only that it has an impact on markets overall and has an impact on GDP, but it actually also has an impact on demand for treasuries.
How many times have we heard that now? That was Torsten Slok of Apollo. We heard it yesterday from BMO and Earl Davis. We heard it just now from Colin Martin at Charles Schwab. The amount of debt we're getting, supply, is just rocketing right now. The headlines that crossed a little bit earlier on this morning, at least $25 billion debt offering coming from Amazon, 8-part offering, anywhere from 3 out to 40 years. Now, side note, I've got no idea where the tech story is going to be in a year, never mind 40, but that's the debt offering today. And we've seen it met with decent demand for the likes of Alphabet, bit of pushback for SpaceX earlier this year. But Scarlett, that's the amount of money being raised at the moment. And when you ask people in fixed income about it, they'll talk about the competition for capital and maybe the treasury market being the part of the market which will suffer.
And it's not just in the U.S., because you see a lot of these hyperscalers going overseas to raise money as well. Amazon did it about a month ago in Canada. Does it crowd out the corporate credit issuance in those countries and perhaps a demand for those sovereign debt as well? In the end, it feels like the AI build-out might end up being inflationary.
Could be, and they're finding lots of different ways to raise that capital in lots of different jurisdictions, markets, to Scarlett's point, Canada and elsewhere. But also lots of different asset classes, so not just bonds, they're doing it in equity as well. SpaceX, record IPO, then a debt offering that followed, the debt binge from Alphabet earlier on this year as well. The company's lining up to do more and more. Equity futures this morning down by about 0.1% on the S&P 500. On the NASDAQ, we're down by 0.9. Two-punch combo to the tech trade today. One from Samsung, record earnings, not enough. That market suffering in South Korea. The cost be down aggressively. Samsung down by about 9%. Then a story a little bit early this morning from Reuters suggesting that DeepSeek, another moment involving DeepSeek, looking into potentially their own AI chips. As Ed Ludlow of Bloomberg pointed out earlier on this morning, that's easier said than done. That takes a lot of work. But that's the sentiment story this morning, just a bit weaker around the tech trade. In the bond market, 2s, 10s and 30s shaping up as follows. 10s this morning up 2 basis points. Your 10-year 449. 2s up 2 to 412.87. That's the price action. This is the day and the week ahead. Later on today, SpaceX joining the NASDAQ 100, plus the president attending the NATO summit in Ankara. Expect plenty of headlines out of Turkey throughout today and into tomorrow. Into tomorrow, Fed minutes, the highlight of Wednesday. Thursday, another round of jobless claims. On Friday, the SK Hynix ADRs begin trading. Plus, we'll get numbers from Delta earnings just around the corner before the big banks report a week today. Let's talk about that SpaceX issue. Generating billions of dollars worth of passive buying as it joins the NASDAQ 100 today. Nicholas Owens of Morningstar has a sell rating and $62 price target on the stock, writing, "We see SpaceX shares as overvalued. Index funds buying the stock will likely offset some, but not all the supply of shares coming available from lockups." He joins us now for more. Nick, welcome to the program. It's good to see you. When I buy SpaceX, if I buy it, what am I buying? What is the company?
Well, it's three big divisions. Their rocket launch, which is a sort of the smaller of the three, Starlink, which is really the highlight in terms of revenue and profit generation, and then this newer set of businesses around AI, formerly known as XAI. And that's kind of really the swing factor in how you would get to any kind of valuation analysis for this company.
Nick, is the NeoCloud part of the business right now, or just a bolt-on?
That's an interesting question. I've looked at it primarily as that, let's say that's the primary play. And then certainly these rental deals that they've announced show that there's some value there. But you have to factor in this very long list of other ambitious things that might happen in the next, 20 years, cities on Mars or what have you. Those are hard to value, and we can talk about how you might do that. But the main story that I've seen so far for XAI is the compute and the infrastructure play, which is what drives the idea of putting data centers in space.
So we know the quiet period for SpaceX ends today, and so at least 6 sell-side firms have begun coverage. They have buy ratings. Some of them have pretty lofty price targets. The highest one we've seen so far is Raymond James rating SpaceX a new strong buy with a price target of $800. A lot of these are pie in the sky in the same way that SpaceX's plans might be described as pie in the sky. But the calls do offer investors some kind of framework. How do you think about the framework that these calls offer in terms of valuing SpaceX, or how analysts are thinking about valuing this business?
I think the framework, especially when you get into AI, in the filing, for example, they talk about a $25 trillion addressable market, and I think what you get to with any number of these types of forecasts where they're talking about trillions of dollars of revenue this decade and so forth, you're making what I think are wild leaps of speculation around what is achievable and likely in what is turning out to be a more competitive market. Than the story is, maybe there's overinvestment in compute, and maybe the enterprise value isn't what you might think. That's basically my point of view, is a little bit more down to earth.
There's also this anticipation that SpaceX is going to merge with Tesla at some point, and a lot of people think of it as a question of when rather than if, because of that common denominator of their AI ambitions. Combining them, on the one hand, would make it easier for them to borrow funds to fuel their AI ambitions. How are you thinking through the likelihood of this?
I think it's pretty likely. My colleague Seth and I have talked about it, and it seems, given where some of the stock and valuations and the market caps are, it seems like SpaceX might issue equity to buy Tesla, or if they can, and that the combo makes a certain amount of business sense and allows them to share resources and on these big projects. So yeah, we think it's likely within a year.
And then can we just finish on this so-called staggered end to the lockup? As I understand it, slightly unusual the way it staggers over the next 6 months or so. Can you just briefly describe that to our audience and the implications it might have?
I think it's a really important question. So your usual IPO lockups are typically 180 and 360 days. This one has them pretty much every few weeks, starting at the end of this month or 2 days after, whenever they release earnings. And it's some pretty big chunks. My guess is it'll be 7.3% of the float will come on in this first lockup after earnings. And that's more than the IPO was in terms of supply of shares. And I think it's prudent to assume that insiders who can sell during these windows will. If you think of their cost basis being from a long time ago, they're indifferent probably between, if it's trading for 150 or 190, it's all good. And the amounts are significant. The NASDAQ 100 happening today, given the float weighting and so forth, that might only be $8 billion of demand.
Nick, appreciate it. Nicholas Owens there of Morningstar on some of the issues to think about with regards to this company over the next 6 months, and as that lockup is staggered, it ends over the next several months, something to look out for, and the amount of selling you might see come from there. These headlines crossing from the president over in Ankara, Turkey, just moments ago at the NATO summit, asked about several topics, one including troop movements and troop drawdowns in Europe, the possibility of that taking place. The president saying we'll have to see. On NATO, he's saying right now we've invested in NATO, allies should be willing to help. Pressure, as expected, to increase spend at the NATO level from individual members. And then this, on the Strait of Hormuz and the situation in Iran, I was testing allies when we went into Iran. France, Germany, and others, Scarlett, have turned us down.
And the question is whether he...
Coverage continues. Anne-Marie on the ground in Ankara. She'll bring us more highlights from the NATO summit over the next 24 hours. Wanted to finish with the Amazon story. So raising $25 billion at least in this debt offering. If you think about the backdrop right now, Bloomberg subscriber wrote to me just moments ago about what it indicates and what it doesn't indicate. After our story with Meta just last week, there was some conversation about whether some of these companies would rationalize spending, maybe be a bit more disciplined with CapEx. If you're willing to raise that much money, it's because you're willing to spend a lot of money. I mean, that speaks to a longer runway for spending for some of these big players.
I like what our previous guest had said, that spending this kind of money is existential for them. They can't not spend it. So this earnings season will be really interesting to see how they frame their thinking on CapEx. I mean, they're committing the money, they're moving forward with this, but how do they think about maybe making adjustments if they need to, especially given the reception to some of the equity raises and the debt raises?
The stock in the pre-market, Amazon up by 0.6%. We're laser focused on that additional supply on both debt and equity, on the debt and equity side of things, and any potential for pushback in capital markets. Coming up tomorrow, we'll catch up with Ed Yardeni of Yardeni Research. Looking forward to that conversation. Dan Greenhouse of Solar, Scott Cronin of Citi, Tracy McMillan of Wells Fargo. A special thanks to Scarlett Fu. Bramo back in the seat tomorrow. Anne-Marie on the ground in Turkey. From New York City this morning, good morning. This was Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spent a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
A chip maker sell-off to start your morning, 30 minutes until the start of cash equity trading. I'm Danny Berger.
And I'm Bonnie Quinn. Bloomberg Open Interest starts right now.
Coming up, Samsung's record profit fails to impress, dragging down global chip stocks.
Meanwhile, SpaceX wins some bullish ratings from Wall Street as it joins the Nasdaq 100.
And tensions flare in the Strait of Hormuz as President Trump arrives at the NATO summit.
All right, well, we've got some stocks to watch. We'll get straight to them. And as you might imagine, they are chip makers, mainly memory chip makers. They're taking the brunt of the Samsung earnings. Obviously, Samsung revenue more than doubled last quarter. Earnings were 19-fold what it had earned the previous quarter, and still the stock was lower, and that's bleeding into the U.S. session. Investors may be profit-taking, though. Demand for AI chips creating enormous pricing power for these firms, and it's bleeding into other chip stocks too now.
It's amazing to see such strong results and that sell-off. It seems to be a theme for this market. We're also watching SpaceX today, Bonnie, because it's joining the NASDAQ 100. It's going to account for just over 1% of the index. At least 6 analysts have initiated coverage of the company with a buy. This was the best one. I don't know if you saw this, Bonnie. Morgan Stanley has a street high price target of $300 per share, but their space business is only worth $9 of that. So it's everything else that's going to propel this thing higher, apparently.
3% of the valuation is thanks to space business. That's because it burns so much in its space business, I think, Danny, is the problem. All right, let's get into the chip sell-off with Bloomberg Tech host Ed Ludlow. So, Ed, this began with everybody saying, oh, you know, but it's Korea, and Korea is leveraged, and there's lots of retail traders, and it's so, you know, difficult to predict.
Right.
But this is more than just 2 Korean companies at this point, right? This is a turn in sentiment.
The Korean market has been difficult. I think a guest on Bloomberg Surveillance earlier called it very messy for the reasons that you've outlined. But essentially, nothing's fundamentally changed. So you went through the Samsung numbers. They were very good. It's also a stock that was 150% up year to date going into it. And what they told the market was, the situation's the same. Memory supply is very tight. Importantly, DRAM and NAND pricing continues to go up. And on the other side of 2027, they don't know when that's going to improve. So the market probably looked at this probably on a valuations basis and said, we've had enough for now. And by association, all those peers here in the United States are down as a result. But fundamentally, nothing's changed. The story is exactly the same as when the 3 of us all went to bed last night.
I mean, if you think market concentration is bad in the U.S. and South Korea, it's obviously way, way worse. Speaking of market concentration, it's also been interesting to watch this bond market become increasingly tied to the fortunes of tech players. We had a new issuance from Amazon today, already having borrowed, I think this is the 2nd time this year, already having issued more than 6.
March was $37 billion, maybe up to 50, and now they're coming back for $25 billion per Bloomberg
Does this just suggest that they're going to spend even more than they had originally guided if they're tapping these bond markets again?
You know, the bullishness from Amazon's leadership on CapEx has been pretty consistent. If you go back to April 29th when they reported earnings, they didn't mention their need to borrow at all. What they said was that there is a short-term impact on cash flow, which everyone is sanguine about. The idea, like a few years ago, that Amazon would tip into negative free cash flow, everyone would freak out. Right? When Oracle tipped into negative free cash flow, everyone did freak out. With Amazon, it's a bit different. But the way that they've guided it is that this capital expenditure will result in massive cash flows and revenues, and that they can see that. So they justify it. I think there's a lot of mechanics to work out, like how much is CapEx going to be next year relative to this year, and you know, are they done borrowing for this year? But you know, when you have the balance sheet that Amazon does and the operating income of AWS, the market kind of cheers it. And, I think BI, for example, is very bullish that CapEx number will go up.
This is it. Well, this chip trade, Ed, I mean, they're essentially commodities, right? Whether they're memory chips or other kinds of chips, they're pretty
Are they? Huh? Are they? Well, so historically, memory chips are boom and bust, right? They are highly cyclical. And when you look at Samsung, for example, if you want to go back to that, maybe the disappointment here is margins. Margins have been very high, but in any cycle for memory, they're never maintained. They ebb and flow, they go down after a while.
My point was, can DeepSeek make one and take some of the market?
Okay, so the DeepSeek one is really interesting. The Reuters story hit that DeepSeek is working on an inference chip, and NVIDIA in the pre-market had a tangible move low. You can see it on the tape. What I would say is that everyone and anyone in the world of AI, particularly a growth scale company, is working on custom silicon, because the environment right now is that everyone is compute constrained. They cannot get enough chips or get the chips that they say they need to run workloads. The main distinction is that DeepSeek is, with respect, a teeny tiny company. They raised $7 billion in June, which is mightily impressive for a maiden raise, but it is nothing in the scheme of things. A custom chip takes anywhere from 18 to 36 months to go from architecting it to actually printing the silicon, if you have a very good team of experts and decades of experience.
Who they've contracted in China,
and who knows,
We'll
right?
never know.
The Reuters report had literally no details, no timeline, nothing other than this is an inference chip and they want to diversify away from NVIDIA. Yes, so does everyone else.
Yeah.
Because right now, NVIDIA is the only game in town with a technical monopoly.
All right, Ed.
That was fun.
Thank you so much.
Thank you.
Very fun. We'll do it again a little later. Bloomberg Tech host Ed Ludlow. Walmart, meantime, is cutting prices across grocery, household, essentials, toys, and apparel as it aims to attract cost-conscious customers. President Trump praised the move and signaled other retailers should follow Walmart's lead. Bloomberg Managing Editor for Global Business Coverage, Craig Trudell, joins us. Craig, regardless of whether President Trump made the call or not, Walmart was doing this. It was always going to do it. It always does this. It's the home of the low prices, right?
Yeah, President Trump may have had more to do with, getting a U.S. player back on the pitch last night than this announcement. But
we can't bring that up.
But
it's too soon.
but clearly, the president got a heads up about a release that the company was putting out on, sort of something that, to your point, they do every year around, major events, holidays, and we've seen the president do this actually with Walmart just in November of last year around the Thanksgiving holiday, where sort of an announcement about promotions around turkey prices contributed to sort of the president's messaging about trying to get prices down for consumers. In the grand scheme of things, however, Walmart has been actually increasing prices. The ground beef that the president mentioned in his True Social last night, ground beef prices in the U.S. are at a record high. So some counter-programming here going on from the president with some major caveats.
I remember earlier in the year, Target, for example, slashed prices too. And I wonder at this point in time, if Walmart is in the position where it can, because it has such a big part of this market, its margins are still healthy. Can other retailers follow along the path that Walmart is engaging on?
I think we're hearing Kroger, very recently talk about how they're going to be willing to, adjust pricing to go after Walmart. So maybe we are seeing, a peak in grocery prices, but I think, sort of that being said, with Walmart, they're actually moving to sort of digital pricing model, which would perhaps allow for them to sort of, opportunistically here and there adjust prices. But when
are you saying dynamic pricing?
Yes.
Oh, that is terrifying.
So
they're going to look at your card and see if you buy organic and then charge you more for eating
exactly. So headlines, you can sort of make these announcements about bringing prices here and there, but in the grand scheme of things, we consumers may in the end still be paying more.
By the way, what happened to Team USA last night, Craig? They looked so nervous.
It was tough.
It was hard viewing.
It was they looked like they had maybe sort of gotten away with a little something.
I think you're probably
Belgium's not a bad team. I mean, they are the
10.
5th best team in Europe after all.
Yeah, but USA is supposed to have the 12th man on the pitch with the whole crowd and all of that. Craig, thank you so much for joining. Always a pleasure to see you. Bloomberg's Craig Trudell. Elsewhere, President Trump has arrived in Turkey for the NATO summit, where allies are unveiling billions of dollars in defense deals. Trump currently meeting with Turkey's President Erdogan. You see Trump there at that NATO meeting in Turkey, in Ankara. Trump says he will make a decision decision on whether to sell F-35 planes to Turkey. Joining us now from Ankara is Bloomberg chief political correspondent and surveillance co-host Anne-Marie Hordern. Anne-Marie, what are we expecting today?
Well, I think the big news out of this Erdogan bilat, of course, especially for Turkey, is this path, the intent that the U.S. has to have the ability to send the F-35s to Turkey. Of course, they've been blocked, and it's blocked by law that they cannot buy the F-35s because, of course, they already bought into the Russian defense system, the S-400s. So right now what you see is Trump showing that intent, which was highlighted in numerous reports overnight, including the New York Times. But there's going to have to be some workarounds because this would have to go through Congress in order for it to be legal. So for Turkey, that would be a huge welcoming sign from President Trump, who recently said he was only coming to this NATO summit because of how much he respected Erdogan and wanted to come for him. The president right now, of course, has a lot of frustrations with European allies that are part of NATO. This is on the heels of what happened earlier this year. Davos was really taken over by the Greenland comments. Of course, what is going on in the conflict in Iran, that is going to be a top discussion, especially given the fact that a Qatari vessel was hit today. Really important given the fact that Qatar is a mediator in these discussions. And the president's latest frustrations with a lot of European allies is the inability to use, say, Spain's airspace when conducting strikes when it comes to the conflict. And finally, of course, the president will have a bilateral meeting tomorrow with President Zelensky, who in a Financial Times interview talked about how the next battle is the battle for the air. And a big discussion amongst NATO and European allies is going to be whether or not they can give Ukraine more Patriot defense missiles. There's been one issue that's been discussed now for a while, was discussed again at the G7, and potentially the group would make headway on, is that maybe they can give a licensing agreement to Kyiv for them to be able to manufacture some parts or a complete defense system within countries. So that's going to be a huge topic tomorrow. All of this comes under the fact that the United States right now is in the midst of a 6-month review of their presence and posture when it comes to the alliance and their defense posture when it comes to troops in Europe writ large.
Anne-Marie, how does Europe and the various heads of European states, how do they placate Trump? He's speaking right now and basically saying Turkey helped the U.S. to try and end the war with Iran, but other countries didn't, and he's specifically naming France, Germany, and others. He also, by the way, is saying that Greenland should be controlled by the U.S. again.
So I think there's two ways to think about this when the United States asked European allies for help when it comes to the Iran conflict. There are some that raised their hands, and there was an ABC reporter how an official talked about this, raised their hands and wanted to help, but didn't have the hardware, didn't have the ability to do so, which is why you have the NATO Secretary General Mark Rutte talking about this summit being a defense industrial revolution for the transatlantic alliance. It's about building on last year's summit when they all agreed to hit 5% of GDP when it comes to defense spending. 3.5% of that would go to hardware, ammunition, things like maybe minesweepers that could have been used to go sweep the Strait of Hormuz and help the U.S. Fifth Fleet. The others are just individuals who maybe even if they had the ability don't want to help the United States in this moment. Maybe that is Italy that was closing air bases, France, which was not allowing the U.S. to use their airspace when conducting the Iran conflict. And that is why when it comes to the conflict of Iran, this has been really the latest source of frustration between Washington and Brussels.
Anne-Marie, thank you so much for your reporting. Bloomberg's Anne-Marie Hordern at the NATO summit, and we're going to catch up with Anne-Marie later in the show. She'll be speaking with Finnish President Alexander Stubb, and we'll also bring you an interview from the EU's Foreign Affairs Chief. Let's get a check on markets just over 15 minutes before we begin cash equity trading, and it's the NASDAQ. It's a narrative that keeps flipping on its head every day. One day semis leads us, the other day it drags us lower. Today, it's the latter after Samsung earnings that were stellar, but not stellar enough. The 10-year yield that moves higher by about 2 basis points, considering oil is moving higher after an attack on a Qatari ship in the Strait of Hormuz. Some of the other movers on our radar this morning, Fiserv climbing on a report that big banks are showing interest in its debit network. Bonnie.
And Rivian selling 75 million shares to fund equity contributions related to a $4 billion U.S. Department of Energy loan. As you can imagine, shares are lower off the back of that news, down almost 12% now, Danny.
And we were just talking about this with Ed Ludlow. Amazon raising at least $25 billion in an 8-part U.S. bond sale this week to fund its AI spending. And shares are fine. Shrug it off, even though treasuries are slightly weaker, too. On that news. Coming up, we talk more about tech, specifically SpaceX is going to be joining indexes less than 1 month since going public, and some investors are finding ways to limit exposure. We discuss next, right here on Open Interest.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. It doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Now to high interest to look at what's making headlines around the world. Marine Le Pen is officially back in the race for the French presidency next year. A court has upheld her embezzlement conviction for misusing European Union funds, but shortened her election ban to 15 months. That clears the way for her to run. She can still appeal the ruling. The USA is out of the World Cup after a 4-1 loss to Belgium yesterday. The match was overshadowed by FIFA's controversial decision to overturn Folarin Balogun's one-game suspension, drawing sharp criticism from Belgium and from European soccer officials. Belgium's national team got the last word on social media, posting, "Overturn this." The country now advances to face Spain in the quarterfinals next Friday. And SpaceX joins the NASDAQ 100 today as Wall Street launches broadly bullish coverage following its IPO quiet period. Analysts are focused on long-term growth in satellites and AI services, though concerns remain around profitability, execution, and valuation, Danny.
Bonnie, though not everyone is buying the bull case, some investors are asking money managers to keep it out of their portfolios because, well, Well, CEO Elon Musk has become increasingly a polarizing public figure. Joining us now is Ellevest Head of Wealth Management, Emily Green. Her firm uses direct indexing as a solution for clients who want to limit exposure to specific names. Emily, thanks for joining.
Thanks for having me.
And look, it's a perfect day to have you on because SpaceX is joining the NASDAQ 100. How big of a conversation is this with clients who are coming to you to say, hey, I want the NASDAQ 100, give it to me, but strip out SpaceX?
Yeah, I mean, I think we know people want to own tech. And so people want they want to own the QQQ, they want the NASDAQ 100. I think the fear that people have is how big of it is. And they don't really understand the concept of the float and that it's not actually going to be, today it's probably like 1% that it's going to be of the NASDAQ 100 today. That's going to be a bigger and bigger conversation, I think, as the lockups come for these early investors and employees and so on and so forth. But it definitely is a controversial stock for people to own. And I think there's people who really believe in it and there's people who are really against it.
Sure. Now, are you actually getting calls from people who want out because of that one stock? And are there other stocks that make people want to do that?
Oh, definitely. I mean, we have, especially pre-IPO, before it went public, we had a lot of people calling us and saying, it'd be interesting. They ask, how much exposure will I have? Which it's going to change over time. It's, it's as they come into the different indices and such. But we do have people who are calling us and saying, how do I make sure I don't have exposure to this or my exposure is very little?
Is it a valuation exposure problem or is it, an ethical, moral? I mean, because you have Palantir in there, for example.
Yeah, I think it's a little both. I think that Elon is very, that the people have big feelings about him. He's very polarizing. And so there's people who really believe in him and people who really don't. I don't know if we'd be having the same conversation if someone else was the CEO and founder of this company.
Yeah.
And so I think it is interesting.
Well, you pointed this out to our print colleagues, and we were talking about it in the break, that a similar thing happened during Meta in the 2016 election. But then if you had stripped out Meta, you would have missed out on a stock that went on to reach new highs. Yeah. How are you handling that conversation with your clients to say, yes, there are some concerning things, governance-wise, maybe ethically, but if you strip it out, you could be losing out on gains?
Yeah, at Ellevest, we really think about, we're going to show people what that means. And so we do a lot of direct indexing, so basically building personal index funds for people. And so you can take things out of your portfolio if you want. It is just showing them, okay, this is what it may cause. This is the tracking error that may be. This is what, are you willing to do that? And it's their money at the end of the day, and trying to help them take the emotion out of that decision of, SpaceX may be the name, it's what's in the news. There are also a lot of other companies, to your point, there's the Palantirs, there's a lot of things that people don't talk about every day that actually maybe do worse things, and she'll kind of showing them the data of what that's going to mean and what that may mean from a portfolio for a good or bad perspective in the future. Because we see these big price targets for SpaceX, but we know there's a big hurdle for them to actually get into the valuation that they have today.
Yeah, it's true. I mean, Bonnie and I were talking about Morgan Stanley giving them a $300 price target, and only 9 of that being space. So we're in this environment where it joins the NASDAQ 100, and passive investors are buying it, whether willingly or knowingly or not, very soon after this thing lists. A lot of them changed their rules to allow this to happen. Do you think, in general, for more wealth kind of retail-oriented investor, that this is a problem, that they don't maybe fully realize sort of the dynamics around the stock?
Yeah, I mean, I don't think people understand the changing of the rules, that it's becoming part of like the NASDAQ 100 so quickly. For example, the S&P 500 obviously did not bend the rules, and so we're still going to see that that's not in there. And people don't understand what it's going to be in and what it's not going to be in right now. At the end of the day, these indices are broad. They are, though, much more concentrated than they used to be when we look at these tech stocks. It's a different world. And I think as more float opens up and as SpaceX, we see more shares available, it will be a bigger part of this. And I think it is a conversation for people to think about, especially when you look at what the valuation is at and frankly, the profitability and the spend of that company.
19 buys now, and all the price targets are above where it's trading at currently. Emily, we have to leave it there, but thank you so much. Ellevest Head of Wealth Management, Emily Green, joining us. Coming up, more on the AI trade volatility with Envestnet's Dana Dioria. This is Bloomberg Open Interest.
is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
For U.S. markets, we are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Let's get a check on equity markets. A few things to digest ahead of the opening bell in 5 minutes. For one, Samsung earnings that were strong but not strong enough dragged down chip stocks, along with DeepSeek looking to build its own chip player. So all of that dragging semis down. Plus, we have Amazon issuing a huge bond offering that weighs on 10-year yields, which move up by 3 basis points. Also weighing on 10-year yields is Brent crude up 1.6% after another ship getting struck in the Strait of Hormuz. Vani.
All right, Danny, let's get a look at some other movers on the radar. NVIDIA shares declining today as that AI trade broadens out from the Magnificent Seven and investors take profits.
Vertex, a deal for them, buying Crinetics in a $10 billion cash deal. It will help their product line for rare genetic diseases.
And Philippine Airlines plans to order Boeing jets for the first time since 2007, according to people familiar with the plan. It plans to buy 10 jets as part of a multi-billion-dollar deal.
Coming up on the other side of this break, we will have your market open. This is Bloomberg Open Interest.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, or civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Here we go, moments until the start of trading. This is Bloomberg Open Interest. I'm Danny Berger. Yesterday's gains turned to a decline. We are still within 1% of all-time highs. If this sticks, we're obviously not going to get there. The equal weighted, though, did hit an all-time high yesterday. We're dragged down by the NASDAQ, down 1% as chip makers falter. They were once the heroes of this market. That changes today as it seems to flip every day. The Dow, though, that is up 0.5%. Ringing the opening bells, we have IBM down at the New York Stock Exchange. What a ride it's been for them. They've had that huge run up in May after they got U.S. funding. It's flatlined since then, kind of petered out some of the gains. Down at the NASDAQ, we have Climb Global. They're basically a middleman for IT solutions, if you will, so software. So they were a penny stock. They have a huge rally up, something like 360% in the past 5 years, but they're down now about 6% year to date because they do software, and software is pretty tough. But they have their investor day for 2026 today, and they're celebrating that, Bonnie. And let's get some of the stocks to watch this morning. And as I mentioned, a lot of it is the chip stocks. Chip makers are largely down today. Samsung revenue more than doubled last quarter. That is not enough, though. Expectations are so high. Samsung is such a big part of the Korean market, so you only need a little bit to tip it over. Micron, Intel, Western Digital all down at least 5%. There's a lot of profit taking as demand for AI chips creates enormous pricing power for these firms. And at the same time, we're also seeing DeepSeek trying to launch one of their own chips, so that's also weighing on things.
Danny, SpaceX joining the NASDAQ 100 today. It'll account for 1.3% of the index. At least 6 analysts newly initiating coverage of the company today now with buy ratings. Morgan Stanley has a street high price target of $300 per share. Joining us now is Envestnet Chief Investment Officer Dana Dioria. Dana, is your impression of the NASDAQ 100 different today than it was yesterday in any way for your clients or for your outlook?
No, it hasn't changed. I think we're experiencing what has become a familiar story at this point with, kind of this push and pull of fear and greed in the market as it relates to the AI trade, to software, to chips that, power the AI trade. And so it's not surprising that we see these ups and downs. You've got this massive, potentially, current or, future AI productivity story that will absolutely change economics, right? So you have this huge, new productivity story that has to be priced, and it's very difficult to price. And it's difficult to know, when that's going to come through, who are going to be the winners, how long will it take? And so you just have the market reacting to any incremental little noise.
How do you handle that, though, Dana? Are these dips that you want to buy? Because it feels like every other day we're just flipping back and forth whether we like chips or whether we don't like them.
I mean, you're 100% right. The market is based around, one price, right, for every stock. And so anything that is a variable that might move the price of that stock, whether it's idiosyncratic to that stock or systematic related to the trade, you've got one price to reflect all of that information. And so in a situation where you have this sort of towering amount of pricing that has to be done, sort of like the glacier, right? Most of it is under the water, and all you have is that one price to reflect that. It's very difficult. And I think, from the perspective, the sentiment of the question is, how did the investors work with that? I think it's not easy. If you're an advisor, kind of working with retail investors, on the one hand, you want to try to diversify, right? And we're seeing the benefits of that this year with small caps for sure. Diversification is really paying off this year in a big way. But on the other, when so much of the market moves with this concentrated bet, it's really hard to keep a client disciplined if you have a lot of tracking error to that bet.
Are you happy being all in the NASDAQ 100, given that we're up 18% year to date? And sure, the S&P is up, 11, 12%, but that's still a good 6%. And, on any given year, a client might be happy with just 6% on its own, Dana.
It's true. It honestly depends a lot on what is the benchmark that, the client has been looking at, and the advisor has been sort of, directing the client to look at. It's you have advisors who will show the S&P 500, which is a tough benchmark, right? Especially in this day and age because it's so concentrated. NASDAQ is not typically a benchmark that, somebody's going to say, here's your retirement assets and we're benchmarking against the NASDAQ. But it's certainly something that can kind of goose the return to the point, right? In terms of what you're getting from the overall index. And so I think, then you have MSCI. I mean, a lot of good financial reporting to the client will show a variety of indexes. If you show something like a world index, you generally tend to be a little bit better off because it's a diversified index and they're not seeing concentrated wins and losses in one benchmark.
When it comes to concentration, Dana, the credit universe used to maybe give you more financials, something a little bit different than what equity indexes are. Every day that feels like it's changing. And today it's Amazon with the $25 billion debt offering, already having raised $60 billion worth of paper so far this year. What happens when investment grade and the corporate credit market in general starts to get more tech concentrated?
Yeah, and not even just U.S., right? We know that these big tech companies are going overseas, and this trade is now penetrating. It's an insightful question. The trade is now penetrating parts of the market that traditionally you would have said, this is ballast, this is an area where I'm sort of protected from the vagaries of what is going on in the equity markets. But there are ways to continue to diversify, right? And it does require more of a deep penetration in terms of how you're looking at those different options. And, whether it's extending yourself out to private credit areas, which themselves have to be looked at because, they can sometimes tend to have a software bias. But, these different areas of the market that are now available to clients, different bonds, different, the good news is ETFs, if you want to just go with a packaged product, ETFs cover all sorts of parts of the market. You can certainly go to an ETF and find one that's sort of less dependent on, the AI trade or the software trade. But it does require, it's not a matter anymore of just buy the market and, kind of feel safe and diversified. It requires a little bit more of a look if your thought is, hey, there's a concentrated bet here that's penetrating across my holdings and I need to diversify away from that.
I mean, Dana, the Dow actually hit a record yesterday, and in recent weeks we've been seeing the Russell 2000 hit records and also the equal-weighted S&P 500. Is this a fear trade, a fear that we've way overpriced some of the chip space? Or is it, a confidence trade that some of the other areas of the economy are mighty strong and we'll see banks and insurers and industrials and all of the other wonderful sectors in this economy doing better?
It's, so the hopeful narrative there, of course, is that we're seeing actually benefits. So this isn't just about the creators, the producers of AI as it relates to the AI trade, that we're seeing, and we do see signs of this in corporate profits and margins kind of increasing, that some of the productivity is now penetrating out into the rest of the market, and that this really will lift all boats, right? And that there's an opportunity set here for different parts of the market to be winners, using this technology. And so I think there's sort of a hopeful narrative here that, it's the latter, so to speak, right? That the market is pricing in the expectation that you're going to see benefits in these other businesses, and these other businesses had not been enjoying the valuation levels that, you know, the producers, if you will, of technology and AI componentry were experiencing before. And so now you're seeing a lift in those other parts of the market. Obviously, there's also, you know, interest rate speculation, certainly small caps in particular. You mentioned the equal weighted, which really is a small cap index at its heart versus market cap. You know, that's going to be benefited obviously by the hope that interest rates stay lower, and you know, because certainly we know that small caps are more dependent on floating rate debt, and so what goes on with the Fed is going to impact those as well.
Dana, this has been so interesting. Thank you so much for joining us this morning. That's Envestnet's Dana D'Auria. Let's get a check on your equity market about 8 minutes into your trading day this morning. And we are moving lower, but look at this breadth. This is something we consistently see. Almost 400 stocks are trading higher, yet we are lower. Yesterday was exactly the inverse, in that this equity market gained, but majority stocks were moving lower. It's, again, an inverse in multiple ways. Also, yesterday was a lot of the riskier stocks that were doing well. Today, it's a lot of the safety stocks. I mean, save for Microsoft, which is a tech company. You get a lot of healthcare in there. Eli Lilly and Johnson & Johnson are near the top. You have some consumer staples with Walmart, P&G, and their two Coca-Cola, one of the big gainers today. And what is dragging us down? It should be no surprise, Vonnie and I have been talking about this. It is the chip makers after that Samsung earnings. Micron, AMD, Intel, Broadcom, Applied Materials, all sinking. Some of them more than 8%. It's a painful sell-off and dragging the entirety of the index down with it. So for the sectors, again, we're going to have a push-pull in tech because chip makers aren't doing well, but some of the bigger hyperscalers are rallying today. It's not enough to save it, though. Tech down 2%, followed by industrials. And as I mentioned, it's the safety stocks that are doing well. The inverse of yesterday, consumer staples and healthcare round out the top of the list. Energy having a good day too, Vonnie, as the price of oil moves higher because of a new strike in the Strait of Hormuz, this time on a Qatari-flagged vessel. So that's sending interest rates higher alongside the price of oil.
Exactly. This is not a fragile market except in one area, Danny. Thank you. Coming up, Amazon targeting a $25 billion bond sale to fuel its AI build-out. We'll have details next. This is Bloomberg Open Interest.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Next hour.
Time now for our top calls. Some of the analyst action we are watching this morning. First up, Wall Street bullish on SpaceX with Goldman Sachs, Morgan Stanley, RBC, Stifel, all citing its leadership in rockets, Starlink and AI. Interestingly, Morgan Stanley says the launch business accounts for just $9 per share of the $300 price target that it has put on it, with most of the valuation tied to Starlink and AI. Next up, Bank of America reinstating Adobe with a sell rating, saying the company is, quote, fundamentally challenged by AI as lower barriers to content creation increase competition from lower cost alternatives. Not having too much of an effect there. And finally, Scotiabank upgrading Cloudflare, citing AI-driven growth and stronger cybersecurity demand. Also not having an impact, Danny.
Thank you very much for those, Vonnie. Elsewhere, Amazon is raising at least $25 billion in U.S. bonds to fund its AI spending, which Bloomberg Intelligence says could top $300 billion of CapEx next year. Let's discuss with Bloomberg Intelligence credit analyst Robert Schiffman and Bloomberg Tech host Ed Ludlow. Robert, on this deal, every day, not every day, I'm exaggerating, it feels like we have some hyperscaler coming to this bond market and tapping it. And for the most part, maybe we put aside SpaceX, the market absorbs it. How far can these companies take it? How far can they increase their leverage before we start looking at things like credit downgrades?
I think you better get used to having me on set, because we're going to see a lot more of
Which
this.
is a treat, by the way. You could just ask, Robert.
We have said this over and over again. The biggest hyperscalers I would consider to be on the Mount Rushmore of credit. These are AA and AAA names that have hundreds and hundreds of billions of capacity. Somebody asked me this morning, what would it take to have one of these names go to junk? You're talking a number that would be, I think, over $1 trillion. Wow. So I just think that what we're seeing here, supply continues to fall well behind demand. Spending is going up, and the only way to spend is to borrow more money.
Do they borrow at fixed rates, or what happens if the Fed does have to hike a few times?
Yeah, well, primarily all this extended duration borrowing is all fixed. So now you're locking in costs for 10, 20, 40 years. Remember, Alphabet did a 100-year bond via pounds a few months ago. So you don't have to worry about rates necessarily going up, other than why not borrow now if you think rates are going up? It's actually an incentive to come to the market sooner rather than later and lock in these deals.
Ed, that's the debt side. For how long can the equity side hold up? Because there does seem to be this narrative emerging saying you need to have a return on this investment. You can't keep spending without any fruition coming from it.
The equity side is much more closely tied to, is Amazon or AWS in particular good at AI, right? And they've kind of demonstrated in more recent history that they are, or at least the market gives them credit for it. You know, the thing about what Schiff outlines in the Bloomberg Intelligence React, I find fascinating, which is, if CapEx is going to be $200 billion this year, why would it jump to $300 billion this year, next year? And the way that Amazon explains it away is not necessarily that you have to keep building data centers to meet with that AI demand. CapEx can also go up because the cost of building data centers goes up, right? That has nothing to do with AI at all. There is construction labor inflation. We know there is great memory price inflation still, right? We're very focused on this idea that memory supply is tight. Continue to look at memory pricing. And so that was so interesting when he published the React. And the thing about it is that Andy Jassy tried to explain that in the prior earnings call, April 29th. They said it several times. Capital expenditure growth is outpacing revenue growth. And so to answer your question, we still don't see that accelerating AI revenue growth at a level where you're like calm about it on the equity side.
But every time we see something that's going to interfere with this cost, isn't it going to jolt the market? Like, for example, when NVIDIA said there was going to be a delay with its server racks.
Well, NVIDIA didn't say it. SemiAnalysis said it,
Okay.
and NVIDIA came out and pretty robustly rebutted it. You know, the reality is right now is that there is a big distinction in the markets between the capital expenditure deployers and the capital expenditure recipients. The recipients, for the large part, are the chip makers. And somewhere in the middle, to Danny's question, is show me something, a real tangible metric that shows you are making money from AI. And in Amazon's case, they can point to AWS top-line growth, but they also have this metric which they will call AI revenue run rate, which is basically all of the things they do sort of linked to AI packaged as one thing. It can be people running AI workloads on their cloud compute capacity. It can also be the training of models and then the deployment of those models, inference. The reality is that they're still supply constrained on the compute side. So while that activity ramps, they also have to build more data center to accommodate for it. It's just the math on that, and the cost of it, it's fluid and changing all the time.
Robert, what's made SpaceX different? This is a debt that has been trading lower, that has been largely disappointing to the market. Why hasn't that been as well absorbed as the rest of the hyperscalers?
Well, they're not part of the Mount Rushmore of credits. You know, SpaceX is a BBB name that doesn't have a real...
Pretty good.
It doesn't have a... It's high grade, but it doesn't have a very long history of generating any profits. So it's negative free cash flow. People are wondering how much funding it's going to take over the next handful of years. And because you have such key man risk, what does he actually even want to spend on? You know, when you look at SpaceX's mission, it scares people about talking about, you know, raising interplanetary experiences. So listen, I think a lot of that is just sort of hype. But there's a difference between BBB and BB hyperscalers that are building data centers that need to borrow money versus these very well-capitalized, low-leverage names that generate tons of profits in other businesses that can help finance the build-out. And listen, from the equity side, just remember, I actually think that this is a positive sign from Amazon versus issuing equity like Alphabet did a few weeks ago. Because the weighted average cost of capital suggests you should issue a lot more debt. But also, I think the leaders of these businesses, I'm sorry to say this, I don't think they care about their equity price right now. If they cared about their equity price, they'd be cutting CapEx.
But doesn't a robust equity price allow them this cheap cost of capital? I realize the bond markets are still holding up, but doing things like issuing equity, isn't it important for them that they continue to see rich value?
Well, like a completely separate case study is Rivian, right? That is just being opportunistic because in the 5 days since they had delivery numbers, the stock went up significantly, but like relative to, basically the stock went up and they're like, you know what we should do, guys? We should do an offering and raise some, and they did, but that's different spectrum, you know, to other end of the spectrum to Alphabet. Sorry, I just was like,
and then on top of it, listen, SpaceX raised $85 billion of equity, you know, that cushion didn't provide that much backdrop to hold up bonds. You know, they widened in the aftermarkets. I just think that spending is going up. It's not going down, and it's going up more than what the equity community wants to see. They want to see returns.
Right.
Well, wake up. You're not going to see them in big size for the next 2 or 3 years. You're just going to see more spending, and we're going to be in this circular reference of when are we going to see it? They're spending more. Demand exceeds supply. And what does that mean? It means more question marks, more volatility. From the credit side, though, these credits are fine. There's tons of capacity. They can do it at super low costs. And bondholders are willing to fund this because they know over time credit quality is very likely to hold up.
All right. Thanks to Robert Schiffman of Bloomberg Intelligence, and also, of course, Bloomberg Tech host Ed Ludlow.
Coming up on the show, Finnish President Alexander Stubb will be joining us live from the NATO summit in Ankara, Turkey. That's coming up next. This is Bloomberg Open Interest.
up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story. This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Let's head to Ankara, where NATO leaders are gathering for this week's summit. Bloomberg chief political correspondent and surveillance co-host Anne-Marie Hordern is there with Finland's president. Anne-Marie.
Thank you so much, Danny. That's right. Fresh off his meeting with President Volodymyr Zelensky and the host of the summit, President Erdogan, I am joined by the Finnish President Alexander Stubb, also known in the American press as the Trump Whisperer. Thank you so much for joining us here.
My pleasure.
So give us a sense of what this meeting you just came from with President Zelensky was like, especially given the fact that he's saying the next battle is going to be in the skies and he doesn't have enough defense systems.
Yeah, I think there are 2 elements to it. The first one is that he's doing quite well in terms of long-distance strikes, both drones and missiles. We're seeing Russian oil refineries being hit and 40% of their refining capacity going down. But the other part of it is the way in which Ukraine defends itself. And there he's absolutely right. He needs more air defense. He needs more Patriots because we're seeing over 100 civilian buildings being hit just the other night with civilians dying. So this is something that we Europeans and Americans need to work on.
Those long-range drone strikes, do you think that's making Russia more emboldened, or is it maybe, do you think, going to push them to a negotiating table?
Well, I think our assessment in Finland as Russia's neighbor is to understand that, economic disparity won't end this war. The situation on the battlefield, in other words, the losses of Russian soldiers, 35,000 a month, is not going to end this war. But the strategic thinking of the Russian regime will change if the Russian population begins to be against the war. And that's what's happening right now. And the reasons are many. It's actually coming too close to home, hitting St. Petersburg and Moscow, the Crimean Peninsula, so it's hitting, kids, basically not hitting, but affecting children's summers. It's, they're closing internet. They have long lines at the gas pump. So these kinds of things will probably make Russia reconsider and hopefully get them to the negotiating table.
You are regarded as one of the closest European leaders to President Trump, a golfing buddy sometimes with him. What would your advice to Zelensky be on how to approach the United States with these requests?
Well, I think President Zelensky and President Trump are having a really good dialogue right now. And of course, things went off track because of Iran for a while. But now that we are back on track and we see the rhetoric and the meetings they had at the G7 meeting, the phone calls that they've had before this NATO summit around the 4th of July, I think we're going in the right direction. And I think there is a fundamental understanding of the American administration that Ukraine is right now on top, and it's always easier to back a winner than a loser.
Do you think at some point, this has been a talk for months, maybe even years, that the U.S. would allow Ukraine to just produce Patriot missiles in country?
That would be very useful because what
Are we close?
I hope so, because I mean we have to understand that, Ukraine needs NATO, but NATO needs Ukraine as much as the other way around, because we're seeing their defense industry capacity, which we're talking about here at the NATO summit as well. And if the Ukrainians were able to produce their own Patriots, I think that would be a good thing for civilians, and it would be a good thing also in terms of it being more cost effective.
The president's also frustrated with Iran, which is going to be another big topic today, especially given the fact that a Qatari vessel was hit. And of course, they're a mediator in this entire conflict. Is there an inability from Europe because they don't have the hardware to help the United States when it comes to Strait of Hormuz, or
our country,
the United States when it comes to Strait of Hormuz, or there's not a political will to want to do that?
No, there's definitely a political will. You know, we've been on the side of keeping the Strait of Hormuz open from the beginning. Our country, Finland, was involved in a declaration and in the planning of it. And I think the French and the Brits are now talking, for instance, about demining in Oman. So, you know, we have a lot of the capabilities to do it. And of course, on top of that, a lot of the European air bases and military bases were used to service and feed about 4,000 to 5,000 American soldiers.
Some countries said no.
I think in the beginning there was Spain and then a couple of glitches with Italy and the UK, but other than that, thousands and thousands of American soldiers would not have been able to work in the Middle East was it not for European airbase. So I think we just need to understand that we're on the same page with this.
When was the last time you've spoken to the president? Do you feel like you guys are on the same page?
Oh, I mean, we message and speak. I don't remember when the last time was, but you know, we are in constant contact. That's part of diplomacy. But again, you know, I don't have any illusions. You know, President Trump is very strong. He's a strong leader. He does his own things. Sometimes we connect, at other times we don't. Sometimes he listens. Most of the time he doesn't.
When it comes to the broader meeting, this is really a follow-on from the meeting in Netherlands, NATO 3.0. At the same time, you see Europe trying to reindustrialize their defense base. The United States is looking at procurement and potentially withdrawals. And they're in the middle of a 6-month review. Is that going to be one of the big topics discussed here today? And how do you convince the United States to stay committed to the continent?
Well, I think it's in the interest of both Europe and the United States that we both stay committed. So what we're trying to do here is to create NATO 3.0, which basically means a stronger Europe in a stronger NATO. And why are we doing it? Basically, in order to salvage the transatlantic.
ABC News. I'm Sherry Preston. President Trump arriving at the NATO summit in Turkey to a military flyover. The meeting in Ankara focusing on the war in Ukraine. President Trump saying he spoke with the leaders of both Ukraine and Russia ahead of the NATO meeting.
I had a very good talk with President Putin, who, by the way, has a lot of respect for President Erdogan, a lot of respect for him. We had a long talk yesterday, it lasted a long time, and I also spoke with President Zelensky right after that. I think they both want to make a deal.
Russia launching a wave of strikes on Ukraine's capital, and Ukraine striking Moscow on one of its fiercest drone attacks in more than 2 years. There's a long and growing list of Democrats who say the party's nominee for Senate in Maine should drop out of the race. Graham Plattner is now accused of sexually assaulting a woman in 2021, an allegation he denies. Here's ABC's Jay O'Brien.
Democrats hanging their hopes on the progressive Plattner to unseat Maine's longtime Republican Senator Susan Collins, seeing her as particularly vulnerable, the race critical to their chances of taking back the Senate. And many in Plattner's party sticking by him amid a string of prior scandals, from another girlfriend accusing him of abusive behavior, which he has denied, to acknowledging sending sexual messages to multiple women shortly after he was married in 2023, and covering up a tattoo resembling a Nazi image on his chest, saying he didn't know its meaning.
Prince Harry's final lawsuit aimed at making the British tabloids pay for invading his privacy has failed. The judge has rejected his case against Associated Newspapers, owner of the Daily Mail. Elton John, Elizabeth Hurley, and others were a part of the suit, trying to prove the newspapers engaged in unlawful activities like phone taps. More testimony today in the hearing underway in Utah. Prosecutors laying out evidence against Tyler Robinson in the alleged killing of Charlie Kirk. You're listening to ABC News. investigation, Walmart's promising greater accountability to people who agree to deliver groceries and merchandise to customers. Here's ABC's Jim Ryan.
Walmart home delivery drivers had complained that they weren't given their promised base pay or tips from customers. Now thousands of those delivery people are getting a share of millions of dollars in settlements reached between Walmart, federal regulators, and the attorneys general in a dozen states. The retailer also is promising greater transparency in its Spark Driver program.
2 ships struck by projectiles in the Strait of Hormuz, the latest attacks targeting vessels moving through the narrow mouth of the Persian Gulf. A former football coach at Bucknell University in Pennsylvania has now been charged with felony hazing in connection with the death of a player.
18-year-old C.J. Dickey collapsed during his first workout with the team in 2024. In a lawsuit, his family has claimed that strength and conditioning coach Mark Holbus forced Dickey to do up-and-down exercises. The teen was later rushed to the hospital and treated for rhabdomyolysis, or rhabdo, a condition caused by extreme exertion that leads to muscle breakdown. Pennsylvania's Attorney General calling it an extraordinary tragedy, worsened by the fact that CJ's death was preventable.
Delta, American, and United Airlines all say they're pumping more money into first class and premium seats on planes. Some of the perks include chef-inspired menus and soundproof pods. The airlines say they make a lot more money that way. I'm Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. We are streaming live on Bloomberg.com as well. Scarlett Fu is out today. No, she's not out. She did like hours and hours of TV this morning.
I saw her this morning on TV.
So we gave her a break. So you don't have to do radio. But not to worry. Stacey Vanek Smith, she's from Bloomberg News. You know her on the podcast with Joe Weisenthal. With you do your podcast. Max Chafkin, thank you very much. You got my...
Confused in any way with Tracy Alloway.
Exactly. So there we go. So Stacey's going to join us for the next couple hours. We've got a lot to get to here. Coming up, we're going to check in with Anne-Marie Horder, and she is in Ankara, Turkey, for the NATO summit. We'll get the latest reporting there. Sarah Ponsek, Senior Vice President at UBS Private Wealth, will get her thoughts on these markets. Ed Ludlow, he's usually in San Francisco, but he's in New York today, so we'll get him in studio. We'll talk about all things technology, including that big $25 billion Amazon bond deal, which is just huge. Laura Rappaport, founder and CEO of Northbridge, will get her thoughts on the commercial real estate market. Where are we here in this country? So a lot coming up in the next couple of hours. We'll bring it all to you. But first, let's go to John Tucker for a Bloomberg Business Flash. John.
All right, guys. Good morning. Major averages mixed right now in the early going. And chip stocks, they are selling off. The Philadelphia Stock Exchange Semiconductor Index down over 5%. And in the S&P 500, the best performers right now, consumer staples, healthcare. What does that tell you? Yeah, rotation. Samsung's preliminary results showing record profit, but you know what, investors, they wanted more. The most active stock right now, Crinetics Pharmaceuticals, up close to, get this, 100%. Vertex Pharmaceuticals agreeing to buy Crinetics for $10 billion in cash. So this is it's the largest deal ever for Vertex to expand into endocrinology. Meantime, Katrina Dudley at Mutual Series says any tech sell-off could spell opportunity.
People are saying, is this the sign that things are starting to crack? I would say that we continue to be bullish on AI infrastructure spending. And what we've seen in other companies that have sold off, initially they sell off, but people are using this as an opportunity to buy the dip.
Right now, the S&P 500, 26 points lower. The Dow is up 30. That's that rotation. The NASDAQ Composite Index down 273 points. It's a decline of 1%. And with that news of another shipping hit in the Gulf, Brent, the active contract right now, up 2.7% at 73.94. And here's one for you. Most events, conferences, and other events that feature Jensen Huang, he shows up in that Tom Ford leather jacket.
Yep.
One of the leather jackets worn by Jensen and autographed by him up for auction starting today and the proceeds going to charity. So the auction runs through July 17th, and the pre-auction estimate $40,000 to $60,000 for the leather jacket.
No worries.
Yeah, hopefully they cleaned it.
Did they take that off?
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Stacy. Hi there.
Hi, nice to be here.
Absolutely. John Tucker, thank you so much. We appreciate it. Stacey Vanek Smith sitting in for Scarlet Food today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As John was just mentioning, we've got some red and green on the screen here. Now the Dow's gone negative, so we're pretty much all in the red here today. But let's take a look at some of those stocks on the move today. We can do that with Bloomberg's Matthew Griffin. Matthew, what are you looking at today?
Well, thanks for having me on. And I was thinking about that rotation that John was just talking about. And one name on my screen is First Solar. That's ticker FSLR. And they have had a very volatile morning. They've just turned red and are heading down about 1.5% now. And it's one of those sectors that gets swept up every time you have a step back in the AI trade. Everything tech related, everything power related, every sector where anyone sells to data centers, traders flee those names together. And First Solar has, because of that, been unable to hold on to a pretty strong pre-market gain. They got an upgrade at Deutsche Bank, which basically said this stock is way down recently, lost about 1/4 of its value since early last month. That's a buying opportunity. Right now, though, that sell-off, for today at least, is extending.
All right. What else we got here? Give me Rivian.
Yes, Rivian having an even worse morning, now down about 13% after the EV maker filed to sell 75 million shares. That would be about $1.5 billion offering if you go based on yesterday's close. They plan to use at least some of the money to fund equity contributions for a loan from the Department of Energy. Now, a sell-off like this, pretty usual when a company sells a lot of stock. That being said, this is a pretty good time for them to sell. It comes on the heels of a more than 35% rally. A lot of that came last week when the company beat estimates for car deliveries. So that stock, ticker RIVN, taking a step back but holding on to a lot of those gains.
And what about the final stock? What else have you been looking at this morning? Hopefully some good news?
Yes, well, Fiserv is managing to hold on to a gain. The fintech company, ticker FISV, they just changed it, up 3.5%. There was a Wall Street Journal report that big banks, including JP Morgan and Bank of America, held preliminary talks about buying one of its debit card networks. Now, analysts are very skeptical that this will happen. A deal would probably face strong regulatory scrutiny, but Vital Knowledge says it could basically pull attention towards the value of parts of this business after a pretty dismal year for the stock. It's down about 50%.
All right, Matthew Griffin, thank you so much. We appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. The NATO leaders, they are in Turkey, Ankara, today. It's about 300 miles east of Istanbul. Tom Keene notified us this morning of the geography, so we appreciate that. Anne-Marie Horden's there. She is the co-anchor of Bloomberg Surveillance Television, joins remotely from Turkey. Anne-Marie, as the NATO leaders get together here, what is a success? What does a successful meeting look like at the end of this?
I think it depends which country you ask, right? President Zelensky is here and really trying to talk to the NATO alliance about more defense missiles. He said that now the latest battle is going to be by air. I just spoke to Alexander Stubb, the Finnish president, who said what he thinks would be a really great success was this idea that's been circulating for months now on potentially allowing Ukraine with a license to build Patriot air defense missiles within their own country. I think for the U.S. administration, a success would be seeing the signing of deals. So not just that last year the NATO alliance made a pledge when it came to actually wanting to spend more on defense, but actually starting to rearm. And Mark Rutte, the NATO Secretary General, talked about the reindustrialization of the transatlantic defense relationship. And then I also think for the United States, something that's going to be top of mind for them, given the fact that we just had this cutter vessel hit earlier this morning in the Strait of Hormuz, is going to be whether or not Europe has the ability physically with hardware or even ability with the political will to support the United States when it comes to the conflict in Iran and truly opening up the Strait of Hormuz.
Where does this leave U.S. defense companies right now? I know that's been a big point of contention and something that's been moving around quite a bit.
Well, I think for U.S. defense companies, they are getting orders not just from the United States. The president, when he was en route to the summit, was tweeting that he wants to actually see a bigger budget when it comes to the DoD. But they're also, obviously, we're in the middle of two conflicts with Russia's invasion of Ukraine and Iran's conflict. And the United States is a massive supplier to the world. And you have Mark Rutte talking about the fact that there aren't just so many interceptors that can be easily transferred to Ukraine, because many would advise that the world is probably running quite low right now. So it is an important moment for U.S. defense contractors, but also European contractors and even Turkish contractors. I spoke to one of the biggest Turkish defense contractors earlier this morning. They said 57% of the hardware that is coming out of Turkey is going to NATO members. So you can see across the world, across the NATO alliance, you have all of these countries looking to rearm. So that's putting defense contractors certainly in the front seat.
Anne-Marie, you mentioned that Mr. Zelensky is in Ankara as well. Is there any expectation that this NATO group can think of a policy, formulate a policy that can maybe bring some resolution to what's happening in Ukraine?
Well, they're certainly going to try. I mean, the president is not only going to be meeting President Zelensky tomorrow, but he did speak with him over the July 4th weekend and also spoke with President Putin as well. There is definitely a push for the European allies to try to get both of these countries to the negotiating table. But we've been here so many times, and Russia continues to drag its feet. You also see not just the fact that Russia has upped its strikes on Kyiv, which is why you have Zelensky really coming out and imploring the alliance in the United States to send more Patriot air defense missiles, but you also have Ukraine hitting more long-range drones. Their armies are sending drones deeper into Russia and hitting some of Russia's refineries. So I think a big question is, was this embolden Russia, or potentially could this be a push to really bring Russia to the table? The Finnish President Alexander Stubb told me that he thinks what is happening right now in terms of those attacks deeper into Russian territory and the fact that this is now hitting fuel in Russia, potentially this is something that is pushing dissatisfaction within the Russian population and potentially could be a sore point for Vladimir Putin, and maybe that could beginning of the end of this conflict in terms of at the diplomatic stage. We've been here so many times, but the president in the last few days, just in this instance, has been in touch with both Moscow and Kyiv.
Anne-Marie, thank you so much for that. We really appreciate your reporting there from Ankara. That's Anne-Marie Horder. She is the co-anchor of Bloomberg Television, Bloomberg Surveillance TV. She is there with the president in Turkey, and we saw Stacey this morning. Tom Keefe and I were monitoring the President Trump arriving, and all the fanfare. Mr. Erdogan was there to greet him. Then we had video showing this very impressive motorcade throughout Ankara arriving for the opening ceremony. So very impressive.
Well, it's certainly an important meeting, an important time, and a lot is in play right now. So I really hope it goes well for our sakes and for everyone's sake.
Yeah, and we've got some Bloomberg News reporting about, as you would expect, NATO allies availing $12 billion in defense industry deals to buy next-generation drones, surveillance planes, and military aircraft. And 11 countries will buy airborne radar detection systems from Saab, which is a Swedish company. So lots of deals getting announced on the military equipment front, which is something that I believe President Trump was looking for as Europe continues to try to fund its own military.
Yeah, they definitely need to.
Yep. So we'll stay on top of that one, but it's some big numbers being out there. Some red headlines crossing the Bloomberg terminal. What's your particular note for those in New York City? New York City Midtown building is being evacuated on collapse warning. That's according to the New York Times. The Midtown building is being converted to apartments from office. Again, reporting from the New York Times there. So we'll keep you up to date on that story here. This is in right Midtown Manhattan, right near Grand Central Station. So big news within New York City. This is Bloomberg Morning.
Headlines and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Yeah, it's a rotation out of tech this morning. All the major averages, they've turned negative right now. Information technology is the worst performing of the 11 major industry groups in the S&P 500. And in the lead right now, the green, consumer staples. There's your rotation into some of the more economically sensitive stocks. And semis taking it on the chin. The SOX index down right now over 6%, down 6.2%. Amazon looking to raise at least $25 billion from a bond sale, U.S. dollar bond sale. This is the latest funding push as the company tries to ramp up investment in artificial intelligence infrastructure. Amazon shares right now, they're in the green, up just about 0.25%. S&P 500 down 38 points, 74.97 in the index. The Dow 13 points lower. And the NASDAQ Composite Index is down 347 points. That's a decline of just about 1.3%. And crude oil is rising with that news of the latest attack near the Strait of Hormuz. Brent is at 73.75 a barrel, so that's up 2.4%. And I want to mention again this story is really important for New York City. We are talking about a building that is more than 30 stories tall. This is a high rise in Midtown Manhattan near Grand Central, so it definitely is affecting people's commutes. It was once housing the offices for Pfizer, and it's being converted into residence. So this morning, people were walking by. Bricks were falling from the upper floors of this building that's under renovation. So now the fire department tells us it's at risk of collapse. I just try to imagine that, a 33-story building at risk of collapse.
John, you've been doing New York City
Manhattan.
news for a million years. Have you ever had a story like that?
No, and it's just like, I'm not sure if, I mean, I've seen building collapses before, smaller buildings, and of course, you know, 9/11. Yeah. But that's, bricks typically are what's called the curtain wall construction. There's a core of a building that's steel, and then the curtain of veneer of brick or glass or whatever it is. I'm not sure if that's what they're talking about, if the entire build, you can't build a 33-story building out of brick. So when they say in danger of collapse, I'm waiting for more detail on that. But this is what, the 200 block of East 42nd Street. And
that's about as Midtown as you can get.
That's about as officials inspecting the building. Here are a little few more details that 2 support columns inside the building were buckling and several upper floors were sagging. So that's the actual underlying structural integrity of the building, not just the curtain wall. So we'll keep you up to date as we get details.
Very good, John Tucker. Thank you so much. Stacey Vanek Smith sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Let's get a look at these markets. Again, selling off here. The question is, that was a good first half of the year, folks. What do we do for the second half of the year? Let's go to a professional there who does this stuff for a living. Sarah Ponzik, Senior Vice President, UBS Private Wealth Group, shooting up the hierarchy at UBS down there in Boca, which is a good thing to see. Sarah, what's the conversation you're having with your clients these days as you, again, navigate the back half of this year?
So kind of to your summary leading into, this segment, Paul, is, all right, we're coming off not only an amazing first half of the year, but an amazing last 3 years. If you think about the genesis of how we got to where we are today, we're coming off of 3 years in which the S&P 500 averaged an annualized return over 20%, year after year after year. And then you look at 2026, and if you look at the first half of the year on a global basis, it's not just the U.S. performing well. We've seen a broadening to, developed emerging markets as well. But if you look at the MSCI All-Country World Index in the first half of this year, it was up close to 15%, in the second quarter alone, which was the best quarterly performance in 6 years. So naturally, there's this question, can this continue? And, in large part, we still do see reasons to be optimistic, but the way that you approach, say, not only in the next 6 months, but the next 1 year, 2 year, 3 year, 5 years, 10 years, may be a little bit different than, the prior 3 years or so.
Well, you're definitely right that we've just seen an absolutely amazing meteoric streak for the markets, but also that's really been led by tech and AI. Now it seems like investors are getting a little nervous about those segments. What are your causes? You said you were still optimistic. What are your causes for optimism right now?
Yes, you are absolutely right. And look, there's reason to be a little bit wary and a little bit nervous when there are some signs of FOMO, fear of missing out there. I mean, you look at the second quarter, we're seeing a sell-off in the semiconductor space today, but the Philadelphia Semiconductor Index in the second quarter was at 88%. That's the best quarter ever for that index. At the same time, if you look at the ETF space, just as a sign of sentiment, if you look at some point in June, if you look at the daily 2 times levered ETF for SK Hynix, so that's an ETF that focuses on a single stock, it had the largest AUM of any single stock ETF. So that just shows you how much, especially retail demand, there is in this space. So it's natural to think, okay, are things overblown? But when we look at the expectations, for the tech space at large, and then also AI, we do still believe that we are in the early innings. We expect annual artificial intelligence related CapEx to rise to nearly $1 trillion next year. And interestingly enough, if you look at earnings expectations, earnings have just been knocking it out of the park. And if you look at semiconductor valuations, right now semiconductors at large are trading around a forward PE multiple of around 26 times. You compare that to the dot-com bubble, and we were looking at PE multiples of 150. So we're not anywhere close to that. But with that said, we have to see these earnings expectations materialize. Earnings have been great looking back. And yes, companies have also been ratcheting higher their earnings expectations over the next 12 months based off business that they're seeing come through. But we do need to make sure that those earnings estimates materialize. It's pertinent.
All right, Sarah, thank you so much. Appreciate that. As always, Sarah Ponczek, Senior Vice President, UBS Private Wealth Management. She's down there in Boca Raton, Florida. So we always love checking in with Sarah and get that call there. Looking at a lot of tech news today. I'm going to start with just Samsung. I'm looking at the S&P, the NASDAQ. We're off, 1.5% here. The SOX index trading off today. Samsung reported some numbers. I don't know, to my untrained eye, they look good. I don't know, but apparently the market's not digging it. So let me go to the guy who does this stuff for a living, Ed Ludlow, BTech co-anchor. Talk to us about Samsung and what the spillover may be for the broader tech market.
Well, there is a lot of spillover, right? Yep. There's a lot of downward pressure on chip stocks in particular, but generally the AI trade in the US. You are right, numbers good. Revenue more than doubled, profit 19-fold. And what's so interesting about it is fundamentally, very deliberate choice of word, nothing in the memory markets changed from when you and I went to bed last night. There is still tight supply. Pricing of DRAM and NAND, the key markets for memory, is going up. And Samsung has no line of sight to when that improves. It's really a stock story where, Samsung was a stock that was up 150% year to date going into it. And I think everyone's just taking a pause and saying, this isn't the right trade right now.
AI and tech stocks are having sell-offs this morning. And like you say, there doesn't seem to be a real reason behind it, just animal spirits. Is that what's going on? Are people just taking stock at this moment and worried we're out over our skis, or is something else going on?
Yeah, if there was a place with Samsung you might have some concern, and with memory generally, you could point to margins and say, how do we feel about this? Historically, memory is a very cyclical market, boom and bust. It's highly commoditized. Right now, what's happening doesn't reflect historical norms. But in those periods where the memory names have had very high margins, they've never been maintained. They ebb and flow. They crash to a floor. And I think everyone might be a little bit worried about that, maybe. But generally speaking, we've had a melt up. We've not quite had a meltdown. And if you just look at the last month of trading on the SOX, it's so normal to have a swing of 5 to 8%.
Yep.
I think, Paul, you know this, right, in the equity space. There is a distinction between volatility and a swing in price, but probably both are true in that market right now.
The folks on Wall Street, my friends on the debt capital markets desk, they have to be going crazy busy. No summer vacation for those people, because every day there's another mega tech deal coming to the investment grade bond market. Today, It's Amazon looking to raise at least $25 billion in a U.S. dollar deal. Talk to us about what's going on. What is Amazon doing? Is this just more AI capex?
The latest is that in quick succession for the second time, it's looking at the US IG market, and Bloomberg's reporting $25 billion across 8 tranches, maturities 3 to 40 years. You know, corporate credit's not my strong suit, but Robert Schiffman of BI would tell you that on a weighted cost of capital basis, it makes total sense for these hyperscalers to use the debt market to finance massive capex. Amazon's a really simple story.
It is.
CapEx is growing at an enormous rate, much faster than revenue is growing. The reason CapEx is growing is also because building data centers is getting more expensive with inflation. There is labor and construction labor inflation. There is memory chip pricing inflation. We just talked about that. And so right now, you know, BI sees a path of CapEx for Amazon going from $200 billion to $300 billion in full year 27. Got to find the money somewhere. But like, you know, bondholders love Amazon. The creme de la creme of credit profile, you know? So that's the story.
Bring it on.
Well, all kinds of companies are going to have to be raising money for AI, for data centers and things like that. Like you say, Amazon is creme de la creme, so there will definitely be a market for this step. But what about for other companies that are wanting to expand into AI? They're going to have trouble?
So there are distinctions, right? So something happened. There are 2 case studies where we can compare and contrast. There was a time where Amazon flipping into negative free cash flow, one would imagine the market would have freaked out several years ago. But now that's okay. You know, negative free cash flow. Amazon Andy Jassy explained that away, that, you know, when you have a period of time where you have CapEx and whatever you build takes time to come online. Like data centers are real things. It takes a couple of years for them to actually like do something and get some revenues. Comparing and contrast with Oracle. You know, Oracle flipped to negative free cash flow for the first time since the 90s, and the market melted down because, you know, you have to look holistically at the strength of the balance sheet. That company's power in the real world market of AI, like Amazon and AWS, its cloud business, are highly important in what's happening in AI compute. So those are the 2 things I'd point to, that not all companies are created equal in that sense.
You know, talking about Amazon, you know what surprised me?
What's that?
The extent to which Jeff Bezos has stepped back. You never hear from this dude, other than you see him paddleboarding, you know, somewhere.
Yeah, he's
like
a lot on his
Boca,
plate
West
right
Palm.
now, Paul.
Yeah.
That's certainly how I think about it, though. You know, he's a busy guy elsewhere.
Yeah, but boy, I just don't, as it relates to Amazon, you know, he really has stepped back and just kind of embracing the chair and letting his management team go, which oftentimes with founders, you just don't see it, that they can turn it off that quickly, so.
Yeah, it depends. Like in the Valley, like founder mode on is still the mantra. You know, like Airbnb has Brian Chesky, founder CEO, Mark Zuckerberg, founder CEO. They lean into that. You know, Jeff's running a space company and an AI company somewhere else, so he's kind of busy.
Exactly.
Still owns not 8% of the company though.
He does. Good for him. Ed Ludlow, thanks so much. Appreciate it. Ed Ludlow, he's a BTech host, joining us live here in the Bloomberg Interactive Studio. Didn't take any Waymo here in New York City. We're not doing that kind of stuff like they do out in the Valley. S&P down 47 points. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is the Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. So the major stock averages have all turned lower right now, and it's technology shares that are leading the declines. The earnings from Samsung Electronics, they were actually pretty good, but failed to satisfy investors with some pretty lofty expectations. Right now, it's a rotation into things like consumer staples and information technology, worst performing in the major industry groups in the S&P 500. The Philadelphia Stock Exchange Semiconductor Index, the SOX, down right now, get this, 7%. Talk about volatility. SpaceX trading today on the NASDAQ, and SpaceX shares, they are down 5.6%. Investors, again, Janet Muir at Bruin Dolphin says investors should expect a good deal of volatility lately.
I just think that markets are just really having very high expectations, so some consolidation is absolutely normal.
Right now, the S&P 500, 52 points lower, 74.84 in the index. The Dow Jones Industrial Average down 129 points. NASDAQ 100 down 697 points. That's a decline of just about 2.4%. And just bear with me because I want to update everybody on this story in Midtown Manhattan. This is a 37-story Midtown Manhattan complex. And fire officials say it is in danger of collapsing. Earlier this morning, people noticed bricks falling from some of the upper floors. This is one of those buildings that's being converted from office. It used to be owned by Pfizer into residential condominiums. So it does impact Grand Central Station, Grand Central Terminal, for instance, in your commutes. I'm going to effort a call to Metro North just to try to get some sort of indication what the afternoon and evening commutes are like. But this is a building at 235 East 42nd Street, and it's not just the brick veneer, the curtain wall, but officials say upon further inspection, some of the actual structural beams are impacted by this. So a big threat.
Do we know anybody in City Hall?
Yeah, well, you know, let's try to find out more. And of course, we'll bring you up to date as soon as we know anything.
All right, that's a perfect segue for what we got coming up next here. Laura Rappaport joins us. She's a founder and CEO of Northbridge, commercial real estate firm here. I've always heard, well, not always, I guess in the last several years, we start thinking about what to do with commercial real estate. A lot of folks say, well, just convert them into apartments. But I've heard from developers, that's not easy to do. What's your experience been with it?
So I'm a recovering developer.
Okay.
I also run a real estate finance platform. We're a Carlyle portfolio company, and so we're financing projects all throughout the country. In particular, converting a building is very complicated. There's, as we're hearing right now on the heels of this news on 42nd Street, there's a lot of things that have to be taken into account when you convert a building. It's not just, oh, rip out the inside and put in new buildings. There's structural integrity that's important, removing the building systems, making sure that an office building can now be converted to residential. You need light, you need air. Different factors are needed for somebody to be living in a space. And so not only is it taking out the parts of the building that are not applicable for a residential building, but it's also making sure that you have the life and safety systems for residential.
And in your notes, just got some cool numbers. The national conversion pipeline hit 90,300 apartment units at the start of 2026, up 28% year over year, with New York leading every other city by a wide margin. That kind of, we've been hearing about that in the city.
Oh, yeah. I mean, I thought about that when I saw the news this morning, and I'm wondering if issues like this are something that you expect to see with some of these conversions, which, like you say, are quite involved, or if this is like a one-off and maybe not related to future issues that might come up.
I hope this is a one-off. Who is developing it and how they're building it is very important, something we take into account seriously when we're underwriting a project. But to put that into context, New York City has 16,000 units that are being converted. That's twice the amount in Washington, D.C., and 4 times in Chicago. And those are the 3 leading markets in the country. And so while it is a great use case for taking an older building that is much more effective as a residential project, there's a lot of factors that need to come into play when you're thinking about how you convert it. And I mean, I'm curious to see what's happening. I hope everyone's okay. I can't comment yet on what's happening, but it is something you need to take into account when you take an old building, and you have to make sure it's stable before you remove beams or add in more columns.
Let's stay in the greater New York City area and think about affordability. Mayor Mamdani, rent freeze. Can you update us on that story? What's going on here in New York?
That's really interesting. So on Thursday, there was a 7-1 vote from the Rent Control Board to freeze rents. And why that's important is there's 3.5 million housing units in Manhattan, in New York City. This impacts 1 million of them. So we're talking about, almost 30%. And more importantly, it's 44% of all rental units. Now, why that's interesting is the last time there was a change was 2022, where there was a 3.25% increase in 1-year leases, 5% in 2 years. So there's been a really nice increase in the top line for owners. Now that's being frozen while we're seeing the bottom line have substantial increases: fuel, labor costs, taxes, insurance. And so what's happening is there's an affordability problem, and this is a very good solution for tenants. However, when we talk about the capital markets, many of these buildings need to be refinanced. They were financed in markets with very little volatility, substantially lower mortgage rates, and now you're reducing value. And so what remains to be seen and how the markets react is going to be something really interesting to follow.
I mean, personally, my rent will now be frozen, so I am selfishly thrilled, but do you think this will discourage building conversions like the ones we're seeing in sort of the creation of new housing for people in the city, where it is very expensive to build and operate?
Yes, and I think that also it will also impact the amount that owners can invest in their building. So if you're now reducing the amount of profit and the amount of revenue while keeping the top line flat and the bottom line increasing, it's going to be, there's only so many dollars that you can invest in a project when you own it. And when you think about what's the cost, what's the revenue that I can drive and generate from converting a building, that absolutely will be increased, because a lot of the units that are impacted by the rent stabilization are those that benefit from some of the tax benefits to convert buildings.
All right, AI. I have been of the opinion, totally without any basis, but that AI is going to take jobs, to destroy jobs, not create jobs, although many of the tech people say it will be a net creator of jobs. How about for office space? Do I need less office space? Am I going to have fewer employees? Or because all these AI companies are coming out of nowhere, I need office space for them?
Yes and yes. So what's interesting that we've seen in particular in New York and San Francisco is that growth of AI tenants. So in Q1 alone, there was 1 million square feet leased for AI tenants.
AI tenants like data centers, or?
Not data centers. We can talk about data centers. AI tenants, people building the AI companies that are creating all the tools. Anthropic, for example. I'm a huge consumer of AI, so is my company. I'm a big believer in that it will allow us to do more effectively. But when we think about what's happened in these markets, 1 million square feet was leased in Q1 alone, compared to nearly 800,000 square feet all of last year. What's also interesting is that 90% of these leases are new leases. So it's not taking older space and growing it. And further, what's happening is that so many of these tenants are actually taking extra space to account for the job growth that they anticipate happening. And so this is really great for New York and San Francisco, which has had very limited supply of new buildings. The problem becomes if this pares back and pulls back, and then we have a concentration issue. So where this goes is also an area that we're going to be focused on, and remains to be seen as what's happening in the market.
I mean, Scarlett and I were out at a real estate conference in San Francisco, and that was the story we heard big time from the mayor on down. Now the problem is, where do we put all these people to live? The housing costs in San Francisco, which had been soft after COVID, now is crazy. Where do you put all the workers? So I don't know. All right, very good. Appreciate it. Laura Rappaport, give us an update on all things commercial real estate. Laura Rappaport, she's a founder and CEO of Northbridge, which is a Carlyle Group company. And she tells me it's a good thing to be part of Carlyle. I don't know. We like the folks at Carlyle. We know them. And they've got some good folks. Mr. Owns the Orioles as well.
Oh, okay.
Yep, so
you can get good seats.
And he's a Duke guy, by the way. He can hang with me then. Looking at the markets here, S&P down 49 points, the Dow off 117, and the NASDAQ off 397 points. That's about 1.5%, so we'll keep an eye on the tech sector there. It had been just ripping. WTI crude oil sitting right at $70 a barrel. It's up a couple of percent here today. We'll keep an eye on that. And the 10-year Treasury, it's higher. We're at 4.5% right now. This is Bloomberg. Good morning.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Stacey Vanek Smith sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Right now, we want to get to the story that's really important here in New York City. Building in Midtown Manhattan has been evacuated on collapse fears. We're going to go to Miles Miller. He covers Bloomberg News for us. He is at the scene. Miles, what can you tell us about this story here?
Yeah, basically, this is a building project we've been covering for quite some time. It's the former Pfizer headquarters on 42nd Street. And around 8 o'clock this morning, construction crews were in the building when they noticed two column beams there basically starting to buckle in. That's when they called fire officials. Fire officials got there with the buildings department, and they say that they had to evacuate that building. This is a major building. It happened on the 21st floor of that building. It is one of the largest residential or office to residential conversions in the city. We've covered it pretty extensively. And so they've shut down a large area of 42nd Street in order to facilitate this major emergency and major technical rescue by the FDNY. We spoke with the folks who own this building. They say that reports of bricks falling from the building are not true, but that'll be investigated by the fire department and the buildings department. But the mayor said that that other buildings in the area, as well as a school in the neighboring area, have been secured. But it's going to take quite some time to sort of figure out what exactly happened there. But from seeing some of the videos and pictures inside the building, I mean, a big column beam was buckled in on the 21st floor. And that, of course, prompted the buildings department and the fire department to try to get people out to make sure people are safe.
And Miles, we just had a guest on, Laura Rappaport. She's the founder and CEO of Northbridge, which is a commercial real estate firm here in New York City. And she said to us off air how important this actual conversion, this project is to the whole kind of conversion community out there and the market for these office to residential conversions. So this is as you mentioned, a very high profile project here. What do we know about this? This is a big project.
Yeah, these two buildings that are being converted from office to residential will yield roughly 1,600 rental units. About 400 of them are going to be designated as affordable housing, which makes it one of the largest office to residential conversions. But this project is not an easy one because of the year that the building was built in the 1960s. There are structural issues with retrofitting this building, and contractors had been working on pouring new floors every few days to try to meet the opening for this year. But as we could see, that 21st floor buckled, parts of it, and the column buckled in. You know, it may be difficult to get to that point, but they've been working nonstop on this building. The Pfizer vacated the building in 2023. They moved to Hudson Yards, and you know, it is one of the more prominent office to residential. You know, we saw the one downtown at New York Plaza and what that looked like. But these office to residential conversions are very difficult in so many ways because you've got different HVAC systems. You've got to try to figure out how to get the plumbing in for the bathrooms and all of that kind of stuff. I've seen some of them here in Brooklyn where, you know, basically your kitchen is in a hallway. And so then maybe the nature of that could cause some of these issues, but they've been working around the clock on trying to get this build delivered.
Miles, it's John here. This is what, 3 east-west blocks from Grand Central, so at the corner of 2nd and 42nd. Anything from the MTA on this? You know, I don't know if the tracks go underneath here or what.
So it's a little bit far from the Grand Central tracks, although you know, there are parts that go out east for Grand Central Madison. You know, the lucky thing in terms of transit in the area is that there are no games at MetLife tonight because 42nd Street for the last couple of weeks has been shut down river to river to facilitate those buses going in and out of the tunnel as it relates to the World Cup. But to shut down a significant part of Midtown because of this major incident is quite, you know, a challenging situation. There are already planned service changes on the 7 line, but writ large is sort of no effect to transit right now.
Have we seen issues like this before with these kind of building conversions? You said that it's quite involved often, structural changes are required. Is this something that we've seen before, maybe to a lesser degree, or is this a pretty exceptional case?
No, this seems like a one-off kind of thing that happened. You know, having worked at the fire department in the past, you know, we've had some issues with buildings and structural stability and that kind of thing. But writ large, New York does not have issues as it relates to you know, office conversions or even buildings being put up. You know, we have sometimes run into issues where we had a garage collapse happen because of a structural beam. But these workers discovering these buckled columns and sagging floors and falling bricks is going to cause the buildings department to sort of reassess what's been going on, you know, with this building and its development. I think one thing that's going to be interesting to look at here also is going to be, you know, what was the nature of any sort of records of the building, you know, as it's being sort of developed, put together. If the buildings department had been at that site before, but they've been working nonstop on this.
All right, Miles, thank you so much for this reporting. Appreciate it. Miles Miller, Bloomberg senior reporter. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Assess the world's only giant global audio business network, coast to coast, 24 hours a day. Bloomberg Radio, on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment. We appreciate getting Miles's reporting on that. FDNY will hold a press conference later. When they do, today, when they do, we will bring that to you as well for this developing story here in the greater New York City area. S&P down 45 points. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
All right, Stacey Vanek Smith sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube and on Bloomberg.com as well. Coming up, we're going to check in again with Anne-Marie Hordern, Bloomberg surveillance co-anchor. She is in Turkey for this NATO summit. We'll get the latest reporting there. Mike McGlone, senior commodity strategist for Bloomberg Intelligence. He's going to join us here. We'll talk oil, and we can talk anything on the commodity complex with this guy. Pork bellies to Bitcoin. He can cover it all. Ryan Vastelica, a Bloomberg equities reporter, on the story, the Mag 7 loses market swaggers. AI trade spreads beyond behemoths. There you go. Gautam Mukunda is going to join us. He's a lecturer at the Yale School of Management. He's the Bloomberg opinion column contributor on Sam Altman offers a Trojan horse to America. That's his column for today. We'll see what he's talking about there. Kick this whole thing off this hour with John Tucker and the Bloomberg Business Flash. John.
And we're lower, more worries about the durability of the artificial intelligence trade. Technology shares heading lower. You had earnings from Samsung Electronics. They failed to satisfy investors. And just to be clear, the earnings were pretty good. Micron Technology, SanDisk, other semiconductor shares, they are falling right now. NVIDIA also falling. This report from Reuters that China's DeepSeek is developing its own chip to help power artificial intelligence systems. The NASDAQ 100, 640 points lower, down 2.1%. S&P 500 down 48 points. That's a decline of 0.7%. And right now the Dow 183 points lower. That is down 0.4%. Julian Emanuel at Evercore ISI says, you know what, investors should really be focused on the long term.
Basically, it's not so much about the moment-to-moment reaction, particularly to earnings. It's the fact that the trend continues to go towards the upper right.
Right now, energy is the best performing of the major industry groups in the S&P 500. That comes after oil is higher following attacks on shipping in and around the Strait of Hormuz. The other major industry groups that are performing better, utilities, healthcare, consumer staples, and real estate. So that speaks of a rotation out of technology. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Stacey Paul.
All right, John Tucker, thank you so much. We appreciate that. Stacey Vanek Smith sitting in for Scarlett Fu today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. John Tucker was just reporting. Got some red on the screen here, some selling. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Judy LaGrue. Judy, what are you looking at today?
Good morning, Paul. First, I'm looking at Rivian Automotive, ticker RIVN. The stock is plunging as much as 14% on the day, and it is on track for the largest intraday drop since November 2024. And this is coming after the electric vehicle maker said it would sell 75 million shares to meet the terms of a $4.5 billion loan from the U.S. Department of Education, U.S. Department of Energy, different E there. The Goldman Sachs is leading the share sale, which is expected to raise about $1.5 billion. Again, a $4.5 billion loan from Department of Energy, and expected to raise about $1.5 billion from the share sale.
What else is moving markets today? What else has your eye?
Of course, looking at Fiserv, financial technology firm Fiserv, ticker RISV. The stock is climbing and trading today as much as 7%, and it is on track for the largest intraday gain since February. And this is coming after a Wall Street Journal report that said that Wall Street banks, including Wells Fargo, JP Morgan Chase, and Bank of America, have held early discussions about a possible deal to acquire a debit network owned by Fiserv. And so a little bit of context here, owning a debit network would help lenders obtain an exemption from the Durbin Amendment, which basically caps fees that large banks can collect on debit card transactions. So analysts are kind of coming out of the woodwork and sort of making comments on this. And one thing that caught my eye was Mizuho analysts saying that, quote, while the idea looks good on paper, we are less optimistic about its implementation in real life. We're referring to this go around as possibly, quote, problematic. So with banks reporting earnings next week, very, very interesting space to watch with this.
All right, lastly, Western Digital.
Western Digital, so big in today's trading. Western Digital, ticker WDC. The stock is falling as much as 11%, and it is on track for the worst month since September 2022. Wow. And as we've talked about here earlier, shares in chip makers and other AI-related firms are down after Samsung reported their earnings, which were not to the liking of investors. So despite a quarterly profit surge, 19-fold quarterly profit surge, and the stock being up triple digits this year, really this Western Digital is taking the hint of a lot of this sort of dissatisfaction. But other storage and memory stocks are falling alongside Western Digital. Micron, ticker MU, SanDisk, ticker SNDK, and Seagate Technology, ticker STX.
All right, great stuff, Judy. Thank you so much. We appreciate it. Bloomberg's Judy LaRue giving us the stock movers there. For more conversations like this, subscribe to our Stock Movers Report. Listen for the 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. You're still following this local story here in New York City. Construction crews were pulled from a 37-story Midtown Manhattan building Tuesday morning after bricks began falling from the 21st floor. Emergency officials said promoting street closures in one of the city's busiest corridors. We're awaiting a press conference from the FDNY. When that occurs, we will bring that to you and bring you the latest reporting on that story. Let's jump over to Ankara, Turkey, where NATO leaders are meeting as we speak. Anne-Marie Hordern is there in Turkey. She's a co-anchor of Bloomberg Surveillance Television. Anne-Marie, what are the expectations for this NATO meeting? Because when President Trump is involved, sometimes there can be some sparks there. What are the expectations this year?
Well, writ large for the meeting, they're working on this idea of NATO 3.0, and I just spoke to the Finnish President Alexander Stubb about this. The fact that this is really a follow-on meeting from last year when they agreed to increase defense spending to 5%, 3.5% would go towards hardware, ammunition, and the remainder 1.5% to things like ports, bridges, roads that can support that defense industrial base. This is what this meeting is about, making those deals, making those investments. As Mark Rutte described it, it's the reindustrialization of the defense transatlantic partnership. Now, this is all taking space within the same time period that the United States is on a 6-month review of their defense posture within NATO and really within the European Union, whether or not they are going to draw down troops or potentially move troops around where they're based in Europe. So that will end by the end of the year, potentially even sooner. So at the same time, you see Europe try to rush to get deals done. There was a $50 billion announcement on the sidelines with deals being done in terms of investment. So that's the backdrop to the summit. And then, of course, there's massive headlines when we have two conflicts going on as the alliance meet. One, of course, Russia's invasion of Ukraine. That conflict continues. You have President Volodymyr Zelensky here pushing for more air defense systems. The Finnish president said to me that he would love to see, and potentially a step forward would be if Ukraine can get the licenses to produce Patriot defense missiles in country. This is something that's been talked about for months, but they haven't actually been able to pull the trigger. And then, of course, Iran will be another another hot topic here, especially given the fact that you had a Qatar vessel this morning with LNG that was struck. LNG incredibly important for the European economy, especially given the fact that they had to really loosen up their reliance on Russia with Russia's invasion of Ukraine. Qatar has been a reliant partner when it comes to gas. You saw gasoline futures in Europe spike this morning on this news. And at the same time, the United States feel like Europe was not there for them when asked to help in the reopening of the Strait of Hormuz. Now, a big question, is it just their inability, the fact that Europe doesn't have all the hardware that would be needed in such a conflict, or also is it just the lack of political will? So that is the latest source of frustration between the United States and Europe, and that will likely be on display throughout the 2 days of the summit.
Anne-Marie, you alluded to this, but President Trump has been quite critical of NATO, not just in regards to the Strait of Hormuz, but long before. What do you see as the role of the U.S. in NATO 3.0?
Well, the role of the U.S. right now, at least from a strategic point of view, is really to push NATO, although sometimes the rhetoric they don't enjoy. And Europeans have said to me in the past, sometimes between the Biden administration and the Trump administration, the destination was sometimes the same, but the bedside manner was very different. To push Europe to do what Europe needs to do, which was to continue to hit their targets so they can reindustrialize and defend themselves. Of course, this is going to take years. This will not happen overnight, which is what the United States would want to see. At the same time, it's really this carrot and stick approach, because they are reviewing their procurement in Europe, and they are looking at potentially their posture in Europe, and that could mean troop withdrawals. So it would have to mean that Europe would have to accelerate their reindustrialization of their defense sector at a very critical time. There's also, of course, another story that's floating, and the president spoke about this when he sat down with Turkish President Erdogan, and that's the F-35s. Turkey has wanted F-35s for years. Legally, they are not allowed to have them because they are in the Russian S-400 system. They would have to really disarm those S-400s, put them in a third country in order for the U.S. to move ahead. But the president made clear today that is his intent. And right now, Turkey, which is becoming a very strategic partner, not just when it comes to where it is geographically, and not just the fact that it's the second biggest military in the alliance outside the United States, but the hardware that Turkey is able to produce and selling to European allies at this time has been really critical, even though, of course, it has been a controversial topic, or one that the U.S. has to walk with on a tightrope, because given the relationship Turkey has with Israel and some other countries.
Anne-Marie, we have about 30 seconds left here. Don't want to leave without discussing Ukraine. Any expectations there from this meeting as it relates to Ukraine?
Well, we'll have to wait and see. Zelensky continues to push for those Patriot defense missiles. He said the next battle is going to be a battle in the air when he spoke to the Financial Times on the eve of the summit. And the Finnish president, Alexander Stubb, said really a welcome step would be if they were able to get this license to produce those defense missiles in-house. The president spoke to both Putin and Zelensky before the summit, and he'll be meeting with President Zelensky tomorrow. So tomorrow will be the day they'll have any sort of update.
Anne-Marie, thank you so much for your reporting. We really do appreciate it. Anne-Marie Hordern, she's the co-anchor of Bloomberg Surveillance Television. She joins us remotely from Ankara, Turkey. She is traveling with the president for this two-day NATO summit. As Anne-Marie was reporting, there has been some activity, some attacks on some shipping on a limited scale here over the last couple of days in the Strait of Hormuz. We've seen a little bit of a move higher in crude oil to reflect that. WTI crude oil is up 2.5% today, trading at just about its high of the day, $70.25. Mike McGlone's he tracks all this stuff for Bloomberg Intelligence. He's our commodity strategist here. Mike, it just seems like, again, I've told you a million times, the last job I'd ever want on Global Wall Street is an oil trader. That stuff whips around too much. But is that kind of just the market we're in here? It's just news-driven cycle for oil here?
Yes, Paul. I think the key theme right now for most traders are just looking for a chance to reset shorts in the bear market. Most people are looking around 80. That was last year's highs, good levels. We're at 70 now. It's basically the apex of the bell curve of trading for 20 years. And just a question of what might stop it from a normal rotation back towards the lower in the range for the last 20 years. You know my views. I still think it's going to do that. The key theme for that to potential happen is obviously a little more detente in the Middle East. But a little pressure in the stock market will do that. So right now the market's looking up at maybe its 200-day moving average around 74, 75. It's at 70 now. It's a bear market that's reset. And I just know I don't know what's gonna make it go higher, something shocking, but normalization making it go lower. And that's basically what Mr. Trump needs for the midterm elections.
Why is it continuing to go lower? Because the Strait of Hormuz is still blocked off and the conflict has gone on, I think, a lot longer than anybody thought it would, or than most people thought it would. So why has oil not crept back up?
This whole rally accentuated the most powerful force in commodities that's only growing, that's price elasticity, particularly in crude oil. Now, we got that from Russia's invasion of Ukraine that really kicked in technology replacing crude oil and actually pressuring both sides for prices of supply and demand. And now it's kicking in now. I'm just updating an outlook for crude oil for Q3, and we see the surplus of U.S. and Canadian crude oil and liquid fuels approaching 9 million barrels a day. Just a few years ago, that was basically flat. That's for next year. So there's only one force that's going to stop that, and that's lower prices. So what this did is just shifted the people reiterating the price maker status is shifted from OPEC to the Western Hemisphere. And it's not just crude oil. We've had a pretty good peak this year in corns and potentially in soybeans and gold, silver, platinum, and palladium and iron ore. You see that trend there? The pump then dump trend is starting to trickle down. That's why I'm really worried about the stock market going down, because it's feeling to me very much like 2008.
You know, when I think about the farmer, you know, I think you've taught us kind of what to focus on: corn, soybeans, all that kind of stuff. Soybeans are up 15% year to date. That's good for the farmer, right?
It's great. It's just what they needed. It's hopium that the Chinese will come and buy more soybeans. They probably will, but it's not economic for them. So maybe state-run enterprises will do it for political reasons, because U.S. soybeans right now are a little bit more expensive there in Brazil. Remember, Brazil just had a big harvest, and we have more we planted this year, and the rain has been ample. So I'm really worried what soybeans have been doing for the last few years as they go down back below 10 or so. Right now, they're around 12 as we head towards the peak of the harvest in September and potentially October. And same with corn. That December contract pumped up to near 5 just a couple months ago, and they got to a new contract low. It's bumping up again. And if the cycle's normal, we don't get a bad weather summer, which we're already getting plenty of rain, cycles are probably going to go lower. And particularly, it's all the same trade now with crude oil going lower, Paul.
And 30 seconds left for our steak lovers out there. I see cattle kind of flat for the year, up just a couple of percent. Have we seen peak cattle prices?
We might have. I think it's the typical high price cure kicking in. Now, we've had problems with inventories for a while and certain diseases and things, but it is peak driving season, peak consumption season, and peak barbecue season.
Yeah, I watched Dutton Ranch. There's another job I'm never going to do, is be a rancher.
Cattle rancher?
Yeah, those guys work hard. No, thank you.
You work pretty hard too, Paul.
I don't know. I'm not going to do the oil field stuff.
He ain't rustling doggies. Let's let's be clear here.
These guys work hard. Mike McGlone, he covers the strategy stuff for us down in Miami Beach. We appreciate getting a few minutes of his time. We'll do pork bellies next time with Mike. S&P down 50, the Dow down 250, and the Nasdaq down 375. It's 1.4% here. Also following this local story here about a building in Manhattan. Midtown Manhattan has been evacuated on collapse fears. We've got Miles Miller from Bloomberg News covering this story for us, chasing it down, and there may be an FDNY press conference coming up soon. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash, brought to you by Golden Crest Metals. Inflation, tariffs, volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Well, you guys are talking to Mike McGlone, so let me start with oil nudging higher following attacks shipping in and around the Strait of Hormuz. As a result, you have energy now, the best performing major industry group in the S&P 500. Brent crude up close to 3%, 73.98 a barrel right now. You also have other major industry groups that are higher, all reflecting the rotation out of technology. Healthcare, utility stocks getting a boost today, and the technology shares extending declines after earnings from Samsung failed to really satisfy investors, the lofty expectations there. So you have right now the Philadelphia Semiconductor Index, the SOX, down 6.7%. And then the Bloomberg Mag 7 Index, that is down right now 0.2%. And Rivian Automotive, another standout, tumbling. The electric vehicle maker saying it's going to sell 75 million shares to fund equity contributions related to a Department of Energy loan. So you're diluting shares there, and Rivian right now 13% lower. Overall, the S&P 500 down 51 points, the Dow down 211 points, and the NASDAQ 100 down 649 points. That is a decline right now of 2.2%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Stacey and Paul.
All right, John, thank you so much. We appreciate that. Stacey Vanek-Smith sitting in for Scarlett Fu. Scarlett will be back mañana. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. John Tucker was just talking about the Mag 7, and I was looking at some Bloomberg News reporting on this. The Mag 7 tech giants are no longer dominating the stock market, with their index gaining just 1.7% in 2026. Let's break it down with our next guest, Ryan Lastelica, equities reporter for Bloomberg News. Talk to us, Ryan, about this rotation we're seeing in the stock market. What are you seeing?
Yeah, it's been pretty remarkable. After years of really being the driver for stocks, the Mag 7 have really started to become something of an afterthought. Momentum has shifted away from them and into other parts of the market, even though the momentum is still within tech. But we've seen a lot more interest in the semiconductor side of things, especially the memory and storage area, which have become the real bottleneck for this stage of the AI infrastructure build-out. So we've seen huge gains in stocks like Micron, SanDisk, Western Digital, Seagate, and we've seen basically flat performance overall in the names that have otherwise been sort of the market leaders for, like I said, for years.
This doesn't seem like such a huge shift. It seems like more of a semantics issue, like shifting money around within the AI space still. Do you see it as a significant shift?
Well, I think what it really shows is that people are really trying to go where the AI trade is going. So right now we have all of these sort of traditional Mag 7 companies. And I'm talking particularly about the hyperscalers, which is Amazon, Alphabet, Microsoft, Meta, companies that are really spending aggressively to build out their AI infrastructure. People have sort of moved away from those. Now, there's been sort of a mixed bag even within that group. Alphabet's doing pretty well because people remain pretty positive about its AI position. Microsoft has really struggled this year because people aren't sure about its AI position or what it's really getting out of the tens of billions of dollars that it's spending on this infrastructure. So right now there is a lot of questioning and concern about what is all this money really going to? What kind of return are they going to see from it? And at least for the time being, people feel a lot more comfortable being in the companies that are the beneficiaries of all that spending, which, like I said, is the infrastructure, complex, memory, other parts of chips.
So, Ryan, I'm old enough to remember the day when a stock would go up when a company would take its CapEx numbers up here, maybe like 3 or 4 quarters ago. That game seems to be out of fashion. Is that what you're saying?
Yeah, I think there's been a real change in sentiment in terms of how investors are viewing these kinds of aggressive CapEx plans. Now, I think people, you talk to a lot of investors, they say, you know, I still feel pretty positive. I think they know what they're doing, but at least for the time being, we're really seeing an impact on free cash flow, on their cash piles. Some companies are raising equity or tapping debt markets. There's been a lot of, you know, complicating factors that have just gone beyond, spend the money, spend $1 on AI infrastructure, you get $1 back in revenue growth or something like that. It's not nearly that simple anymore. I think people are taking a much more jaundiced look on this type of strategy, even though I think they remain pretty positive that over a longer term period, it will eventually start paying out.
Ryan, excellent reporting. Thanks so much for joining us. Ryan Vlastelica, equities reporter for Bloomberg News, coming to us from Chicago. This is Bloomberg.
Now on Bloomberg Intelligence, private markets in focus.
All right, this private markets segment is presented by Franklin Templeton. Franklin Templeton harnesses the combined private markets expertise of Benefit Street Partners, Clarion Partners, and Lexington Partners. Learn more at ftprivatemarkets.com. Our next guest joins us here, Matthew Vagari, head of research at Clearwater Analytics, joining us live here in our Bloomberg Interactive Broker studio. Matthew, where's the narrative on private credit these days? I mean, I've just been so amazed over the last 10, 15 years to see this market grow and get as deep as it has. But there's been, I guess, on the margins, some concerns about some of the credit quality. Where do we stand on the discussion?
It's great to be with you again. I think that, to my mind, the narrative is a little bit overblown. And I think part of that is because you have every quarter we find out about these redemptions, particularly in the private wealth space or in the retail space, where investors are kind of engaging in a bit of a bank run and trying to pull their money out of these underlying BDCs that are lending, to their mind, in a little bit of an opaque fashion. But the truth of the matter is that that comprises a really small share of retail and private wealth portfolios, and also a really small share of the private credit kind of industry at large, where the insurance industry is really the dominant player, and they're not really the panic sellers of the moment. And so when I talk to people, yeah, there might be idiosyncratic pockets of risk, but private credit is a much larger and much more diverse asset class than the overarching narrative that has taken root.
Well, we do have Bloomberg reporting this morning that HSBC Holdings is going to stop lending to some private credit funds. Also that overall big banks are raising interest rates for private credit and marking down specific loans that are posted as collateral. So it seems like maybe these worries aren't going away.
I think it makes a lot of sense. And I think the way to think about it is not in terms of just private credit, but just a credit market generally. We're many, many years into this cycle, as you know, when spreads get this low and people are searching for yields, just the available loans that you can make get riskier and riskier, right? And so this natural pullback to me makes a ton of sense. It's not necessarily an indictment of private credit as an asset class specifically, but just where we are in the credit cycle. I mean, private markets often move with public markets. So one thing that I say is if you think that spreads are really low and that there's a lot of risk and froth in private markets, then I would turn your head to public markets, which are far bigger and are also have ultra low spreads, and there's still a ton of issuance out there.
Is capital still being raised in the private credit space?
It's definitely still being raised. I think there's been a little bit of a slowdown. And I also will say that when we talk about private credit, are we talking about a private credit fund where, let's say, an insurer is an LP, or are we talking about a direct loan that an insurer would make, for example, to a private equity firm or to a business that just wants to borrow in a very specific fashion? I would argue that the kind of direct loans where you have a kind of exact understanding of where you're loaning to functions much like just a loan. And so you're not really going to see much of a slowdown there. I think the capital raising in the kind of LP space, particularly as you just mentioned, with respect to perhaps riskier loans that might be being made, there might be a little bit of a pullback there just as institutional investors kind of wrap their heads around, wait a minute, how far into the cycle are we? What kind of risks are being taken? Let's reevaluate and see, are the risks that are being taken actually matching our portfolio needs?
What do you see as the future for private credit, at least through the rest of this year? I mean, we're in kind of an interesting moment economically, and it looks like interest rates will not necessarily be coming down anytime soon. Is that good for private credit, bad?
It's interesting because spreads just keep getting lower. I think if you've noticed, like over the past few years, maybe the spreads were 600 basis points, then 500, 400, 300. And as it gets narrower, the risk premium and the illiquidity premium that as an investor that you might have gotten a few years ago is not as robust in today's day. So you have to ask yourself, or investors have to ask themselves, is this slightly increased opacity, perhaps a lack of a credit rating on this fund or on this loan, is it worth it to me relative to what I can get in public markets? And I would argue that the more spreads go down and the less risk gets priced into the system as this credit cycle continues to mature, you're not going to see as much appetite simply because the premium's not there, unless spreads really do widen materially and institutional investors get more bang for their buck.
Is the credit quality in the public markets materially different from that in the private markets?
It really depends on the corner of private markets. You know, a lot of the investments that we see at Clearwater are rated, you know, let's say BBB minus. Clearwater sees over 10 trillion in assets flowing through its system every day, and quite a sizable share of that is insurers. And because insurers, you know, they have, it's a very regulated industry, and there are a lot of capital charges and requirements. So for them to take on additional risk, it often comes with a penalty on a part of their portfolio. So they really monitor, what is the type of quality that I'm getting invested into, and is it worth it to me from a capital charges perspective?
There's been a lot of news, of course, about Blue Owl. That's been one of the big headlines we've been seeing. It sounds like recently investors have been asking the funds to return about $4.7 billion, but that is actually an improvement. Can you talk a little bit about that, investors wanting their money out and the trends you see in that area?
Sure. I mean, it really does feel like a bank run, which is to say that, and you keep hearing it from these different managers that say, these loans are performing, these loans are performing. As far as we can see on our system, yeah, the numbers that we see match the kind of broader industry aggregates. I think that though you don't want to be the one holding the bag at the end of the day. And so if you are an investor who can panic sell something or who can get out, as opposed to, let's say, an institutional investor for whom these lockups and the illiquidity are more of a feature than a bug, if you're one of these retail investors or private wealth, I see this continuing, if only because there will be some cockroach that appears, for example, and there will be more panic selling and trying to get out of these funds. But for the vast majority of the industry, for whom these risks, as I said, like are a feature, not a bug, I don't see that happening and rippling through the larger financial system.
All right, Matthew, thank you so much for joining us. I'm Matthew Vagari. He is head of research at Clearwater Analytics, joining us live here in our Bloomberg Interactive Broker studio. Locally here in the New York City metro area, we're following this story. Construction crews were pulled from a 37-story Midtown Manhattan building Tuesday morning after bricks began falling from the 21st floor. Emergency officials said, prompting street closures in one of the city's busiest neighborhoods here. We're waiting for a press conference with more information from the FDNY. When that comes, we will bring that to you, but certainly here a significant story, not just in New York City, but it's a significant story for, I think, the commercial real estate market as the industry, you know, moves forward with some of these conversions from office to residential, because it's a tough job, is what we've been told.
Yes, and it's also one of an important one going forward for housing and for real estate.
Absolutely. So it's a big story. It's a big story in New York, but we'll bring that to more information as it comes available.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash on a day of declines for the major averages, and it's a tech-led decline. Memory stocks, Micron Technology, SanDisk, Western Digital, they're all falling after it was a preliminary earnings report from Samsung Electronics. It was a pretty good report, but investors wanted more, so they wound up being disappointed. Also, you have SpaceX. Wanted to cover that. That stock's sliding after being added to the NASDAQ today. Shares of SpaceX, they're down close to 6%. Best performing stock in the S&P 500, that goes to GoDaddy, up 6%. And then Teradyne Incorporated and SanDisk and Intel, the worst performing stocks in the S&P 500 right now. Stuart Kaiser at Citigroup Global Markets sees tech investors shifting back and forth.
The AI trade has just become a lot more fluid than it previously was. And I think you have investors sort of hopscotching back and forth between these themes, from power gen to DRAM, back to analog chips, back to Mag 7. And I think, kind of running ahead into earnings here, people probably want some exposure to Mag 7 stocks. I think that happened, prior to the last quarter as well.
And speaking of Mag 7, the Mag 7 index down 0.2% right now. The Philadelphia Stock Exchange Semiconductor Index, what we know as the SOX, that today is down 6.5%. Overall, S&P 500 down 52 points. That's a decline of 0.7%. The NASDAQ 100 down 652 points. That's a decline of 2.2%. And then the Dow Jones Industrial Average down right now 0.4%. So that's a decline of 226 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Stacey and Paul.
All right, John Tucker, thank you so much. We appreciate it. Stacey Vanek-Smith sitting in for Scarlet Food today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well here. All right, here's a pretty good deal, I think. Sam Altman, the OpenAI guy, he's offered the U.S. a 5% stake in OpenAI, which he said would allow Americans to share in the benefits of artificial intelligence. Seems like a good deal to me. Let's see what our next guest thinks. Gautam Mukunda. He's a lecturer at the Yale School of Management, and he's a Bloomberg opinion contributor, joining us via Zoom from Sweden. Okay, why not? It's a nice place, I hear. Gautam, what do you mean here? How do you view this potential offer from Mr. Altman as it relates to AI, OpenAI?
I think it's a bit of a Trojan horse, Paul. If he gives 5% of the equity of OpenAI to the government, he's going to get the government committed to the success of OpenAI. And since the government has a lot of ability to determine that success, that's probably worth more than 5% to him, but I'm not sure it's worth more than 5% to the American public.
Is this an attempt to make the company kind of too big to fail? And what is the case he's making to the government for why this would be a good idea?
Right. I think it's exactly that, right? And it wouldn't be too big to fail economically. That argument just doesn't make any sense. OpenAI, however big it is not systemically economically important. What it would become is too big to fail politically, right? That because there's this huge chunk of equity that people would be able to track, it would go back, if you think back to like in 2012, the Department of Energy had a loan program during the Obama administration that gave out loans to lots of companies, one of which was Solyndra, a solar cell company that failed. It was a sort of a catastrophe. They lost all the money. And Mitt Romney made a lot of hay out of that. And you know, if the Obama administration had the ability, you think they might have gone back and been like, maybe we should have propped that company up. That would be OpenAI times like 1,000,000, right? Because the scale of the OpenAI investment is so large, and it would put so much pressure on the government to kind of lean on the levers and keep this company propped up, if for no other reason than to stop people from saying, hey, you cost us, $80 billion or $100 billion or whatever it ends up being.
So we have seen this administration take investments in other companies. Give us some context around that. I don't recall our government doing that too much before, maybe the auto industry, and I don't know. How do we think about that in general?
Yes, this administration alternates between launching vociferous attacks on socialism and communism and taking ownership of private companies. So I guess today we're on a taking ownership of private companies day, and tomorrow we'll be back to attacking communism. And yeah, this is a new thing, and there are very good reasons we don't do it, right? And there are good reasons on both sides of the equation. We've talked on the government side how this is going to lead to bad policy and to bad political outcomes, and is just right. It is corrosive on free markets and free enterprise to have government put a heavy hand in like that. But it's also really bad for the companies, right? So they may think of themselves as buying insurance against failure by getting the government on their side. But these are companies that have a global market. And if you are, the government of France or Germany or, Denmark, which has just seen the just a few minutes ago, right? Donald Trump issued more threats to Greenland. Then the idea of having your economy or your government run on a company's software when that company is functionally part owned by the United States government, a few years ago that wouldn't have been a problem, but now it's a huge problem, and it means that these companies are going to limit their global market in a really profound way.
I mean, the hazards seem quite clear here. Is there potentially a case to be made for government investment in AI just because the economy's become so dependent on it? It's such an expensive thing to try to build out. Is there possibly a case to be made for an investment like this?
I think there's an extremely strong case to be made for the government profiting from gains in AI and for taking those gains and using them to sort of provide public goods for the whole United States and that benefit the economy and the society as a whole. That case is overwhelming. But the mechanism for executing that is taxes. And if the United States government wants to benefit from AI, it should tax profitable AI companies. That's the way we should do it, and should tax the individuals who make billions of dollars off AI. That's the right way to do it. This equity thing is not.
Where is OpenAI in its IPO process? I think, the feeling on the street is maybe it might slip into next year. Maybe Anthropic might get out first. Is that your understanding?
That's what I'm hearing, and I'll just say that the more you look at the finances of OpenAI, Ed Zitron of the Financial Times just were able to get some of them. These look really bad. Like, I mean, I know that with SpaceX, we've sort of decided that traditional metrics for an IPO don't apply anymore, but it's really kind of hard to make a case for how these companies are going to pay back, pay the gigantic capital investments they're making. And I think a lot of people are starting to go, you can have an extraordinary revolutionary technology, one that changes the world, that changes the way we do work. And the companies that are doing it don't make money, because we saw that with the airlines and with biotech for 2 generations. These were incredibly important technologies, and they just weren't profitable for the companies that were doing it.
Do you see OpenAI as in a good position right now? It seems like it was way out in front at first and had all of the public's imagination and a lot of money, and now it seems like it's losing its shine a little bit.
Yeah, I mean, as I'm one of the people who sort of switched from using ChatGPT to Claude just because Claude, the experience was so much better, and I think a lot of people are sort of saying that, where in terms of usage, OpenAI is still ahead, but in terms of I would say the more sophisticated an AI user is, the less likely it seems to be that they are OpenAI dependent. But beyond that, I think that the questions about their leader are also just, they're questions about, is this sustainable? The level of the commitments that they've made for data centers and sort of the spending commitments they've made, paired with the fact that the construction of these data centers is not, from what I can tell, going nearly as quickly as it would have to be to make sort of these demands for compute, these contracts full out. I think a lot of people are starting to look at this and going, wait a sec, how does this story end? Does it really end with you spending $1.5 trillion on data centers when no one in the United States sort of wants you to build them in your neighborhood, when there's so many construction bottlenecks, and when the demand for them is starting to get a little iffy? That it's not clear to me.
All right, Gautam, thank you so much. Appreciate it. As always, Gautam Okunda, he's a lecturer at the Yale School of Management. That's a pretty good school, as I understand it. And he's also a Bloomberg Opinion contributor. He is in Sweden for some reason, which is a nice time of year to be there, I guess, if you're going to go to Sweden. S&P 500 down 40 points. The NASDAQ down 320 points. Coming up, we're going to check in with Randall Williams, Bloomberg Business and Sports Report, to get the latest on the World Cup. The U.S. is out. What's the rest of the tournament look like here? Somebody snagged me a ticket to the final. I understand that's going to be kind of expensive in the swamps of Jersey with all the traffic. Good luck with that. S&P down 42, Dow down 200, NASDAQ down 330 points. That's 1.25% here. WTI crude oil, $70.50, up $2. This is good.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Stacey Vanek-Smith in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. Well, the U.S. is out of the World Cup, but the World Cup moves on, as does Randall Williams, the U.S. sports business reporter for Bloomberg News. Randall, a little bit of hindsight here. That was kind of an ugly little incident around the U.S.-Belgium game, not to mention a poorly played match by the U.S. squad. But hindsight, what happened there?
On the field, I would call it universal justice. I mean, if you watch, just based on everything that went on going before the match, but on the field, the energy wasn't there from the beginning. I mean, they just played a little lackadaisical, I think, at the beginning, and then Belgium scored. And, of course, when we scored on the free kick, it was like, okay, we're in it. Then Belgium scores like almost 30 seconds later. And it was just the energy was off. I think that Belgium played tremendous and played with a sense of urgency. In all likelihood, they were motivated by Flo Balogun being reinstated, and I think that was President Trump's doing. And so it felt like Belgium played with a chip on their shoulder, and they came out and dominated.
Yeah, people are really, really upset about this, especially about coming back from a red card. Can you talk about that a little bit?
Sure. So there is no precedent for, you know, a player who has received a red card returning in a knockout stage. Before this, Cristiano Ronaldo had received a red card. He was scheduled to, not play in 2 qualifying matches. FIFA went away with that. We know that Ronaldo's going to retire. His international career is going to be over. And so with that being said, like Ronaldo he's probably never going to serve those 2 games suspended. With Flo Balogun had the potential to impact the game on a tremendous scale yesterday. He obviously did not. And so I think FIFA, while this was the first big controversy of the tournament, it's rectified itself through Belgium's win.
Yep. What should we be focusing on going forward?
Well, Messi plays in I don't know, 5 minutes, and I think that look, if you're talking about the conversation of the World Cup, it's about who's remaining, what superpowers are left. Spain, England, France, Argentina, and the other 4 teams as well. There's a lot of stories out there to follow, but I think ultimately we want to see the biggest star shine, and I think an Argentina and France rematch would be great, but also Spain versus France, and we have Norway versus England coming up. So there's a lot of really, really good and enticing matchups for people who are looking forward to these matches.
I feel like there was so much worry around the World Cup being in the U.S. and ICE agents and all of it. Then it seemed like everything was going so well. Everyone's quite excited. It's been really inspiring and fun to watch. Is the shine off of it a little bit because the U.S. is out and there are some controversies, or do you think this is still going to be the glorious World Cup it seemed to be shaping up to be?
I think it'll still be as shiny as it was to begin with, because you still have the brightest stars in some of the biggest teams. Now, if Argentina had lost to Cape Verde, then we would be having a different conversation, because of course everybody loves a Cinderella story. However, if the Cinderella story is knocking out, one of the biggest teams who was arguably one of the most popular people on earth out of the tournament, I don't know if the broadcasters would be all too happy about that. I think that, as you mentioned, there were a lot of conversations about ICE, about the federal government's involvement in this tournament. And so far, outside of Flo Balogun, they stayed quiet. But again, it's been rectified, and I think Belgium really put an end to it. I think that the conversation would be twice as loud today as it was yesterday if the U.S. had won, but we got smashed.
So what's to say about the status of the U.S. men's national team here? They got to the round of 16.
Sure.
What do we do here? Is that good enough? How does the U.S. take the next step?
I think that you have to look at the MLS, you have to look at the grassroots level and figure out, how do we go to the next step? And the reality is that travel soccer costs a lot of money. And so many parents spend their time sending their kids to other sports. And that isn't to say that basketball and baseball and, Pop Warner football don't cost money as well, but soccer is expensive. And I think that for the MLS, they have to bring the money back here. The Premier League and La Liga and so many other leagues pay so much more that players are like, once these European clubs feel like I'm good, I need to go get a bag overseas. And so if the MLS is able to restructure things in a way that can keep players here in the States, then I think that will have a larger impact on youth players who are like, okay, I might want to play for NYCFC or, Inter Miami or another club. So
it's an economics thing, you think?
I think so. And don't get me wrong, like the MLS is 30 years old. It's not the NFL or the MLB or the NBA that are 70 plus years old that have an infrastructure that have battled, these times where their teams aren't profitable. The MLS is still up and coming, but same thing with the WNBA in that they go through these growth periods where things are uncomfortable and the owners and the players have to get behind and truly be partners in order to take things to the next level.
Okay, Randall, you have one of the coolest jobs in the building. You get to,
Everybody keeps telling me that.
Well, it's true. You were at the Knicks games. You got to go to the Super Bowl. How do these games compare, just like as a fan going to them? Are they as exciting, more exciting, a little less exciting?
The Norway and Brazil game that I attended was one of the most unique experiences that I've experienced at a football game or at a football venue, a stadium, because of the fact that tribalism doesn't really exist elsewhere. Sometimes you see it on a college football and college basketball basis, but the Norwegians and just the language that they speak, the Viking row, it's a lot of fun. And the Brazil fans were also mocking them. That was fun. So I think that this is very unique. It's a tribalism that America hasn't experienced in a very long time. And I hope that this makes way for the World Cup to be back here someday.
Finals going to be in the swamps of Jersey, as it should be. Randall Williams, thanks so much. Appreciate it. U.S. sports business reporter joining us here, giving us the latest on the World Cup. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned. with the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Stacey, thank you so much for joining us here today.
Thanks,
Filling in for Scarlett. I believe Scarlett's people are telling me she will be back tomorrow, so we'll see about that. Stacey Bannock-Smith, thank you so much for joining us here. A little bit of red on the screen here. Charlie Pellet will take you in just a moment. This is Bloomberg. Good morning. Thank you, sir.
All right.
From ABC News, I'm Wayne Cabot. President Trump comes to the NATO summit with a gift to the host nation. The U.S. will lift sanctions on Turkey, which were issued after Turkey bought a missile defense system from Russia.
We don't want to sanction friends. It's very simple. There's plenty of people we can sanction, and we are sanctioned. We don't want to sanction friends.
Trump says his relationship with Turkish President Erdogan is better than with NATO allies, who he hoped would support his war with Iran. Iran today firing on ships in the Strait of Hormuz, significant damage to 3 tankers. The news sending oil prices back above $70 a barrel. About Russia's war on Ukraine, Trump says it doesn't affect the U.S.
I had a very good talk with President Putin, who, by the way, has a lot of respect for President Erdogan, a lot of respect for him. We had a long talk yesterday, it lasted a long time, and I also spoke with President Zelensky right after that. I think they both want to make a deal.
Graham Plattner has canceled appearances this week and is facing more calls to drop out of the main Senate race after a woman accused him of rape. ABC's Jay O'Brien reports from Washington.
This Senate race is critical to Democrats' hopes of taking back power in that chamber, but their nominee, Graham Plattner, is losing the support of major allies after that new allegation of sexual assault. Maine's Democratic Party is also calling on Plattner to drop out. The timing here is critical. If Plattner does decide to withdraw by July 13th, the state Democratic Party can legally replace his name on the ballot any later, and they can't.
Plattner denies the allegation. His supporters say that they are devastated and waiting for his next statement. The man facing trial for the assassination of Charlie Kirk is back in court in Provo, Utah, a second day of pretrial hearings. If convicted, Tyler Robinson could face death by injection or firing squad. You're listening to ABC News. Chainsaws and shop vacs are humming after severe storms raked through the Northeast. ABC's Matt Rivers reports.
Water rescues unfolding in the Northeast, torrential rains swamping drivers, and with millions under flood threat, a big box store's roof caving in at a BJ's Wholesale Club in Monmouth County, New Jersey. Police say 2 people were briefly trapped, but no one was hurt. Up to 8 inches of rain in spots, drivers inundated near Philadelphia. And in the Pittsburgh suburbs, a 12-foot sinkhole opening up on a road right in front of a hospital.
The only good thing about the storms is they broke the hottest stretch of weather in the area in more than 14 years. Tilly Norwood, the artificial intelligence actor, is going to make her film debut in a comedy meant to show the state of AI movie magic. ABC's Hannah Bazzah reports.
Norwood was first announced by the production company Particle 6 last year. The actors union, SAG-AFTRA, said they do not consider her to be an actress. Now the studio that made her is producing a film starring Tilly, titled Misaligned, a coming-of-age story about Tilly trying to become more human. Particle 6 says the film is being designed as a hybrid production with human directors, writers, and editors working alongside AI specialists.
A release date for the film has not yet been released. A massive nurses' strike looming in Boston. 4,000 nurses at Brigham and Women's Hospital set to walk off the job tomorrow. Wayne Cabot, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The deals are flying on day one of the summit. Welcome to the Tuesday edition as President Trump breaks bread with NATO allies after the alliance agreed to $50 billion in new defense deals. We'll have details when we talk to Bloomberg's Anne-Marie Hordern, who is traveling with the president in Turkey. It is a massive breakthrough in artificial intelligence as Anthropic uncovers what it calls the J space, raising questions about AI developing conscious thought. An idea that we will discuss with an expert. Miriam Vogel of Equal AI joins us later this hour. And as the political world waits for the next move by Democratic Senate candidate Graham Plattner up in Maine, now accused of sexual assault, we'll air this out with our political panel, all after a look at Wall Street. Let's start right there, right now, with Charlie Pellet. He's at World Headquarters in New York. Charlie, how we doing?
Right now, we are lower across the board, Joe Matthew. However, we continue to monitor developments at a Midtown Manhattan building that is under renovation, the old Pfizer building on 42nd Street in Midtown. Now, this building was evacuated early this morning. Bricks were reported falling from the 21st floor. Emergency officials are about to hold a news conference updating the situation. Yes, we will have it for you live as it happens here on Bloomberg. Stocks lower right now. We're looking at a sell-off in chip makers. That is dragging down much of the market on concerns over whether massive AI investments will justify lofty valuations. Right now, the S&P is down 32, drop there of 0.4%. Dow Industrials down 187 on the Dow, a decline now of 0.3%. NASDAQ is down 251 for the NASDAQ Composite Index. That is a drop of just about 1%. NASDAQ 100 index, though, hard hit. It is down 1.6%. The Russell 2000 down by 0.6%. All of this leading up to the big news in terms of semiconductors. We've got the stocks plunging today by 5%, have been down as much as 6%. The VIX holding just below 16 with the 10-year at 4.51%, the 2-year 4.13%, and spot gold now trading down $21, 41.43 the ounce, down 0.5%. And again, West Texas Intermediate crude back above 70, 70.49 a barrel, up now by just about 2.8%. I mentioned semiconductors facing fresh scrutiny today. The stocks down by 5% among individual names. Shares of Broadcom, they're down 1.1%. NVIDIA right now down 0.1%. Micron is tumbling 6.5%. Intel particularly hard hit. Right now, Intel is lower by 10%. So again, recapping here, S&P 500 index down 0.5%. We do have the stocks lower by 5.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We'll have more on the markets with Charlie Pellet coming up in just about 15 minutes' time as we keep our eyes on that building that could be ready to collapse in New York. I mention this because we will have a briefing, we understand, with officials in the city at any time now. In fact, they're running a bit late. Fire officials say they got the call just before 8 in the morning. This is a relatively new story. Falling bricks, East 42nd Street, 235 East 42nd Street, where the former headquarters of Pfizer is being converted into a residential complex. This is, what, a 30-story building here, so not a joke. And the safety manager reported a steel beam, this is in the New York Times, was compromised on the 21st floor. It's unclear what they're going to do. When we hear from fire officials, maybe the building commissioner will be speaking. You'll hear about it, of course, right here on Balance of Power. Live on Bloomberg Radio, on YouTube as well. Search Bloomberg Business News Live if you want to catch our video stream. It is the coolest thing we have going. You've heard me mention it. You can pause it, you can back it up, and you can actually see where Anne-Marie Hordern is going to be here in just a moment when she joins us live from Turkey. Interesting market here. It's not looking great so far, but we'll continue tracking the unwind, at least of the chip trade, if not the AI trade, because we're actually seeing some Mag 7s move higher here. It just depends on where you're looking in the market, and it's look out below if you've got shares of Micron down 7%. I'd be curious to hear, even after that strong earnings report from Samsung, what the SK Hynix listing means for us on Friday. And I just want to correct what I mentioned yesterday. This is an ADR listing. This is not the pure listing that it would have been otherwise. But SK obviously could be very attractive for a lot of American investors who might be harvesting gains in a stock like Micron, or maybe even NVIDIA, which is also slightly lower today and back below $200. But we're focused on NATO today and following every movement of the President of the United States, who got a lovely welcome this morning in Ankara, greeted on the tarmac by his friend, Mr. Erdogan. And the deals have been flying ever since they sat down for their bilateral meeting. And the president talked about this. Defense deals we're talking about specifically, with at least $50 billion in arrangements here. Mark Rutte has talked about some of them, detailing some of the $12 billion in deals, for instance, for next-generation drones, surveillance planes, and military aircraft. The big question remains around the granddaddy of them all, the F-35 contract, and whether Turkey will have its involvement restored, knowing that the president, well, he keeps saying what a great relationship he has with Erdogan, and he was asked about the F-35s earlier. Let's listen.
Mr. President, are you going to sell F-35s to Turkey, and what about the legal restrictions?
It's a decision we're going to make. We have a very good relationship. I would think that many people, I can tell you, many people, including the people sitting right here, thinks, why wouldn't we do that? We have a better relationship with Turkey, and Turkey's been in many ways much more loyal than other countries that we think would be loyal. So something certainly we would consider. It's a great plane. It's the best, thirdly the best plane by far. And it's certainly something we will consider.
Okay, we could send the president all the way around the world to meet with foreign leaders, but we can't get a good microphone. The reporters were like 100 feet away from them, so let me tell you, if you're listening on the radio today, I would think that he said many people, I can tell you, including the people sitting right here, thinks, why wouldn't we do that? If you have a better relationship with Turkey, and Turkey has been in many ways more loyal than other countries, you know who he's talking about, so we got some things that we would consider. A lot of folks think he's on the precipice of greenlighting that deal. Let's get into it right now with Anne-Marie Hordern. What a great treat to have Bloomberg's chief political correspondent along for the ride, and she's with us right now from Ankara. Anne-Marie, tell us about the deals that we know about, and what is the potential for a breakthrough on F-35s?
Well, when it comes to the F-35, Joe, this has been a long time discussion between Ankara and Washington. Of course, they are banned from the F-35 system because they bought into years ago the Russian S-400 system, and legally, Congress will not allow the sale of F-35s. There are sanctions on it because of this, because they are using the Russian defense system. They're trying to find a workaround where those systems would become obsolete for Turkey or potentially put them in a third-party country. This is on the heels of reporting from the New York Times that was overnight that the president then discussed this. And in that meeting, when the Turkish translator explained to Erdogan what exactly the president of the United States was saying, because this is something he has pushed for years, he gave a thumbs up, excited by this notion. But of course, it's still not clear exactly how they're going to make sure that the F-35 system can get into Turkey with the S-400 being completely abolished, to make sure that it's not, of course, spying on that system, because this would not fly well with anyone in Congress, especially defense hawks. So that's one matter. And as you say, that would really be a massive deal on the sidelines of this summit. The other deals we're hearing about, $50 billion worth so far, really are two-pronged. On one hand, they show that the European Union, the NATO alliance, is still heavily reliant on the U.S. industrial base and U.S. hardware, especially when it comes to things like the Triton surveillance system. On the other hand, you actually see a deal where they're moving away from Boeing and choosing Saab as for contracts. So you see Europe trying to make sure they are reindustrializing and at the same time bring along their defense contractors with them. I spoke to the Finnish president, Alexander Stubb, earlier. He said Europe is trying to salvage its relationship with the president of the United States. Potentially these deals can help. Obviously, since the start of the year, it's been a lot of issues and anxiety in the transatlantic relationship when it comes to Greenland, which completely dominated the World Economic Forum in Davos, Switzerland, when it comes to obviously what is going on in Ukraine. Volodymyr Zelensky, the president of Ukraine, continues to push for the Patriot air defense missile system. And then, of course, the latest source of frustration for this White House and between Washington and Brussels is the conflict in Iran.
Anne-Marie, it's important, that Saab contract you mentioned, worth $5 billion, according to a NATO diplomat, replacing a U.S.-made system that had Boeing's name on it. I'm just curious if you could expand on that a little bit when we see this divergence now with Europeans not only paying for their own defense, but doing it through European-made hardware. Is this something that could be expanded in the years ahead, and what does it mean for defense primes here in the U.S.?
I think it's going to have to be expanded, right? When you look at even some of the hardware right now that Europe is heavily reliant on, it's coming out of Turkey, not even just the United States. So this is something the U.S. has been pushing Europe for. And if they are going to reach that 5% GDP target for defense spending, which they decided on at the prior NATO meeting last year in the Netherlands, then they're going to have to rely on not just U.S. defense contractors, but also their own. Remember that 5% target calls for 3.5% being spent on hardware, ammunition, things that are really structurally important when it comes surveillance material, when it comes to the industrial base, and the other 1.5 on ports, bridges, roads, all the infrastructure that supports that. So they're going to have to look outside of the United States for that as well. And that is why you're seeing this complete reindustrialization of Europe. But Joe, this is going to take years.
That sure sounds like it. Anne-Marie, you're putting perfect context around this moment, and that's why this summit is awfully important. This is why we're throwing resources at it here at Bloomberg, and it's underscored by the Secretary General, Anne-Marie. We spoke with Mark Rutte when he came to Washington to meet with President Trump, joined us from the North Lawn of the White House to shower the president with compliments for raising the bar at NATO. Listen to how he addressed this.
What I think is important is to be fair, and fairness dictates that this president is really doing a huge amount of work to get NATO in better shape. He had a big success last year in The Hague with the 5% spending commitment.
Anne-Marie, I'm not sure it's possible for the Secretary General to bend over backwards or maybe twist himself into more of a pretzel to shower compliments on Donald Trump. Does anyone else in the alliance share that view?
Well, you also remember, Joe, in that Oval Office meeting, Mark Rutte brought in postcards, props really, to show how much the alliance is starting to spend more. Yeah, really throwing a lot of praise on the president for almost forcing the alliance to spend more. We should also note, this is something past presidents have wanted to see too. Definitely Trump wanted to see this in this first term, but it was also something that the Biden administration wanted to see as well. At the moment, you have seen leaders talk, I wouldn't say so fondly about the President of the United States, but definitely here to reach agreements with him. I think one of the most important meetings tomorrow to try to understand the tone and tenor, one of the biggest discussions on the ground here is, of course, going to be his sit-down with President Zelensky.
That'll be a huge moment, and Anne-Marie will be there for it. It's good to see you, my friend, with us live from Ankara. Anne-Marie Hordern, Bloomberg's chief political correspondent, as we wait to see the president emerge from his dinner with allies. I'm Joe Matthew in Washington. Much more ahead as we wait for a briefing on the possible building collapse in New York. And we'll turn our attention to the latest from Anthropic next on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We're looking at a down Tuesday. The Dow, the S&P, NASDAQ, all in the red. We've got chip makers leading us lower right now. The SOX, the Philadelphia Stock Exchange Semiconductor Index. Yes, off-session lows have been down roughly 6%. Right now, the SOX is down by 4.5%. S&P also off-session lows, currently down 26 to 75.10 on the S&P. That represents a drop right now of just about 0.4%. Dow Industrials down 187 on the Dow, a decline of 0.4%, while NASDAQ is slumping 207 points, down 0.8%. The NASDAQ 100 index down 1.4%. And again, the SOX bears repeating, down now by 4.4%. All of this with a VIX just below 16, a 10-year at 4.51%, and a 2-year currently yielding 4.14%. Gold at $41.44 the ounce. Spot gold down 0.5%. An advance for crude. West Texas Intermediate now up 2.7%, $70.43 a barrel. Brent, the global benchmark, $74.12, higher by 3% now. Bitcoin up 0.2%, 63,945 on Bitcoin. As we just heard from our Anne-Marie Hordern in Ankara, NATO allies have agreed to spend at least $50 billion in defense industry deals to show President Trump that Europe is heeding his spending demands. Among U.S. defense names right now, looking at Lockheed Martin, they're all down, by the way. Lockheed Martin tumbling 0.2%. Northrop Grumman down by 0.2%. Boeing shares just turning around right now. We do have Boeing up by just about 0.3%. SpaceX now in the NASDAQ 100 index today. SpaceX down by 4.7%. We continue to monitor developments in Midtown Manhattan with a 37-story Midtown office building on East 42nd Street being evacuated amid concerns about a collapse. New York City officials will be holding an update, a briefing shortly. We'll have that for you live right here on Bloomberg. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That's Joe Matthew. This is a Bloomberg Business Flash.
All right, Charlie, thank you, my friend. He'll be back in just about 20 minutes with more on the Tuesday trade, latest from downtown Manhattan as well. When they start briefing, of course, we'll bring you there to learn more. I'm actually hoping that they wait a minute because I've been really looking forward to this conversation and the story, what I think of as the story of the day. It stopped me in my tracks this morning as I'm doing the read-in. Usually it's the doom scroll. It was a little bit this morning, but then I started thinking about what a breakthrough this might be. Do we end up looking back on the 7th of July as maybe something bigger than DeepSeek? Is that as good as it gets? Because this seems more like what we've been talking about. Anthropic identifying an internal workspace inside Claude that it did not design, that Claude uses to manipulate ideas without putting them into words. Consider your own subconscious. But in this case, subconsciousness is in a computer. The J-space, it is called. Named for Anthropic's new Jacobian lens. As I read from the company's website, a small internal workspace shaping Claude's reasoning. But it never appears in output. Now, they put up a great video this morning. You can actually see it on YouTube if you're watching us with a great voiceover. And of course, nobody would frame this better than Anthropic itself. Think of the mind like an ocean. Up on the surface are our thoughts, dinner plans, and stray worries, our inner monologue, the images that pop into our heads. But most of our brain's activity happens down in the unconscious depths without us realizing it. It's filtering out background sounds, controlling our breathing, the stuff you do all day, helping us recognize people and objects. And AI models have their own kinds of brains. Question is, could a model have anything like the divide humans have between accessible thoughts above the surface and unconscious thoughts below? We may have just gotten an answer, and I think it's yes, right? AI models, as Anthropic says, are built differently than human brains and they're trained differently. So it is remarkable to see the structure like the J-space emerge from inside of them, something reminiscent of how human minds work, but which we did not program into the model. Anthropic is finding things inside Claude that it did not design. And in this case, maybe the most fascinating thing to emerge yet. There was one phone call we made when we read this story, and it was to Miriam Vogel, one of the smartest minds we have been able to share with you on AI, who did not come here with a warning or her own doom scroll. It was, in fact, a message of optimism and what AI could bring to our lives and to our world that might make it better. She wrote the book, Governing the Machine, How to Navigate the Risks of AI and Unlock Its True Potential. Miriam Vogel, the president and CEO of Equal AI, is with us live now on Bloomberg. And Miriam, I'm delighted that you could come along. I'm just going to go for the fastball on this, the most obvious question then. Do we now understand that AI models could be conscious?
Thanks so much for having me and for asking this important question, Joe. I think we need to look at what they said in the paper themselves, and that is that they've used this very provocative term conscious, but they are being very limited in what they mean about consciousness. So it's a very interesting philosophical question, even religious question when we're talking about consciousness. But here in this paper, they are limiting it to a functional description of this, as they describe the J space, this separate context that's informing the outputs. So what they are really giving us is this window into understanding how the models work. And for me, that's the most exciting part. So while there's this really interesting side, very provocative conversation, they have also explicitly directed us to the critical point here, and that is we can now start to better govern these machines because we can better understand their processes.
To that end, when switching off the J space, Claude had more trouble reasoning, which is fascinating here. Maybe there's a new potential to put a governor on these models. I guess to your point, the J space actually caught Claude in making up fake data. Is the J space what will save us, Miriam?
What will save us is understanding that there is such a thing as the J space, that what we are understanding is that Anthropic has showed us Claude has developed its own process for giving us these very robust, thoughtful answers that we are coming to rely on in really pivotal systems across society. So what we have to understand is that there are these depths of process and reasoning that are leading to these outputs. And what that tells us is we cannot continue to only test outputs. We have to understand that there is this whole J space, and we're probably going to learn more as time goes on. This is a first step in what I believe will be a really important expedition. I mean, they have so nicely phrased this as the top layer of the ocean where so many of our brains operate. And so I think, again, it can get complicated thinking of the depths of the ocean and consciousness. But I think the important point they're trying to tell us is we've been operating at a surface level, and there's a great depth that we need to be more transparent on as we start to understand it more so that we can govern it.
Fascinating. In a couple of instances, Anthropic walked us through some of the testing that it did with the J space. It asked it to do a math problem, which Claude accomplished very quickly, showing step-by-step reasoning only in the J space. It gave just a final answer on the top layer of the ocean, but when we looked underneath, we actually saw the work. We saw Claude showing its math in the J space. Then things got to be a little bit more abstract. Anthropic told Claude to think about the Golden Gate Bridge while also copying an unrelated sentence. And Claude copied the sentence, but behind the scenes, the bridge in California, those two words popped up in the J space. And it even showed that it was thinking about its own thinking. Claude has some control over filling the J space with ideas. And this is what gets people wondering if, in fact, it could spawn its own consciousness. How long will it be before we know, Miriam?
Well, I think we need to applaud the fact that this research has been coming out. You know, Anthropic has been continuing to keep us posted on these developments. And while it's really interesting and informative to be focusing on these words like consciousness and to be thinking about what this means and how it connects vis-a-vis our own thinking, what really is the point here is that we can better understand the processes. You know, understanding that we cannot, again, as I said, simply be looking at outputs. This will be really important as we get to the next phase of AI, which many organizations are already in with agentic AI. And as you know, Joe, we'll be increasingly removing humans from the process. So in this transparent report, we can see that there was a whole nother subset of reasoning that the simple outputs would not have been indicative of. We need to continue to support this kind of research. We need to applaud the fact that this is what's happening in this organization, that they are sharing what they are learning very broadly. It's the transparency here that is key and that will build the trust. As you know, Joe, there's not a lot of trust for AI in society right now. It is not a topic that is engendering a lot of goodwill or trust. We know that there's an overwhelming concern that is more fearful of AI. The general public has more fear, positive sentiment about AI. And what we should look at this report as doing is an important step forward in building that trust by being transparent. So while it's using evocative words that are really interesting and a great point of question for philosophers and scientists about consciousness, what it's actually doing is helping us get into the layers of the ocean and better understand what are these systems informing us. And as we increasingly take humans out of the process through agentic AI, this will be critical so that we can understand what are the underlying root causes that are informing these outputs.
Well, see, this is why we called you, Miriam. It's very easy to fall into the Skynet trap with this story, and I'm fascinated by the way you're choosing your answers. So last time we spoke was before the White House started testing and grading things like Mythos, Fable, and other AI models, that it's basically become the control center. As we know, the most recent model of Mythos is still under wraps because they saw this potential for a jailbreak. Could the J space help officials, whether in the administration or anywhere else, grade the safety and efficacy of an AI model before it goes public?
Again, I think this is an important step forward, and it's great that this is being shared with the general public in addition to the government. The more all of us understand what AI is, what its capabilities are, and its limitations. That's a key part, not just what it's capable of.
Does every AI model have a J space, or is this an Anthropic thing?
Well, it's a great question, and that's something we should encourage more companies to be transparent about. They should also be doing this testing. I hope and trust they are, and they should be sharing it publicly. That is the key thing that we should be embracing here. The more they are learning and sharing with the public, the better we can understand what it is, the better we can govern it, the more trust we can be bringing through this transparency.
Great. Miriam, thank you so much for joining us to share your insights. She does this for a living, and I'm delighted that you're back in our conversation. Miriam Vogel, President, CEO, Equal AI, the book, again, Governing the Machine, How to Navigate the Risks of AI and Unlock Its True Potential, which we are apparently in the process of doing every day here with the likes of Anthropic, OpenAI, Gemini, and Grok 2. I'm Joe Matthew in Washington. We've got our eyes on New York, where we're more than an hour late here for a news conference from authorities following the revelations of a possible building collapse near Grand Central Station. No buildings have fallen, but there have been reports of bricks and other debris falling and buildings evacuated. This is the old Pfizer headquarters that's being rehabbed into a high-profile housing project. When they speak, we'll bring you there for the very latest from Midtown. I'm Joe Matthew. This is Bloomberg. Breaking news on Bloomberg Radio. I'm Joe Matthew. This is the Tuesday edition of Balance of Power. I want to bring you directly to Midtown Manhattan, where officials are briefing reporters right now on a building that appears set to potentially collapse near Grand Central Station. The New York Police Department announcing a frozen zone from 40th to 45th Streets between 1st and 3rd Avenues. Right now, they do have, obviously, a problem with the security of this building. They are going to put some drones inside the building to decide whether they can shore this up or take more severe actions. Mayor Mamdani just spoke. We're hearing as well from the Commissioner of New York City Fire and New York City Police. Let's listen live on Bloomberg.
Already shared by the mayor and my colleagues, we have seen both buckling and floor conditions that are impaired on the 21st floor. We both have construction safety inspectors and construction safety engineers on site evaluating from the street and vantage points set up across the street and to the west, so we can monitor movement of the building and the floors to understand what's happening on a continuous basis. Once we can determine that it's safe to enter the building, we will then, in concert with the contractors, ownership, and with consultation with FDNY, be able to deploy a plan to shore up that floor and then continue to investigate further for any other weak points that need further help and shoring. After that point, we will be able to investigate further if there's anything else that we need to do scoping out from that area. The work of FDNY, I want to thank OEM FDNY for the work they're doing to create the perimeter and the safety zone. We encourage everyone to please heed our ask not to come to the area. And right now, the safety of the public is our top priority. Once we have more, we'll make sure to share that information with the public.
Okay, we have time for just a few questions, and please speak up. We're going to start with Andrew Sipp from NBC.
Yes.
Please speak up.
Chief Esposito talked about seeing that the building has continued to move. Can you clarify for us, does that mean that those top floors were really at risk of actual collapse? What do you mean by at risk of seeing them continue to move? And is it a risk of actually collapsing to the street?
So we have specialized tools that we can watch the building from and see movement even in centimeters or fractions of an inch. And since we arrived on the scene and put that in place, we have seen continual movement. It does mean that it is not yet stable. It is still a very serious and dangerous situation.
And just, Mayor, to follow up on that, having heard the assessment from the chief, what worries you most about this situation?
I think this is a minute-by-minute assessment, and I'm thankful for the work of all of our city workers in doing exactly that from the morning through this moment and then through the rest of the day. And as you heard from our DOB commissioner, the #1 focus here is the safety of New Yorkers. We're thankful that at this time there are no injuries. Every worker is accounted for, and now we are continuing to assess. As soon as this building is stable, it then opens up the possibilities for us to shore up the building. But until that point, we are still having to measure that. I know our DOB commissioner wanted to add a few details.
As an example of how information changes over time, the initial report that came in was about bricks falling off the building. When arriving, we did not see evidence of that, so we're not seeing things come off. The compromise point, as you mentioned, is something that we're monitoring and looking at. The chief, especially FDNY's drone unit, has been integral to watching and seeing how that movement happens. And so right now you have both DOB staff, you have the contractors with beams that are tracking that. And what we are focused on and what we feel like the next step is making sure we can get into that 21st floor to add additional emergency trusses to spread that load and be able to move on with the investigation.
Thank you. We're going to go to Gloria Pasquito from CNN.
Mayor and the commissioners, can you speak about the addition of floors as part of this project and whether that addition had anything to do with the buckling of the beams that was reported? And can we get some clarity on how many floors there actually are? Because I think there's some confusion because of that addition.
So I will just add a few words before passing it over to my deputy mayor for housing to share on that. When it comes to what this building is, as you said, this is a commercial office building that is being renovated into a residential building. and as part of the renovations is what we have seen here today. I'll pass it over. Yeah, I'll DOB Commissioner.
So if I understood the question, this is a building that was going through a office residential conversion. It went through plan review and has gone through an exhaustive review with DOB over the last 2 years. What is happening now is an investigation of what is the cause of why the undermining happened. And so once we have that information, we'll be able to share it. But as the mayor said, it's a conversion of an office building into a residential property, and with that comes certain code changes and structural requirements, all of which have gone through a plan review. And now we're examining what happened now, and we'll check it against the reviews, the plan for it. Oh, sorry, that was the question. So the existing, it's 37 floors with an addition of 11 floors above 22-floor element. So 22 floors on one piece, 37 on the taller part of the building, and they were adding 11 floors above the 22 floors.
And how many floors exist now?
So right now there are 37 floors, and they have topped out on the extension as well. So the extension has been built out, and they have topped out on that part as well.
All right, thank you. We're going to take two more. We're going to go to Aaron from ABC News. Go ahead.
Yes. It appears just by looking at it, the building is leaning. Is the building leaning? And is the concern an internal collapse or an external collapse on its strength?
The concern is that since we have been on site in the early morning, we have seen continued shift of the structure, and I'm going to pass it over to our chief of department to add a little more detail there.
The way this building is constructed, it's a steel frame building, so it would not be a total collapse. It would be more of a localized collapse, but that remains our concern, that it's moving. Possibly.
All right, thank you, Aaron. Now, one more question. We're going to go to Jill from New York One. Please speak up.
Hi, Mayor. Thank you. Tell us a little bit about how do you shore up this building right now? How do you get this into place that makes it safe, even for people to be on the street, let alone inside the buildings next door or the building next door?
So I'll first just start with the importance of safety at this time. We have evacuated not only the building, but also 7 buildings around it. I really do appreciate the way in which New Yorkers have responded to this situation. We've seen that they have followed the instructions that have been provided by first responders on the ground, and that has been immensely helpful to ensuring that those first responders can be focused on the work at hand. I'm now going to pass it over to our DOB Commissioner to add 2 additional details.
So because the structural issue has to do with load-bearing columns, what we bring in are emergency struts that will take on the load of that and be applied throughout the floor to take on that load. Plus, we may apply additional struts, given that there could be weakening or cracks somewhere else. So it's really emergency beams, emergency columns that are brought in, and then they go and replace the load. Plus, we may add additional for extra security and safety.
Thank you, everybody.
Yes, as we discussed before, there is extensive work happening right now between the engineers, DOB staff, FDNY, to evaluate the situation on the level using the information that we're reading from the outside. Once we have a secure plan, we'll be able to bring the equipment that we have now on site after asking the contractor to bring that forward so that we're ready to go once we have a plan.
All right, there you have it, live from Midtown Manhattan. Mayor Mamdani and other officials, including the FDNY commissioner, the chief of police, the city's building commissioner, talking about the evacuation and minute by minute, as he referred to it, assessment of what's happening here in this site near Grand Central Terminal. This is a building that was the old Pfizer headquarters being renovated into a residential space, and apparently some things have gone wrong here. Referring to a frozen zone, as the mayor called it, from 40th to 45th Streets. If you happen to be in that part of town, you don't want to try to get in there. 40th to 45th between 1st and 3rd Avenues. That is where we are. If the floor is deemed to be secure there, they'll be able to shore up the building. This is basically the choice that they are facing. But as materials are arriving at the site and they're trying to make that determination, police and fire engineers are using FDNY drones to get to, that's how they know so much about what's happening inside that building without actually physically being in there. It's pretty remarkable, an extremely serious situation that we're keeping tabs on for you here and will throughout the day with so many of our listeners and viewers in New York City. This is, again, between 40th and 45th Streets, between 1st and 3rd Avenues. We've got a lot of politics to talk about. That's what we do here on Balance of Power. I want to take a quick check on the markets. Charlie Pellet is standing by in New York with a unwind here, Charlie. How's it going?
All about semiconductors, Joe Matthew. The Dow, the S&P, NASDAQ, all in the red. Going to begin, though, with the SOX. That is the Philadelphia Stock Exchange Semiconductor Index, down now by just about 4.5%. That means NASDAQ down 0.6%. The NASDAQ 100 Index down now by 1.3%. S&P tumbling 20, drop there of 0.3, with the Dow Industrials down 0.3%. We do have the 10-year currently yielding 4.52%. With the 2-year, 4.14%. Gold down 0.5%, 41.45 the ounce. And West Texas Intermediate crude 70.46 a barrel, up by 2.8%. So again, recapping, semis hit hard, stocks selling off, S&P down 0.3%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, we appreciate that. And we'll have more from Charlie coming up after the top of the hour at 1 p.m. Eastern Time. The Politico article about Graham Plattner, of course, is what would do him in if he decides to drop out. But this headline today is a close second, of course, responding to that Politico story that made clear that Graham Plattner is being accused of sexual assault. Bernie Sanders says he talked to him and advised Graham Plattner to, quote, step aside. This came from an emailed statement from the senator from Vermont, who, of course, has an enormous influence on the progressive wing of the Democratic Party. It says he spoke with Plattner, quote, about the best path forward for Maine, unquote, knowing that Sanders is an independent, but, of course, caucuses with the Democrats, and it's his whole vibe on that side of the party that has elevated the likes of Graham Plattner, with most people looking at the clock today. Surprised that he has not dropped out yet. We want to assemble our political panel so they can each take a swing at this, and we'll have a lot more in our second hour because things went a little bit long in that New York City briefing. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are back together, I am glad to say. Jeannie, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie, we missed you, and I'm glad to see you back among friends here on Bloomberg. What's your thought? Are you surprised Graham Plattner hasn't dropped out yet?
Yeah, and it's great to see you all. Missed you guys. I think what you just read, Joe, when you see Bernie Sanders come out, that is like, it is done. It is over. It's a matter of time now. He is some people call him the grandfather of this movement. He and Morris Katz recruited Plattner. There is no continuing once Bernie Sanders comes out and says this. And some reports where they wanted to give him, the Sanders team wanted to give him a little time. I think this email is a suggestion that they feel like time is up, time to move over Graham. So I think we're going to hear it in a matter of minutes. And then the question is going to be, does Bernie Sanders jump back into this main race or just let it play out?
As a potential kingmaker, what do you think, Rick? You think about the Swalwell case? Now we've got the Plattner case, although this has been a slow boil. It's been one thing after the other with the Nazi tattoo, the sexting outside of his marriage. Now we've got the big headline here at Politico. Why not drop out? I mean, he put the video out yesterday that made clear he was essentially suspending his campaign. What's he waiting for? Are they lining up money? Are they making a deal with another candidate?
Yeah, it's hard to say, what's going on behind the scenes. I mean, obviously, we've seen play out in the last 24 hours an enormous withdrawal of, the formal Democratic organization who've been backing him up, even with all these incredible scandals that have been swirling around the Plattner campaign. And so, yeah, maybe they're just buying time. They've got until Monday to get him out of the race and allow the state party to replace him. There's a bunch of candidates that are already in the, sphere of people who might take his place. Nobody has any idea how it'll ultimately affect the outcome of the election. But I would say this idea that somehow Plattner was going to be the key to the Democrats take over the Senate is dead and about to be buried.
Wow. And of course, you've heard many say on this program, if Democrats can't win Maine, they cannot win the Senate. We'll have a lot more with our panel on this very story coming up in hour 2. Rick Davis and Jeannie Shanzano. I'm Joe Matthew in Washington. Kaylee's on the way in along with our global television audience. So stay right here on the fastest show in politics. This is Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Europe starts looking within for its own defense. Welcome to the Tuesday edition as NATO announces $50 billion in new defense deals, with more contracts going to European manufacturers than we saw a year ago. I'm Joe Matthew alongside Kaylee Lines in Washington. And Kaylee, this is just day one of the summit. They're just rolling into dinner right now.
Yep, a dinner with the allies, a lot of pomp and circumstance involved in this. That dinner, of course, follows the bilateral meeting between President Trump and Turkish President Recep Tayyip Erdogan earlier today. But the big day really is going to be tomorrow. That's where the bulk of the talks within the summit will be underway, including another bilateral meeting that is planned between President Trump and Ukrainian President Volodymyr Zelensky. As, of course, part of the aim of Europe here is not just to satisfy the president on defense spending, but also to make sure that it shores up U.S. support for the Ukrainian
And
cause.
a big ask for more Patriot interceptor missiles. We're going to talk to Bloomberg's Anne-Marie Hordern in just a moment. She's traveling with the president and will join us live from Ankara with, as I mentioned, tens of billions of dollars in deals already unveiled, Kaylee, and one of them sees Saab replacing Boeing with a critical system that's worth a good $5 billion. NATO allies are starting to get the message from Washington.
Of course, one of the messages NATO allies have been receiving from Washington as well, or specifically from President Trump, is that Trump is disappointed with them for not getting more involved in the Strait of Hormuz. And that's something else we have to talk about today, as we saw a laden tanker of LNG from Qatar being struck near the strait, a Saudi vessel as well, which raises questions once again on the security of passage for vessels that are trying to get energy exports out of this region.
That's for sure. It's moving oil prices today, Kaylee, on a day where we're seeing a big unwind in many cases in tech stocks following that Samsung earnings report. It's look out below for a lot of these memory names all of a sudden.
Indeed it is. So let's get a check on them and everything else moving in the markets today as we turn to Charlie Pellet at the New York. Hey, Charlie.
Hi, thank you very much, Kaylee and Joe. Indeed, you mentioned crude oil looking at an almost 3% jump right now for West Texas Intermediate crude. Key takeaway, back above 70 barrels, 70.38, up by 2.7%. Barrel of Brent crude, 74.06 right now, up 2.9%. You mentioned the selling in semiconductor names. We begin with the SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 4.4%. All of this meaning a major sell-off in tech names today. We do have NASDAQ down 0.6%. The NASDAQ 100 index down 1.3%. And the S&P 500 index lower by 0.3%, as is the Dow, lower by 0.3%. Interestingly, though, on a day in which techs are declining, we're looking at gains for the Bloomberg Mag 7 index. It is up now by 0.4%. 10-year at 4.52%, with a 2-year 4.14%. Gold is down $20 the ounce. Spot gold down 0.5%, 41.44 the ounce, while West Texas Intermediate crude again up 2.7%, 70.38 a barrel. We continue to monitor developments in Midtown Manhattan. We're keeping an eye on a collapse warning for a Midtown office building in the midst of a conversion to residential. You heard city officials speaking about it moments ago on Bloomberg. It is the old Pfizer building that we're talking about on 42nd Street in Midtown. Construction crews earlier today were pulled from that 37-story Manhattan building after bricks were reported falling from the 21st floor. That prompted building evacuations and street closures right along 42nd Street, close to Grand Central, one of the city's busiest corridors. Again, recapping here, S&P 500 index down 0.3% right now. We've got the SOX lower by 4.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet checking on the markets from New York. Thank you so much. I'm Kaylee Lyons alongside Joe Matthew in Washington, but it's Ankara that we have our eyes on at the moment as the NATO summit is underway in Turkey. And right now, leaders of NATO countries are walking into a dinner as the proceedings get going here. A lot of pomp and circumstance involved in the arrivals themselves. Of course, the host country of NATO, Turkey, and its president, Recep Tayyip Erdogan, are part of the reason why President Trump is in attendance at this NATO summit. He has suggested it's a favor to Erdogan, essentially, that he decided to join with everyone else over the course of these few days. And we did see a bilateral meeting happening between him and Erdogan earlier today, just after the president was wheels down in Turkey, where he was asked about that relationship in particular.
Mr. President, are you going to sell F-35s to Turkey, and what about the legal restrictions?
It's a decision we're going to make. We have a very good relationship. I would think that many people, I can tell you, many people, including the people sitting right here, thinks, why wouldn't we do that? We have a better relationship with Turkey, and Turkey's been in many ways much more loyal than other countries that we think would be loyal. So something certainly would consider. It's a great plane. It's the best, thirdly the best plane by far. And it's certainly something we will consider.
A little difficult to hear the president there, who was some distance away from reporters. We need to get a better boom mic, I think, in Turkey. He did say Turkey has in many ways been much more loyal than other countries that we would think would be loyal. So we got some things we would consider. And it sounds a lot like he is moving closer to that line, to reinstating Turkey in the F-35 program, something that might not be considered good news in Tel Aviv. Let's get to Ankara right now. Bloomberg correspondent Anne-Marie Hordern, our chief political correspondent, is traveling with the president in Ankara and joins us live right now as the sun is setting behind her. This will be an important dinner, I suppose, Anne-Marie, but so many deals have already been hammered out. $50 billion and more than we've seen in the past going to European defense contractors. What can you tell us?
Well, Europe's going to have to really go to local contractors and manufacturers when it comes to starting to really, truly reindustrialize their defense industrial base. You heard Mark Rutte for weeks now talking about how really this summit is about the transatlantic alliance reindustrializing. So that means they're going to have to rely on some systems they've always relied on from the United States, but there's going to be more deals. And we saw that with the rollout of the $50 billion deals so far. We know that instead of Boeing, they're going to Saab for some sort of aircrafts. So there are going to be other manufacturers they bring into the fold, because remember, this meeting is about trying to meet the target they set last year, and that was a 5% of GDP defense target, 3.5% going to all of the hardware, ammunition, the tools you're going to need to build that industrial base, and then 1.5% the support, the bridges, the roads, the ports, when it comes about providing the infrastructure for a defense industrial base. So those are the deals so far, and then of course the big one we're all waiting for is any sort of concrete details how the President of the United States sees Turkey really coming back to the F-35 program, given the fact that there is a law in Congress that bars them from it because they, of course, bought S-400s from Russia.
Well, and on the subject of Russia, Anne-Marie, I would imagine that that is going to be a dinner topic of conversation this evening, and clearly a topic of conversation between Vladimir Zelensky and President Trump in their bilateral meeting tomorrow. What, if anything, in terms of deliverables for Ukraine is expected out of this summit?
Well, Ukraine is really once again trying to implore the alliance and the United States to send more Patriot air defense missiles. And we heard from Mark Rutte, the Secretary General, saying that there's not a ton of interceptors that could just be easily moved around when it comes to the alliance. This is really important for Zelensky, especially given the past few days we saw a wave of attacks on Kyiv, and some of the defenses weren't able to shoot down ballistic missiles. And that is why he is saying the next battle of this war is being fought in the air. And that is why he's imploring the United States for more of the Patriot missiles. Now, for months, there has been talk, and this was brought up as well at the G7 summit in France, there has been talk of maybe giving Ukraine a license to manufacture and build those defense systems in country. And I spoke to the Finnish President Alexander Stubb earlier today, and he said that would definitely be a welcome gesture. And it comes at a time that he says Europe is trying to salvage their relationship with this White House.
All right, Bloomberg's Anne-Marie Hordern, our chief political correspondent, live on the ground in Ankara for this NATO summit. Thank you so much. And as we consider the question of Ukraine and the ongoing war with Russia, we bring in now Melinda Herring, who is a non-resident senior fellow at the Atlantic Council, who's joining us in our Washington, D.C. studio. Welcome back to Bloomberg TV and Radio, Melinda. It's good to see you.
Great to be with you.
As Anne-Marie was just outlining, clearly Ukraine has been vocal about the need for more Patriot systems. If it gets it, would Ukraine be able to win this war outright?
Can I say hold that thought for a minute? So I think Anne-Marie is right that there are a limited number of Patriot interceptors, but the big discussion is two things. So there is a finite number of these things, but if the U.S. were willing to give its licensing permission to Ukraine, that would be a game changer. That would be an absolute game changer. There's something else the U.S. can do as well. So if you go to the factory where these PAC-3s are made, it's in Camden, Arkansas. They're not on a 24-hour schedule. I think that's incredible. We're more than 4.5 years into the war. Come on. President Trump can make a phone call and fix this today.
Wow. So there could be ways of expanding the defense industrial base right now, overnight, with a phone call, to your point. Shy of the hardware, we've seen a remarkable advance, bold moves by Ukraine, striking deeper into Russia, and they've been answered by very heavy ballistic missile attacks on civilian areas in Kyiv. But what has been the change in mindset to be able to see Ukraine reach so deeply into Russia and actually begin a conversation about whether it can win this war? It's a very different place than we were in a year or two ago. How much is that affecting the feeling and hopes on the ground?
Joe, it is a massive change. I was in Kiev in December, and it was one of the grimmest periods. You guys know that I go there a lot.
Yes,
this was my 10th trip there, and I was sleeping in the basement every night in one of the nice hotels, waking up to the smell of tires because you're so far down in the ground. You're in a parking garage sleeping, and I couldn't get to the train station because there were missile strikes. And the mood was so grim, and Ukraine barely made it through the winter. It is hard to describe. Day and night, black and white, it doesn't even do justice to the feeling. But Ukrainians, on that trip, I got to go to Firepoint, and Firepoint is the Ukrainian company that's making the long-range rockets. And they're getting better and better at hitting refineries. So Ukraine has managed to hit all of Russia's major refineries except for one. So Ukraine, its technology is improving, and its drones, its long-range drones are improving as well.
Well, so when we consider that improvement in technology, in morale, is there a sense that Ukraine could end up on the winning side of this conflict, or does it still ultimately need to be a negotiated outcome that's pursued?
So wars always end in negotiations, but right now there is a strategy in place on the Ukrainian side to push as hard as possible with these long-range strikes, and the idea is to compel Vladimir Putin to actually come to the negotiating table. And I think it's working. We see the Russian economy is in trouble, and we see increasing pressure, and we see the Ukrainian side getting closer and closer to Moscow and St. Petersburg, and we see elite splits as well. So is it going to change overnight? No. But the Ukrainians also did something really wise. They've been interrupting supply lines around Crimea and putting huge pressure on logistics, and that's how you win wars.
Interesting. We've talked for years about this now, which is pretty remarkable to think about. In many of our conversations, you've led us to the realization that it's manpower just as much as it is material. We can give all the bombs, tanks, and weapons we can make, but Ukraine needs to have people to wear uniforms and go shoot those weapons. This was becoming harder with time. Where is the recruitment effort now?
So that discussion has actually changed.
Yeah.
You and I had this discussion about, oh my God, there's not enough Ukrainian troops to hold the front line. So because Ukraine has invested so much in its drone technology, the kill ratio has really changed. So now 1 Ukrainian is killed for every 5 Russian. So this is actually, the Russians don't have enough soldiers now. The math has really, really changed. The Russian side is losing 35,000 troops a month. That's an enormous number, and they're not able to replenish their side. And they're pulling in
even through conscripts, even through jails.
Well, so Putin has a political problem. He doesn't want to have a draft. So he's trying to avoid that, and he's been pulling people out of jail. He uses drug addicts. You know, the people that he's putting on the front line are not a great fighting force. These are not West Point graduates, right, Joe?
Yes, it sounds like it.
Well, and as we consider the pressure that the personnel challenges will put on the Kremlin, there's also the question of additional financial pressure. Bloomberg had reported previously about the notion that even the Russian finance ministry was talking about the costs of this war being untenable. And then there's the question of tougher sanctions as well. There was reporting in the Wall Street Journal today, Melinda, that on the sidelines of the NATO summit, a group of lawmakers are going to be meeting with the Treasury Secretary, Scott Bessent, to talk about a bill that would intensify Russian sanctions. What would that do ultimately, do you think, if it were to come to fruition?
So I'm really skeptical. This administration does not like sanctions on Russia, and we've seen them back away on sanctions on Russia. So I think it's fabulous. They should absolutely do it. The EU has put, I think, 24 or 25 packages in place, and with sanctions, you have to keep fine-tuning them because the Russians are masters at sanctions evasion.
We should note that French President Emmanuel Macron is just arriving at the NATO dinner and posing for photographs with President Erdogan, and we're told that President Trump's motorcade should be arriving imminently here. If you're with us on YouTube or Bloomberg TV, there's a live view as the dignitaries get together to break bread. And of course, Ukraine will be part of that conversation. So too will Russia. And I'm wondering your thoughts on Vladimir Putin's place in the universe right now. What is his level of security? What is his approval rating in Russia? If you could take such a poll.
So if you could take such a poll is the clause that we need to emphasize. So his numbers are terrible. And there are splits between the presidential administration and the security services. And there's a growing number of people that want him to back away. And then there's a growing number of people that want to increase pressure. But Vladimir Putin is paranoid. He takes high security risks. A bunch of papers have reported all of the different ways that he's trying to stay out of the public. He's not giving a lot of public speeches anymore because he's afraid of the security risks.
Should he be?
Yes, of course he should be afraid of this. The Ukrainians are really clever at these things, and we've seen the Ukrainians pull off, all kinds of. If I were Vladimir Putin, I would be afraid of the Ukrainian security services too. But Joe, it was even people around Putin who work in his entourage can't take an Uber or they can't take the Moscow metro. That's how paranoid he is, and I think he took their phones away from them too.
Well, and of course, that's just as he considers the threat posed by Ukraine. Of course, he, in part, went into Ukraine in the first place over 4 years ago because he was concerned that Ukraine might one day become a member of NATO. Now, as we see the NATO alliance gathering in Ankara with a pursuit of 5% of spending of GDP on defense, has this all ultimately backfired with his aims here? Is it a stronger NATO that has emerged out of these last many years?
Absolutely. We have 2 new NATO members, and Ukraine has become Sparta. It's a small, militarized state, and forget Russia, China, and great power politics. That's the wrong way of looking at the world now. It's about Israel, Rwanda, and Ukraine. These are countries that are militarized, and they have high-tech sectors, and they're going to be innovating. And this is going to be, the new Spartas is actually the watchword for the next period to come.
Really fascinating, Melinda. It's great to have you back in the mix here. Don't be a stranger. We should be talking about this more, not less. Melinda Herring is non-resident senior fellow at the Atlantic Council and has been indispensable in helping us understand the contours of this war in Ukraine. As President Trump arrives at the palace, walking solo up the blue carpet, Kaylee, he'll be standing side by side in just a moment here with President Erdogan. This is just day one of the NATO summit, with much more to follow tomorrow.
Indeed. Of course, he's already met with Erdogan once for a bilateral meeting today, but tomorrow, in addition to the meetings happening with all of the leaders together, he will have that bilateral meeting with the Ukrainian President Volodymyr Zelensky, who, as we were just discussing with Melinda, has reason to be more confident at this NATO summit than he may have had reason to be just months ago. Seeing now President Trump shaking hands with President Erdogan. Many of the other NATO leaders have already walked into this dinner. We just saw Friedrich Merz of Germany, Mark Carney of Canada, and Emmanuel Macron of France making their arrivals too.
A lot more to follow. Stay with us here on Balance of Power. We're live in Washington with an eye on Ankara and Ukraine for that matter. This is Bloomberg TV and Radio.
1:21 on Wall Street. We do check markets all day long here at Bloomberg. We're off session lows. Still a lot of red on the screen with the Dow, the S&P, NASDAQ all declining. We're looking at a sell-off in chip makers. That is dragging down the stock market on concerns over whether massive AI investments will justify lofty valuations. The NASDAQ Composite Index is down 0.7%, but the NASDAQ 100 Index now down 1.3%. The S&P is down 21 points, a drop there of 0.3%. The Dow retreating from yesterday's record. Right now, the Dow is down 161 points, down by 0.3%. I mentioned the sell-off in chip makers. We've got the SOX, the Philadelphia Stock Exchange Semiconductor Index, now down by 4%. The VIX holding below 16 with a 10-year at 4.52% and a 2-year 4.14%. Gold is down 0.5%, 41.42 the ounce, while West Texas Intermediate crude now higher by 3%, back above 70 a barrel, 70.64 right now on WTI. Barrel of Brent, 74.33. Brent crude up by 3.2%. A Manhattan high-rise, the old Pfizer building on 42nd Street in Midtown, remains unstable at this hour. It is said to be still moving internally after columns buckled during the rush hour today. That is the latest update from city officials, who say engineers are working on ways to shore up damaged floors. They're also using drones internally to monitor the building. Officials are describing the situation as, quote, extremely serious and very serious and danger. Stay with Bloomberg for the latest on this ongoing story. Again, the old Pfizer building, 42nd Street in Midtown Manhattan. JP Morgan Chase has relaxed some of the finance industry's strictest return to office requirements for its London staff after the UK capital sweltered through record high temperatures. JP Morgan Chase shares, they're just about unchanged on the day. Again, recapping here, stocks lower, S&P down by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. I'm Kaylee Lyons alongside Joe Matthew in Washington, where we're tracking more dominoes falling that appear to be cascading toward the end of Graham Plattner's campaign for Senate in Maine. Of course, allegations surfaced yesterday, first published by Politico and then in an interview on CNN from a woman that Plattner dated years ago, who suggested and alleged that Plattner sexually assaulted her. Allegations that he denies, though he still is considering the path forward for his campaign in the face of them. As all this came out yesterday afternoon, we saw pretty immediately key voices in the Democratic Party polling their endorsement from Plattner. Senator Ruben Gallego of Arizona, Congressman Ro Khanna of California, the DSCC, Kirsten Gillibrand, who runs it, and Chuck Schumer both suggested they would not support financially backing Plattner's campaign any longer. And now Senator Bernie Sanders, who was a big supporter of Plattner, has also pulled his endorsement. It seems he said on Twitter earlier today, I've spoken with Graham Plattner about the best path forward for Maine. In light of these very serious allegations, I have recommended that he step aside. Of course, Plattner has not done so yet, even though his video statement released yesterday evening did indicate it could be a potential outcome here.
Any accusation of non-consensual behavior is categorically false, regardless of the inaccuracy of the reporting, but mindful of the political reality it will inflict. We are taking the time to reflect on the best path forward for the state that I love, the people that I love, the movement I belong to, and the goal of defeating Susan Collins. Those were the goals when we launched this campaign, and they remain my goals today.
Those words, time to reflect on the best path forward, are still resonating. We have not heard from Plattner since then. To Kaylee's point, he's lost a series of key endorsements, and now the Chuck Schumer-aligned Senate Majority PAC says it is, quote, redirecting resources away from the main Senate race in light of these allegations. This is now going to set off a series of actions that will presumably include his dropping out of the race. He has until Monday to do so, allowing the party to pick another contender to be on the ballot. And this is where we start our conversation with our great political panel. Back together today on Bloomberg TV and radio, Bloomberg Politics contributors Rick Davis, Republican strategist and partner at Stone Court Capital, alongside Democratic analyst Jeannie Shanzano, democracy visiting fellow at Harvard Kennedy School's Ash Center. How much time, Jeannie, does Plattner have to make a decision here? Obviously, the real deadline is Monday, but the party's going to want every minute it can get here, right?
Yeah, I mean, I think Bernie Sanders' statement that you were just talking about, that is a sign that this is imminent. He has to drop out. It's not just an issue of the support he's lost, which is tremendous. It's the money. They're not going to put money into this campaign in Maine unless he's off the ballot. So I think it's a matter of time, and he should do the right thing and drop out immediately, given the Maine Democrats time to choose an alternative candidate. But can I just say about this victim, her allegations are incredibly credible. Some people questioning the timing on this thing. She's talking about breaking and entering and sexual assault. Democrats should require that he drop out of this race immediately and that they're able to replace him. And Democrats deserve better from their party. I mean, this is so frustrating. A must-win state, and you allow the Democratic progressives to come in and get somebody who we knew had so many awful charges against them, and you allow this to occur. I mean, I think the entire party has egg on its face, and there's going to be a lot to answer for, because this is what happens in the Senate, is this race. And so Democrats rather across the country are just livid, and right they should be.
Well, and we should note the victim who Jeannie is talking about said she was hesitant to come forward in part because she agrees with Plattner's politics. She just doesn't support the man as a candidate, but she also, it seems, was worried about the notion of it damaging the Democrats' ability to flip the seat from Susan Collins. So, Rick, weigh in here. Is Maine now potentially a lost cause for Democrats, even if someone else steps up?
It's hard to say if this is the death knell of a campaign against Susan Collins. I mean, I would remind everybody that we've been having this debate around Graham Plattner for months. The idea that it took Jenny Rackicott to do this interview yesterday to actually finally get this guy to withdraw is a little bit embarrassing for the party that claims that they really support women's health. It's just stunning that this has been a debate for months and nothing's been done about his candidacy. The reality is Susan Collins was starting to pull away from Graham Plattner. She was ahead in most of the polls, even though it's margin of error. It's a significant difference than where this race was only a month ago. And I would say the big flashing red light is, what is the Maine party going to do about it? Assuming Graham Plattner gets out before Monday, they got to pick a candidate. Now, are they going to run a process? Are they going to have a mini primary? Are they going to do what Joe Biden probably should have done, which is leave it to party regulars to pick their nominee? Or are they going to put their finger on the scale and say, okay, we've chosen this individual to replace him? This is a really important transition that the party's got to go through, and they're only going to get one shot at it now. And so I really am very keen to see what happens in the post-Graham Plattner campaign with the Maine party deciding what to do next.
Well, one thing we learned throughout the day yesterday and on the late edition of Balance of Power is that nobody's looking at Janet Mills. It would likely be somebody who was in the gubernatorial primary, Jeannie, and unclear exactly how that shakes out in the next couple of days. Plattner is still technically the candidate. You can weigh in on that if you want, but I'm just curious, getting back to what Rick just said, what is the lesson learned here by the likes of Elizabeth Warren, Ruben Gallego, Martin Heinrich, Ro Khanna, Bernie Sanders, all of whom had opportunities with the Nazi tattoo, with the sexting stories, with the extramarital affairs, and all the other scandals that have been swirling around Graham Plattner here. They all had an opportunity to say no at some point. And I'm wondering what the lesson is now, realizing that Democrats see Republicans endorsing someone like Ken Paxton and are wondering why they don't have to apologize when Democrats in many cases do. Yet this is a party seeking the high moral ground on issues, to Rick's point, like women's rights. How do we rationalize what just happened?
Yeah, and Joe, I think, the issue is so complicated because it wasn't a matter of vetting. We keep hearing people say, well, he wasn't properly vetted. as Rick talked about, we knew about these allegations, and you just listed some of them, and there's more than we can account for here. And we knew this was coming down the pike. And yet you had respected members of the party, Elizabeth Warren and others, coming out in support of this man. Why? Because the voters of Maine went with him. And this gets me back to the Democratic Party itself. It cannot walk away from these states, particularly a key one like Maine, and say, we're going to allow the Democratic Socialists to come in, Morris Katz, Bernie Sanders, and the others, and choose a nominee, and then go in and say, we're going to get behind Janet Mills. And let's not forget what they did. They got behind Janet Mills, who has, you know, not a lot of support. She is, obviously the governor has support there, but is not a lot of support for a Senate race. She's not a progressive in the way that voters want. And they kicked out, or they sort of pushed out people like we had the founder of the beer company, the Maine beer company, thinking of coming in as a populist. They moved him out. And so that's where the responsibility lies. You've got to have a party that can go in and support potential candidates who don't come with all this baggage, who are progressives and populists, who will run against Wall Street like Kleber was going to do, and who can do it and be authentic in a way that the party can support. So I blame this on the party and not so much the members who, after people voted, came out and said, we're going to support this guy.
Well, so Rick, as we consider how Maine fits into the wider map here in the midterms, if you were running Senate Majority PAC or inside the DSCC right now, would you be thinking about allocating more resources to Maine if a new candidate gets on the ballot, or instead allocating more resources to other states, Texas, Iowa, Alaska, in the hopes that you may be able to flip one of them instead?
Well, you think about it. Texas is a state that went, you know, plus 13 for Donald Trump, and Trump actually lost Maine. Susan Collins is the only Republican on the ballot in this cycle from a state that Donald Trump lost, a Republican from a state that Donald Trump lost. So, you know, you've got to play the odds. I mean, Democrats would be out of their minds not to double down on Maine. But I think it would be great if they looked to other places like Texas, you know, because a dollar in Maine goes a long way. A dollar in Texas doesn't get you across the street. And so you want to spend $100 million in Texas or $25 million in Maine. It's tough decisions for a PAC like that, but made a little bit easier even for Democrats, you know, with the latest Supreme Court decision where they can coordinate. So now they can sit down with whoever is going to be the candidate and say, okay, here's the package we're going to do. We're going to run your TV. We're going to run your ground game. We're going to spend $50 million, and this is how your campaign's going to run. So it does make it easier in a situation like this to mount a campaign with outside resources in coordination with the campaign.
All right, Rick Davis and Jeannie Shanzano, our Bloomberg Politics contributors, thank you so much for a discussion on those who could one day hold seats in the Senate. One man who still does, Senator Mitch McConnell, whose health condition has been a subject of many questions, apparently has spoken with the Senate Majority Leader, John Thune, recently. This according to Punchbowl. We'll have more here on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. Chip stocks are slumping on worries that the stock market rally has run too far. The Dow, the S&P, and NASDAQ all in the red. We begin with the stocks. The Philadelphia Stock Exchange's semiconductor index, it is down now by 4.1%. The NASDAQ 100 index down 1.3%. The NASDAQ Composite Index down 0.6%. The S&P 500 index down 18, drop there of 0.2%, while the Dow Industrials are slumping 0.2%. On a down day for much of the market, the Bloomberg Mag 7 index, though, higher by 0.3%. Again, the stocks down by 4.1%. The 10-year at 4.51%, with the 2-year currently yielding 4.14%. Gold is down almost 0.5%, 41.46 the ounce. West Texas Intermediate crude 70.61 a barrel, up now by 3%. Barrel of Brent 74.29. Brent crude up by 3.2%. NATO allies have agreed to at least $50 billion in defense industry deals to show President Trump that Europe is heeding his spending demands. Some of the contracts, though, show Europe moving to locally source some equipment it previously bought from the United States. Among defense contractors, they are trading lower. Lockheed Martin down 0.8%. Northrop Grumman down 0.5%. Boeing shares lower by 0.9%. We continue to monitor developments in Midtown Manhattan, where a high-rise on 42nd Street remains unstable. It is said to be still moving after columns buckled during this morning's rush hour. Those columns obviously inside the structure. That is the latest update from city officials, who say engineers are working on ways to shore up the damaged floors. They're also using drones to monitor the building. Officials now describe the situation as extremely serious. Recapping, stocks lower. S&P down 0.2%. The stocks lower by 4%. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, always good to cover the waterfront with Charlie Pellet, and he'll be back from World Headquarters in New York, latest on the markets at the top of the hour, 2 p.m. Eastern Time, as we kick off Bloomberg Business Week Daily. Thanks for being with us on the Tuesday edition of Balance of Power. As we keep our eye on oil prices, and Charlie's hit this a number of times here, crude oil moving higher today on news from the Middle East. We're seeing WTI back above $70 a barrel. It's about a 3% move, a little more than 3% for Brent, above $74 a barrel, with some tough headlines from Iran. 3 ships attacked in the Strait of Hormuz, heightening unease among ship owners and testing this whole agreement here between the U.S. and Iran to halt attacks. We're supposed to be in the throes of a 60-day ceasefire, but there's very little information coming out of negotiations, and the obviously impact of these headlines is not a good thing when it comes to energy prices. We want to compare notes with Bloomberg's Washington correspondent Tyler Kendall, and then spend some time with noted energy analyst Tom Kloza, who Kaylee will be joining us imminently here, because these prices do move in both directions, and we're reminded they can go back up.
Yeah, I mean, the trajectory has been lower and significantly lower over the course of the last few months, when conversations around peace negotiations between the U.S. and Iran first started. But as you say, this initial memorandum of understanding was mainly supposed to accomplish one thing, that is the opening of the Strait of Hormuz, so that would be free for transit. And clearly even that is still in question. And we're not sure what else in terms of progress is being made, as we're now multiple weeks into the 60-day period. The clock is ticking, and we don't have a whole lot to show for it, at least in terms of what has been publicly shared. So let's get right to Tyler Kendall for more on this. Tyler, I guess it's hard to gauge whether or not attacks like this are disruptive to the peace process, because we just don't have that much visibility into the peace process right now as it is.
That's a really good point, considering, of course, as you're mentioning, the basis for just this first 60 days was to make sure that the Strait of Hormuz can be reopened before they get into the perhaps more complicated matter of what those potential curbs on Iran's nuclear program will ultimately look like. But we're seeing Iran really flex its leverage over the strait. Earlier today, the country submitted a document to the UN's shipping agency saying that it has authority over parts of the strait. It didn't outline exactly which parts or whether one route may be preferable to another, but the picture is becoming increasingly clear, which is that Iran has been upset I think it's fair to say, over ships starting to use the corridor in the strait that hugs the coast of Oman. We should think of it as being 3 essential routes through the waterway. The middle one is the one that we're steering clear of because there's still concerns that there can be mines. There's the one that goes through the coast of Oman, which is coordinated by the U.S., and then there's the one closer to Iran. And we're seeing these reports and now confirmation that at least 3 ships have been attacked in that corridor that is closer to Oman. That's giving us a clearer picture that Iran isn't too happy about traffic being diverted that way instead of closer to their shores.
Or is traffic without their transponders on. Some of these ships that were targeted were not making their whereabouts known, which is troubling in its own way to think about the dangers of transiting the strait. Tyler, Iran is hanging over this NATO summit that is just now beginning today, and I'm wondering what you can tell us about the president's view of world leaders who he felt like, in the case of our NATO allies, abandoned us at the strait. Mark Rutte, the Secretary General, has been going out of his way to point out the use of European bases and other cooperation that the president may not be talking about publicly.
Right, we had Mark Rutte just here in Washington the other week, but it didn't really seem to smooth the tensions going into this, because in President Trump's first public remarks after landing on the ground, he said he was, quote, very disappointed in NATO over this exact reason. Now, this is, of course, one thread. I do want to quickly point out another important part about working with allies when it comes to this conflict, which is that one of those ships that was targeted this morning was a Qatari LNG tanker. And, of course, Qatar has been one of those allies that President Trump has boosted, has talked about how closely the U.S. has been working with as a main mediator in this process, but still one of their tankers was targeted, which is also raising questions on exactly where we stand in this peace process. President Trump, at this point for months, has said that we don't need our NATO allies to come to our aid, that we're going to be able to secure the strait without them. But it is very evident, even the president himself alluded to this idea that calling for their assistance was perhaps a test of our allies, and that they didn't go up to meet what he ultimately wanted to see. How this develops, whether or not boosting defense spending, getting those actual tangible deals over the finish line helps to ease the next 2 days, remains to be seen.
Well, we'll walk through this together, Tyler. Thank you so much. Bloomberg's Washington correspondent Tyler Kendall with us here in the nation's capital as we stick with the energy theme here, noting the increases in crude oil that we just talked about, and a gallon of gas today averaging $3.79 nationally, according to AAA. We turn to Tom Closa, the chief energy advisor for Gulf Oil, back with us live on Bloomberg TV and radio. Tom, it's great to see you. We've come down a lot from $120, and I'm wondering how you would describe this moment that we're in. Would you be betting for higher prices when you see headlines like these?
I'd be betting on higher prices for refined products, for gasoline and diesel, and particularly diesel in the second half of the year, which doesn't strike the nerves with the public the way that gasoline does, but can really have an impact on inflation and freight costs and so forth. I saw something this week I haven't seen before or since December of 1989. I saw the price of diesel in the bulk markets trading at twice the price of WTI crude. And I don't think a lot of people get that. They don't understand that WTI is, $70 or so, but the price of diesel is about $138 and the price of gasoline is about $125. These are relationships that are kind of like the Billy Bob Angelina Jolie marriage. They're not the kind of relationships that are going to last a long time.
Wow.
Well, so what's the driving force behind that, Tom? Is this moved from being an issue where we were concerned about the supply of crude to actually a refined products issue, and why?
Well, I think going into the year, we had looked at it and we said there aren't going to be enough new refining capacity built to handle world growth. You know, every time you add 1 million people, you had quite a bit of petroleum demand there. Now, if you throw in the fact that more than 1 million barrels a day of Persian Gulf refined product supply was damaged, Venezuela is operating on fumes at the moment, and Mexico is probably running their refineries at only 45% or so. The United States is in great shape. We're the cleanest dirty shirt for all the different markets in terms of supply. But the big story, and I think the big story that's not getting covered that much, are the drone strikes in Russia. You know, Russia has probably lost somewhere over 1 million barrels a day of capacity. They're running at maybe 3.3 million barrels a day, and the capacity is 5.5. And every week you see more large refineries in Russia set fire, and they're not going to be back anytime in 2026.
Fascinating. All right, Tom Closa, let's stick with the Billy Bob theme for a moment. Is there an opportunity here to turn up the shale in the Permian? Can the landman get busy? And if you're an investor, based on everything I'm hearing, you're chasing the refiners right now?
Yeah, I don't think crude oil is the problem. We've still got another 5 or 6 weeks of SPR sales. So I think crude oil, if anything, it is going to resemble a little bit of a mini glut. Although we shouldn't, be confused by that. When the SPR sales end, crude oil will be tight. And July and August, probably in the next 60 days, Joe, this is the highest demand you see worldwide. So we're going to need it. But I don't think, I think the president has been really successful in talking down the crude oil markets. If you look at the innards of the market and how much speculative money is bet on higher crude oil prices now versus the run-ups over $100 in the past, there's virtually nothing there. They are afraid to be long because they're afraid of a Truth Social post or a presidential tweet. He doesn't have the same impact in gasoline and in diesel. And, it wouldn't surprise me if he doesn't start posting some things that they don't have, an idea to do because of policy, but they want to put the fear of God in the buyers who are speculatively buying gasoline and diesel.
Well, we have seen the president talk about retail gasoline prices and how he feels the prices at the pump should be lower given what we've seen in crude. He has suggested price gouging has been taking place. First, he was targeting big oil companies. Maybe someone informed him that that's not exactly who was setting the prices that consumers see. And then he ultimately, in later True Social posts, was targeting the retailers. His suggestion is that $2.50 a gallon should be more reasonable for the current environment. What would need to happen, Tom, for us to get back down to $2.50 a gallon?
Well, we'd have to see another $20 or $30 drop in crude oil, but we'd have to see refining profits, which are $50 to $60 a barrel right now, go back to that $10 or $20 barrel number. And refiners are doing a great job. They're making a lot of money, and they're making it despite the fact that they're exporting a good bit of product as well. It's not worthy to attack the retailers. I looked at the average markup for gasoline this morning before I went on the show, and it's less than 30 cents a gallon. If you consider everything that goes into selling a gallon of gasoline at the pump, 30 cents is really not all that much. It's more than it was 15 years ago, but it's not by any means price gouging or a windfall.
So if you're an investor, should you be looking at the refiners with that bottleneck that you're describing, Tom, or do you go for the pipeline companies as the Middle East and Europe try to find ways around the strait?
Absolutely, the refiners are the best place to be parking investment money right now. In about 3 weeks, they're going to start releasing earnings. And I think that may actually have an embarrassment of riches to deal with. And they're going to have to talk about the current environment in the third quarter. It is spectacular. We have never seen these kind of refined products margins on a sustained basis. Even in 2022 at the beginning of the Russian war and back in the past, it's always been crude oil that overreacts. And right now, you can make the case that gasoline and diesel have overreacted, but I think you could also make the case that these are the products that really should have risen, and they are.
So if it's refiners that are the winners, but it's higher diesel prices that you see, Tom, who's going to be the loser in that? Where will the economy feel those effects of higher diesel prices?
The losers are anybody that uses oil, whether it be diesel or marine gas oil or whatever, to move things around the country. That's where you're going to see it. Now, we're in relatively good shape right now because we've dropped probably 80 or 90 cents on diesel. But if you look at the end of the year and you say, what's the one product that could have a paroxysm higher? It would be diesel. It would be heating oil. It would be marine gas oil. That part of the barrel, which is about 30 million barrels a day internationally, is going to be scarce without the contribution of Russian molecules. And right now, it looks like Russia is going to see lower and lower refinery runs because Ukrainian drones are going to strike them. If the president really wants to impact the oil market right now, he would basically go 24/7 and try to get a peace deal for Ukraine and Russia. That's probably more important to the price of fuel than what happens in Iran.
All right, well, we'll try to write that on a note and pass it to the table of President Trump, where he dines right now with NATO leaders in Ankara, Turkey.
Tell him Tom
and
sent
going to
you.
be meeting with Ukraine's president tomorrow. Tom Kloza, Chief Energy Advisor for Gulf Oil. Thank you for joining us on Balance of Power. And we'll be back with more in the late edition at 5 p.m. Eastern right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Carol Masser, along with Emily Grafeo. She is, again, of course, in for Tim, who is on vacation this week. And it's already been a week where I feel like Stocks giveth, chip stocks giveth, and then they taketh away.
Yeah, what's interesting about the trade today, Carol, is just the divergence between tech stocks and the S&P 500. We have the S&P down only about 0.2%, but the NASDAQ 100 down 1.2%.
Yeah, exactly. And then you take a look at something like, let me just pull up the Philadelphia Semiconductor Index. That index is down more than 4%. So you see where the drag is coming from.
And SpaceX, too. It's first day in the NASDAQ 100, but trading lower today.
All right, so we're going to get into all of that. I got to say, ahead this hour, we are going to think about the chip concerns and how it changes the narrative from day to day or week to week. This is amid Samsung's record profit, not enough to impress investors, so that's why we're seeing some of the pressure out there in the markets. We're also going to get into Amazon's debt offering, Rivian's share offering, and then you mentioned SpaceX, which begs the question, is the next thing to watch for when it comes to all things Elon, SpaceX and Tesla essentially merging?
We have a good reporter on that to tell us. Ed Ludlow will join us very soon. Plus, we head to the NATO meeting in Turkey today for a gut check on the relationships between the U.S. and its allies.
All right, coming up, all of that. We're also going to hear from the CFO of Wayfair. Kate Gulliver, and the company is the upcoming episode of Chief Future Officer. So looking forward to that. And then Conrad DeQuadros, he's head of economics for City Wealth. We're going to talk about all of this and really what it means in terms of the global, economic and market backdrop. So speaking of markets, let's get an update for you on this Tuesday. Here's Charlie Pellet.
Hi, thank you very much. A lot of red on the screen. You two were just discussing the market internals. How do you explain the Mag 7 index today? On a day when we got the SOX selling off, on a day when we've got the NASDAQ 100 index lower, and on a day when NASDAQ is down, right now the Bloomberg Mag 7 index is pushing higher, up by about 0.5%. But I begin with what is trading lower, and that is the NASDAQ 100 index, down 1.2%. You guys mentioned the SOX, the Philadelphia Stock Exchange's semiconductor index, down now by 4.1%. Bottom line here, declines on Wall Street, with the S&P now down 18, a drop there of just about 0.2%. The Dow down 0.3%. NASDAQ lower by 0.6%. 10-year at 4.52%. The 2-year 4.15%. Spot gold down $22 the ounce to $41.42, drop there of 0.5%. West Texas intermediate crude oil pushing higher. WTI 70.49 a barrel, up 2.8%. Barrel of Brent 74.19. Brent, the global benchmark, up now by about 3.1%. Bitcoin back above $64,000. Bitcoin today higher by 0.4%. As we mentioned, those semiconductor names facing fresh scrutiny today. Case in point, we do have Broadcom shares lower now by 0.5%. Nvidia turning around, up by 1%. Micron is down 5.3%. Intel hit hard today. Intel shares down by 9.3%. Again, recapping the Dow, the S&P, NASDAQ, all trading lower. And as we are also keeping an eye on developments in Midtown Manhattan with that high-rise on 42nd Street, the old Pfizer building, it does remain unstable, said to be still moving after columns buckled during this morning's rush hour. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Yes, indeed, everybody. Carol Masser, Emily Grafeo in for Tim this week. We are going to start overseas on this Tuesday, and with the NATO meeting underway, we know that that is going on. Earlier, NATO allies agreed to at least $50 billion in defense industry deals. That's according to an alliance official, essentially to show that President Trump, that Europe is heeding his spending demands. And Emily, we know that he's been saying it's time for you guys to step up, spend more on your defense. It's not just about us kind of protecting, meaning the U.S. protecting Europe. It does beg the questions, though, that are they really stepping up? And I am always thinking about the U.S. relationship, its presence in the world, its relationship with its allies. So let's head to Bloomberg Surveillance co-host Anne-Marie Hordern. She's been reporting on the sidelines of the NATO summit in Ankara, Turkey. Anne-Marie, good to check in with you. We know it's later there. There's been a lot going on. I want to start with President Trump, listening to him this morning in the press conference, lauding his relationship with the host of those meetings. We're talking about President Erdogan of Turkey. Not a surprise. I guess what's more important, I think about, is the U.S. relationship with its other NATO allies or its NATO allies. What's been the mood? What have you been able to read into that?
Well, it hasn't been a great look for the other allies when the President of the United States recently said before this summit, Carol, that he was only going because of Erdogan. And then in that meeting with Erdogan, at the top of that bilateral meeting, he pretty much gave the green light for his intent to try to come to some form of agreement, which would have to go through Congress, to get Turkey on the F-35 air defense system. Of course, they aren't on that system because years ago they bought the S-400s from Russia. There's a lot of legal challenges when it comes to this, but when the Turkish president heard the translation, he gave a thumbs up. So obviously something that Ankara has really been pushing for, and potentially we could see some sort of movement on that at this summit. When it comes to the other allies in the NATO alliance, the president, of course, has been pushing them to step up defense spending. That was the key theme of last year as they tried to reach 5% of their GDP. And on the sidelines, we're seeing $50 billion worth of deals. I think it's interesting for some of the deals, you see actually some of these partners decide to go with Swedish Saab instead of American Boeing. But in other forms, you can still see really the hold some American manufacturers and defense contractors have on the global stage, and they're going to have to stick with those U.S.-made parts. But they're going to need to be buying from everyone if they want to hit that target, at least when it comes to hardcore ammunition of 3.5%. When it comes to really the more tenuous topics being discussed between the NATO alliance within the United States in that context with the transatlantic alliance, it's going to be things like, obviously, Russia's invasion of Ukraine. There's a lot of countries here imploring the U.S. to do more when it comes to Patriot missiles. I spoke to the Finnish president, Alexander Stubb, who said it would be a welcome development if maybe there was a licensing agreement and they could produce those missiles inside that defense system inside Ukraine. And then, of course, the conflict in Iran. The president does not feel like the European allies have had their back for a critical international waterway that arguably Europe relies more heavily on. So those are going to be potentially two of the hot button issues when it comes to the topics discussed here at the forum.
Yeah, talk a little bit more about just how the U.S. allies are talking about the war in Iran, at least behind closed doors. Is there any vibe here that there is more tension among allies or more unity when it comes to that war?
Well, I think it depends which ally you're talking about. When it comes to a country like Turkey, there has been a lot of discussion with the United States, and also a little bit of a fine line the U.S. is walking, because the Israeli prime minister definitely does not want to see Erdogan get F-35s and does not want to see a closer relationship between the United States and Turkey. When it comes to the Europeans, it's really country by country basis. At one point during this conflict, Spain barred the United States from using its airspace when conducting this conflict. So it really depends what country you're talking about, if they have even the ability. Do they have the hardware like a minesweeper to send to the Strait of Hormuz? Or is it also just, do they have the political will to do so?
All right, good stuff, and obviously tracking all of your reporting out there. Anne-Marie Horduran, Bloomberg Surveillance co-host in Ankara, Turkey, of course, there with the president. All right, that is certainly something we're watching from outside the United States. We do want to get to a lot of headlines when it comes to the tech community, and let's get to our tech roundup, some of which is dragging down the trade today. We talked about the semiconductor trade. Ed Ludlow is host of Bloomberg Tech on Bloomberg TV, of course, 11 a.m. Wall Street time, Monday through Friday. He's back with us. Ed, good to have you here. Love having you here on the East Coast for this week. I want to start with chips, because we're definitely seeing it way. Samsung, a record profit, but yet not enough.
Yeah, so clearly there has been a spillover of the trading in the Asian session into the US session.
Yeah.
Samsung reported prelim numbers where they only give us revenue, which more than doubled, and then basically profit, which was 19-fold increase from the prior quarter.
Sounds pretty impressive.
Those are quite good numbers. And beyond that, we interpret that the state of play for memory chips in particular, nothing has changed. Supply is still tight. Pricing is still going up on DRAM and NAND. DRAM is basically core memory, NAND flash memory. And there's no new information about when that supply tightness ends. But there was a really heavy sell-off in Samsung. 9% drop is actually only the biggest drop since June 23rd. It's become very normal around the world to see swings in both directions. So what can we interpret from the market reaction globally? Valuation reconsideration. Samsung was up 150% before that point year to date. Maybe it's just time people are taking their foot off the gas on chips.
But why is it that on any given day,
Yeah.
investors are comfortable and they push the stocks higher? And then on a day like today, I'm looking at the Philadelphia Semiconductor Index, and 29 of the 30 names are lower. And then there's a day when it's off. Is it just headline to headline in terms of the space? Like, tell me why the valuation, is okay one day and the next it could be not okay.
It's really important on days like that to say we don't know. The Samsung print was the catalyst in the market. It's not the full cause of why stocks are trading that way, but there is just clearly association. So what's really interesting is, like, in the last month, the Philadelphia Semiconductor Index, which is this basket of 30 stocks, including the ADRs of non-US entities, it's been very normal to see it go up by a range of 5 to 8% or down. Prior to that, though, the index, I think I was here a month ago, exactly a month ago, talking about this point that, year to date, the stocks had an incredible melt up. People were calling it a melt up. The difference with the memory stocks is that the market saw them as being quite reasonably priced or valued on a forward 12-month earnings basis. Again, nothing has fundamentally changed. There was the Mike Wilson note earlier in the week that said, well, maybe you see a rotation out of chip stocks into hyperscalers, cloud computing companies in normal speak, because that's really the main economy of AI. It's where you see the revenue translation, and because those stocks haven't had as much love of late. But there isn't an answer to your question. I'm sorry.
It's okay. I'll let you get away with it today.
Yeah, I was going to ask another potentially difficult question, because you mentioned the volatility. One of my colleagues, Natalia Kinichevich, pointed out that we have seen the NASDAQ 100 exceeding a move of 1% in either direction for the longest streak since 2024. So it hasn't just been the chip names. It's kind of been the sector more broadly that's been whipsawing. I'm wondering, Ed, when you talk to people, what do investors want to see to smooth out the volatility?
Well, the wonderful thing about how public markets work is that earnings season will be upon us soon again, and we'll start from scratch. There has been a distinction in financial markets between, it's kind of become more nuanced beyond, like, what are the capital expenditures numbers? It's now, who are the capital expenditures deployers, who's spending money, and who are the recipients of that? It's easier to model near term where you can see some economic growth and output, and et cetera. And people have tried to do that math. Again, and I think it's actually now the headline of our global wrap. If you just put to one side the recent, and recent means 30 days, the past month of volatility, there had been an incredible run-up in the AI trade focused on chip, memory and storage stocks, and then compute names. And we're just taking a breather from that. That's the difference.
Okay, and that's fair. I mean, most market watchers would say it's good to take breathers every once in a while, or take some of the fluff and air out of certain trades. I want to do kind of a rapid fire with you, because
staccato, sure.
I feel like there's so much going on. Amazon, $25 billion looking to raise a U.S. dollar bond sale. It's all about AI infrastructure. Surprise, surprise. This is just going to keep happening.
Yeah, they've already done $70 billion in those IG-rated bonds. They're burning cash, so they need cash. And what Andy Jassy said in April was, CapEx growth is way beyond revenue growth. Don't freak out about it. This is what will happen. You have to spend some money.
I always get worried, though, when a CEO says, don't worry about it.
Yeah. But no one was worried when Amazon tipped into negative free cash flow. Amazon needs money. Its CapEx is likely to go up. The bond market's been a great vehicle for them to tap to get money.
And investors are snapping it up.
Investors are snapping it up. The headline from just about half an hour ago that they've already drawn $62 billion of demand.
For $25 billion.
For 25.
Yeah, that's a little bit oversubscribed, or whatever you call it.
I mean, we continue to see that, Ed, with these corporate bond deals.
Yeah. I mean, talk to Schiffman, our BI credit analyst, Robert Schiffman, about this. But basically, Amazon is creme de la creme of IG rating name, and bondholders of Amazon are happy to be bondholders of Amazon.
All right, go to DeepSeek. I want to go there. I know I'm bouncing around. And
super important story.
So tell me, okay, so DeepSeek is developing its own chip to help power AI systems. This is according to Reuters, citing unnamed services. First of all, tell me what's important, and what do we really, really know about what's going on at DeepSeek?
All Reuters reported is that DeepSeek is looking at its own inference chip.
Yeah.
No timeline, no specifics on it. The market did interpret it as bad for NVIDIA because right now NVIDIA dominates compute, be that for training or inference. What you need to know is that everyone in the world that's in a frontier lab to a hyperscaler is working on custom silicon because right now there isn't enough compute and they think that diversifying away is important. With respect, DeepSeek just raised $7 billion in its inaugural fundraising round.
Yeah.
They're tiny. $7 billion is nothing in terms of what you have to spend to get a program like that on track. It can take a really experienced team anywhere from 18 months to 36 months to bring a chip to market. And so this is distant future stuff.
Okay. Do we have access to DeepSeek in their programs? Do we have?
So one important thing that DeepSeek largely focuses on open source model and materials. So yes, you would. But all I'll do is reflect on industry that I speak to. They would be hesitant to make use of the model or have their data exposed to it. That's kind of a personal preference thing.
All right. 2 more companies we have to get to.
Oh my gosh, let's go.
All right.
SpaceX.
Yeah.
Oh, that's what we really teased that you were going to come on.
Wall Street is bullish. Is that at all surprising?
Surprise!
The news story is that those banks and brokerages that were involved in the IPO process are now free to initiate sell-side coverage, and unsurprisingly, they're all bullish. And what's interesting, if there is any point of interest, is like take Morgan Stanley, I think, but various others in their price targets, very small portions of it, the dollar value account for the space business. It's all the future AI business, and that's pretty uniform across the sell side's view.
Raymond James has a $800 price target, so they could
that's
if it grows into it, you're talking about a valuation of about $10 trillion. But you know what? When it's Elon and everything, superlatives always follow.
Yeah.
Before we go, I've got to ask you about Rivian. This is a company you know so well. We did see, and we see the share price tumbling after the company says it's going to sell 75 million shares to fund equity contributions. This is related to U.S. Department of Energy loan. This has to do with share dilution, I'm assuming.
Yeah.
But what's going on at Rivian? I see them on the road.
Yeah, like Rivian had a really good second quarter delivery numbers, and they raised their outlook very slightly for how many vehicles they'll deliver this year. In literally the 4 trading sessions that followed, their stock went up a lot.
Yeah.
And what I'm told by company insiders is they were opportunistic. They were like, hey guys, the stock went up quite a lot. We should use that and we'll come to the market and do an offering. They need cash, partly there are milestones that the Department of Energy set them against a very large loan.
Yeah.
They need to make their own contributions before the DOE will give them money. So they need the money, right? They have cash, but not as much as they once did. And yeah, they're just being opportunistic. It is dilutory, hence why the stock is now down 15% in response.
I mean, I get it, but I was just curious behind it.
Yeah.
We don't need AI. We have Ed Ludlow. I'm going to just have, can we just create an Ask Ed Ludlow?
We have, I don't know.
I mean, I just did an Ask Ed Ludlow. We just
Ask Ed.
Yeah, I mean, we have the Bloomberg terminal with wonderful data, and Bloomberg has certain tools that we're allowed to use that I think help the reporting.
Did we leave anything out today? Just
well, you should take fish oils and omega-3s for the brain function, generally speaking, yeah.
And
not advice, just my own personal choice each day.
Perfect sleep score. Did you know that?
I got a 76 on Aura overnight.
Oh my God.
Can't believe you're even here.
Yeah.
All right, we got to talk.
Thank you.
We got to talk later. All right, Ed Ludlow, host of Bloomberg Tech. Catch him at 11 a.m. Wall Street time on Bloomberg TV. Coming up, a new episode of Chief Future Officer is going to drop this week. It features Wayfair and its CFO, Kate Gulliver. She joins us next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got a sell-off in chip makers that is dragging down the stock market. This on concerns over whether massive AI investments justify lofty valuations. So the S&P currently trading at 75.18. It is down 19 points now. NASDAQ down 0.2%. Dow Industrials down 0.3%. NASDAQ down 0.6. The NASDAQ 100 index down 1.3%. With the Bloomberg Mag 7 index higher by 0.6%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, it is trading lower by 4.3%. The 10-year 4.52%, with the 2-year 4.15%. Gold is down $23 the ounce, down 0.6%. Spot gold $41.42 the ounce, and West Texas Intermediate crude up 2.9%, $70.51 a barrel on WTI. Bitcoin just above $64,000. Bitcoin up by 0.4%. SpaceX shares tumbling by 5.1%. SpaceX currently at 152.28. It is now in the NASDAQ 100 index. Also, the traditional quiet period for SpaceX is over following last month's IPO. Again, SpaceX lower now by 5.1%. We continue to monitor that Manhattan high-rise on 42nd Street in Midtown. It does remain unstable, according to city officials. They also say it is still moving after columns, at least 2 columns, buckled during this morning's rush hour. City officials say engineers are working on ways to shore up the damaged floors. They're also using drones to monitor the building. Officials, the old Pfizer building, by the way, the old Pfizer headquarters on 42nd Street, described the situation as, quote, extremely dangerous. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Emily and Carol, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Masser along with Emily Grafeo. Emily is in for Tim, who is on vacation this week. Hey, in less than 1 month, we're going to get a quarterly financial update from Wayfair, a company which pitches itself as a destination for all things home, has a key technology history and infrastructure at its core, even as the company more recently is opening up brick and mortar stores and continues to shop around for more properties to do so. The company and its chief financial officer, Kate Gulliver, are the subjects of the latest episode of Chief Future Officer on Bloomberg Television. The episode drops on Wednesday.
We think about the cash-on-cash returns of the store. So based on the capital investment that we are making, when do we get that payback? What does that look like? We look at the four-wall economics of the store. So the sales within the store, how does that, how's the margin looking there, the sales associate cost? And then we look at the sales that are happening outside the store that we can tie directly to the store and the overall halo effect that we think we get from the branding.
Do you have a map in your office of some sort with push pins in it and saying, here's all the places we want to be? Like, how big do you think this can be, or do you expect it to be?
We have customers all across the country. Basically, if you mapped population center and our customers, they would overlap. So most population centers are going to be good locations for us to have a store.
The goal is to create a frictionless connection between online and offline commerce, a sort of virtuous circle. It's working well so far.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent, but when she's here, she can have her app open and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
All right, everybody, that is Wayfair's Kate Gulliver in a preview of the upcoming episode of Chief Future Officer. It does premiere Wednesday, tomorrow, July 8th at 9:30 p.m. Wall Street time. You're also going to be able to find it on Bloomberg.com and, of course, on YouTube. Ahead of all of that, Kate is kind enough to find some time for us stopping by. She is the Chief Financial Officer, also Chief Administrative Officer. She's responsible for Wayfair's finance, legal, talent, real estate, and corporate affairs teams. She joins us once again from Boston. As I like to remind everybody, you're a pretty busy individual, Kate. Thank you so
Thank you,
much.
Carol.
Thank you. I know it's a busy season. I know earnings are coming up in less than a month. I got to say, every time I am with you, I learn more about the company. And, we've talked about this before. Certainly it's covered in the episode. But share with our audience, once again, why it's so important for Wayfair, which at its heart started as an online platform, that it has to have stores. Why is this so important? And you talked to me about it, certainly for the episode.
Yeah, so first, thank you for having me, Carol. It's great to be back. What we've shared a bit before is how much of this category remains offline, remains shopped in stores. When we think about sort of the $400 billion market that we play in, we think, somewhere 25-ish% of that is shopped online and the remainder is shopped offline. And even as that online penetration grows, a significant portion will stay offline. And so if we want to meet our customer where she's at, enable her to shop in all of the ways that she shops, which is offline, online, maybe in a social format with a friend, we think that stores are an important element of that. And so for us, it allows us to get closer to that customer and provide her yet another experience. And when we think about, the key pieces that you need for stores, many of them we've built over the last 25 years. The brand, the technology behind it, the supplier relationships, our customer portfolio. And so we're able to take all of that and leverage that as we expand the store network.
So, one thing I'm curious too, and I know you can't talk too much because we've got earnings coming up, but the more that you guys are in stores, continue to build out, it's now, a couple of years since the first store in Illinois. Does your conviction behind this strategy, is it proven? Does it increasingly continue to make more sense in terms of that kind of loop between the stores, the platform, and more?
Yeah, so we spoke about this a bit on our last call, which was in May. At that point, our store in outside of Chicago in Wilmette had been open for just about 2 years. That's our large format Wayfair store, 150,000 square feet. And then we'd recently opened our Atlanta store, which is where we filmed the episode. And then actually since then, we've also opened our Columbus store just a few weeks ago in Columbus, Ohio. It's a slightly different format. That's a 70,000 square foot store. And so what I think you're seeing, we've announced several other leases. There's another store set to open in Denver later this year, one in Westchester early next year. And that's just a handful of sort of, what we're starting to roll out. And I think what you're hearing from us is, yes, we are seeing these work. And what we're really seeing is that the customer is excited about the in-store potential and then the integration with that in her overall shopping experience. So she can come in store, she can touch and feel the product. Importantly, she can work with a sales associate. She can develop a quote to think about maybe redoing a bathroom or, perhaps getting some new outdoor furniture. And then she can go back home and she can think about it and she can complete that purchase, at her leisure at home or in the store if she chooses to. But the overall experience is very consistent and very comprehensive. And we're really seeing our customers respond to that, and we're excited by the potential here.
How do you get, the customer that is so used to sitting on their Wayfair purchased couch at home, scrolling on their phone, looking for furniture? How do you get that person to come into the store? I just know that, it's so hard these days for brick and mortar stores, but I totally see the potential here of why you would want to go into a store and touch the furniture. What do you tell your online customers about the stores?
Yeah, it's a great question, because what's interesting is that in the store, so actually more than 50% of the customers that came into that are in that Chicago store are actually new to the customer file. So they weren't necessarily a customer before. They're coming in for the first time and wanting to experience us, in a sort of a physical application. But for our existing customers who have shopped with us before, what we're hearing from those folks is, they wanted to come in and experience the brand. And often what they're discovering is actually our breadth of offering is much broader than what they appreciated. So, you mentioned the Wayfair couch. I think most folks that shop for a couch would think to come to Wayfair, right? They would know that that's a sort of core part of what we sell. But then they come into the store because they're curious about what sort of this feels like, and they realize actually that we have a very extensive, storage and org offering. that we have an extensive mattress offering, that you can get kitchen accessories, seasonal decor. If you walk into that Atlanta store right now, there's a number of great seasonal accents, on tables out in front that you can sort of purchase to, around the 4th of July. We had a number of sort of Americana pieces there, right? And so those kinds of things that are a little bit more impulsive, a little bit more experiential, you get that flavor in the store, and we're hearing from existing customers that it's exciting for them to really understand the expansiveness of what we offer.
And I certainly saw it ahead of Memorial Day, all of those seasonal items in the front. And it makes sense. And it's like you walk into the store and if you're a shopper, you want to see that kind of stuff right off the bat. Hey, Kate, one thing I want to ask you, AI, first of all, again, I'm reminded that you guys technology is really at the core of Wayfair in terms of your platform. And I think about your founder and founders. I want to ask you about AI specifically, clearly improving productivity across merchandising, advertising, catalog management, customer experience. I'm just curious, as CFO, as you look at the investment versus the ROI, where are you actually seeing or continuing to see kind of measurable financial impact as a result versus areas where the ROI is going to maybe take a little bit longer term?
Yeah, I think you framed it well, Carol, which is certainly there are places where you start to pick up, individual efficiency gains, and allows folks to maybe, do more than they were doing before or sort of explore new areas. But what we're also quite excited about is how we think about using AI to improve that customer experience. One of the unique things that we offer is an incredibly expansive catalog, right? Millions and millions of items. Whatever you need for the home, you can find it with us, and each person can find their preference. But that also can be, complex for folks to shop. And what I'm particularly excited about is how we use AI and are using AI to really personalize and improve that experience. Some of those you can find on the site today that would feel sort of obvious, I think, in some ways that it's an AI application. So the Discover tab is one I particularly like. You describe the room that you would like to, design, and an AI-generated image is shown to you that is, matches that description, but it's all populated with products that are in our catalog. So they are all purchasable right then and there. So that's a sort of more obvious usage. Then there are other things where we've been able to use AI. You talk about efficiency gains. We have millions of products in our catalog, and vetting the data around each product that, comes in from supplier materials, say dimensions or the material of the product, whether it's wood or composite or metal.
Right.
It can be hard to sort of vet all of that. AI allows you to do that at scale, which means the quality of the detailing around the product is better, and that's a much more, sort of secure purchase for the consumer then.
I'm going to be really honest. We need one in New York City, so it's like a place I would go to unwind and just have fun. It was so much fun to walk.
It'll be in Westchester, so you can check that one out.
It's getting close.
Put your feet up.
Kate, thanks so much. Take care. Kate, yeah, be well. Kate Gulliver, she's the Chief Financial Officer and Chief Administrative Officer over at Wayfair. Be sure to check out Chief Future Officer with Kate Gulliver. It is premiering tomorrow, July 8th at 9:30 p.m. Wall Street time. Also find it on the Bloomberg and at Bloomberg.com. Hey, coming up, we're going to kind of tie everything up, the macro, overseas, the markets, AI. That's coming up next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Chip stocks are slumping. The Dow, the S&P, NASDAQ 100 index, all in the red. We begin with the NASDAQ 100 down almost 1.5% right now. This is a gauge of semiconductor firms. The SOX, the Philadelphia Semiconductor Stock Index, it is down now by 4.8%. This despite Samsung's record profit. We had S&P down 22, down 0.3. Dow Industrials down 0.2 right now. NASDAQ, the composite index, down 208, drop there of 0.8%. And again, the NASDAQ 100 index now slumping by 1.5%. All of this, though, as the Bloomberg Mag 7 index pushes higher, up now by about 0.5%. 10-year 4.52%, with a 2-year 4.14%. Gold is at $41.40 the ounce, down 0.6%. West Texas Intermediate crude oil pushing higher, up 2.6%, $70.36 a barrel. Brent $74.01 right now, up by 2.8%. So oil is gaining following attacks on shipping in and around the Strait of Hormuz, pointing to continued risks to vessels in the strategic waterway. Among oil majors, they are all higher today. ExxonMobil up by 2.4%. Chevron also higher by 2.4%. ConocoPhillips up now by 3.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Emily and Carol, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Emily Grafeo here at Bloomberg headquarters in New York City. Let's not forget, we do get some economic data points, and we did this morning. The U.S. trade deficit widened in the month of May, broad-based increase in imports, decline in exports, propelling the gap to the most in more than a year. Emily, we also heard that Americans' expectations for inflation over the near and medium term rose in the month of June. That's amid strong increases anticipated for medical care costs and rent. That's according to a Fed Bank of New York survey that was released earlier today. And then we've also heard from some Fed officials.
And we have the bond market reacting, Carol, in a pretty sizable way. At least today we have the 2-year yield up 4 basis points and some movement on the longer end of the curve as well. The 10-year up about 5 basis points right now.
And I just want to point out, our next guest notes that volatility has increased recently across equities and currencies, and we continue to expect that bonds may offer less of a ballast than they have historically. For suitable and qualified investors, they write, we view select alternatives and real assets as a potential diversifier through lower correlation and distinct return drivers. Here to explain and talk about the investing and economic backdrop is Conrad de Quadros. He's head of economics for Citi Wealth. He's here in studio. Welcome, welcome. Nice to have you here.
Thanks for having me.
I want to ask you, you have had a lasting career on Wall Street, and you and I were just kind of reminiscing about the times that we've talked over the past years. You've seen numerous cycles. I love when someone has. How would you describe today's cycle?
Okay, so I think there's elements of today's cycle that we've seen before. I think we can see elements in this cycle on the economy side to the environment of the late 1990s, right? When we had an innovative technology, there was heavy investment going into it. So similar to what we're seeing today, but there are also very big differences between the two, right? The investment happening today is coming from companies that have earnings. In the late 1990s.
Big difference.
That wasn't the case, yeah. So there are very important differences, but then also similarities, the impacts on productivity growth. So in the economy, I think we can say we've seen some parallels, but we have to distinguish. And the other thing I think is interesting is if we think about the Fed and how the Fed evolved over the various leaders that we've had for the past couple of decades, say. And now in some sense, when you look at the Fed under Kevin Warsh, there does seem to be maybe some shift back to the way things were before during the Alan Greenspan Fed, when communications weren't as extensive as they have been since Greenspan. I think that those changes started under Greenspan, and now I guess there's this feeling that maybe it went a little too far, and it's better for the Fed to talk less. So, it is interesting to see how things can sort of shift between the eras.
What about the era of stock-bond correlation?
Mm-hmm.
Because you noted that, things are changing. Maybe bonds aren't a safe haven that they used to be. Is that because of this new Fed era that we're in? I
don't think so, because I think that correlation broke down before we had the Fed transition. And so, one of the things that we noted is that ballast that bonds that they provided in the past, we weren't really seeing it anymore. So that the correlations were more aligned than we would have liked them to. So we started looking at what other assets can investors use to protect themselves, and gold was one of them. That's an asset that we've been recommending for quite some time. And it's an interesting one because gold has obviously moved around a lot in the past several months,
right?
Which raises questions about whether it's still providing a ballast. And our answer is we think it is. Our view on gold is much more of a secular view, and we think that it has an important place in investors' portfolios in this environment where we have the equity market performing very well, but questions about the certain sectors of the equity market, in the AI space, are we going to see the returns from all the investment that's being done? And then in the bond space, all the questions about we have globally fiscal ratios that are concerning to people. And I think that's in the back of investors' minds, and maybe
Is
one of the
that
reasons.
different this time around? Because, again, I would go back 15 years or so, and we'd have this conversation about concerns about the fiscal position of the United States or other countries. Is it different, though, in terms of the fiscal state of not only the U.S., but other governments, as you point out?
Well, I think that one of the differences is just the levels of debt, right?
Yeah.
So we need to, if we're looking at in terms of GDP, which a lot of people will argue maybe that's not the best way to look at it, but it is a very common way to look at it.
Kind of a clean metric, I would say.
It's a clean measure, but there's even people in very senior roles like Janet Yellen who, as Treasury Secretary, said that we should be looking at other things like the interest cost of that debt in real terms, for example. But as you said, a clean way to look at it is look at debt ratios, debt deficits relative to GDP, and those are high. And so we have debt as a share of GDP. You'd have to go back to World War II to see levels similar to what we're seeing now. We have very large deficits in an economy that is in good shape, and I think that's the aspect that might be a little bit concerning to investors. That if we have deficits this large when the economy is growing quite solidly, what happens when we inevitably have that downturn and spending has to go up?
Because how do you grow yourself out of it if you're doing kind of already well?
Or how do you stabilize, right? One of the hopes of deficit spending is that it provides a temporary stabilization for the economy to kind of find its footing. Mm-hmm. And the concern, I think, is that given that deficits are already so large, will there be that fiscal room to provide that stabilizing force the next time we have a downturn, whenever that is?
To what extent does the strong consumer kind of provide a little bit of cushion here for that scenario? Because you noted that the consumer's been pretty healthy. Mm-hmm. They've been spending.
And I think that has a lot to do with the labor market. We had an employment report last week on Thursday. I think a lot of people sort of wrote it up as being somewhat disappointing, but I would say, we have to look at the trends in that report, and we have employment growth that's still averaging 100,000 per month over the last 3 months, close to that for this year thus far. And you compare that to 2025 when employment growth really didn't grow at all. Mm-hmm. And then think about that growth in the context of labor supply that's growing very slowly. So to bring that back to the consumer, it looks like job growth is strong enough to absorb entrance into the labor force. Wage growth is pretty solid. And I think that that's what's providing the support to the consumer and why the consumer is holding up quite well.
And of course, we would remind everybody, and we talk about this, the K-shaped economy, not all consumers are doing well. We still see a lot of consumers in America, struggling just to get by. Having said that, if the labor pool is not increasing, and we've talked about the impact of immigration and people not coming in to expand the workforce, that plays into my worries about how do you expand growth if you also restrict the size of the available labor pool. But it also speaks to existing workers maybe getting paid more, great, but it also speaks to wage inflation and inflationary concerns. Is that a problem? And got about 35 seconds.
Yeah, so I think that's really important there, but I would tie that back to AI, where we sort of started off, right?
Okay, yeah.
And we have that situation where we don't have the labor supply that we've had in the past, but we do have this other source of output in AI, and that boosts productivity growth. And so I do think that, we have a growth outlook as a trend that is better than it was 10 years ago, even with slower labor force growth, because AI sort of picks up some of the missing workers that we don't have anymore.
Which goes back to Alan Greenspan and productivity gains. Come back again. That was really great.
My pleasure. Thanks for having me.
Conrad DeQuadros, he's head of economics for City Wealth, joining us right here in studio. Stick around. Emily and I checking on the markets and some stocks on the move when we come back to you on this Tuesday.